by 2% by the end of the trading day. But certainly, how quickly can we get things out through the Strait is going to be a crucial question. Airlines in focus. Some of the airlines were up by 10% in yesterday's session. We're seeing energy prices ticking higher today. So does that have an impact, a negative impact, perhaps? And UK home builders also watching that one. We've had some downbeat news surrounding the mortgage market in relation to geopolitics. So we'll watch that. Guy.
OK, here we go. Time for the European session this Thursday morning. The Masters is going to be on a little bit later on, but before that, I think we've got probably a lot of thinking to do about what comes next. FTSE 100 is up a little bit this morning. We're expecting oil stocks to gather a little bit of momentum to the upside this morning. Oil has gone higher overnight. Elsewhere, you're going to probably see a little bit of weakness, but not by much. Zoom out, go to your Bloomberg terminal, look at the 3-day charts of all of these markets, just to get an idea of what is happening in the context. You've got this big gap that we get this time yesterday. And while we are softening up a little bit, we're not softening up much. We are holding our ground at this point in time. The market doesn't seem to know what to do next. As we wait and watch, we are skeptical. We don't know. But you don't do anything at this point, it seems. You just wait and maybe get more information and get a better picture of what is happening. So the IBEX is down a little bit, the CAC's down a little bit, Stock 600 is down a little bit, the FTSE's up a little bit. There's nothing really to see here because we don't know what is going on yet. The Strait of Hormuz is still closed. We've got talks coming up on Friday. The ceasefire, is it holding, is it not holding? We don't know. Seems a little quieter today than it was maybe yesterday afternoon. So a lot of information is still required by this market, maybe to take the next step, to deliver the next move, Anna. I don't know. We're going to wait. We'll see how this session progresses. There's a lot of information to plug in.
Yeah, absolutely. Information to plug in, information gaps surrounding the status of the ceasefire. They often take some time to be enforced, of course, but we're continuing to monitor that. The role of Lebanon, the opening of the Strait of Hormuz, the extent to which that is essential to the ceasefire, watching that as well. In the moment, then, we do see some modest movements in these markets in reversal of what we saw yesterday, but they are only modest. They certainly don't unwind the moves of yesterday. So energy stocks are up today, up by 0.7% for the sector. So the likes of Equinor and some of the suppliers to the energy markets are going higher. Aker and Subsea, for example. We've got utilities also gaining a little this morning, up by 0.8%. So that's another sector that we are watching. Travel and leisure then, in another sign of a little bit of taking back some of the enthusiasm of yesterday. We do see some movement lower. Again, that could be just fairly mechanical based on the oil price. But TUI is down by 2.4%. EasyJet down by 1.7%. So yes, not a huge amount of new information, just a pairing of some of the trades of yesterday. 19
ex-dividend stocks.
Yes,
so just be aware of what you are looking at on your screens as you look maybe to the right-hand side. Things like Lloyds Banking Group, Haleon, Volvo, MAN, Vestas, Intercontinental, Reckitt, all going XD today. There is a long list. I'm sure you'll find it on the terminal and give you an idea of what is happening here, but that needs to just be factored in to everybody's thinking as well.
Yeah, absolutely. So we continue to watch that. Let's get another view on these markets then. Helen Jewell, International CIO for Fundamental Equities over at BlackRock, is with us to take stock of where we are. Helen, good morning. So today, very different to yesterday. Today, we sit here with half of the sectors on the Stock 600 going higher, half lower, a little bit of a reversal of yesterday, but as I say, not unwinding yesterday's big risk-on move. What are you thinking about events in the Middle East and the extent to which they are still in the driving seat for global investors?
Yeah, it's a really good question, Anna. And I think what we're really focused on is not trying to kind of guess the exact next steps from a geopolitical perspective, but actually thinking about how long is it going to take to normalise. And I think probably that's what is being a little bit underestimated by the market. Even if there was a full ramp-off today, these markets cannot normalise straight away. So what is the implications for that? And one of them is interest rates. We were expecting rate cuts through the year, at the start of the year. I think that is completely off the table now. We're starting to see, you mentioned already house builders, for example, in the UK, and the implications of that. The second then is the implication potentially on consumer. The earnings season is about to start. I think it's going to be really interesting. We've not really seen any earnings changes from consumer companies just yet. It's going to be interesting to see how that progresses through this earnings season. But then the third is the real structural winners, and the real focus on those companies that remain structurally well-placed. They were well-placed before the conflict, and actually, if anything, the conflict has really underwritten that. And that, again, is in those sustainable energy names, in the commodity names, and those names that were already a beneficiary from AI and now are a beneficiary because of energy security as well.
Yes, and we'll certainly get onto some of those themes around energy independence, because it's something we've talked to you about in the past, I know. But I also know that you've just come back from Asia, been speaking to many people on an Asia fact-finding mission. In terms of those winners, then, what has that told you about where in the tech stack the winners lie, or where in the energy space the winners lie? What are you thinking?
And it is in both. It was a great trip over in Asia. And let's not forget, for the Asian indexes, if you look at Taiwan, if you look at Korea, yes, we saw some kind of quite large moves downwards, but actually still significant moves up on the year. And the reason being is that they have got the structural winners, and it is in both spaces. Don't forget that when it comes to memory chips, there is still a real squeeze in terms of the supply. And that is not changing anytime soon. Meeting companies over there maybe kind of even more confident on the structural positioning that they have. But there's also incredibly strong turbine companies. Turbines are going to be so important, again, when it comes to the need for AI and energy for AI. But that has now been underwritten because so many countries, so many governments are going to think we need energy security and we need energy independence. So a real range of companies over in Asia, and a real positivity, actually, that I came back from the region feeling.
Enough to keep indexes up? Is this... You've got a risk of kind of energy costs rising quite sharply, and that feeding through, and Asia's quite exposed to that. But you've also got this demand story on the other side. To balance those two things out for me.
Yeah, so I do think it's enough to keep indexes up. By double digits, probably not. Much more like single digits now. Okay. But the key thing is going to be in the earnings numbers. If you look at earnings forecasts at the moment for the year, they're still well into double digit, 15, 16, 17, 18%. So there's a lot of headroom for the earnings to come down a little bit. But at the moment, what you're seeing actually earnings stay pretty flat, because on the one side, you've got the energy and the materials earnings going up, and tech earnings. I mean, I think tech for the US is well into 40% earnings growth. But on the other side, what you're starting to see is things like airlines earnings expectations coming down. And again, I think this earnings season and where this earnings season lands and how much damage, and I think there will be damage to earnings growth expectations through this earnings season. How much that shifts down, that is going to be the key thing for the next few weeks.
What about Europe? What about the United States? Earnings expectations in the States are extraordinarily high.
They are, yes. I think for the US, and to an extent for Europe as well, the key part that has not yet seen any shift in that earnings is in the consumer space. And I'm finding that hard to reconcile, particularly if you think about interest rate and interest rate sensitivity, and then on top of that, inflationary impact of what we've seen in the Middle East. I think it's that consumer space that is the one that we really, really need to watch. What we've seen, and we saw this yesterday, is you see the cyclical companies really uptick when you kind of see a risk-on day. And to me, that feels a little bit overconfident, and again, how much we will see a normalization. That is the area that probably worries me the most. The consumer names, and to an extent, some of those cyclical names that are not exposed to the structural themes that we've been talking about through the last 12 months of AI in particular. So that is the area I think we need to watch. And if we see a real softening there, that is when I will get nervous about exactly where the index might end the year.
OK, so we'll watch that. The theme of energy independence, which we've talked about before in the past with you, Helen. I was reading a write-up of an interview with Deutsche Bank recently by the Bloomberg News team that talked about China being the world's largest producer of clean tech.
Yes.
And that therefore China is set to gain from what we're seeing in the Middle East, and a rush to improve energy independence and self-sufficiency. there's got to be room for Europe to do well in pockets as well, I'm sure. So how are you seeing the benefits of that being distributed between China and Europe?
Yeah, absolutely. And let's start with China, because China has basically for the last 6-7 years really reindustrialized itself, and it's got a real edge now, particularly for turbines and in the solar space, which I think is going to be a really key winner. Solar in particular will be a key winner. So where does that leave Europe? Well, what Europe continues to do very well is in the energy efficiency side of things. You do need energy efficiency in order to solve the problems that we've got. And there are very, very strong companies, particularly in the German industrial space, that really help solve for that. But you've got transformer companies, again, in Europe. You've got very strong grid companies, again, in Europe. So I always think about it, and I know we've talked about this a lot, in the 3 parts: the energy production, the energy efficiency, and getting the energy to where it needs to get to. And Europe in particular, I think energy efficiency and the grid infrastructure, that is where Europe does have a little bit of an edge. What, again, probably worries me on the flip side, of course, is that there are energy costs related to a lot of the production of that. And again, that's something that we do need to keep an eye on. So from a kind of focus perspective, yes, Europe is strong, but Asia, again, particularly having just come back from the region, that is probably the region that I do think has a real strong technical and industrial edge in that space.
Can I kind of slightly switch topics? How many questions are you getting at the moment about the risk that private credit poses into public markets, into things like financial institutions, banks, etc.?
Yeah, we are getting a lot of questions around that, particularly, as you say, on the bank space. And I think what we talk about in the areas is really the size of private credit, as well as the real kind of resilience that perhaps is misunderstood in that space. The size of private credit within the public banks is not that big of something that is really the driver. For the banks, and again, something that we still remain very positive on European banks, the key driver there is the capital that they have, the capital that they continue to return to shareholders, the rigor that they have on their balance sheets, and that is what we remain very positive on. And the valuations, which still don't look actually stretched, even when they've had a particularly good 12 months.
Is that in Europe, Helen?
That is in Europe.
Yes.
Yeah, the US and Asia banks probably something we're a little bit more neutral about, but European banks is an area that we remain overweight.
So remaining over the weight there, and sticking with European investment themes, you see pockets of value in defence, and that's an interesting one to get an updated view from you on, given all of the wars we see, the hot wars around the world, plenty of opportunity to test what defence is required and what isn't, and is Europe making the right combination of those things? And so what's your thinking around those European defence names that have rallied so far? Yeah,
so the defence names is an area that we continue to see as a structural winner. It's very difficult to really justify from a valuation perspective, but again, if we think about the implications of the Middle East, there's 2 things you've got. You've firstly got this, how long it will take to normalise. And again, I think that's what the market is underestimating, the level of inflation that is likely to come through, that the oil price will remain stickier for a lot longer, even if there was an off-ramp today. The second then is you've got the structural side, the one being the energy and the energy independence, and the second being the continued spend on defence. And that is the reason that we remain very positive on Europe. Now, in terms of the construct of Europe doesn't necessarily have as much from a land perspective as, again, some of the Asia players have, and maybe that is an area that we will start to see the Asia players do well. They've tend to kind of got more from a land perspective than an air perspective. But all in all, again, what are we thinking about here? Long-term structural winners in energy, long-term structural winners in defence, and governments that will want to do that as locally as they possibly can. And that's why we remain overweight, but cautiously overweight, not because of the structural win, but because of where the valuations are a little bit more difficult to justify in that space.
Some of them are quite high.
Exactly right.
Helen, nice to see you. Thanks for stopping by to see us. Helen Jewell, International CIO for Fundamental Equities over at BlackRock. Look at the call 6 this morning. Let's look at some of those defence names, get an idea of what is happening broadly across the piece. Right, Mattel, down a touch this morning. You are seeing a little bit of caution in the market this morning, but you've got to kind of widen the lens a little bit. Look at the last few days just to get an idea of what is happening. Maybe a little bit of safety being sought in Nestle. Let's take a look at what is happening with the oil names and the energy names. Charlie's got details of those.
Good morning, guys. So we're seeing more green on this energy screen, a lot more green than we were seeing yesterday when these were all in the red, but up, seeming to be up on that oil price, heading in an upward direction as well. So again, kind of some of this uncertainty coming out of the Strait of Hormuz, starting to play into a lot of these oil majors in Europe. Let's flip and take a look at a different story. That's airlines. Yesterday, airlines were performing so well. It was looking like such good news for a lot of these carriers, but they are down. We're again seeing IAG down, Lufthansa down, TUI and Ryanair. I think Lufthansa, interesting as well, down by some of the most here, down by well over 3%. They also faced that strike at German airports yesterday for cabin crew, so that could be adding to some of the negative sentiment here. But again, that oil price story really seeming to come front and center today. We know it takes a while for oil prices to spill into jet fuel, but of course, that front and center. Let's switch to a different narrative here. That's Rexel. They were up by some of the most in the Eurostoxx 600, up over 2%. And again, this is a French electrical parts company. There could be some positivity coming on potentially, still sifting through some of this narrative, but seeing that macro picture potentially looking better, the need for energy, that AI story. Let's not forget some of these real themes that we saw before the conflict. A lot of analysts yesterday talking about how we need to remember some of those stock stories that we were telling and talking about before the Iran conflict started. Let's flip, because we got an interesting JP Morgan note talking about a potential divergence in luxury. We know that when there is a lot of uncertainty, you see some of these hard luxury groups do better than some of these soft luxury groups. So Richemont, they've got a lot of that jewelry, those hard luxury items down, but not by as much as LVMH. You hear LVMH, you start to think about leather goods, right? They have been struggling recently, and we're seeing this. This could also be uncertainty, though, because when you see markets down, when you see uncertainty come back, that wealth effect can trickle in and start to hit some of these brands that, of course, the wealthy love.
Okay, thank you very much. Charlie Wells with the latest on luxury and everything else that's on the move this morning. Coming up, we'll talk about oil prices rebounding today after its biggest one-day drop in 6 years, with the Strait of Hormuz remaining closed. We will have more on the energy markets next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big
big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Welcome back to the opening trade. 18 minutes into a session that looks pretty different to yesterday. Yesterday was all about the optimism of the ceasefire. Now we're watching for signs as to whether the ceasefire is really, truly holding. And in the meantime, heading a little lower on these broader equity markets. Oil prices heading higher, and that could be part of the reason, up by 2.8% on Brent, then Guy at 97.47. Meanwhile, European stocks head a little to the downside.
If you were looking for a mortgage, yesterday was probably a good day to maybe have another look, because interest rates came down pretty sharply as oil prices came down pretty sharply. Today they're ticking a little higher once again, and there's a lot of kind of indecision in the market about where we go next. I'm trying to kind of join a number of dots here, but the data certainly we've seen overnight paints a similar story. The number of Britons looking to buy a home nosediving in March after the mortgage market was rocked, of course, by that conflict in the Middle East. According to the Royal Institution of Chartered Surveyors, RICS, that's where the data came from, and you do wonder whether the situation is going to get any better anytime soon. For more, let's bring in Bloomberg Market Today blog editor Sam Unstead. What's happening?
Chaos, so over the course of March, certainly, with the mortgage market, you see a huge increase, in swap rates, driven by oil prices, by a complete step change in the way that the Bank of England curve is being priced. Products get pulled from the market. Anything that's coming back onto the market, rates are going up. What happened yesterday, unlikely to feed in anytime soon. If anything, it just adds to the chaos, and, this is one of those stories, this is a huge geopolitical story, which is covering absolutely every news broadcast everywhere. When that happens and it also becomes a market story, markets all of a sudden become dinner table conversation. And if you're, in the process of potentially buying a house, or, if you're a first-time buyer in particular and you haven't gone through the process before, you're already doing something that's likely, the biggest purchase you're going to make in your lifetime, or certainly you will have done it up to that point. This adds all this extra confusion. Should we do it now? Should we wait? If you take, for example, somebody who's, moving from, say, a 2-bedroom flat to like a 3 or 4-bedroom house, your costs are already going up. If you're then looking at what might happen with the energy price cap, a whole extra bit of uncertainty and potential costs come in as well. So it's effectively kind of paralyzes what buyers may or may not do at kind of all ends of the market.
Yes, does this just make it more expensive, Sam, or does it affect the availability of the mortgages, or both? Is that what the lenders have been telling us?
Both, yeah. So particularly over the course of March, you had a huge number of products come off. Not quite as many as the mini budget in 2022. I think size and scopes will probably never get to that level again, but still a very significant number of products coming off the market. Because lenders, to be honest, like the rest of us, don't really know what's going to happen over the course of the next few months.
And they pull them if they don't know how to price them, I guess.
Exactly, yeah. And then anything that is coming back on is coming on at a slightly higher price. So if you start to get a little bit of stability, in terms of the Bank of England curve, in terms of some kind of sense that the outlook is starting to calm down a little bit, maybe you start to see a bit of competition amongst mortgage lenders who feel a bit more comfortable going back into offering deals again. But right now, availability not very good, and the cost is going up.
So what is Rick saying about what happens next?
Not much.
Okay, because, so this continues?
Because like basically every corner of the market at the moment, the question remains, how long does this go on for? How long do energy prices stay at this level? Where does the central bank rates curves settle?
On the energy, if you apply for a mortgage, they look at all your costs. They look at kind of what is going on. Does the fact that we don't know what energy prices are going to do mean that it's much harder to clear that hurdle in terms of understanding what affordability looks like?
Yeah, I think it has that effect not only for lenders, who are trying to decide, where our interest rates going to be over the course of the next year. It has that effect for buyers as well, because as I was mentioning, their costs are going to go up too. So all of a sudden, your calculations as to where you could move, how much it's going to cost you to do it, all get kind of thrown up into the air.
Sam, thank you so much. Thanks for bringing us up to date. Markets Today blog editor Sam Unstead with the latest on the UK housing market story. The source of of some of that anxiety, of course, within the mortgage market is what's been happening with energy prices. So let's talk about that once again. Oil recouping a little of yesterday's losses after its biggest one-day drop in 6 years. That's as the Strait of Hormuz remains largely blocked and Israeli attacks on Lebanon threaten to derail the fragile ceasefire in the Middle East. Let's bring in Bloomberg's oil and shipping reporter, Waitlist, who is in Singapore for us. And let's start with the fragility of the ceasefire then, Waitlist. I mean, what kind of signs are we getting as to whether this ceasefire is holding? Because it seems, as we don't have clarity, oil prices just drift slightly higher.
Right, and that's true, right? What we have heard are just top headline news saying that there is a ceasefire, but the shape of how that looks like still remains to be seen. We still hear of like attacks, Israel, Lebanon, and also yesterday Iran said that one of the refineries was on fire. So things still look pretty shaky, but I mean, it's been a day. Let's see how things develop from here. But what we know in the Strait of Hormuz that has been a big focus of this hostilities and conflict is that things still remain pretty much locked in a state of lockdown, right? Ship owners are still saying that they don't see any improvements in traffic, and we still don't have any further clarity on how easy it is to move through the strait. Instead, what we have is Iran really tightening its grip over Hormuz, even after the ceasefire. So all in all, the ceasefire still looks pretty fragile.
Okay, so the ceasefire is fragile. So what are ships doing? I was reading a report earlier suggesting that some Chinese vessels were attempting maybe to navigate the strait, that they were obviously sort of beaming via their transponders the fact that they were Chinese vessels. What do we know about those kinds of vessels and what they're doing?
So what we have are two large, very large crude carriers, the largest of their own kind, and they're carrying Iraqi and Saudi crude. They have been in the Persian Gulf since the war started, and only now are we seeing them moving from the middle of the Gulf toward nearer to the exit, or rather where Strait of Hormuz is. And this, I think, shows a sign of a lowered perceived level of risk. It's what the perception that the company is having, and this coming from a state-owned, a state-backed Chinese company, which is called COSCO. It's known to be very prudent and conservative. So for them to make that move nearer to Strait of Hormuz, perhaps shows their willingness to find a chance to exit Hormuz at the earliest sign possible. And this, of course, comes back to what we saw yesterday with the ceasefire, that they think that it might be reopening soon, anytime soon. But for now, things still look pretty much the same for everyone in the Gulf.
And Waitlist, sticking with the shipping theme, we understand that during peacetime, 135 vessels, I think, would pass through the Strait of Hormuz. What kind of expectations should we have if we manage to hold on to a ceasefire and reopen the strait, given that there could be mines there, the Iranians want to control the flow? What kind of expectations do we have about how much of a rebound in traffic we can expect to see?
Right. I think it all boils down to how much Iran wants to let ships through. Because yesterday, after the ceasefire, Bloomberg News, we obtained a recording from a ship nearby that said that Tehran still said that the strait was pretty much in lockdown mode. And then we have Iran coming out with alternative routes to exit Hormuz. This was all after the ceasefire, and they insinuated that there might be mines in the strait. So what they're trying to do is still trying to control the traffic that goes through, and that implicitly means that Tehran has control over who's going through.
Okay. We're going to leave it there. Bloomberg Oil and Shipping reporter Will and Soon, thank you very much indeed. Coming up, we're going to continue the conversation on that shipping story. We're going to be joined by the Secretary General of the International Maritime Organization, potentially playing a pivotal role around this whole story to get an understanding of what could come next. At the moment, equity prices are pretty much holding in there. Oil prices are a little bit higher. More to come. This is Bloomberg.
phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna like unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
This is the opening trade 30 minutes into Thursday's session, and it looks pretty different to yesterday. Yesterday, we were gripped by the positivity of, in the moment, pricing in what it means to have a ceasefire in the Middle East. Now, we're not quite sure about all of the details, or still not sure about all of the details about that ceasefire. And as a result, with things looking a little shaky, the market's drifting a little lower. Oil prices are higher as well. So that takes its toll on the Zetrodax, but lifts the FTSE relative to the others just a little bit. Only a few sectors in positive territory, Guy. Most sectors are in negative territory now as we get a bit closer to the US session, which is seen opening a little bit weaker. It seems as if we're drifting downwards.
Yeah, take a look at the internals. That kind of tells that story as well. Higher 208, lower 377. So you're going to kind of 2-to-1 ratio in terms of the downside. There's lots of ex-dividend in the market today. Volume's certainly a lot lower than it was yesterday. This time we saw a huge volume spike, certainly early on, and that fed through quickly into the markets, driving them higher. A lot of people delivering a lot of activity. You do wonder today, how hard would it be to get equities to go lower from here? How symmetrical is it to get equities higher and lower? Kind of how much pressure would it take on either side to get these markets moving in one direction or the other? Because at the moment, we're kind of standing still. BP, Shell, Glencore, the material story moving to the upside today, unsurprisingly after the big moves we saw to the downside, plus oil is higher. Just flipping the switch the other way, SAP, LVMH, Siemens, these are the kind of stocks that did well yesterday. Today, they are reversing some of those gains. So these are big heavyweight stocks around Europe that are moving to the downside. But we do seem to be in a fairly static situation. But would it be easier to get stocks higher from here than lower from here? How big an impulse would it take to get the market to move in either direction? I think is an open question at the moment. And we're going to watch very carefully as the session develops, as Anna says, as we move towards that US session. And it's opening a little bit earlier. Anna, what else do we need to know?
Yeah, let's get an update on some of the other stories in focus for us this morning. Minutes from the Fed's meeting last month reveal a growing number of policymakers worried the Iran war could further stoke inflation and might ultimately warrant raising rates. Officials who expressed more worry about inflation urged their colleagues to consider adding language to their post-meeting statements that raise the scenario of hiking rates under certain conditions. Meta shares surged about 6% after it unveiled its first artificial intelligence model since CEO Mark Zuckerberg embarked on a multi-billion-dollar overhaul of the company's AI organization. Known as MuseSpark, the model was created by Meta Superintelligence Labs, the new team of expensive AI researchers. And Vice President J.D. Vance will lead a U.S. delegation to Islamabad this weekend for direct talks with Iran. This comes as Iran says several terms of the ceasefire with the United States have already been violated. President Trump, meanwhile, says American forces will remain in the Middle East, vowing to ramp up attacks if a deal is not reached. Let's bring in Bloomberg Horizons anchor Jumana Basechi, who has a detailed update for us of what's been taking place in the region in the past 24 hours. Jumana, where are we then on the ceasefire?
Well, the ceasefire is holding, but it's tenuous, but perhaps less so than it was about 12 hours ago. Throughout the course of the day yesterday, ongoing attacks reported amongst Gulf states. Over here in the UAE, many projectiles intercepted throughout the course of the day. A drone attack on that east-west pipeline in Saudi Arabia in the afternoon. And then Iran also reporting a drone attack on one of the refineries in the early hours of the morning. So clearly, there was a lot of activity yesterday. Overnight, though, things have seemed to have calmed down. But I will say that the biggest front that has opened up over the course of the day or so has been the Lebanon front, with Israel really intensifying their operations there. The IDF saying that yesterday was the biggest, the widest scale number of attacks that they have launched at Lebanon since the beginning of this war, hitting over 100 targets in 10 minutes and resulting in the deaths of more than 200 people. So really shocking footage, as you can see on TV, with some of these very heavily populated residential areas being hit. It has prompted a lot of comments from the international community, not least the French President Emmanuel Macron, who is saying that Lebanon needs to be part of the broader ceasefire deal. But heading into the next couple of days, I think there is positive momentum in that both Iran and the U.S. have stated that they are going to be attending this in-person meeting in Islamabad in the next few days. And the U.S. have confirmed that the delegation will be led by J.D. Vance and, of course, Jared Kushner and Steve Witkoff, who were instrumental in those nuclear discussions even before the war kicked off. But J.D. Vance's arrival is a new voice and potentially means that they're bringing in fresh blood to give this negotiations, at least from the U.S. angle, a different perspective. But objectively speaking, though, the two sides are still very far apart in terms of what they're asking for.
Absolutely. It's going to be interesting to see whether we make progress Friday and how you position for that going into the weekend if you're in these markets. Jumana, thank you very much indeed. Jumana Basechi joining us out of Dubai with the latest. So what we know at the moment is that the Strait of Hormuz does largely remain blocked. Ship owners are trying to understand if they can safely transit this vital waterway following what has been a very fragile ceasefire between the US and Iran. Just 3 ships were observed leaving the region yesterday. We're joined now by Arsenio Dominguez, Secretary General of the International Maritime Organization. Good morning. Thank you for your time. What needs to happen to get traffic moving through the Straits of Hormuz? What is an appropriate mechanism? What does it look like? What are owners looking for? What are crews looking for?
Thank you. Right now, what we're working on is actually to resume the use of the mechanism for the transit of the ships in and out on the region using the Strait of Hormuz. So at the International Maritime Organization, we already drew up a plan for the ships to start exiting the region. What we will not accept is any similar or pseudo mechanisms introduced that is not being approved by the International Maritime Organization. And that's what we're working right now on. What are the details that keep coming out, particularly from Iran, in relation to a different mechanism for the ship to transit.
So what would be an appropriate mechanism? Would that include potentially some sort of a tariff?
No, this is an international waterway. And since 1968, the International Maritime Organization, together with the Islamic Republic of Iran and the Sultanate of Oman, had established already a mechanism from the ships to sail through the Strait of Hormuz. This is an international waterway. There is no international agreement where tolls can be introduced here, and that's direct conversations that I'm having with the representatives of the Islamic Republic of Iran.
Arsenio, good morning. There is no precedent for this in this particular case, on this particular strait, but there are charges for using certain restricted waterways in other parts of the world. Are you open to the idea that this might just change? Iran, Oman, the United States might decide that this changes?
We cannot compare like for like, and there has been already reports in relation to what happens in the Suez Canal and the Panama Canal. Those are internal waters and territorial waters of those countries. In accordance to the international law, is very well established, the Strait of Hormuz, it's actually an international waterway, and this is why we have established this mechanism. We will not move forward towards changing a practice that have actually been in place for centuries and has guaranteed the safety of shipping as well as the seafarers.
Okay, I mean, there are other people pointing to other geographies and saying, you know, maybe you call it something else, you call it pilotage, but there are examples of that being used in other waterways. Is that the direction we could end up going in? I mean, I guess I'm not getting at, do you have to accept that maybe the rules have changed, Arsenio?
No, that's not an approach that I will be taking here at IMO. We're very clear in upholding the freedom of navigation and international law. And every single country at IMO has come over and have reiterated that principle needs to remain. So what we need to go back is to the way that we were operating before the conflict. The first steps have been taken, which is the ceasefire. Once a permanent ceasefire is in place, shipping will be allowed to actually continue. But we will not be discussing alternative mechanisms to what has been working already for decades.
Do you think it's the IMO's role to sort this out?
It's not just the IMO, but we are partially included in this. This is a broader community. This starts with the United Nations in New York as well, when we work into the peace aspects. We here looked into the safety, security of shipping and the seafarers, and that includes maintaining the appropriate mechanisms for shipping to operate globally in a way that is still going to provide the essential goods for everyone here.
So we've talked a lot about the cost of this, and that's what I think you're referencing when you talk about alternative mechanisms. What about the safety? Are you assured, Arsenio, that there are no mines or that ships can be kept away from mines?
We haven't received as yet official confirmations that the area is actually polluted with mines. But there's already a group of countries that have been working, and the UK has led one of those conversations, into the necessary actions that need to be taken in relation to verifying that it's not mined, and if necessary, to clean the waterway in order to go back for the ships to transit as they should.
Okay, so you need more information by the sounds of things in terms of understanding what is actually happening in and around that waterway. Who are you talking to in Iran? What information are you getting from Iran? And how clear and understandable is the information that you're getting?
So yes, we need more data because it keeps fluctuating. It's a region right now where, apart from misinformation, it also takes some time to verify what is actually reported. Here, my first point of contact, of course, is the diplomatic mission of Iran to the United Kingdom, and through the maritime authorities in Iran. But also the fact that we are now engaged as well with the broader international community, and diplomacy is the way forward. We're also meeting with foreign affairs ministers in order to bring that message onto the table to the relevant entities in order for them to also keep these conversations flowing with the counterparts in Iran and all the countries in the region.
Arsenio, how far away from sending larger numbers of ships through the straits are we? And at what capacity should we assume? I understood that this strait was very busy before the war, of course, more than 100 vessels passing daily. What's your expectation of how quickly we can return to those levels? From what you've said, you still need more information, yes, around security and around the cost.
On a normal day, it's around 130 vessels that would transit through the Strait of Hormuz. And once this de-escalates and it's safe to go through, we can go back to those levels. However, the main point here is that we cannot risk the safety of the innocent seafarers. Those lives need to be protected. And once we have the full cooperation and the full agreement from the countries in the region, including the Islamic Republic of Iran, that there will be no threats to shipping, we can immediately roll back to the mechanism that we have had in place for decades and for ships to go back to sail on the numbers that we were used to.
Arsenio, I listened to what you've had to say during this conversation, coming back to the point that Anna was making at the beginning. You don't see a scenario where things have changed. You don't see a scenario where we are in a new paradigm in terms of the way that this waterway operates. Is that what you're hearing from your members? Because it sounds like they're trying to understand how the situation has changed, and they're asking questions about kind of how a tariff would work. They seem to be dealing with the reality of the situation that they may potentially face, or at least looking at the scenarios they may face. Is there not a conversation at the moment within your organisation about what that could look like? Is it just we will go back to the original setup? There's no kind of scenario B in terms of the planning that you're making at the IMO about what could come next?
The plan that we're making at IMO and that we're working on, it's based on international law, that it's in place. And this is why we're not looking at scenario B into introducing tolls that have not been internationally agreed. This is a dangerous precedent, and that's why it's important that when countries come over and they all uphold the freedom of navigation, and is one of the main statements that is made, this is the way that we will continue to work forward. We have already outlined the operational ways that these transits can continue to go back to normal. What we cannot have is this different or parallel approach when another country introduces a different mechanism that is not in line with the international practice, and we don't even know if it guarantees the safety of the ships.
Arsenio, thank you very much. Arsenio Dominguez, Secretary General of the International Maritime Organization, just setting out there the task that's still ahead, I think, really, in trying to get all the various parties on the same page about how this is administered. We should also touch on some news we're just getting out of Italy, Guy. We've just been hearing over the last half hour, really, these headlines coming through. Giorgia Meloni talking about her government, saying it will last for 5 years, calling on the US and the EU to work together to strengthen NATO, defending Italy's approach when it comes to giving the US access to its base in Italy, and importantly raising this issue around deficit spending, which perhaps gets the attention of the BTP markets just a little bit.
Once again, maybe governments are trying to step in to protect consumers from rising energy costs, but the margin and the ability for governments to do that in Europe just feels like it's getting smaller and smaller and smaller. Can you have a repeat of what happened at the beginning of the Ukrainian conflict with bond markets in the kind of febrile state that they're in right now? It feels increasingly less likely that they're going to have the space to do that.
Yeah, and BTP yields just up 6.5 basis points this morning, a little bit more than we're seeing across the rest of Europe. Not a huge amount, but a little more.
It also comes back to the fact that we're going to have to spend more on defence. And again, she's referencing maybe what is happening there too. Coming up, polls indicate that after 16 years, Hungarian voters may have lost faith in their populist premier. We're going to look at how Viktor Orban is fighting for his political life. That conversation next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The result of the American presidential election created a new reality. In Europe, everyone must adapt their own destiny and their own policies to this.
I also want to send my best wishes to Prime Minister Viktor Orban, who I am endorsing.
And it's important to understand how important the relations between leaders are to the relations between countries.
He's a fantastic guy, and it's such an honor to endorse him. I endorsed him last time he won, and he did a fantastic job.
I've seen a guy who has ferociously advocated for the interests of Hungary. I'm here to help him in this campaign cycle.
We want this economy to prosper. We want this country to do well. It's in our national interest, especially as long as you're the prime minister and the leader of this country.
Mr. President, you are on with about 5,000 Hungarian patriots, and I think they love you even more than they love Viktor Orban.
Well, I can't believe that. I can't believe that because I love Hungary and I love that Viktor.
US official voices pulling out all the stops there to express their support for Hungary's Prime Minister Viktor Orban ahead of the country's election. That takes place this weekend, campaigning getting into a higher gear then over the next couple of days. US Vice President J.D. Vance was just the latest in a series of leaders, many from the far right, visiting the country in a bid to give Orban a boost. Polls indicate that after 16 years, Hungarian voters may have lost faith in their populist premier. For more, let's go to Bloomberg's Chief Europe correspondent, Oliver Crook. Ollie, good morning. So why does Hungary's election matter so much to America? Let's start there.
Yeah, there are a lot of reasons, Anna, that's the case. I mean, one of them, and the most obvious, is that it's one of the regimes within Europe that is the most aligned with the sort of values of MAGA, anti-immigration, sort of return to conservative sort of Christian values, and really on the same side of the sort of culture war. You know, for J.D. Vance, who was there yesterday, you know, it was an opportunity to take some very explicit shots at the bureaucrats in Brussels, which he mentioned 5 or 6 times in his first speech. But really what this is about, I think, on a fundamental level, is a very close personal relationship between Viktor Orban, the President of the United States, Donald Trump. You know, Viktor Orban would go visit Mar-a-Lago in the campaign. He endorsed President Trump, and really their sort of destinies of these two political movements are seen in some ways of sort of going hand in hand and really wanting to gain more momentum, not just in Hungary, but across the right in Europe. There's a real question about how much impact these visits have, how much impact particularly the visit of J.D. Vance has. The people I speak to say most people in Hungary don't really know who J.D. Vance is, but it probably gasses up the sort of base that's already going to vote for Orban. But there's also a broader question about the MAGA movement and Donald Trump vis-a-vis the right in Europe. You know, with what we've seen so far this year, we talk about Greenland, the Greenland moment, we talk about the war in Iran. There's basically no support for those two initiatives anywhere in Europe, including the far right. So it's not clear that the value of a Trump endorsement is what it was about 12 months ago.
Orban's been in power for a long time. What do we look at next? What are the consequences of ending that period? What does it mean for Hungary? What does it mean for him?
every expert that I've spoken to, Guy, really has a great deal of difficulty kind of answering that question. I mean, the vote is going to happen on Sunday. There are a ton of questions about, you know, any kind of election interference that could happen. If this is in any way close in a number of the different districts, you could have the Constitutional Court and the Supreme Court both stacked with Orban allies that could contest these things, that could send these sort of cases back from court to court. That being said, you know, you can skew things on a couple of percentage points, but as you can see on the screen there, we're talking about almost a 10-point spread between Peter Magyar and Viktor Orban, the sort of opponent there ahead of Viktor Orban, who's trying to go for his 4th consecutive term. You know, he's been in power for 16 years. That is difficult to sort of maintain enthusiasm and momentum through any tenure. And we should say, I should just want to say the poll that we got yesterday that was reported by local media, saying that the opposition could actually get between 138 and 143 seats of the 199. Guy, that would mean not just a majority, that would mean a 2/3 majority, which is what Orban has right now, where you could legislate basically anything you want, even changes to the Constitution.
It's going to be an interesting weekend. Chief Europe Correspondent Oliver Crook, thank you very much indeed. Let's turn our attention back to what is happening with the markets. Massive day yesterday, risk on, equities really pricing in a lot of good news. Today, we're in a holding pattern, waiting to see what happens next. So, how do we feel this morning? Let's try and answer that question. Bloomberg, MLive, Scarlett Montgomery-Koenig joining us around the table.
I mean, I think the overall feeling is pessimism today, certainly. I don't think you can get any more positive headlines that make you have as big a rally as we saw yesterday, given that we're not actually having talks start until the weekend. So it's looking more pessimistic, especially because of the moves that we've already seen. So I looked at bonds, equities, and FX this morning in terms of how much of the pessimism related to the war had already been priced out. And some markets, like European EM equities, are back to levels that they were at prior to the conflict. Yeah. So essentially no economic damage priced whatsoever. And that means the risk is definitely to the downside.
And what about the extent to which markets are still pricing hikes in Europe and elsewhere, Skylar? I mean, does it make sense to you, the extent to which those hikes are still being priced in? And do you think if we see more evidence that the ceasefire holds, then some of those hikes will slowly be priced out?
I mean, I think it depends on to the extent that energy prices stay elevated in terms of what's that inflation shock. I do think it makes sense also that you have kind of more pessimism priced into bonds than you do in equities, because in bonds we know we're not returning entirely to the biases that we had from central banks prior to the war. I don't think the expectation is at all that the Fed will cut this year, especially given the starting point for core PCE is 3%, which we'll get later today. And then at the same time, we know in fixed income too that you should have a higher floor on term premium, and this shock was a very cognizant reminder of that. So I think, yes, you know, bonds look a little bit more optimistic than what oil prices do, but that pessimism relative to equities is likely to continue.
Let's come back to the sort of pessimism-optimism theme. How much negative news would it take, though, to get equities lower from here? Like, how big a shock do we need to see, either on the downside or the upside, to move us from where we are now?
I think it's the timing factor of, I don't think we're going to get that much in the next 2 days, right? So it's, you know, what happens with those negotiations, and do we have that 2-week ceasefire window? What happens at the end of that? So we've kind of just pushed out a deadline. I also think it matters the flow through the Strait of Hormuz. So we know ships are going through now. That was what really the market held on to on the ceasefire, was that was the positive, because it meant that energy prices could come down. So if we just get continued no flow, that's negative in itself and can kind of chip away at the market. So whether it's kind of this grind lower because we're not getting more positive headlines or an opening, or we get something big like we're back to massive bombings, not just within Lebanon, but larger scale.
It didn't sound to me like things change very quickly when it comes to the Strait from our conversation with the International Maritime Organization, because they are saying they don't want to pay a toll, and they, as yet, don't have the reassurances that they need that there are no mines. So,
and there's no plan B.
Right, so all of that seems to yet to be established before you can actually start sending ships through in any great number.
Absolutely. Good news is the Masters on for the next couple of days, so we can watch a bit of golf. I'm joking, but it does seem as if we're going to be in an information vacuum for the next couple of days until the talks. So what are you doing for the weekend? I know you've
I think
just sit tight.
Yeah, I guess the bias has always been to take risk off into the weekend because you don't know what's going to happen, and especially this weekend, we know there's going to be headlines.
Okay, I'm on the pulse next. That wraps this show up. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
The risk rally fades with Iran saying the ceasefire agreement with the United States has been breached. Both sides are heading to Pakistan for direct talks. Oil rebounding after its biggest one-day drop since April 2020 yesterday. This as the Straits of Hormuz remains effectively blocked. And Bloomberg understands the White House wants specific military commitments from European allies on how to reopen that crucial waterway, with Trump once again lashing out at NATO. How does that get priced in this morning? It feels like the market is waiting for more information. That's what the picture broadly behind me is telling you. Big rally yesterday, starts to fade in the United States towards the back end of the session. Futures are not moving much right now over in the United States. We're down a little bit. Yields are, maybe that's where a little bit more action is coming through. We are seeing a little shift in yields. The real story, though, I think comes in Brent crude, which is up by nearly 4% now. After a massive drop yesterday, we're beginning to climb a little bit higher. The dollar not doing very much. The market is being led by crude, but it's not moving very quickly, and I think that's the broader picture that we need to think about. Let's talk about what we look like here in Europe. Broadly a sea of red. London is being lifted by some of the energy stories this morning around some of the names like BP and Shell. DAX, CAC off. The DAX is now off by 1%, so Europe beginning to roll off some of the big gains that we saw yesterday. So we've got a lot to talk about, so let's get to it.
Newsmakers and market movers. This is The Pulse.
Morning. Welcome to The Pulse. I'm Guy Johnson here in London. Let's talk about the situation we now find ourselves with this Thursday as we head towards the weekend and talks that potentially could take place. The US Vice President, J.D. Vance, will lead, we understand, the US delegation to Islamabad this weekend. We understand there are going to be direct talks with Iran. President Trump, meanwhile, says US forces will remain in the Middle East, vowing to ramp up attacks if a deal is not reached. This as Tehran says several terms of the ceasefire that it thought it had agreed with the United States have been violated.
No ceasefire ever goes without a little bit of choppiness. What we have been very clear about is that we want to stop the bombing. We want our allies to stop the bombing, and we want the Iranians to do the same thing. We're seeing evidence that things are going in the right direction, but it's going to take a little time.
JD Vance, the Vice President of the United States. Let's get the latest now. Bloomberg Horizons anchor Jumana Basechi joining us out of Dubai. Jumana, good morning. What is the status of the ceasefire? What do we know right now?
Well, you heard JD Vance there saying that things are going in the right direction. And I would say overnight, things seem to have calmed down. Very tenuous ceasefire. Still, JD Vance described it as being a fragile truce. And indeed, a lot of attacks still went on throughout the course of the day. Yesterday, many missiles intercepted over here in the UAE. Some drones also intercepted in Saudi Arabia, over Kuwait as well. And then Iran also reporting attacks on one of their refineries in the early hours of the morning. But the biggest front that opened up really was in Lebanon. And remember that early yesterday morning, the Israeli Prime Minister said that while Israel's official stance is they support the U.S.-Iran ceasefire, from their perspective, it does not apply to their ongoing front with Hezbollah in Lebanon. And what we saw yesterday was the bloodiest day of attacks since the beginning of the war. Israel launching over 100 strikes in over 10 minutes in Lebanon with a death count of more than 200 and really prompting a lot of the international community to say, what is going on here? And because there was a lot of disparity between what the U.S. side had put forward versus what Iran claimed was in the ceasefire deal, which is that Lebanon was part of the broader regional ceasefire. So this is a big question as we head into the weekend. And of course, those direct negotiations are going to be taking place. That's been confirmed now in Islamabad. Pakistan have been mediating quite aggressively to get this through. We have confirmation that JD Vance, Steve Witkoff, and Jared Kushner will all be attending from the U.S. side, and the Iranian ambassador to Pakistan confirmed that their own delegation will be arriving this evening. So on the agenda, obviously, they're going to be talking about whether Lebanon will be included in the ceasefire, but more importantly as well, for the rest of the world, I would say what is going to happen with the Strait of Hormuz, because effectively still remains shut, Guy.
It does. Okay, tell me what's happening on the water. What are we seeing? What do we expect to see today? Any sign that it's reopening?
Well, Iran is still maintaining that they should have a right to sovereignty over who and what passes through the Straits. Iranian news media overnight reporting that they've set up a two-way transit way for ships, those who want to leave and those who want to come in, and that any vessel coming in needs to get permission from the Iranian armed forces and stick to those routes specifically. So once again, sort of reasserting their right to authority and sovereignty over what passes through the Strait of Hormuz. And of course, as we've spoken about, this is an unacceptable outcome for nations around the world. Pretty much everyone has gone on the record saying that this is an international free shipping route, and it should go back to the way things were before the war. But it has emerged as a key point of leverage from the Iranian perspective as we get into those negotiations. One new thing that I would say as well is a meeting took place yesterday between the U.S. President and NATO Secretary General, which we are reporting, Bloomberg, that the U.S. President has asked very clearly for NATO and for European allies to articulate exactly how they're going to help with the reopening efforts of the Strait of Hormuz once the conflict ends. And many of these European countries have said, while they don't want to get involved militarily in the war, they're happy to assist with the maritime operation once the conflict is over. And so the U.S. is really pushing them now to see exactly the extent of those efforts, the technicalities, where they can come in, where they can help. But at this point, we still don't have a lot of details. And Iran are still insisting that they will have control of anyone who enters through, will limit the number of vessels, possibly to around 10 to 15 vessels a day, and potentially introduce a transit fee too, all which are non-starters.
Yep. We don't know. The market is trying to price in a lot of unknowns at the moment. Jumana, thank you very much indeed. Jumana Basechi joining us out of Dubai with the latest on what is happening in the region. Let's try and talk about the economic impact of all of this. Ludovic Subra, Chief Investment Officer and Chief Economist, joining us from Allianz. Good morning, Ludovic. So how are you thinking about what happens next? Inflation looks like it's going to be an issue. How are you trying to understand, model, kind of decide what inflationary impact we're going to see from what we're getting out of the Gulf right now?
Well, look, something is sure is that markets got a bit ahead of themselves, because now, you see the sloppy ceasefire and, the fact that this conflict may become a regional conflict and stay on. I mean, Jumana just talked about Checkpoint Charlie in the middle of 20% of global trade, right? Iran mentioned yesterday that they wanted to put crypto or yuan payments, right? So there is still a lot of friction embedded in global trade. So that's inflationary. Oil is going down a bit, but the energy, cost altogether, it will take some time. We don't see tanker count going up. So we have the US inflation tomorrow. I think there's going to be an expectation that it goes to 3.3, 3.4%. I think in Europe, we're also very concerned about the reminiscing effects, the stickiness of the inflation. And as mentioned several times on Bloomberg, I guess, people are worried about these stagflationary pressures. That is not only like 22, where you had a lot of pent-up demand before. This time you have, pre-existing conditions of lower growth and lower buffers. So everybody is holding their breath a bit because the next couple of quarters are going to be essential to understand how much this has tested with the resilience of some economies that were a bit in the muddle through a period before the war.
Ludovic, how much capacity do European governments have to protect their citizens from this energy shock this time round?
Well, the question is, when I look at what Asia is doing and all the sobriety measures that are actually good to maintain fiscal, orthodoxy, I'm very worried about all the announcements that came up and that were very profligate on the European side. So I hope that we won't completely buy out this crisis for many reasons, from the price signal to the fact that we don't have so much fiscal space. But the short answer is, I think there is a feeling here that they could do a lot more. My concern is that if we do again a lot more, we're going to pay it in the cost of debt come 25, 26, 27. And so that's something that limits a bit our ability to act. So the political spiel is we have a lot of, room to maneuver and, weaponry at our disposal. I would be a bit more cautious, and I hope that we're going to be a bit more balanced with rationing measures and, price support measures, which is really the way we do it usually. And this is very costly.
What economic impact would rationing have?
Well, less growth, right? This is demand destruction. So I think that's the main concern that all of these leaders have, because they entered this crisis with less growth momentum than say, the US. But I think it would be smarter for us to preserve the midterm, buffers should this crisis be on and off for quite a few months, right? So I would say the immediate cost, for example, of some form of rationing would be in the tune of 0.1, 0.2 percentage point of growth if we look at what the Asian countries have done. Of course, Asia is much more dependent on the Strait of Hormuz, right, than we are in Europe. But I still think it will give a bit of this idea that we could be a bit more innovative and a bit less, spending our way into this crisis like we did in 2022.
In terms of where that gets priced, where do you think it is? That feels like that would be better news for the bond markets, but worse news for the equity markets. Would that be a reasonable assessment?
Well, it's very interesting that the bond market reacted much more strongly than the bond market. I think, your guest just before was mentioning, I think it's a question of this term premium and then this inflation issue. And maybe also we've learned that firms that are listed, that represent the equity market, have much stronger pricing power than we imagined in the beginning, right? And they have stronger buffers. But that's a bit simplistic to me. I think this time around, the main question everybody has is the margins of a lot of these companies have been eroded. They need to find a lot of capex for the AI cycle. And so this energy shock is not very welcome. So I would be a bit more cautious on equity markets. And on bond markets, I think the base rate is already higher. So now the main issue is the credit spread widening. And you saw yesterday, credit spread tightened so fast. This is not, it cannot be right. For me, there is a bit of too tight to be true type of a spread situation right now. So I would be expecting a lot more triaging and selectivity among credit risk, because this is a credit risk shock 101.
Why do you think markets, after yesterday, it feels like the market's got a lot of good news priced in? What does it take to get us to realize that there are other scenarios, particularly equity markets in particular feel like they've got a lot of good news priced in? When do we start to price in the fact that there are other scenarios? Is it when shortages start to show up? When do you think the penny drops?
I think this week is a bit the first week that we're going to see the last drop of antebellum oil. So now we're going to see a bit the reality of prices. Before it was a lot of volatility on the oil price, but basically we have seen there was still a lot of oil coming from pre-war into the pipes, right? Now is the moment where we start to see, okay, this is the reality of the demand and supply. And the ceasefire happens at a very timely moment to avoid that there is a stronger reality check. So that's why I think equity markets have reacted so strongly, because it was a moment of truth that was postponed somehow. But I believe the moment we start seeing that there are more restrictions, that there are more disruptions, that there is a lot more scarcity economics, I think for the travel industry, for example, that has rebounded the strongest yesterday, I think that would be a moment where, for jet fuel, I mean, imagine the type of restrictions some companies will be facing in the next few months, right? Just because of the 172 million barrels that didn't go through, and that cannot be recuperated in the next week or so. So it will take time, and this will be choppy, and I think that's where I expect that this will start kicking in for some of these companies that have, I would say, less good financial situations to start with.
Ludovic, always a pleasure. Great to get your analysis. Really appreciate it. Ludovic Subra, Chief Investment Officer and Chief Economist, joining us from Allianz. Coming up next, we're going to talk cybersecurity concerns amid the push for simpler data protection rules within Europe. The chair of the European Data Protection Board is going to be joining us. That's next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Minutes past the hour. I'll try and get that out. Good morning. You're watching The Pulse. I'm Guy Johnson. US futures are negative. NASDAQ futures are negative. We're down by around 0.5%. Really solid day yesterday, though. Tech stocks certainly having a very good session. European tech stocks, let's talk about European software stocks, under a little bit of pressure. This after Anthropic launched Claude managed agents and Meta unveiled its new AI model. Meta's debut, the first, of course, since Chief Executive Mark Zuckerberg embarked on a multi-billion-dollar overhaul of the company's artificial intelligence organization. Let's talk about this. Bloomberg senior strategist Neil Campling joining me around the table. So NewsSpark. This is, so Llama's gone, Llama's out, NewsSpark is in. This is closed proprietary stuff that we're talking about here in terms of the new model. Zuckerberg has spent an epic amount of money getting here. How good is it?
That remains to be seen. However, I think the most impressive part is the fact it's only taken 9 months from the concept on the drawing board to a fully fledged model being released. This is kind of telling you the power of these models, how quickly these new AI supermodels can be created. And this is the first product out of this stable. So, you know, we've had the announcements last night. We'll then get more data coming out in terms of the next few weeks to see how successful it can be. But as we've seen with other players in this market, OpenAI, Anthropic, Google, etc.,
how do they monetize this? Is it easier for Meta to monetize a product like this, given what they have already?
Absolutely. You know, if you have all of that data, the key is data. The value is in the data set.
Yeah.
The reason that Meta and Google probably have advantages relative to Microsoft is that they own that data. AWS or Amazon own the data. Microsoft owns some of the data, but some of it is OpenAI. So it's about owning the data. If you can mine your own data sets and then create these tool sets and these agentic AIs on top of that, they could be super powerful.
Is Anthropic once again kind of adding to the SaaSpocalypse story that software vendors are dealing with right now?
I want to try and put some numbers around this if I can, Guy.
Yep.
We talked about $30 billion of ARR, the annualized revenue run rate from Anthropic, talked about earlier this week, relative to $10 billion last year. Now, I've seen research today that says they could be at a $100 billion run rate by the end of that year, the end of this year. Put that in context, for massive US public listed companies, which are Salesforce.com, Adobe, Workday, and ServiceNow, Anthropic's number, if they get to that level, is 11 times greater than those 4 companies combined. So SaaSpocalypse, you know, absolutely, that's a big, big risk.
Talk to me about, let's go to data centers. Let's talk about Oracle. Well, let's talk about PIMCO and Oracle. PIMCO's looking to offset some of the risk by the looks of things, trying to kind of sell off some of the Oracle debt that relates to some of these data centers that Oracle is trying to build for some of the LLM guys that we've just been talking about. Why? Is there a signal in this?
This package of debt has been on the block since January. So it's taken a while to get to this level where they're now testing the market to see the appetite. We saw the CDS spreads for Oracle blow out last year because of concerns. Now, Oracle does face a different balance sheet issue relative to many of the other hyperscalers. Many of the big tech firms are massively free cash flow positive. Oracle's not, and Oracle has net debt on the balance sheet. That's the big difference. So PIMCO definitely going to be testing the appetite for debt for AI build out for sure. We'll see how that goes.
Let's take a step back. Yesterday was a really big day in terms of risk on. We have got very optimistic, particularly in equity markets, very quickly. And there's a lot of good news being priced in. What is yours? You hear from a lot of trading desks. What are you hearing this morning in terms of kind of where we now are and what the market is thinking about today, tomorrow, into a weekend?
The key word there is what you finished up with, the weekend. You know, until Saturday's conversation is going to take place, it's very difficult for traders to put more risk on until event. Now, yesterday's short covering appeared to be, from data we've been told, it's the biggest short covering day by the hedge funds in over 4 years. So that means it's a bigger short covering day than we had on the Liberation Day and the tariffs last year. Big number. So to expect follow through from that when we've still political noise is the key outlier and risk out there. I think we'll have to tread water until the weekend.
It felt like the CTAs also ran out of steam by lunchtime.
Absolutely. Yeah, we heard that, actually. We heard that from a couple of trading desks. By midday US time, the CTAs were done with that positioning. And then you didn't really see the active managers coming through thereafter. And if you look at volumes on the MSCI World Index, we went back above the 20-day average, but not by a great deal. We're still well below numbers we saw in January and February. So it feels like a holding pattern until we got a clearer passage from here.
Wait for the weekend. Neil, great to see you. Thanks very much indeed for stopping by to see us. Senior strategist Neil Campling here at Bloomberg. Let's change gears a little bit. The EU is pushing to simplify its data and privacy rules in a bid to boost AI technology and compete with the United States and, of course, China. This amid concerns the current geopolitical uncertainty could leave some jurisdictions more vulnerable to cyber attacks. I want to take you to Brussels. Our Chief Europe correspondent, Oliver Crook, standing by with more.
Yeah, that's right, Guy. I mean, listen, in the age of AI, we knew before that, in the age of social media, the sort of preciousness of data as a sort of commodity that has only been sort of invigorated now by the sort of boost of AI. And so we're very pleased to be joined by Untitled, who's the chair of the European Data Protection Board, speaking to us today here in Brussels. Thanks so much for joining us today. Thinking about AI, we think about all the issues that it sort of generates in the very abstract. From a data protection sort of standpoint, where we have this sort of mass scraping of the internet, what kind of issues does that throw up specifically for individuals?
Well, when we are talking about AI, there is a lot of processing of personal data involved. It is either when you're creating the models or when you're using the models. You very often process personal data. So this is, of course, a topic on which we, the data protection authorities, we have been focusing already for quite a long time. So we've been working on this topic for maybe I could say even years. We, for example, delivered an opinion on this topic. This is already over a year ago. At the moment, we are working together on joint guidelines with the European Commission on the interplay with the AI Act and the GDPR. So there is a lot of work done in this field, and of course, like you said, it really relates really strongly with the processing of personal data as well. Of course, not all the AI models, but generally speaking, it very often involves the processing of personal data.
And thinking about a sort of policy architecture of how you design that, how do you design that in such a way to both ensure the sort of safety of data and sort of the individual value of the data for the individual, while at the same time not hampering innovation in a time when you have many jurisdictions like the United States that are basically don't want to regulate because they want to be number one?
Well, this is a very good question. Of course, it's important to start to think about these matters already at the very beginning, early in the process. And when we are talking about the competitiveness and the regulation, they are not necessarily mutually exclusive. If you think about, for example, some sectors like aviation or let's say financing sector or banking sector, they are quite heavily regulated, but at the same time, they are also very competitive sectors. Would you like to put your money in a bank you don't trust? Or I don't know, to take, buy flights from an airline company you don't really trust? It's about creating trust, and this is the same elements also when we talk about technology and how important it is that people can trust the technology they use.
And so one of the things you also oversee and think about is data transfer. And again, going back to the moment of trust, there's a very, very low level of trust between the United States and Europe at the moment, and real questions about building European sovereignty to ensure that, say, for example, an American company that has European data can't be forced by a government willing to leverage almost anything to give that data. How do you think about that? And do you think that can United States companies be trusted with European data?
Well, the question of data transfers, I think it has been quite topical for a long time. Yeah. And now, when the data privacy framework was put in place, we, the EDBB, we did deliver an opinion together with the European Data Protection Supervisor. And in this opinion, we were really focusing on the redress mechanism, on the judicial remedies. And this is, of course, also something what we will be focusing on when there will be the biannual review. Other than that, it is the European Commission which monitors how it functions, the data privacy framework.
And a word on GDPR, because this is now a legislation that has been in place for about 8 years. How do you appraise it today? There's been obviously a lot of criticism that it makes, doing business digitally in Europe a lot more difficult versus the privacy that it offers.
Well, I think that, the digital environment itself is getting more complex. So there are increasing number also of laws, legislation. So it is not only about the question of GDPR, it's also about the interplay between GDPR and the other legislation. We, the regulators, we have recognized the call for the simplification and the need to simplify some frames. And what we have done here, we have actually gathered together last summer in Helsinki, and we made a commitment. We made a commitment with the approach of GDPR made easy. We made a commitment of enhanced stakeholder cooperation, and we made a commitment to focus on cross-regulatory cooperation. And these all, they have the goal of clarifying the existing legal framework. And
Well, Untitled, thank you so much for your time. That's the chair of the Data European Protection Board, speaking to us here in Brussels. Much more after the break. Thanks very much. This is Bloomberg.
about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. You're watching The Pulse. I'm Guy Johnson in London. What do you need to know? Okay, let's start with the risk rally. It is fading. Iran saying that the ceasefire agreement with the United States has been breached. Both sides, we understand, heading to Pakistan for direct talks. We'll get to that in just a moment. Oil rebounding after its biggest one-day drop yesterday. That was the biggest drop since April 2020. The Straits of Hormuz still effectively blocked. Again, we'll come back to that story in a moment. And Bloomberg understands that the White House wants specific military commitments from European allies on how to reopen the crucial waterway, with Trump once again lashing out at NATO members. Okay. The White House saying that the US Vice President J.D. Vance will be leading a delegation to Islamabad for direct talks with Iran this weekend. This as fighting continues in the Middle East. In a post on the social platform X, Tehran's ambassador to Pakistan said the Iranian delegation will arrive tonight. Fatih Mangi, Bloomberg's Pakistan bureau chief, joining us now. Let's talk about, first of all, what we understand is actually happening. The Pakistani Prime Minister says the ceasefire has been violated and that talks, or at least the spirit of the talks, have been broken. I'm also hearing that the delegation from Iran may or may not be going. What do we know at this point about what these talks are going to deliver?
Well, I think, with what you said, I think, one thing that is quite clear right now is everything is quite fragile. It's not glued together very well, and things can, go south or north really fast. But what we know for now is that the delegations from the US and Iran are expected to come to Pakistan, Islamabad precisely. Initially, talks were expected to happen on Friday, but they have been moved to Saturday now. There is a massive lockdown in Islamabad. Mobility has been confined. The most important parts of Islamabad are now under strict lockdowns and checkposts, so nobody can get in and out without any security clearances. So talks are going to happen over the weekend. Precise time of when each delegation will come, all of those are a bit, here and there right now, but talks for now are happening.
What do we know about what they're going to be talking about, what the basis of the discussions are going to be, and how far apart they are starting?
So They're starting quite far apart. It's been quite clear that there's a lot of distrust from all sides, and Iran has been mentioning that multiple times as well. We understand from our conversations that the ceasefire was broken, and there was discussion between Pakistani and American authorities on that too, that if we want the ceasefire to hold, then these attacks need to stop. And the ceasefire was announced only after some assurances were given to Pakistan that some attacks will not happen anymore. So as I said, things are very fragile, quite fluid, but right now it seems that talks will happen. The key issues that will be discussed is the passage for Strait of Hormuz. We understand uranium enrichment dilution, and Iran will also talk about sanctions being lifted.
Fuzzy, thank you very much indeed for the update. We'll look for further updates over the next few days. Fuzzy Mangi, Bloomberg's Pakistan Bureau Chief, joining us from Islamabad. He mentioned it there, one of the critical issues, the Strait of Hormuz. At this point in time, it still looks largely blocked. Ship owners are trying to basically understand if they can safely transit, what that will mean. Now, earlier on, Anna and I caught up with the International Maritime Organization. It has pushed back against the introduction of universal tolls on the Strait. We spoke to its Secretary General.
The plan that we're making at IMO and that we're working on, it's based on international law, that it's in place. And this is why we're not looking at scenario B into introducing tolls that have not been internationally agreed. This is a dangerous precedent, and that's why it's important that when countries come over and they all uphold the freedom of navigation, and is one of the main statements that is made, this is the way that we will continue to work forward. We have already outlined the operational ways that these transits can continue to go back to normal. What we cannot have is this different or parallel approach when another country introduces a different mechanism that is not in line with the international practice, and we don't even know if it guarantees the safety of the ships.
Asana Dominguez, the Secretary General of the International Maritime Organization, pushing back hard on the idea that we could see tolls being introduced. He says this is a piece of water that needs to go back to the original plan that was in place before this conflict, i.e. freedom of navigation. No plan B. Oil bouncing back because at this point in time that is not available. Freedom of navigation is not available. We saw a massive drop yesterday, but you're finding yourself in a situation where now the waterway is still closed, and Iran's Fars news agency reporting that the passage of tankers through the Straits of Hormuz is and will continue to be halted as long as Israeli strikes on Lebanon continue. Let's get a sense of what is happening here. Bloomberg's Middle East energy reporter Anthony DePaolo joins us now. Anthony, what is it going to take to get these ships moving? The ceasefire looks really fragile. You can understand why ships' captains, ships' owners are being very cautious right now.
Yeah, good morning, Guy. Well, it's not even clear at what stage the opening of the Strait of Hormuz is in the whole ceasefire process. Initially going into it, one of the prerequisites for a ceasefire from President Trump was that there be an immediate reopening. Now it looks like the fate of Hormuz and how it's going to be managed is subject to the negotiations. What we're seeing right now clearly so far is that it's not fully opened. Iran is still expressing its control over Hormuz in terms of wanting vessels to get clearance from them, potentially collecting these tolls. Although we're getting different information about that as well too, and just unclarity for the ship owners who are trying to go through there. They don't know if it's safe yet. A lot of the reporting that we did yesterday on some of the shipping agencies were saying, it's not yet clear, it's not yet safe, so avoid going through. So they're going to need to see lots more clarity, an expression that they can go through safely, and that there is a permission, either a permission system or a full opening. So that's what we need to see in order for those barrels to come out. A lot of those vessels trapped inside the Gulf haven't been able to move out yet, so we need to see them move out first. And then if that's safe, then we might see vessels trying to go back in to pick up oil and allowing some of those producers to resume production, Guy.
What do we know about the ships? Are there ships trying to make the passage now?
In terms of oil tankers, we've seen a couple that have moved closer to the mouth of the Persian Gulf at Hormuz. So we're watching those carefully now to see if they do go through, if those vessels do go through. Yesterday, we didn't really see anything other than that kind of normal Iranian traffic. Iran has been letting, of course, its own vessels go through. They've shipped some of their own crude cargoes to China even during the war, and they've been loading and exporting at roughly stable levels throughout the war as they've gone through Hormuz. But now we're looking potentially at some additional tankers going through, some cargoes that are tankers that are apparently carrying Iraqi crude, Saudi crude. So this would be new in that we're getting different barrels from different countries on the market. That's not to say that the Iraqis or the Saudis are agreeing to this passage, because these cargoes are already on Chinese-owned tankers. But this is another tanker operator that hasn't gone through yet itself. So that would potentially be another owner going through with different cargoes on there. So not just the Iranian barrels, but still mainly going to China. So we've got a little bit of movement there, and we're watching to see if those tankers do go through the Strait today, Guy.
Anthony, we'll keep watching for updates. Thank you very much indeed for bringing us what we are seeing right now. Anthony DePaola, Bloomberg Middle East energy reporter. Let's talk more about what is happening here and what we should watch for next in some of these oil and gas stocks, and whether or not there are other effects that we're going to see. Michele Della Vigna, head of EMEA Natural Resources Research at Goldman Sachs, joins us now. Good morning. Let's start off with hydrocarbons, and then we'll kind of progress from there. What is your expectation now for what we are going to be looking at over the next few weeks, months, and potentially years in terms of the price of molecules that we all rely on, not only for energy, but also for plastics and all the other things that we are going to be looking at? Do we need to rebase ourselves at a significantly higher level for longer? And do you think the market's doing an adequate job of doing that?
I think everything is changing. I think just the lower oil inventories mean that oil price should be $20 higher than we previously expected, at least for the next 12 months. So in many ways, $80 is the new 60. And that is provided that everything comes back to normal in terms of transit. The gas oversupply we were expecting for 27 has been pushed back at least by 1 year. And there's been damage to pretty much 2 million barrels per day of refining capacity, which could take at least 12 months to come back. But more importantly, I think this is showing that the industry has been underinvesting in hydrocarbons for too long. So my sense is years after this, we will see as the key consequence a major revival of energy capex like we have not seen since before the shale revolution.
So you don't want to be buying the oil majors. Presumably you want to be buying the companies that supply the oil majors if we are going to see that push.
Definitely. Let's go back to the oil services. I think it is such an exciting setup for them. They've restructured, consolidated, and taken away capacity through 15 years of pain. And now we're going to see a major return of capex, especially in areas like deep water. Not only the Strait of Hormuz is becoming more risky, but U.S. shale is peaking. I mean, shale is aging very gracefully, but is aging. It's no longer going to contribute that major growth it did in the past. So we need a revival of exploration where capex is still half of what it used to be, and deep water. I think that's going to be the most exciting part of the energy space in the coming years.
Michele, if that's the case, though, it's going to take a while for that to happen. Are we going to see shortages in the near term before that capex kicks in and delivers?
I think there will be some shortages possibly in some areas in the next couple of months, in some airports on jet fuel, in some places on diesel, but those are going to be small and local issues, as long as Hormuz reopens in the coming weeks. I don't think we will see actual shortages in the medium and long term, but I think we need to see the back end of the oil price going up, because it is underpriced and it is not justifying enough investments to continue to have non-OPEC growing through the end of the decade.
Michele, why do you think countries will invest in hydrocarbons, or companies will invest in hydrocarbons when they could be investing in renewables?
I think we need both. We clearly need both. I think renewables are badly needed for security of supply, especially in Asia and in Europe. I think we need more investment in the grid to better connect the parts of Europe which are not connected at the moment, right? Solar in Iberia, with nuclear in France, with hydro in the Nordics and offshore wind in the UK. And then we will need nuclear and fusion, but all of this is not enough. We also need enough gas to support the stability of the system, especially seasonally, and we will need more cheap oil, because oil demand in our forecast will grow for the next 20 years.
Michele, you said a moment ago that the floor for oil prices is $20 higher. What is the ceiling? Where's the ceiling? How high could we go?
So our view is that if there is one more month of closure in Hormuz, oil price will go back to $100 per barrel. And effectively, every extra month of closure is an extra $15 to $20, simply because of the lower level of inventories, which starts to become dangerously low. If we were to estimate the absolute peak, we have updated some of our analysis of demand rationing pricing. If we update it for inflation, what we saw in 2007 and 8, we would need to go towards the $200 per barrel. We don't think it's needed. There would be several months of Hormuz closure. Hopefully, we don't need to get there.
It's good to have a model, though, to work with. Thank you very much indeed for providing one. Michele Della Vigna, Head of EMEA Natural Resources Research, joining us from Goldman Sachs. Coming up, we're going to turn to private credit. Craig Nichols is going to be joining us, Head of Credit Strategy at Sonia Asset Management. Private credit, absolutely front and center as well. Redemption requests, they just keep piling up. What do they mean? We'll find out next. This is Bloomberg.
'Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The result of the American presidential election created a new reality. In Europe, everyone must adapt their own destiny and their own policies to this.
I also want to send my best wishes to Prime Minister Viktor Orban, who I am endorsing.
And it's important to understand how important the relations between leaders are to the relations between countries.
He's a fantastic guy, and it's such an honor to endorse him. I endorsed him last time he won, and he did a fantastic job.
I've seen a guy who has ferociously advocated for the interest of Hungary. I'm here to help him in this campaign cycle.
We want this economy to prosper. We want this country to do well. It's in our national interest, especially as long as you're the prime minister and the leader of this country.
Mr. President, you are on with about 5,000 Hungarian patriots, and I think they love you even more than they love Viktor Orban.
Well, I can't believe that. I can't believe that because I love Hungary and I love that Viktor.
US officials from the top down expressing their support for Hungary's current Prime Minister, Viktor Orban, this ahead of this weekend's elections that are going to be taking place. US officials joining some other European leaders, many, of course, from the far right, supporting Orban ahead of these elections. Bloomberg's big take looking at how the vote could, though, end the populist premier's long tenure. For more now, we're joined by Bloomberg's Budapest bureau chief, Thomas Eskrid. Thomas, let's talk about kind of what is actually happening on the ground. Despite all the support we're getting from the United States, Orban's on the ropes. So why is this happening? Why such a change within the Hungarian population? And why? What is driving this shift?
He's had a very long run in power, as you said, and we've come to a moment where the broader economic environment for him is no longer so benign, and that has and the structural problems in the economy have led to a period of very slack growth, and that's combined with, I think, a certain anxiety about the country's positioning in the war. With regard to Ukraine, Orban has positioned himself as one of the as the foremost champion both of Russia and of the US in the European Union, and that, I think, has certainly caused some discontent within his own party, and that's created a space for this challenger, Peter Magyar, to emerge. More than that, I think there's also a real sense of anger about a long period in which it was felt that a small group of people were growing richer in his system. Members of his own family, in many cases, were getting were being enriched, were really enjoying the spoils of the economy, which was structured to benefit him and him and the party around him. So for all of these reasons, there's a lot of discontentment. He made a huge bet on bringing in giant Asian auto suppliers and car makers. Those bets haven't really paid off, partly because of slack demand in Europe and partly because of a series of scandals where it turned out that environmental standards weren't being applied, and frankly, there were allegations of people being effectively poisoned in battery plants, and this again caused real anger in the population at large. And now 16 years is a very long time, and there is real sense of fatigue, I think, and a desire for change. Whether that will actually play out in the elections, it's unclear so far.
And we're going to look forward to all the coverage that we're going to get from those elections. Bloomberg's Budapest bureau chief, Thomas Eskrid, thank you very much indeed. Okay, let's turn from the politics back to the markets and talk a little bit about one of the other risks that is out there right now. The $1.8 trillion private credit market is being hit with record redemption requests, particularly from private individuals. My next guest argues the, quote, golden age for private credit is firmly over and is entering a moment of reckoning where underlying financial stress is currently being masked by maybe a little lack of transparency and creative accounting within the sector. Craig Nichol, head of credit strategy at Sonia Asset Management, joins us now. Good morning.
Thank you for having me.
Do we have a problem?
Potentially, yes. As you say, I think the private credit market is going through a period of reckoning. It's playing out so far in the kind of private perpetual BDC world. We've had massive redemption requests there. I think, however, and that in itself is certainly a problem, and I think that will kind of continue and persist through at least the remainder of this year. But the reality is that's kind of masking bigger structural problems that have kind of been building under the surface for private credit. And I think up until now, they've largely been masked over because the market has been able to grow at an incredibly strong rate.
Yep.
As you say, it's a $1.8 trillion market. If you only look at the kind of non-IG part of it, which has roughly doubled over the last 5 to 6 years, you've had pretty good returns over that period for the most part. And I think probably the most important thing is the opacity of the asset class has effectively acted as a bit of a volatility dampener kind of years gone by. And I think ironically what we're seeing today... Well, yeah, but I think ironically what we're seeing now is that has kind of done a full reversal, and I think it's this very opacity which is driving a lot of the fears among private credit today, and hence why we're seeing these huge redemptions.
From what happens next, I'm presuming, depends on what the economic cycle does. Is that the biggest variable now? If we get a tough economic cycle, presumably a lot of the portfolio companies that are kind of within the structures are really going to feel the pressure, particularly at the bottom end.
Yeah.
Is that the biggest determinant now of what happens next?
It is a determinant, and I think it plays a very big role. But look, I think the reality is the private credit market, unlike, say, public markets, hasn't really gone through true cycles. Yeah, we've effectively just had one big elongated cycle within private credit, and you've had huge amounts of growth within that. I think what we're seeing now is clearly the biggest problem with private credit is its exposure to software.
Yep.
It goes beyond that, though. You can look at kind of broader AI disruption. You know, we've kind of estimated that we think about 60% of the private credit market is asset light in some form or another, which is substantially higher than what you see in public credit markets. And I think the realization is we are just going to have higher losses in the foreseeable future. Right. And those will be higher losses. That will be a function of both higher default rates, but also significantly lower recovery rates. You know, I don't think it's unreasonable to say that for a lot of these software names, the recoveries could be, you know, anywhere from 0 to say 30 cents on the dollar.
Wow. Okay, 0 is a fairly bleak number, to say the least. So it's not just the economic cycle; it's AI as well. Does what starts in private end up in public? Is that kind of how does that mechanism work?
Yeah, I think the risks are definitely kind of contained within the leveraged finance ecosystem, and I struggle to see a scenario where if we do see meaningful stress in the private credit market, which involves some sort of decent repricing, that public credit markets are completely unscathed from that. And, you know, I think what we're seeing today is the lines have blurred between public and private credit markets. That's been happening for the last kind of 3, 4, 5 years. We have managers which obviously span both. We have investors which span both, but we also have constituents within both markets. You know, they may have a capital structure which bridges both public and private credit markets. And so I think the stress would permeate through the entire leverage.
Is the insurance the connection? Is the insurance sector, which has a particularly tight connection with this space, the connection, just briefly?
Yeah, the insurance side of it plays a very, very big role. You know, the huge growth in the market in terms of capital has come from the insurance sector predominantly, and that has driven a lot of this kind of interconnectedness between the two.
Great stuff. Thanks for the update. Really appreciate it. Craig Nichol, Head of Credit Strategy at Sonia Asset Management. That wraps up. We've got like a kind of minute and a bit to go. Let's just quickly talk about what's happening in the markets right now. At the moment, we're kind of marking time. US futures are a little softer. Big rally yesterday. We're not completely unwinding that. You've got big weekend talks coming up. You've got inflation data coming towards us as well. The Masters is on as well if you're looking for a nice distraction. But the next few days are going to be quite busy. Anyway, that's where we are with the markets. The brief is coming up next. We'll do this all again tomorrow. This is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's 5 a.m. in New York, 10 a.m. in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump vows to keep U.S. troops in the Persian Gulf as the Strait of Hormuz remains largely blocked and the ceasefire remains fragile. As Israeli strikes continue in Lebanon, U.S. Vice President J.D. Vance will lead a delegation to Islamabad for direct talks with Iran. The stock rally has stalled as Goldman Sachs says Brent crude will average more than $100 a barrel through 2026 if the strait remains closed for another month. Take a look at what's going on with futures after a 2.5% gain in the cash trade yesterday. We're now off just about 0.4% on the benchmark index. NASDAQ futures down the same, and the small caps down a little bit more right now. Take a look at what's going on with treasuries as well. A lot more movement in Europe than we have here. The 2-year yield staying put at 3.78. The 10-year yield not moving at all at 4.29, and the 30-year yield at 4.88. But it's really crude that is, as usual, the most interesting here. We are starting to see a bounce back for Brent, 98.17. NYMEX crude at 97.92. And these bounces come after the biggest drops that we've seen since 2020. So yesterday was quite a big move, obviously, for Brent. Let's get a look at some of the single stock stories this morning. For that, we go out to London and Chloe Melee. Chloe?
Good morning, Matt. What we're seeing today is very much a reversal of what we saw yesterday, the big moves that we saw yesterday with oil and oil companies tumbling because of the ceasefire. But now we have got essentially questions around the fragility of the ceasefire, and the Strait of Hormuz also remains largely closed, as you mentioned. And so we are seeing this lead to a rebound in oil, and therefore a rebound in those oil companies as well. They are very much in the green today compared to the tough day that they had yesterday. Another sector that is very much going into the opposite direction from what it did yesterday is the tech sector. We've seen the likes of Micron and Nvidia moving higher because of the optimism around the ceasefire. Now we are seeing some of that optimism fade and raising some fresh questions around the impact of those higher energy prices on the AI sector. And so we are seeing now very much red across the board for that tech sector. And finally, moving on to Marvel Technology, which just got upgraded to a buy rating by Barclays analysts. They said that the company will be able to very much capitalize on the growing demand for optical products. And so this is leading the company higher in pre-market trading this morning, extending what's already been a very good start to the year for that company.
Yeah, that's right. Marvell now up 35% year to date. Chloe, thanks very much for that. Coming up in this hour, Nadia Martin-Wiggin of Svelland Capital on the oil market. And later in the hour, Max Kettner joins us from HSBC. But our top story, President Trump is vowing to keep U.S. troops in the Persian Gulf ahead of talks with Iran, posting on Truth Social, all U.S. ships, aircraft, and military personnel with additional ammunition, weaponry, and anything else that is appropriate and necessary until such time as the real agreement reached is fully complied with. Let's get to our team coverage with Bloomberg's Jumana Bersetchi in Dubai, our Washington Deputy Bureau Chief, Laura Davison. Jumana, let me first ask you about this fragile ceasefire. I know that we continue to see projectiles lobbed back and forth in the Gulf. How does it look this morning?
Yeah, well, it's tenuous. I would say that. But in terms of the intensity of the projectiles, things have actually calmed down overnight. Yesterday was very busy, though. More than a dozen missiles intercepted over here in the UAE, which is where I am. More drones reported intercepted over Saudi Arabia, Kuwait as well. And then also Iran reporting that they, too, had received an incoming attack on a refinery in the early hours of the morning. So there were still a bunch of two-way attacks going throughout the course of the day. Overnight, though, the intensity has calmed down. But I will say, though, the major front that has opened up in the last 24 hours is Lebanon. And you will recall that a few hours after both Iran and U.S. announced that they had gone into this two-week ceasefire, the Israeli prime minister said that Lebanon, as far as they're concerned, was not included in the broader regional deal. And what ensued yesterday afternoon was Israel's heaviest day of airstrikes yet on Lebanon. 100 strikes in about 10 minutes. The death toll rising above 200. So a very, very bloody day for Lebanon. And then now we're in a situation where Iran are contesting that they may not proceed with negotiations with the U.S. this weekend unless Lebanon is actually included once again in this regional ceasefire. There seems to be a misunderstanding between what the Iranian side thought they had agreed to versus what the White House and Israel are presenting as well. And that is a bridge that needs to be crossed over as we look ahead to these likely negotiations this weekend in Islamabad. The U.S. delegation has been confirmed now. We know that J.D. Vance, Kushner, and Steve Witkoff will be attending from the U.S. side. The Iranian side, a bit of a question mark still as to who's going to be there.
Yeah, we just saw a post on X from the EU Foreign Affairs Chief, Kaya Kallas, that Israeli actions are straining the U.S.-Iran ceasefire. We've seen comments from Chinese Foreign Ministry spokesman Mao Ning that Lebanon's security and sovereignty should not be violated. Laura, what can the U.S. do about keeping Israel, which now appears to be the weakest link in the chain, in check?
This is a real question. J.D. Vance, speaking with reporters earlier, said that Israel had agreed to sort of tamp down some of these attacks, but it's clear that there's a little bit of friction in between the U.S. and Israel on exactly what what sort of how they're going to proceed. We saw Israel launch its biggest attack in quite some weeks on Lebanon, the Hezbollah specifically. In the past 24 hours. So this is going to be a key friction point. We're also seeing that same kind of friction play out between the U.S. and European allies. Mark Rutte of NATO was at the White House today. Trump fired off a very negative tweet about NATO and their lack of help in this war. Trump and the White House have asked for European allies to come up with plans to help secure the Strait of Hormuz. They've agreed to do that once fighting has stopped, though it's not clear that that fighting has stopped. So this is, again, going to be a swirl of questions as we go into these talks on Saturday.
Jumana, what do we know about this 10-point plan that the Iranians have submitted and said, this is what President Trump accepted, and the 15-point plan that President Trump now says is the basis for negotiation? Which is it, or are we looking at both?
That's right. So we've got multiple plans being put forward by both sides here as we head into those negotiations. But interestingly enough, the White House have said that the 10-point plan that Iran released overnight yesterday differs from the 10-point plan that President Trump and his team would have had access to when they were thinking about getting the ceasefire across the line. So there's a bit of disparity, once again, as I flagged, between what they say was presented to them versus what Iran presented to the outside world. Now, in terms of what the Iranian side are insisting on, it's pretty much everything that they were insisting on before the nuclear discussions were even taking place. This is prior to the war, including the right to continue maintaining their proxy groups around the region. Of course, that is very pertinent to the discussion that we just had about Lebanon, their funding of Hezbollah in Lebanon. And a new one, and this is a new term that would not have existed before the war, is their right to sovereignty of the Strait of Hormuz and their ability to monitor and control who exactly is capable of passing through. Clearly, a non-starter and non-tenable as far as the U.S. and the Gulf nations are concerned as well. And so we're heading into a very pivotal weekend of discussions, but it is fair to say that what Iran are presenting to the world are very maximalist demands and clearly not tenable from the U.S.'s perspective unless they want to offer a lot of concessions to wrap things up quickly. But it is unlikely that the U.S. go down that route insofar as they'll have to match what Iran are putting forward. It's just an unlikely outcome.
I mean, so many misunderstandings in an age of Twitter diplomacy are perfectly understandable. Laura, now we know that J.D. Vance, the U.S. Vice President, is going directly to Pakistan for talks face-to-face with the Iranians. How soon can this start, and how long are we expecting them to last?
Well, the meetings will start on Saturday morning in Islamabad, but unclear at all how long this will take. J.D. Vance is a novice when it comes to diplomacy. You know, he has only been, in the White House for a year. Before that, he was a U.S. senator, and before that, in Ohio. So this is, going to be a real moment on the stage for him to shine. One, representing Trump and the Trump administration, but two, this is in the back of his mind too is also 2028 and the political considerations about a presidential election. Vance has been the most skeptical in the Trump administration about this war from the start, and so that's one of the reasons they put him forward, because he is a more friendly face in that regard to the Iranians. But if these negotiations go sideways, this also has a lot of ramifications for Vance, who's only in his 40s, for his political future. So high stakes, and these could last quite some time.
All right, Laura Davison and Jumana Bersetchi, really appreciate your team coverage. Let's get to the other top stories trending on the terminal this morning. Anthropic completes its tender offers. Employees sold some equity to investors as part of a secondary share sale, but some investors weren't able to pick up as many shares because of the limited number that employees were willing to unload. That makes sense. Anthropic is expected to go public as soon as this year. And PIMCO is looking to sell parts of the $14 billion of debt financing it's providing for an Oracle data center in Michigan. PIMCO is anchoring the financing, which is being led by Bank America, and it is expected to close on April 17th, according to the terms. Lufthansa is expected to face a cabin crew strike at German airports on Friday, disrupting travel for people coming back from Easter holidays. The strike follows months of stalled negotiations over a new collective labor agreement. The Germany-based airline faced pilot strikes just last month. Coming up, we speak to Nadia Martin-Wiggin of Svelland Capital on the big moves in the oil market. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Matt Miller in New York. Oil is rebounding after its biggest one-day drop since April of 2020 as the Strait of Hormuz remained largely blocked. According to Goldman Sachs, Brent could average more than $100 a barrel in 2026 if the strait remains closed for another month, which doesn't appear extremely unlikely. Nadia Martin-Wiggin, director at Svelland Capital, joins us now. Nadia, I want to start with the moves yesterday. What do you make of, the biggest drop since COVID? It seems like this market is willing to put a lot of faith into a very fragile ceasefire.
In terms of the physical market, that move was enormous. What we saw with physical market prices is they held up and they only reflected that $20 drop that we saw in futures prices, but the differentials moved higher. The backwardation on the weekly level moved steeper. But what it suggests is that there was a lot of hot money in this market. There was a lot of expectation that this was not going to be over, and the market was really blindsided by this sudden fragile ceasefire, which looks all the more fragile. And we definitely don't see more oil production coming online yet. We don't see more oil flowing. And we definitely see that the market desperately needs U.S. oil. And this is why WTI in particular is strengthening.
I see. So, yeah, we get a lot of talk in this country about how insulated we are from the oil going through the Strait of Hormuz. We don't need that energy, and yet we see the price for WTI rising drastically. At one point, a couple of days ago, it was $117 a barrel. The price of gas at the pump is well over $4 a gallon now, which I know to you must seem so trivial, but for Americans, that's a high price. How insulated is the U.S., Nadia?
Well, we're insulated in the fact that we have crude in the U.S., but we're still part of a global system. And the critical point is who buys the crude? It's the global refiners. And what we saw since COVID is a massive amount of refinery capacity is shut down in the Atlantic Basin, both in the U.S. and in Europe. We have 2 refineries in California shutting down now. It means that that oil must be exported to create gasoline and diesel, which we need to run through the heartland of America. And this is where it's connected. And that spare refining capacity sits in China, which has an export ban right now on products. And we had a growing system of refineries in the Middle East that are completely shut off. So this is where the product prices absolutely need to increase, and that will continue to pull on crude futures prices as well as the physical market.
What's your take on the Strait of Hormuz? Because it seems as though Iran and the U.S. President have very different ideas about how it's going to operate. After all of this, it had, of course, been open and free before Israel and the U.S. attacked Iran, and now we're hearing reports that the Iranians are charging $2 million a ship. They also have to have their own military navigate other ships, at least keeping the idea that maybe there are mines there alive. How does it look to you right now?
Well, what the Iranians are proposing is a complete change of international maritime norms. It would suggest that straits, be it off of Singapore and Malacca, places like that could be controlled and told by individual countries, which is not how the system is set up. On the flip side, historically, the system has been protected by the U.S. Navy. And now the U.S. Navy is showing a lack of willingness to do this on its own. This is why the discussions of having a convoy led by the French is a necessary part. This is the source of the discussions with NATO. But if we were to set that up in the U.S., in the Strait of Hormuz, it would take 5 weeks. So that's already taking us into that month-long scenario that Goldman Sachs is talking about. It is also difficult for companies to actually pay this toll, even if they were willing to do it. It's supposed to be in crypto, via Chinese, Hong Kongese banks, and so forth. And then suddenly you're involved in a sanctioned oil system. So that's very difficult for shipping companies. Finally, we've had since 2022, this growing dark fleet. Then we have the Western fleet, the non-dark fleet, and now we have this kind of semi-dark fleet emerging because the U.S., for example, has removed sanctions off of Russian crude, but Europe has not. And your top value as a ship owner or someone who has access to a ship is having that optionality to flow into any port you want to, where it's the highest bidder or the lowest offer in terms of pricing. So you don't want to mark your ship as semi-dark and not be able to flow into Amsterdam if, let's say, Amsterdam is offering to pay the highest premium for your ship. So this is where it's very complex, very expensive, and shipping rates are flying right now as a result.
We saw the price for dated Brent jump to $144 a couple days ago, the highest price in recorded history. We're back down, I think, just under 100. But how does the oil price
Dated Brent's at 124. It only came down the $20 that the futures price came down. It actually strengthened yesterday.
All right, so that's
the physical.
That's the physical delivery market, which is somehow, to me, a bit more opaque, I guess. What's your take on Goldman's call that oil, and they're looking at futures, obviously, on Brent, stays above 100 or around there on average throughout the rest of the year if the strait remains blocked?
Well, average prices are very complicated. Right now, we definitely see that the oil price should be much higher than it is. When we look into the end of the year, it depends, how is this resolved? Do we get an actual peace where things are open up and then Iranian oil is no longer sanctioned and it's part of the normal world because we have a complete success from what were the most hawkish players in the U.S. That could bring down prices quite a lot. And that's where I think a lot of people got caught out, expecting that this would be that Venezuela case. That can still happen by the year end. But right now we have 13 million barrels per day of oil stuck in the Strait of Hormuz. We've lost 1 million barrels per day of production in Russia because of attacks on various infrastructure, refineries. So we're extremely far away from any kind of release. So I would say in the near term, pricing for the second quarter should be very high. We need to run refineries at max runs so that we can have enough fuel, meaning diesel, gasoline, and jet fuel, to actually operate throughout the summer. We could end up with the COVID situation on top of what has been a supply shock, in which case prices will be much, much higher than they even are now.
Nadia, great to get your intel. Really appreciate you joining us. Nadia Martin-Wiggin there of Svelland Capital talking to us about oil and the Strait of Hormuz. Coming up, a look at what else is making headlines in your front page news next. This is Bloomberg.
have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
This is Bloomberg Brief. I'm Matt Miller here in New York City. Time now for your front page news. First up on the Washington Post, President Trump's meeting with NATO Secretary General Mark Rutte at the White House yesterday and how he held back from taking dramatic action on the U.S. relationship with the alliance. Trump took to Truth Social to vent about NATO's lack of help in the Iran war, but didn't mention anything about pulling out of the alliance this time. Next up, the Wall Street Journal reporting that Disney is preparing for layoffs just weeks after the CEO, Josh Tomorrow, took to the helm. The company is planning to eliminate as many as 1,000 positions in the coming weeks. The cuts will mostly affect its consolidated marketing department. And on the Financial Times, investors are looking to pull more than $20 billion from private credit funds in the first quarter. The withdrawals reflect intensifying concerns over private credit lending amidst AI advances as the largest private credit companies curb redemption requests. In terms of markets, we're preparing for a lower open as oil bounces back. You can see here Brent crude, the front month contract at 97.82. NYMEX crude, WTI trading for 97.53, and gold rising a little bit again at 47.32. Futures are lower on the S&P, but the dollar is gaining a little bit of strength as the 10-year yield comes down at 428.72 to go out 5 significant digits. Coming up next, Max Kettner, Chief Multi-Asset Strategist at HSBC, joins us. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, You don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It is 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. President Trump vows to keep U.S. troops in the Persian Gulf as the Strait of Hormuz remains blocked and the ceasefire is fragile. Israeli strikes continue in Lebanon. U.S. Vice President J.D. Vance will lead a delegation to Islamabad for direct talks with Iran, and that will be one of the main talking points. The stock rally has stalled. Goldman Sachs says Brent crude will average more than $100 through 2026 if the strait remains closed for another month. Let's take a look at how this is all playing out in asset prices. You can see that futures a little bit weaker yesterday after a big rally in the cash trade. Yesterday we were up 2.5% on the S&P. The NASDAQ also down in futures, and Russell futures are off 0.6%. In terms of what's going on with Brent crude, well, here's the Treasury picture. Everything's unchanged. Let's go straight to the Brent crude board because that's all you care about. Big jumps, or decent jumps, I should say, today after the biggest drops yesterday since April of 2020, which was right after COVID. Let's always have a Brent crude board. As long as Brent crude is the main talking point, it should be loaded in there. Let's get to the individual stocks we're watching. For that, we go to Chloe Melee in London. Chloe?
Good morning, Matt. Oil companies are back in the green today after yesterday's very tough trading session. We've got Iran saying that the ceasefire terms have been violated, and the Strait of Hormuz also remains largely closed. And so this is raising questions around the fragility of the ceasefire, and that is leading to a rebound in oil prices, and therefore also as well a rebound in those oil companies. So we have got green across the screen there for that sector. Moving on to another sector that's moving in the opposite direction that it did yesterday, and that's the tech sector, with the likes of Nvidia and Micron having really benefited from this optimism yesterday around a ceasefire. But now the optimism is fading, and therefore we have now fresh concerns around the impact of higher energy prices on that AI sector, and therefore we are seeing a lot of weakness in that sector this morning. And finally, Instacart is moving higher after being upgraded by Raymond James. So the analysts have said that the grocery market is an underpenetrated e-commerce segment, and therefore it would really benefit from the rise of agentic AI shopping experiences. And therefore we are up about 1.6% for Instacart on the back of that upgrade.
All right, Chloe, thanks very much. Chloe Melee looking at some of the single stock stories. Let's get over to Max Kettner right now. Also in London, he is Chief Multi-Asset Strategist at HSBC. And Max, of course, oil is the most important asset to be looking at right now. We're seeing a little bit of a bounce back, but we saw a massive drop yesterday in NYMEX from $117 down to $91 a barrel. Do you think traders got a little bit over-optimistic about the ceasefire?
I don't think so. I think particularly when we look at the equity market and the equity market relationship with oil prices, I think that makes perfectly sense to me, because at the end of the day, what we are trading and what we're doing in financial markets is we don't really care about the level of activity. We don't really care about the level of things, right? Think 6 years ago, COVID. By the time mobility indices, by the time, things like restaurant bookings, all these fancy high-frequency data that we were looking at back then, by the time they were back to the pre-COVID levels, the January, February 2020 levels, that took about a year and a half. That was only about late summer 2020. But by the time the S&P was already almost 50% higher than it was in January and February 2020. Why? Because the moment the market sniffed that actually it's getting less bad in March, end of March 2020, April 2020, that positive rate of change from going catastrophic to actually, it's only catastrophic now. It's only going to be, the rate of change is already starting to be a little bit positive. So it's less bad. That already was enough for markets. It was the same thing with Liberation Day last year. Remember Liberation Day, all the high frequency data only troughed in about June, July. By that time, equities were already back to the all-time highs. So I think this is actually a pretty rational reaction by equity markets in particular, and the relationship with oil prices. Now, on oil prices, you could debate, yeah, maybe dated Brent is going to be still sticking around there, but I think we are on a sort of gliding path by the end of this year towards the 80 levels. And that, I think, for markets overall, for equities, for credit, for EM, really for the whole asset class spectrum, that's good enough.
I mean, one of the things I keep wondering about, Max, is how these higher prices are going to affect company earnings, corporate earnings. And if you expect prices to go back down to 80, then it makes sense that you wouldn't be terribly worried. But Goldman Sachs is out today saying they think the average is going to stick around 100 or more for Brent crude. Doesn't that, bring down your outlook for corporate earnings at double-digit percentage on the S&P?
Yeah, I think if you had an outlook of above $100 on average, I think that would probably change the calculus a bit, because that would probably mean the one-year CPI, what we've got right now, the sort of 320 level on the one-year CPI swap, that was sort of the peak level. At the end of the day, if oil goes back to the $80, $90 levels, then probably headline CPI is going to be what, like a touch below 3% for this year in the US. You could actually make the argument for that being actually positive for earnings, because remember, earnings are a nominal number. And with inflation going up, that actually is therefore actually a positive, that oil prices are a little bit higher, inflation a bit higher, and therefore that would aid nominal earnings overall. So I wouldn't be too concerned about that, number one, from the energy side. Number two, if you look at US earnings in particular, what matters much more is the AI cycle, is the tech cycle. Remember, in the S&P nowadays, you've got almost 50%, almost half of market cap is directly related to AI right now. There, it doesn't really matter that much whether the oil price average is going to be 80, 85, or 100, right? What matters more is the outlook around AI capex, around AI funding. What matters is what have AI valuations done in the last couple of weeks. And in fact, when you look over the last couple of weeks, AI earnings expectations, tech earnings expectations have gone up. Tech valuations have come down, crashing down really, almost to the lowest level in 10 years relative to the broader market. So from that standpoint, I think energy, we're maybe talking a little bit too much about that. It might matter for rates, it might matter for the economy overall. For earnings, particularly for S&P earnings, I don't think it matters that much.
Is the AI spend as important for European stocks, Max, as it is for the U.S.? I note that the S&P right now, it's only down 0.9% year to date, but it's red, right? And if you look at the FTSE, it's up 6.5% year to date. If you look at the IBEX in Madrid, it's up 4.5% year to date. The same is true for the FTSE MIB in Italy. In fact, among the major European indexes, only the DAX and the Swiss market are down. And although I really appreciate your Jonker this morning, your new Trocken jacket, those are not the most important benchmarks for European traders.
Yeah, I think for Europe it's slightly different. The AI spend, the AI outlook, at least in relative terms, is not as important as it is for the US. Particularly also when we look at AI adoption, so the amount of companies, amount of sectors, or the percentage of companies in the respective sectors that have already adopted AI. That in Europe is only running at about half the level as in the US. So for the US, particularly for large caps, much more important. For Europe, I think oil overall is going to be a little bit more important because remember, one of the biggest sectors that's really been driving this rally in the last year or so in Europe has been the banks. And the banks have come obviously under pressure now in the last couple of weeks with oil prices higher and therefore the yield curve bear flattening. That has taken a little bit the wind out of the sails for the earnings picture around the banks. So oil coming down, that re-steepening, bull re-steepening the curve in Europe, that would really help SX70. It would really help the European bank picture again. So for Europe, slightly different. I think there, the oil price matters because it matters for the rates and for the front-end rates outlook and therefore for the banks.
So, you know, if we see continued struggles with this ceasefire, if we see continued upward pressure on the oil price, do you bet on U.S. stocks against European?
If that was the case, yes, but I don't expect that. I think, again, what we've seen now in the last, not only this week, but really the last now almost 2 weeks, has been incremental positive changes. So I think if you want to be bearish now, if you want to say, look, oil is going to go still to $150, your view, I think, has to be ceasefire will completely fail. Every single day we will have incrementally worse news. You cannot have news like, let's say, perhaps some of the plants reopening, like we had, for example, some news out of Qatar yesterday, some of the plants opening. Your view has to be that none of these incrementally slightly more positive or even less bad news, that none of that is happening. That has to be your view. And I think that's very challenging to be that bearish. In particular, I think one thing that we haven't talked about yet is because positioning is so clean. If you look at even systematic positioning, that is now well below the 20th percentile for CTAs, for the likes of volatility target strategies. So with positioning that clean, your view really has to be not only bearish, it has to be every single day you got to come in and be like, look, no, we're not only having not incrementally positive news, we'll have even worse news and even worse news flow. That, I think, is really, really challenging to have a view like that.
Max, really helpful intel there, and I really appreciate you joining us today. Max Kettner of HSBC talking to us about these markets. Now let's get to the other top stories trending on the terminal this morning. Interactive Brokers founder and chairman Thomas Peterffy says insider trading is good for society and should not be banned. Peterffy says it's pointless to try and prevent it. He made these comments on Bloomberg's Odd Lots podcast with Joe Weisenthal and Tracy Alloway, and they come in the midst of a renewed push from lawmakers and regulators to take on insider trading. It's definitely appointment listening. PIMCO is looking to sell parts of the $14 billion of debt financing it is providing for an Oracle data center in Michigan. PIMCO is anchoring that financing, which is being led by Bank of America and is expected to close on April 17th. China is considering financial aid for its state-run airlines that are struggling to keep up with rising fuel costs. The country is looking into providing government subsidies, preferential tax treatment, and state-backed low-interest loans. China's biggest airlines have struggled to return to profit since COVID. Coming up, Vice President J.D. Vance prepares to lead talks between Iran and the U.S. in Islamabad over the weekend. More on that story next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars, Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
No ceasefire ever goes without a little bit of choppiness. What we have been very clear about is that we want to stop the bombing. We want our allies to stop the bombing, and we want the Iranians to do the same thing. We're seeing evidence that things are going in the right direction, but it's going to take a little time.
The White House says the U.S. would hold direct talks with Iran, and Vice President J.D. Vance will be leading the delegation to Islamabad. This comes as both sides are accusing each other of violating the truce that was announced. Joining us now is Bloomberg Government's Mika Solner. Mika, what is the fundamental disagreement? Is it on whether or not Lebanon was included in the ceasefire?
Yeah, that is the main crux of it. And as we know, this 2-week ceasefire is extremely fragile, and the world is watching here what happens. So there's a lot riding on the vice president's shoulders. I want to remind people that J.D. Vance is someone that initially has publicly said he opposed military intervention in Iran. So it'll be really interesting to see how he navigates this and how it sets him up for his potential ambitions if he does decide to eventually try and decide to run for president, if he navigates this differently than how President Trump has. So this is a really big test for him, not just for the ongoing future of these peace talks, but also his political future as well.
What about the plans that have been presented? You know, Iran said initially that it had a 10-point plan. President Trump had agreed it was a good basis for negotiation. The president, for his part, has always touted a 15-point plan. Are they going off of one or the other? Is it fine to use both? How's that viewed in Washington?
Yeah, I mean, White House Press Secretary Caroline Leavitt yesterday has said that, you know, there's the plans essentially in flux, and that there's been plans that have been reported that, you know, were not supported by the U.S. So there's a lot of confusing messaging coming out of the White House. I think a lot of it is still being worked out. But, you know, as you mentioned, a lot of it is going to come down to whether or not, you know, Lebanon is going to be part of these negotiations, as well as, you know, other areas. I know that the president's initial asks was obviously reopening the Strait of Hormuz, which, you know, there's going to be more questions on that, as well as the U.S. tries to get other countries to continue the operation there. So that's really the heart of the negotiation. But we're going to see what else comes out of it soon.
How is this all playing out with voters, Mika? Because as you pointed out, J.D. Vance was solidly against military intervention in Iran. Pete Hegseth also had said that it doesn't make sense for the U.S. to get involved in things like this anymore. He was a recovering neocon. Now I guess he's a full-fledged neocon. President Trump made campaign promises that we would spend money and focus our attention on domestic matters rather than getting into foreign wars. So it seems as if the administration is going the other way to what it told voters before the election.
Absolutely, and we've seen huge splits in this within the conservative movement at large. We've seen prominent figures such as former Rep. Marjorie Taylor Greene, who had other issues with the president before she fell out with him, but members of Congress like Thomas Massey, and we're even seeing this kind of trickle down to more rank-and-file Republicans who are elected, as well as other voices in the conservative movement such as Steve Bannon, Tucker Carlson, really pushing back on what exactly are the U.S. objectives here on Iran, because there has been mixed messaging from the White House, and overall this war is extremely unpopular with the public, especially as it continues to drive up gas prices. I mean, we might see a little bit of relief there, but this is still having huge implications on markets around the world, and ultimately is coming down to people's pocketbooks. So that's going to be the main issue if this continues to be the case.
All right. I mean, we currently see gas prices rising, and they haven't fallen for many weeks now. $4.16, I should say, $4.16 a gallon is the average price across the country right now. Mika, thanks so much for joining us. Bloomberg Government's Mika Solner on the current situation in Iran. Oil is rebounding after yesterday posting its biggest drop since COVID in April of 2020. Goldman Sachs, though, says Brent crude will average more than $100 per barrel through 2026 if the strait remains closed for another month. That's a pretty big if. Let's get to Alaric Nightingale. He leads Bloomberg's European oil trading team out of London. Alaric, how do you think this market is set up? I mean, do we expect the strait to be closed for another month when you look at pricing?
I think that there's clearly a sense that this isn't going to resolve itself overnight. I wouldn't like to put a time frame on it really, but we had the ceasefire, but then yesterday afternoon, there were signs of that wobbling, and owners still aren't going through. And a lot of things need to happen to get kind of widespread comfort about transit. It's not just going to be, we just need to have real detail. That's what the shipping market is screaming out for, is detail. Exactly how it works, exactly what you have to do, and is that fully accepted by kind of government states?
Do you still see, Alaric, the big spread between futures? I think Brent and NYMEX are trading around $97 right now. We have it up on the screen. And dated Brent, which is a slightly more, a slightly more opaque market. I've seen it priced around $124 today.
Right, yeah, there is a huge premium for physical crudes. For what you see in dated Brent, that's a very, very prompt, immediate supply crude. And you see similar pictures for lots of other grades that price relative to dated Brent. And that's really telling you that there's an urgent need for barrels out. Even if you resolved everything right now, which isn't going to happen in the Persian Gulf, you still need to get that oil to Asia, to Europe, to the US, and that's kind of 20 to 30 to 40 to 60 days. So there is going to be a lag effect, even if it resolved overnight, which is not going to. So that's why you've got this urgent need for immediate barrels. There's just a kind of a need for replacement. Asia looking beyond its normal markets for supply, and then you get this tightness everywhere.
Alaric, thanks so much for jumping in. I know you're extremely busy on the oil desk, to say the least. Alaric Nightingale leads our oil trading coverage out of London. Now, Anthropic completes its tender offers. Employees sold some equity to investors as part of a secondary share sale, but some investors weren't able to pick up as many shares as they wanted because of the limited number that employees were willing to unload. The Claude chatbot maker was valued at $350 billion in its latest deal, not including the $30 billion that it raised. Bloomberg's Neil Campling joins us with the latest. Neil, does Anthropic's tender offer share sale offer any clues into the battle for talent?
It does. Just like oil, actually, AI talent is in short supply. Often you would expect these kind of crystallization opportunities to make money from selling stock would be well sought after from employees. I suggest that this sign is that insiders in the company expect there's huge potential for the company's position. And if you look at it, I've seen numbers this morning that say that Anthropic is on an ARR run rate of $100 billion. Now, it's that kind of number is 11 times greater than 4 big SaaS players have ARR combined. Salesforce.com, Adobe, ServiceNow, and Workday. Huge numbers. And we're looking at an ARR run rate for this company that has grown tenfold for the last 3 years in a row. Just staggering numbers. So I'm not surprised actually to see that insiders basically don't want to sell too much stock because they see massive upside potential, I think, for the company and their AI position.
Yeah, it makes a lot of sense. I mean, $350 billion may sound like a lot of money to you and me, but for a company like the maker of the chatbot Claude, it does seem like quite a small valuation. Neil, thanks so much for joining us. Bloomberg's Neil Campling out of London. Never enough time with Neil. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Let's get a look now to what's ahead today. We get PCE, personal income, and personal spending numbers all at 8:30 a.m. So some big economic data coming out today, plus U.S. wholesale inventories data at 10 a.m. So it will continue throughout the morning. The U.S. Treasury is auctioning $22 billion of 30-year bonds at 1 p.m. after the 10-year auction yesterday. And if you take a look at what's going on in oil, you see we continue to see climbs on Brent more than 3%, and NYMEX as well after the big drops that we saw yesterday.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
We're just sort of back to the narrative, really, of the last 12 months.
There's so much complacency in the market.
This can really overshoot to the upside.
It doesn't reduce market volatility, it actually increases it.
Volatility is higher. We have to learn to live with it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. This is Bloomberg Surveillance. Traders curbing their enthusiasm about the ceasefire agreement in the Middle East. Futures dipping and oil rising, with ships still struggling to get through the Strait of Hormuz. Employment data, inflation data, all coming up as investors examine the conflict's economic consequences. The bottom line, another day of being glued to the headlines. Anne-Marie, you're back in the seat, which is a wonderful thing. I mean, it feels like we're just sort of looking for signals and trading off headlines.
Well, it's because the rhetoric is not matching actually the facts on the ground. So the market has been squarely focused on the opening, or at least the safe passage, because the Iranians are absolutely controlling the Strait of Hormuz. And even though the White House said yesterday a number of times as the press secretary was briefing the press, they've seen an uptick, the facts are they haven't. Our data says about maybe 4 vessels got through. Kepler to the New York Times says 0. And today, Sultan Al-Jaber, the head of ADNOC, says open the strait unconditionally, no strings attached. Let's be clear here, the Strait of Hormuz is not open.
As we play headline roulette, we try to focus on exactly what could potentially have longer-term consequences. And we're very lucky to have for the full hour Dan Greenhouse of Solis Alternative Asset Management, who hopefully can do that for us. I mean, do you have a sense of what we could do with this other than just chase squirrels?
No, I mean, the last couple times I've been on, I said for most investors, the best thing to do right now is nothing. It's not too dissimilar to the tariff story, but there's meaningful downside risks, especially with an equity index that's barely off the highs. But to Anne-Marie, like, the headlines are coming so fast and furious here, I don't think most people know what to do with them.
At this point, are we seeing any long-term conclusions that maybe oil prices are higher, that there's a more of a risk premium being baked into markets, or is it just otherwise pretty much inconclusive with the
Yeah, no, I think most people would agree oil's not going back to $60 anytime soon. There's that. Exactly what happens with the tolls. I mean, there's downside risks here, but other than oil meaningfully being higher than it was, I'm not sure you can reach any conclusions as of yet.
And RBC put out a note today saying, above all, we think the mechanics of reopening the strait will be exceedingly messy. If that holds true, then you're going to be looking at higher for longer, and then at some point to start to bleed through the rest of the economy in a more sustainable way.
Yeah, that was a fantastic note from Halima Croft. I recommend people look at it. Right now in markets, what you see is a bit of a reversal from what we saw yesterday. A bit of a risk-off tone pretty much across the board, although not necessarily retracing all of the gains. S&P futures down 0.3%, NASDAQ futures lower by 0.2%. You can see Brent rising once again after yesterday plunging the most since 2020, up 3.3% to $97.88. And 10-year yields just a little bit lower. Yesterday was a strange day for yields, considering the fact that on one hand, it was risk on, a feeling of maybe disinflation, but on the other hand, a pretty weak auction and some questions about long-term inflation. Coming up this hour, Keith Lerner of Truist, with stocks on track to snap a 6-day winning streak, OECD chief economist Stefano Scarpetta as the Iran war weighs on the global economy, and Kit Jukes of SocGen on the risk of a policy mistake by the Federal Reserve. We begin this hour with our top story, a fragile ceasefire in the Middle East. Bloomberg's Jumana Persecci joins us now from Dubai. Jumana, you talked yesterday about how there still were strikes ongoing that were being intercepted by Gulf nations. What's the latest on the ground today?
Yeah, the latest is things are actually a little quieter today, Lisa. And I will say it appears as though the ceasefire is actually holding. As we said yesterday, we were reporting throughout the day, it got a little dicey. There were lots of incoming projectiles still being fired towards the UAE, Saudi Arabia, intercepted drone even above that east-west pipeline, that crucial pipeline in Saudi Arabia as well. But today, things have quietened down. But what I will say is the main front that has opened up is the Lebanon-Hezbollah front. And there appears to be a disconnect here between what Iran think was included in the ceasefire deal versus what the White House are also alleging on their side, and that Lebanon was never going to be part of this regional ceasefire. And what we saw yesterday was a series of very heavy airstrikes conducted by the IDF. They say they hit over 100 different Hezbollah sites in the space of 10 minutes, but it caused a lot of damage to buildings. The death count is more than 250 as we speak right now. And it has actually provoked an international community response. Many European leaders, including the likes of President Macron, saying that Lebanon needs to be part of the broader regional ceasefire arrangement. So as we head towards this weekend, it looks as though those in-person negotiations are going to happen in Islamabad. We know that the U.S. are sending their delegation, still unsure who from the Iranian side will be there. But number one of the main topics of discussion is what happens with the Lebanon front, and of course, the matter of the Strait. You look at the traffic through the Strait of Hormuz over the last 24 hours, there hasn't been a notable pickup. And effectively, Iran are still monitoring who goes in. They're still charging a fee, an unacceptable outcome for Gulf nations, as Anne-Marie was just saying. The CEO of ADNOC once again saying that they cannot hold this much grip over such a key waterway around the world. So there's still going to be a lot of pushback, I think, and a lot of a push diplomatically to ensure that the Strait does fully reopen unconditionally at the talks this weekend, alongside all of the other topics, including the nuclear stockpile, the enriched uranium stockpile, alongside Iran's funding of proxies in the region, and their ballistic weapons. So there's still a lot that needs to be bridged in the coming days.
Jumana Persecci, thank you so much, as always, for that report coming to us from Dubai. Here's the view on Wall Street this morning. Keith Lerner of Truist writing, the market remains highly headline-driven, which helps explain the sharp reaction to recent news. The bull market still deserves the benefit of the doubt. Keith joins us now. For more, Keith, great to see you.
Thank
you for coming in.
Yeah, thank you.
So why does it still need to get the benefit of the doubt, given the fact that there still are a lot of risks on the table?
Yeah, well, there's always risk in the market. I would just say, and there's still risk. I mean, obviously, this is going to be a messy situation. But we also have to remember this bull market has been battle tested. We think about since COVID, we've gone through a series of shocks, right? We've gone through the COVID shock, the fastest rate hikes since the 80s, the highest inflation since the 70s, the terrorist shock last year. And there was, in some cases, even more meaningful downside, obviously, than where we are today. But eventually, markets rebounded and earnings rebounded as well. So, again, I think this is going to be a messy period. We are on the one-year anniversary of that 9% move last year. But if you look at what happened after the kind of the pause in tariffs last year, as maybe a little bit of a roadmap, even though we know there's a lot of things different. I mean, the next day you were down 3.5%, and it was a very choppy period. So that's that's our kind of baseline today. That's going to be a choppy period. But we still think ultimately what happens with AI and other things outside Iran also matter.
But isn't this different than last year? Because last year Trump was in full control. This year he's dealing with a party that's very unknown. It's still the same regime, just some different players. You can't control for that.
Yeah, certainly. And again, I think when you talk about analogies to past, or analogs, I should say, to past periods, like there's a lot of differences from last year. But at least, I think, again, going back to investors have been conditioned a bit that not to overreact in some ways to each event. And again, I go back to the U.S. economy's ability to adapt. And another interesting stat that I've been sharing with some of our clients, since the global financial crisis, which is about 17 years ago, or 200 months, we probably talk about recession 85% of the time, but we've been in recession 2 months, which is 1% of the time. So again, it doesn't mean that maybe I'm jinxing it by even bringing that up, but again, I mean, we all know that the energy intensity of the economy is somewhat different than it was over the last couple of decades. And I think more importantly, as we start to go into earnings season, really is what's happening with AI, again, which drives about 45 or 50% of the S&P 500.
Staying on the geopolitics, though, Goldman out this morning was saying if Brent averages $100 a barrel, basically it will stay that way for the next year if the Strait is closed for another month. And at the moment, the Strait is closed. What's going to be the impact on earnings if that is the base case?
Yeah, well, I think, in some ways it will be disparate, right? I mean, going back to the AI comment, I don't think this is going to really impact with the AI spending, which is the main driver, the strongest earning trends within the market still. I mean, we're seeing earnings for the energy sector obviously revised strongly up, but it's going to be more of a negative for the consumer. It's going to be more of a negative for staples. It was notable that yesterday Delta came out still saying we have somewhat of robust demand. And the other part I would say, going back to earnings, that is the North Star of this bull market. We are still seeing forward earning estimates, which will change with a lag, making new highs. And we're seeing that boring out, at least before this. I do suspect, though, that we'll likely see some of these trends flatten out somewhat. But again, I think it's going to be hopefully nice to get into the earnings season so we have something else to talk about somewhat each morning.
I can embrace that and endorse that wholeheartedly, especially because yesterday, as you said, we got Delta earnings, which was really telling. People are hoping that the economic data this week will offer some reprieve from just chasing the different headlines and exactly whether it's ceasefire on or ceasefire off or what it actually means. We're going to be getting core PCE later today. We're going to get jobless claims tomorrow. We get PCI data. All of this coming, Dan, as people try to figure out what the economic ramifications from some of the conflict really looks like. I mean, do you get a sense of what we'll learn this week, particularly tomorrow, with respect to the inflationary component stemming from this crisis?
I don't think we're going to learn very much. I think we know that in the short term there's going to be a big spike in the energy component of various inflation measures. But to Anne-Marie's point, the issue here is persistence. And so, again, I've said this before, but it bears repeating. We call them oil price spikes, not oil price plateaus. And if oil prices were to remain high, if gas prices were to follow and get up to $4.25 or even $5, and which is a distinct possibility if this goes south, then you start to worry a little bit more about the strength of consumer spending. But to Keith's point, I don't think it's particularly recessionary. You'd really have to stress the consumer in a healthy labor market with real wage growth to start talking about a recession. The bigger issue is with an economy growing, call it 2.5%, how many tenths do you start to shave off? Again, I don't think it's bear market inducing. I don't think it's recession inducing, but it's enough to start taking down noticeably your estimates.
I just wonder, though, it's more inflationary than it is, for example, a hit to growth that could potentially be good for stocks in the long run.
There's a lot of moving parts, but I would say also, Dan, you talked about not overreacting and not doing much. I do think on the margin, there are some things on the margin we did. Like, for instance, yesterday, we saw energy stocks at one point down about 4 or 5%. We actually upgraded energy yesterday, not because we think it's necessarily going right back to where it was, but because the range of outcomes are so wide. We're overweight industrials, we're overweight tech. If this situation escalates, then on the margin, we'll go back to energy being an outperformer as well. We also recently just extended our duration for the first time in a while. I know, we are near, 1-year highs, or we were on yields, and we've actually dipped our toes back into high yields for the first time, as well as credit spreads have widened and yields are above 7%. Again, not going all in, but if you wait for all certainty, the market has moved. To Dan's point, the S&P, I mean, if I gave you all the headlines, we should probably be down a lot more. So I'm not saying that's a great opportunity yet. But we've been telling, last week into this, towards the end of last week, we were saying at least on a short term, we were seeing some signs of an oversold condition for the market. Not an extreme relative to what we've seen in the past, but enough to say, let's start dipping our toe back in.
Although I will say, the headlines are near highs. But as investors, we're picking individual stocks, individual credits. Yeah. when I talk to people, they are way more shell-shocked than the headline index would suggest, because a lot of stocks are down 20, 30%. A lot of widely held stocks. Maybe we don't discuss them on TV every day, but among investors, there's a lot more pain than obviously the headlines would suggest.
Which is the reason why a lot of people are looking at how much positioning has changed, even if maybe the headline index hasn't come down that much. Keith Lerner of Truist, thank you so much for being with us this morning. Really appreciate seeing you. Dan, we're not letting you go just yet. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. The White House saying Vice President J.D. Vance will lead direct talks with Iran and Pakistan. Vance will be joined by Special Envoy Steve Witkoff and Jared Kushner. The first round of talks is set for Saturday morning local time. Iranian officials say Israel's strikes on Lebanon violate terms of the ceasefire agreement. Israel launched its largest assault on Lebanon yesterday since the start of the war. The country's health ministry saying at least 182 people were killed and hundreds were wounded. And 2 Chinese oil tankers are waiting near the entrance to the Strait of Hormuz, hoping to be the first non-Iranian ships to make it through since a ceasefire was announced. Despite the agreement, traffic through the chokehold has been little changed. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira and Anne-Marie. It's really interesting that China is trying to test this first, that there are 2 of them lined up waiting to get through.
You can't pick a friendlier country for Iran. It was the entire reason why Iran had any inflows of money coming in for years, because they buy the lion's share of their crude, and they are even having trouble transiting through the strait.
Which just highlights the problems right now with really depending on the ceasefire. Up next, a fragile truce.
I think the Iranians thought that the ceasefire included Lebanon, and it just didn't. If Iran wants to let this negotiation fall apart in a conflict where they were getting hammered over Lebanon, which has nothing to do with them, that's ultimately their choice.
OECD Chief Economist Stefano Scarpetta joins us next as we try to parse through the economic consequences. This is Bloomberg Surveillance. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
stocks giving back some of the optimism that we saw yesterday after some questions about just how consistent the ceasefire can actually be, considering the fact that ships really are not going through the Strait of Hormuz just yet, and a lot of pretty animated rhetoric from both sides. Right now you're seeing S&P futures lower 0.4%, NASDAQ futures down about 1/3%, crude getting back up in action, up almost 4%, $98.43, and 10-year yield just a touch lower. Really an interesting story of what the haven bids have been amid a potential inflationary push. Under surveillance this morning, a fragile truce.
I think the Iranians thought that the ceasefire included Lebanon, and it just didn't. What we said is that the ceasefire would be focused on Iran, and the ceasefire would be focused on America's allies. If Iran wants to let this negotiation fall apart in a conflict where they were getting hammered over Lebanon, which has nothing to do with them and which the United States never once said was part of the ceasefire, that's ultimately their choice.
Here's the latest. Crude climbing as Tehran says some terms of the ceasefire have been violated. The energy shock rippling through the global economy. Joining us now, I'm so pleased to say, is OECD Chief Economist Stefano Scarpetta. Stefano, thank you so much for making some time. How much are you looking at a dampening effect on the global economy as a result of what's going on in the Middle East?
Well, of course, there is a lot of uncertainty. We just published our interim economic outlook on the 26th of November. And basically, if on the 28th of February, before the war in Iran, we would have actually raised upward the projection for global GDP growth for 26 by 0.3 percentage point. All of that was shaved off because of the impact of the war and the crisis in the Middle East and the increase, of course, in energy prices. Now, the recent announcement of the ceasefire, if it is implemented, if this means, of course, reopening the Strait of Hormuz, and we have seen already in the impact on the price of oil, would have sort of an effect on the economy, and we see already a reduction in the price of oil. But of course, there are a lot of ifs here because these have to be maintained, the ceasefire, and we have to see exactly vessels getting through the Strait of Hormuz. So, unfortunately, we had to revise basically our projection by all the increase that would have happened if it was not because of the war.
How much are Europe and Asian nations disproportionately affected by the fact that oil prices are likely to remain significantly higher, even if there is some sort of conclusion, at least in the in the near term, to this conflict?
No, indeed. Of course, Asia in general and Europe are more affected by the hike in price of oil and gas, in particular the Asian countries. But I think even within the Asia region, there are significant differences because the two countries that depend heavily on oil getting through the Strait of Hormuz, like Korea and Japan, they have large reserves, while other countries in the region, Indonesia, Thailand, have much smaller reserves, so they're more exposed to the hike in price than the other two countries. Europe, of course, is also dependent on gas coming from the Strait of Hormuz, so is, of course, more exposed. What matters really is the duration of this increase in oil prices and gas prices, and, of course, whether or not there have been damage to the infrastructure in the region, in Iran and other neighboring countries, because, of course, repairing the damages may take long, and this may actually have an impact on the profile of oil and gas prices going forward.
When it comes to duration, when do you know you can no longer just look through this and actually there's going to be structural changes and permanent shifts?
Well, that's a good question. It depends, again, on for how long the price will stay high. We have seen short-term responses in many countries of the OECD, including support to consumers and to firms to face this hike in energy price. We have seen that in Europe, but basically in most of the OECD countries, the early measure that have been introduced has been way to basically reduce the increase in price at the gas station and for the companies. But of course, these are very expensive, so they cannot be prolonged for too long. And our recommendation is to try to move as quickly as possible to more targeted measure that actually provides support to consumers most affected by the increase in energy prices, and actually to the firms that depend more by energy. So this is, I think, is our recommendation. Then, of course, there might be some rationing. We have learned through the COVID crisis that some telework actually may reduce the consumption of energy. And I think these are also implemented by a number of countries indeed.
Well, do member countries have the fiscal capacity to fight this?
That's a very good question because, of course, the fiscal capacity is limited, and that's one more reason why we are recommending to move into targeted measure and actually temporary measures, because, of course, what happened in the 22 energy crisis was some of the price support measures were kept for too long, and this led, of course, to significant public spending in this area. So there is a need to targeting, and there is also a need to already introduce a sunset clauses whereby if the price go down, then this measure will be removed quickly.
Stefano Scarpetta, OECD chief economist, thank you so much for being with us this morning. Dan Greenhouse of Zolis is here with us this morning. How much are you looking at this and saying Europe really cannot be the trade that people go to for diversification because of some of the risks that you see from both higher commodity prices and, frankly, geopolitical alliances that are shifting?
Yeah, I think that's probably right. I think it's too simple to say Europe is trading cheap to the U.S. in a variety of metrics, or I think after so many years of outperformance by the part of U.S. risk assets, there was a sense that now it's the world's turn, if you will. And that looked like it might be the case for a little while. But I always come back to the reality that the U.S. is still where the world's growth is, both from macroeconomically and from a corporate standpoint. And I still see tons of value in the long term from U.S. risk assets on a comparative basis.
How much has big tech in the U.S. become the haven trade? I mean, honestly, this to me is sort of the irony, once again, of 2026 and how much it's reminded us of 2025. Everyone came in broadening out. The economy is going to broaden. You can invest in the rest of the world. And then, bam, after Liberation Day, not so much. Is it the same thing now?
Yeah, well, listen, the Mag 7 in large tech has been a haven trade for quite some time. They just have much better growth profiles, cash flow profiles, et cetera, et cetera. And so to the extent that anyone was worried about their valuation premiums, they kept telling you quarter after quarter that they earned and demanded that level of a valuation premium. And to a large degree, that's still true. I think there's probably some exhaustion here in the sense that, well, let's broaden out. It doesn't have to be Google. It could be SanDisk, et cetera, et cetera. But yeah, I think they're absolutely safe haven trades. But again, they're doing so well fundamentally, it's really hard to argue with that.
Keith was putting a lot of emphasis as well on the AI trade, but these are energy-heavy trades, right? These are data centers. Yep. These are companies that are going to use a lot of energy. At some point, does that cost matter, or they're too big and too great where a few extra dollars on diesel and gas doesn't really matter?
Well, no, it certainly matters, and where it really matters, we don't spend enough time talking about it, is on the political front. I mean, you've seen several states, I think Maine just did something where they prevented a data center from being built. It's particularly in the Virginia area where you see the most data center construction. There's a lot of concern about energy prices. Everybody everywhere is worried about water and electricity. We've already seen U.S. electricity prices go up. So this is a growing and not likely to end soon story.
Well, the president actually told energy companies they need to basically subsidize consumers.
Sure. Well, we'll see how this unfolds. I think you're going to end up at some point with legislation. I mean, the president says a lot of things that
he did a whole event with Meta.
Sure. But the fact that it rises to the presidential level that he would have an event speaks to the political sensitivity around the rise in electricity prices, again, particularly in the Virginia area. So I don't think that's, but from an investment standpoint, I don't think that's particularly prohibitive right now. What's going on with Google fundamentally, what's going on with Meta fundamentally in terms of driving traffic and the ability to stave off AI from search, in Google's case, obviously, is far more determinant in the short term than the electricity or power costs more generally.
And it's frankly an inelastic CapEx, right?
That's right.
So it's something that is price independent at a time costs are going up, but that's okay. Ultimately, as we've seen from a lot of the bond offerings too that have come out and frankly have been oversubscribed to a lot of the data centers. Right now we're waiting for what we get at 8:30 a.m. Eastern, which is core PCE, personal income and spending. We'll get a read into exactly how people are keying off what's going on now, but also how much momentum there was coming into this, as well as jobless claims, which frankly have fallen off a cliff. It seems like that doesn't seem to matter anymore. Heading into tomorrow, the PCI, the CPI data. I mean, ultimately, we're going to see an inflationary impact. At what point, AMH, is it going to start to bleed through in terms of longer-term sentiment?
Especially when you look at the Fed minutes and you see that there is a concern about inflation. They do see risk to their dual mandate.
Yeah, well, coming up, we're going to talk about the keynote of that inflation, oil prices. Stephen Shork of the Shork Group, with crude trading back near triple digits. Plus, Yahira Anand with your morning movers. Datadog rising as the software firm gets a fresh upgrade on Wall Street. This is Bloomberg Surveillance. Good morning.
The problem we've got as an industry is when the government overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Ceasefire. What ceasefire? That's what the market seems to be implying this morning as it assesses whether or not you can get some sort of more permanent resolution between Iran and the U.S., but you'd see a market a little bit of a taking back of yesterday's enthusiasm, about 0.3% decline on S&P futures, less on the NASDAQ 100. Futures are lower there, only by 0.2% as people look to that as the haven trade. Russell 2000 down 0.6%, with bonds very much in focus. Yesterday, a really tumultuous day. I'd love your thoughts on this, Dan. I mean, ultimately, right now, you are seeing a bid back into bonds. But yesterday, what happened with the 10-year auction, with what happened with rates actually giving back some of the gains and then some, even with the optimism that clearly is fading this morning, but at the time was still intact?
I think in the short term here, everyone is trying to figure out what's going on with the ceasefire that isn't a ceasefire, with ships going through the strait but aren't going through the strait. Iran is telling ships they need to ask for permission. Listen, a 4.28 on the 10-year, I know there's a lot of concern that it's up from 4, but I could also say it's down from 5.
All right, well, there you go. And this is the reason why people are looking at the length of how long this conflict will go on, what the contours of this conflict are, and the Halima Croft point, the permanent risk premium that needs to get baked in. When you take a look at crude prices right now, the June contract for both WTI and Brent, both higher by more than 3%, still below $100 a barrel in AMH. It seems like people are assessing this as a positive sign, even though there are so many questions and so much hair around the ceasefire.
Absolutely. So I think going into the weekend, there's going to be a lot of risk. People maybe just want to stay on the sidelines, because what actually happens in Islamabad, given how far apart the Iranian regime is to what the President of the United States wants to see.
Dan, is this tradable in any way, shape, or form?
Yeah, I mean, for fun, but I don't think I don't think anyone thinks. My guess would be most people don't think they can convincingly make money on, to the point about the ceasefire not being a ceasefire. No one agrees on anything, and there isn't even a ceasefire. The second the headlines hit, there were missiles being flown into various countries. The East-West pipeline was bombed, and this was right after the ceasefire. So no, I don't think you can necessarily trade this in any convincing way.
So bullish poly market and bearish the rest of the market. 3 hours away from the cash open. Here's your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Applied Digital. Those shares falling 3.6% in the pre-market, even after the company gave a strong quarter. Revenue more than doubling, but margins coming in well below estimates, and the company plans to spend even more to build out AI data centers. So it's a familiar theme playing out, strong AI demand, but the cost to keep up is weighing on profits and hitting the stock this morning. Meanwhile, we are seeing shares of Marvell rising nearly 2% in the pre-market after a fresh upgrade by analysts over at Barclays to overweight, pointing to surging demand for optical chips tied to AI infrastructure. Barclays saying that part of the business could grow close to 90%, even amid competition from the likes of Broadcom, and that's extending a rally that's already seen this stock jump 35% year to date. And we end on some more sell side action with Datadog up 3% in the pre-market after analysts over at Guggenheim rated it a buy. Analysts see the cloud software company actually benefiting from AI-driven data growth. And this is notable because this was one of those stocks caught up in the SaaS apocalypse back in February. Lisa.
Thank you so much. Yahira answering a question I think AMH had about what Datadog was. A premier cloud-based monitoring security platform.
I just heard Datadog and I thought of Dogecoin.
Really?
Maybe Datadog uses Dogecoin.
I thought of a hot dog wrapped in a silicon case. Anyway, on our radar this morning, Israel launching its largest assault on Lebanon since the start of the war, targeting more than 100 Hezbollah's military sites. The attacks putting the U.S.-Iran ceasefire in jeopardy as Tehran threatens a heavy response. Vice President J.D. Vance heading to Pakistan, where he'll lead U.S. talks with Iran. Vance saying he hopes Tehran will negotiate in good faith. The first round of talks are scheduled for Saturday in Islamabad. Do we think that they're actually going to take place, AMH?
At this moment, the White House was pretty direct yesterday, naming names of who's going to go. Alongside him will be Steve Witkoff and Jared Kushner. But of course, to Dan's point, a lot of people don't believe this ceasefire is real. So potentially what happens in the next 48 hours, I think, will determine whether or not you see that meeting.
Yeah, it's some real mixed messaging coming from the Iranian side. Meanwhile, in the United States, Fed officials seeing two-sided risks from the Iran war. The minutes of last month's FOMC meeting show some officials are open to even a rate hike due to inflation concerns, while most worry a protracted war could hurt the labor market, warranting a rate cut. Dan, it seems like the market shrugged this off as just trying to job on the market into behaving when it comes to inflation expectations. Do you think a rate hike could squarely be on the table with an increasing number of officials a little bit worried that they haven't reached their 2% target in more than 5 years?
I don't think so. I don't think a rate hike is legitimately on the table, especially because I'd come down in the former camp, which is if oil prices spike and stay up there for some period of time, and that starts to weigh on demand, et cetera, I think you could make a case that a rate cut is even more likely rather than a rate hike. But yes, I think the minutes are probably out there telling people, I mean, that's what the minutes are for. They get edited up until the day they get released, and they sort of want to convey a message. The Fed can do it through the minutes, and I think they succeeded in that way yesterday.
Does it really matter as much as it used to a lot of traders in the market what the Fed minutes or even Fed rhetoric sounds like right now?
Listen, the Fed really matters most at the extremes, when they raise rates too high or they cut rates too low, quote unquote, in both cases. In the middle, I don't, like, you get a lot of people who come on air saying, does 25 basis points really matter? And I think we're probably in one of those worlds right now. There are a lot of people, I include myself, who thought rates were too high at 5.5, too high at 4.5. At 3.5, you have a much more balanced take on things. I still think they're probably 25 or 50 basis points too high, but there's a good debate either way.
Lisa, I think who it matters to is Kevin Warsh. It's like a warning shot. This is the group of individuals you're going to be dealing with when you finally go through a Senate confirmation and get a vote to actually lead the Federal Reserve.
I apologize. Also, some of this is positioning on the part of the Federal Reserve in front of the incoming Fed chair. Right. I should have mentioned that as well.
That's actually a really good point. We'll talk about that more coming up. Turning back to our top story, the U.S. and Iran gearing up for peace talks on the heels of a fragile ceasefire.
The president will only make a deal that serves in the best interests of the United States of America, and he as a negotiating team will focus on this effort over the next 2 weeks, so long as the Strait of Hormuz remains open with no limitations or delays.
Bloomberg's Tyler Kendall joins us now. Tyler, what's the latest?
Yeah, hey Lisa, good morning. Well, President Trump posted on Truth Social overnight saying that the U.S. remains ready to resume military operations if Iran does not adhere to the ceasefire and until a full agreement is in place, putting the same emphasis as you just heard the White House press secretary there on the need to reopen the Strait of Hormuz. Because yesterday, Iranian state media had reported that Iran was going to continue to halt ships as Iran maintains that it needs to see fighting stop in Lebanon in order for the 2-week truce to take place. Now, this despite the U.S. saying that Israel's separate front against the Iranian-backed militant group Hezbollah was never part of any ceasefire deal, and President Trump is downplaying the potential that it could derail diplomatic efforts. Now, we did hear from the Vice President J.D. Vance yesterday, who is leading the U.S. side of negotiations, say that the U.S. has started to see signs that the strait is reopening, despite data analyzed by Bloomberg News showing that only 3 ships exited the region yesterday yesterday amid an 800-vessel backlog, and new this morning, Iran saying that it has established safe passage routes for entering and exiting the waterway in what appears to be a bid to avoid the potential presence of mines in primary traffic lanes. Now, Lisa, yesterday, President Trump met privately with the NATO Secretary General Mark Rutte, as a senior NATO official tells Bloomberg News that the U.S. made it very clear that they would like to see tangible plans presented within days on how European allies are going to help secure the waterway.
Tyler Kendall, thank you so much for the reporting. Oil, meanwhile, heading back toward triple digits. Stephen Schork of the Schork Group writing, the market isn't pricing in full normalization yet. Until crude is physically moving through Hormuz, oil prices stay structurally bid. Stephen joins us now. Stephen, thank you so much for being with us. How much are you gleaning in terms of whether the Strait of Hormuz is open, whether it's not open, and what a new normal could look like?
Yeah, absolutely. Thank you, and good morning. So we're looking at the spread action, and actually with all of the headline numbers coming off significantly, some of the spreads being cut in half, the spreads that is for NYMEX WTI. When we still look at the market, West Texas oil delivered into Houston, bid against European oil, surged 20% yesterday. That is to say, dated Brent cargoes traded in the North Sea moved to a $19 to $20 premium to Gulf Coast crudes. So that is your clearest telltale that the market is highly skeptical that the ceasefire is real, it will take, and it will actually open up the Strait of Hormuz. So until we start to see some sort of convergence between global energy prices, dated Brent or Dubai, against the Gulf Coast crudes, the message is that this ceasefire is just headline only, and it's all about the barrels and the flow. And right now, we're not seeing either of those two.
Yet still, Brent is under $100 a barrel. And maybe yesterday, 4 vessels got through the Strait of Hormuz. Shouldn't actually prices be higher?
Yeah, it's an excellent question. And to your point, they are higher, and it's all relative. So at this point, Gulf Coast crude, delivered into Houston right now, is the cheapest barrel on earth right now. And those spread differentials at $19.20, if we look at the Dubai market, at the end of last week, it was $30 a barrel. So getting a few vessels through, when we start to hear the rhetoric that's still coming out of Iran, certainly doesn't sound like this ceasefire will take at this point. So, I mean, should they be higher? Yeah, in a flat price, I mean, the market is the market. What we're looking at is the difference between locations. And right now, the location of oil where it is, that is to say in the Gulf Coast, where there is plenty of that oil, and where it needs to be in Asia, we're still looking at an extremely wide differential. So it's all about the differential between locations rather than just the flat outright price.
Are Asian customers looking for product elsewhere, like the United States?
They are our contacts in the Gulf Coast. The Asian buyers, particularly Japan, would be rather discerning on where they're buying the crude, their quality of the crude. At this point, and this has been the get-go for the past few weeks, Asia's coming in full blast, and they're discerning on quality, location, so terms, so forth. It was buy first, negotiate later. So we've already started to see that massive influx of Asian buyers into the Gulf Coast. European buyers were a little bit behind the curve. So what we're starting to see now is a balancing of the Brent market. And I want to be clear about this, not the futures market. The futures market on ICE is delivered in June. The dated Brent market is barrels actually, the physical market actually being traded today. And that diff is still, as we said, about $20 a barrel. So we saw a equalization of Asia, the Asian bid and the European bid coming into the Gulf Coast. But this is where the action is right now. So prior to the ceasefire headline, what you started to see is Gulf Coast crude, NYMEX WTI migrate, being pulled up to where the global price is. If we do get a ceasefire, again, what we saw with the spreads is there's still a lot of skepticism that we'll see any of this oil flow anytime in the near future. And hence why I said in the note to clients that regardless of whether the ceasefire takes place, we're in a new normal right now where the fundamentals are constantly shifting underneath our feet.
Stephen, I had several questions for you, and you just answered all of them in that one long answer. So I'll follow up with So we've seen the intensity of demand out of Asia. Numerous reports are bearing it out, exactly what you just said. How long do you think it takes for that demand intensity to migrate from Asia to Europe and eventually the United States? Because to Anne-Marie's question about, and your answer about the differentials between US-based oil and global oil benchmarks, how long till that stress starts putting upward pressure on the other metrics?
Well, I think right now, again, Dan, looking at those, actually the spread action going out for the next 3 months, we have an extreme war premium priced into the front end of the curve to the point where just because of this headline, those spreads, and I'm talking NYMEX WTI, were cut in half. So if we look out for the next 3 months, the market is telling us it's going to be any sort of 3 months before we start to see any sort of kind of normalization. So right now, we have to keep in mind, we're coming out of the turnaround season, the maintenance season. So physical demand for oil from refineries is actually at its lowest point of the year because refineries are in their maintenance season. So they're processing less crude, they're buying fewer barrels. Now that we're getting to April, and then next month, Memorial Day, the kickoff to the Northern Hemisphere holiday season, this is when we really have to be wary of. So the futures market is staying at least 3 months before we see normalization. Dan, to answer your question, we are within 2 months as the second component now in the thesis kicks in. That is to say, rising demand here, particularly in the United States, as we all, I'm in Pennsylvania, so we all head out to the Jersey Shore. In New York, you're all going to drive out to the Hamptons. So when that demand starts to kick in, that's when we'll start to see some real action here.
Stephen Shork of the Shork Group, thank you so much for being with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Trump lashing out at NATO after a meeting with the Secretary General, Mark Rutte. In a post on Truth Social, Trump writing, quote, NATO wasn't there when we needed them, and they won't be there if we need them again. Rutte saying he and Trump had a frank and open discussion. The U.S. is considering lifting sanctions on Venezuela's central bank to facilitate the flow of billions of dollars into the country's economy. Sources telling us here at Bloomberg the move would allow proceeds from oil sales to circulate more freely through Venezuela's financial system. And PIMCO is looking to sell portions of the $14 billion debt deal it's providing for Oracle. The tech firm will use the funds for a massive data center in Michigan. Sources telling us here at Bloomberg the financing is being led by Bank of America, with Blackstone contributing about $2 billion in equity. The companies declined to comment. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, the case to wait.
I see the underlying fundamentals of the economy as really in a good place. The question is, what's going to happen with the war? It's really too early to make any statements about that because we don't know how long the conflict will last.
Kit Jukes of SocGen joins next. This is Bloomberg Surveillance. Good morning.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insights with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The risk-on field from yesterday fading into just slightly risk-off as people question the state of the ceasefire. Right now, you can see that in markets with equity futures lower. You can see that bond yields actually going lower as well with a bid there. Dollar losing some clout. This is interesting because at one point this was the haven trade, and this morning, even as oil prices rise, you are not seeing that bid into the U.S. greenback. Under surveillance this morning, Fed meeting minutes for March show some officials are willing to keep rate hikes on the table if higher energy prices continue. Still, most are worried about a longer war and ultimately structural changes. This is what's getting a lot of people in markets interested. Kit Jukes of SocGen joining us right now from our London studio. Kit, I'd love to get your thoughts, not just on Fed positioning, but the broader debate that's going on right now about whether Iran is going to charge nations in yuan, Chinese renminbi, or Bitcoin to traverse the strait at a time when people are wondering whether the dollar's dominance is being called into question. How much are you hearing about that, fielding questions about that?
I definitely have been, for a while in various forms. There's no doubt that more people would like to transact away from the dollar, partly because, there are constraints imposed in terms of, I work in a bank. If we do transactions with the wrong countries, we get into all sorts of trouble if we do it in dollars. So there's pressure, and the Iranians are clearly part of that. It reduces the dollar's share of global transactions, but from a huge percentage to a really, really big percentage. So dominance remains, but it's not quite as dominant as it was before. And that's probably, a good thing, because the US share of the global economy is going down as countries like China grow. And I remember once upon a time, sterling was the dominant currency. It definitely outlived its use, became a problem for the UK, and it was a good thing for everyone when the dollar replaced it. So I don't think there's a replacement. There isn't an alternative to the dollar, but there's no doubt more people would like to have more of their savings somewhere else, and they would like to do fewer of their transactions in dollars. That is nibbling away at the dollar's importance.
How much, Kit, do you see this in the lack of a haven trade that you've seen in the dollar? You have seen a knee-jerk bid into the dollar during times of extreme stress. Some people have argued it isn't as significant as it would have been in prior times of volatility. Do you agree with that? Do you think that that limits some of the upside?
Okay, I certainly think that the dollar did less well. Euro dollar got to 114 in the height of this. I thought it might get to 110. So the dollar did less well in the rally of the kind of the heat of this war, and it's doing much better than you think it should at the point where some of the, well, at least we've got a sort of a ceasefire. So there's something in that. It's not just, though, that the dollar's preeminence is going. It's that this U.S. administration makes some investors nervous. They would like to find a way to keep interest rates low. They would like to continue to run large fiscal deficits. They would like to continue to have high unemployment, and they would like to have high employment, very low unemployment, and they would like to have their cake and eat all of it at this point. It's kind of, everybody else is talking much more aggressively about perhaps needing to counter higher inflation with higher rates than U.S. officials are.
Well, when it comes to higher inflation, if we get another big spike in energy prices and this ceasefire does not hold, what do you do with the fact that you like the yen right now? Do you abandon a yen long? Because energy spike is not going to be good for Japan.
Yeah, the yen long was more appealing yesterday than it is today after the events when we see the ceasefire kind of creak a little bit. And I think that is a problem. I'm still somewhat comforted by the fact that dollar yen, having made it to 160, is struggling to get through. In sort of purchasing power parity terms or any other terms, it's the most beaten up of the major currencies. So I have no interest in shorting it. They're hugely dependent on foreign energy. So it'll do well when energy prices start coming down. I suspect the miserable answer is that if energy prices stay high for longer, dollar yen stays at 159 to 160 for even more time.
Hey, Kate, so we talk a lot about the move away from the dollar weakness, et cetera, but if we use for a lot of people, we'll use the DXY as the barometer. It's basically at its average level over the last 10 years. It's still 10, 20% higher than it was around the time of the mid-2010s of the taper tantrum. It's still 90% or 75% of global trade. According to the IMF, it's still 55, 60% of global reserves. It still is a reserve currency, and the main reason why is there's no alternative. So for the foreseeable future, it's still the dollar, no?
Yes, the dollar is still the world's dominant currency. It's slightly less dominant than it was, and I suspect it may continue to be slightly less, but that's just a good thing because the US is the world's dominant economy. It's just as a share of global GDP, it's a little bit lower, and there's been more politicization of the dollar. I think the valuation story is about really US monetary and fiscal policies more than about people losing faith in the dollar. In other words, if the Fed raised rates more than the ECB, more than the Bank of Japan in the face of an inflation shock, the dollar would go up.
And right now, people are expecting the opposite. Kit Jukes of SocGen, thank you so much for being with us. Really appreciate it. That really is kind of the key question. And Dan, look, I could tell you're pushing back, and I think a lot of people would agree with you. We've been crying wolf a long time on this idea of dollar dominance losing its clout.
I'm sorry to interrupt. I have in my phone a bet with Peter Bookvar from like 10 years ago that the Chinese yuan would be a comparable reserve currency to the US dollar in like 15 years' time. I can't find it in my phone right now, but that bet exists. Meaning, 10 years ago, we were talking about the dollar sliding as a...
And which side were you on?
I think the dollar remains... if you read like Barry Eichengreen's book, Exorbitant Privilege, or you just study marginally the history of reserve currencies, you've got to really wrest. You've got to do some bad, not that we're not doing some bad stuff in the U.S., but you've got to really wrest away the reserve currency from Britain and now the U.S. It doesn't just happen overnight. Something's got to really drive it. And at least in my forward-looking view, there's nothing that wrests that away from the U.S.
Dan Greenhouse of Solus Asset Management, thank you so much for being with us this morning. Wonderful to have you.
I'm glad we finally got John out of the way so the three of us could do...
Absolutely not. He is back next week, so have no fear. And Emery, I want to hear more about your trip to Ecuador. Coming up, we're going to be catching up with Bob Michael of J.P. Morgan, former Deputy National Security Advisor Victoria Coates, Ted Mortensen of Baird, and Jill Carey Hall of Bank of America, as we look to another day of headline whipsaw. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Burrell.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country.
We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Situations like this highlight the resilience of the U.S. economy.
There are some little pockets of inflationary pressures.
We will continue to see upward pressure in inflation.
We still think there will be one, perhaps two rate cuts.
We continue to expect the Fed to cut rates.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. Welcome back to the second hour of Bloomberg Surveillance. Traders losing faith in a ceasefire between the U.S. and Iran, with ships still struggling to get through the Strait of Hormuz. Futures dipping, oil rising, employment and inflation data coming up with jobless claims and core PCE 90 minutes away. A key question, AMH, and it keeps coming up. How do you trade markets that really are completely at the mercy of headline roulette?
It's very challenging, especially when the facts on the ground have not changed. So do you go with the headline and the intuition potentially of where the market might be going with the President of the United States saying, or do you actually look at the facts on the ground, which haven't changed when it comes to this conflict? The Strait of Hormuz is effectively closed, or if you want to say controlled by the regime. And yesterday, even though the White House kept saying they saw an uptick, there was no uptick. It was 0 to 4 vessels that maybe got through the strait yesterday.
And a real question here of what was agreed upon in the ceasefire, what wasn't agreed upon. Questions of whether Israel had agreed also to cease some of the attacks on Lebanon as part of that or not. Conflicting conversations coming out of both sides.
Yeah, which is why I think a lot of investors probably will just want to stay on the sidelines until there's a little bit more clarity potentially coming out of these Islamabad talks over the weekend, because there has been just a ton of noise coming out of not just Tehran and the United States, but also what Israel's doing, and will they listen to the United States, depending on if a ceasefire, in terms of if Lebanon is agreed upon or not this weekend. So there's a lot of noise right now, and I think that's why individuals just have a lot of questions, and there's not a lot of clarity, especially when the President of the United States very late last night says he's keeping all the military hardware in the region as basically a just-in-case policy.
In the meantime, yesterday, markets had a great day in terms of risk on with this belief in a ceasefire. We saw a 2.8% gain on the NASDAQ, a 2.5% gain on the S&P 500 today. We just take some of the heat out of that rally, down about 1/3% for the S&P and the NASDAQ. Russell 2000 more interesting, down 0.7%. As people look to the potential suppressive impacts on growth, take a look at what's happening in in the yield space. A little bit of a bid into bonds, which is interesting in light of the direct correlation between bonds and oil prices recently, and especially given the volatility yesterday. A real sense of paralysis in the bond space, 4.28% on the 10-year after a pretty tepid auction yesterday. And all of it really has to come down to the price of crude. When you take a look at the June contracts, both Brent and WTI, both up more than 4%, but still below $100 a barrel, 98.59 on Brent crude, and for WTI, $91.46. Coming up this hour, Bob Michael of JP Morgan Asset Management, with crude heading back toward $100. Former Deputy National Security Advisor Victoria Coates with the Iran ceasefire under threat, and Ted Mortensen of Baird as investors tap the brakes on the tech rally. We begin this hour with stocks sliding and crude climbing once again. More cracks appearing in that fragile Iran ceasefire. Bloomberg's Tyler Kendall joins us now from Washington, D.C. Tyler, what's the latest?
Yeah, hey Lisa, good morning. Well, this White House says that the diplomatic process is continuing as the U.S. confirms that direct talks will be held with Iran this weekend, being led by Vice President J.D. Vance. And although reporting from the region indicates that Iran's attacks against Gulf state energy sites have appeared to decrease overnight, at this point, the ceasefire is still very tenuous. And that is partly because Iran is demanding that Israel stop its attacks in Lebanon, even as the U.S. says that Israel's separate front against the Iranian-backed militant group Hezbollah was never part of any deal, and President Trump downplays that it could derail the diplomatic process. In fact, Vice President J.D. Vance did say yesterday that Israel has, quote, offered to check themselves a little bit when it comes to Lebanon in a bid to help grease the skids when it comes to the negotiation process, as Israel confirmed yesterday that it had conducted its single largest day of strikes against the militant group. Now, President Trump did reiterate in this post yesterday on Truth Social that the U.S. stands ready to redeploy and resume military operations if Iran does not adhere to the ceasefire, and until a full agreement is in place, putting that emphasis on the need for the Strait of Hormuz to reopen. Because as Anne-Marie just mentioned, data analyzed by Bloomberg News shows that only about 3 vessels left the waterway yesterday amid what is an 800-vessel backlog. Now, Lisa, yesterday President Trump did meet privately with the NATO Secretary General Mark Rutte, and a person familiar tells Bloomberg News that he demanded that European allies put forward tangible plans to the U.S. on how they intend to help open the critical waterway in the next few days.
Tyler Kendall, thank you so much for that. We'll be catching up with you throughout the day. Here's the view from Wall Street this morning. Bob Michael of JP Morgan Asset Management writing, the market is starting to unwind the tail risk associated with a global economy that would have to live with oil above $100 for a protracted period. Bob joins us now in our New York studios, which is a wonderful thing. Bob, great to see you.
Happy to be here.
Do you think that it's appropriate to remove some of the wagers on oil being below $100 a barrel for a protracted period of time?
Well, that's a complicated question. I think the best answer is we can live with oil $100 a barrel for a while. I think what the administration has done a good job of doing to us over the last year plus is to train us. And we look for signs of when is the rhetoric at a high, but they're starting to look for an exit. And we're starting to see that now. And I think that's why the markets are so optimistic. If we go back to tariffs, if we think about Greenland, if we think about Venezuela, at some point the rhetoric is very high, but the administration finds an off-ramp and exits. And I challenge you to tell me that all 3 of those things have been buttoned up. They're all still going on in the background. And it feels like we're on the same kind of off-ramp here. That's pretty good for the markets.
So yesterday we saw people have faith in the idea that the escalation in rhetoric at least had peaked, and we at least are coming to that off-ramp. It's almost exactly following the time frame of Liberation Day last year. I'm just wondering whether you think it's viable in an ongoing fashion, even during some of the question marks around how durable the ceasefire really is.
So we do, because there's been significant repricing across markets, especially in the bond market. Investors are caught a little bit offside for an actual off-ramp. I don't know that you need a ceasefire for the entire 2-week period. You probably need one for the back half of the next 48 hours. Enough time for everyone to meet in Islamabad and to iron out details of what an off-ramp could look like. And then I think over the next month, we're going to see this in the distant rearview mirror, even if oil stays at $100 a barrel, because it's going to take time to get the fiscal oil to where it's needed.
So you think these Islamabad talks are real and credible?
I think they are. I think they're essential for the administration if they're genuinely looking for an off-ramp. It sounds like for the last 3 weeks they've been looking for that. I feel Vance is on his way there. The Israelis will be there, and something will come out of them.
But when it comes to this gap between the Iranians and the United States, they don't agree on anything right now.
Right. Everyone, it's classic bargaining. You want this, somebody else wants that. You'll find a way to meet in the middle. There are lots of things that the U.S. can do. Yesterday, I listened to General Kane. He declared victory. You listen to Vance. He declared victory. They've already started the process of saying, look, the primary mission was to mitigate a nuclear threat. We've done that. We'd like the Strait open. We'll see if we can get to that. If not, we supply enough of our own oil, we'll just move on.
So with fixed income, what does buy the dip mean? Because we've seen that certainly in credit, with investment grade credit spreads moving down below at one point where they were right before the war took place. We just heard earlier this morning Keith Lerner talking about how he went wholesale into high yield bonds because he sees opportunity now. Is it more the credit risk side, or is it more the government bond side, with expectations that inflation will ultimately continue on its downward path?
It's everything. It's just an acceptance that investors are underallocated to fixed income. Equities have bubbled higher for them over the years. They've allocated a lot to alternatives. They're looking for opportunities to get into fixed income. I've been in Houston for the last couple days meeting with clients. They don't want to miss this backup in yields. They want to get into the bond market. It starts with where is fair value. I think the Fed is in hibernation mode. I like that. I like a 3 5/8% Fed funds rate. It's solid. It leaves it at about 0 on a real basis if you deflate it by headline inflation. That's okay. It also leaves yield in the bond market. The 2-year should be within touching distance of that. It's probably about 10, 15, 20 basis points too high. And the 10-year, we think, with a 3 5/8% Fed funds rate, either side of 4%, you're a little bit over 4 1/4. That looks okay. And Keith is right. Credit spreads are attractive. All the problem credits had financed themselves in the private credit market. Is that a separate problem? Is that all part of the same credit problem? We'll see over the next 18 months. But for now, the bond market looks pretty good. It's held in phenomenally well over the last 6 weeks. And investors don't want to miss this opportunity the way they did last year with Liberation Day.
Well, neither do companies, right? We're seeing a rash of bond deals coming to market, a lot of issuance. We saw the most issuance ever globally for corporates in March, and now it seems like anytime there's a window, everyone wants to come in.
And hasn't it gone well?
It has gone incredibly well, and all of the debt sales have been oversubscribed.
And what does that tell you?
Well,
exactly. It tells you there's money there. It tells you that we in the bond market look at corporate earnings, we look at profitability, we look at leverage, and we're okay.
Given that, isn't there a dissonance between the belief that inflation will go down over time, while also seeing the animal spirits come back to markets with so much money still available, and people looking through even $100 a barrel in terms of oil prices, saying consumers can withstand that? Listening to Ed Bastian over at Delta, we're optimistic. We're seeing customers absorb the higher prices. I mean, can't you bake in higher inflation? Doesn't it have to be one or the other, animal spirits or potentially a bid into duration?
Well, I think we've crossed that divide. I think we in the markets accept that a 2% inflation target is a myth. We haven't been there in half a decade. It didn't feel comfortable when we tried to get there and we were printing 1.7, 1.8. It's too low for an economy the size and complexity of the U.S. 2.5 feels like the new 2%. And we're a little bit above that. Because we've got transitory inflation because of the energy shock. That too may or may not fade. But I look at our analysis, I read Mike Feroli's stuff a lot. Even with where energy is and the probabilities of this being extended, we've got inflation, if you look at headline and core, between 3.5% and 3% for this year. But we have real GDP at about 2.25%. So what we're saying is this economy can absorb higher inflation than 2%, even inflation around 3%. And the Fed probably doesn't do anything because they went into the last meeting still a little bit concerned about the labor market. Now they're probably more balanced, so they're going to sit on their hands.
Michael, you're going to be sticking with us of JP Morgan Asset Management. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anna and Yahaira.
Hi, Lisa. The White House saying Vice President J.D. Vance will lead direct talks with Iran and Pakistan. Vance will be joined by Special Envoy Steve Witkoff and Jared Kushner. The first round of talks is set for Saturday morning, local time. President Trump lashing out at NATO after a meeting with the Secretary General Mark Rutte. In a post on Truth Social, Trump writing, quote, NATO wasn't there when we needed them, and they won't be there if we need them again. Rutte saying he and Trump had a frank and open discussion. And the U.S. is considering lifting sanctions on Venezuela's central bank to facilitate the flow of billions of dollars into the country's economy. Sources telling us here at Bloomberg the move would allow proceeds from oil sales to circulate more freely through Venezuela's financial system. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, pushing for peace.
We have a negotiation that's supposed to start this weekend. We're going to see if we can make more progress here in the days to come. I'm optimistic that the Iranians are going to be smart, that they're going to negotiate in good faith.
Former Deputy National Security Advisor Victoria Coates joins next. This is Bloomberg Surveillance. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Yesterday's solid risk on feel turning to just a sense of skepticism right now in markets. Futures lower as we head toward the opening bell. 0.4% decline on the S&P. Yields a bit bid, just a bit, 3.78% on the U.S. 2-year. Dollar fading just a touch, continuing the slide that it saw yesterday. And Brent crude solidly above $98.62 when we're looking at the Brent June contract up 4%. Under surveillance this morning, pushing for peace.
We thankfully at this point, I think, have a ceasefire thanks to the leadership of the President of the United States. We have the Iranians promising to open the Straits of Hormuz, and we have a negotiation that's supposed to start this weekend. that's the truth. I think it's a good first step. We're going to see if we can make more progress here in the days to come. I'm optimistic that the Iranians are going to be smart, that they're going to negotiate in good faith.
Here's the latest. Vice President Vance gearing up to lead direct talks with Iran on Saturday, with fighting in the Middle East threatening to derail an already fragile ceasefire. Former Deputy National Security Advisor Victoria Coates writing, "The odds of Iran sticking for the full 2 weeks is pretty small in my book." Victoria joins us now. Victoria, thank you so much for being with us. So what are you gleaning so far from a pretty uneasy ceasefire, if you could even call it that, for 24 hours beset by attacks and a lot of arguments between both sides?
Yes, this is a pretty dicey period, and this is standard for this kind of arrangement. If you think back to the Gaza war, the early ceasefires were extremely delicate. There was a lot of pushing at the edges by both sides, and it took a long time to get to a durable deal under President Trump last fall. So I think we're going to see a similar kind of jockeying for position here. But the interesting thing here is that the Iranians really don't have any cards beside the Strait of Hormuz. And one thing I've noticed is that it's going to be a declining asset for them, because the entire region is talking about ways going forward they can circumvent the strait. So Iran's going to try to play that card as hard as they can right now, get as much as they can out of it. But I think their ability to do that going forward is going to be quite limited.
Victoria, when it comes to the strait being open as normal, but with these strings attached, the Iranians basically making sure you have to have a payment, whether it's yuan or Bitcoin, would that be a success for the United States? Yes, there would be more of an uptick of vessels, but that means Iran fully controls this key waterway.
No, I think that's absolutely what we're going to be working on going forward. And what you're seeing the Iranians do is essentially function like a mafia group. They're trying to shake down the rest of the world to get energy out of the Gulf. And so, yes, they are demanding crypto payments, which is kind of comical. But as I said before, I think their ability to do that long term is not going to be there for them. And the other thing it shows us is that they are desperate for money at this point. Their economy is absolutely on the rocks. And they've shut down their internet for now 35, 36 days. So nobody's done that before. And I don't think anyone's really forecasted the kind of damage that's done to that economy. And what happens when they open it back up? What are the Iranians going to do when suddenly, the ATMs are full again, that kind of thing? It's really a very difficult situation for them. So I think they're thinking very short term right now. They're just thinking, how do we get cash out of the Strait of Hormuz so we can survive another day?
This is still leverage that they hold. How do you think they're going to use this at the negotiation table on Saturday? What would be acceptable to the United States?
Well, that's the thing, is this is all they have. This is their leverage. Otherwise, their ability to inflict harm on the United States, their neighbors, on Israel, is getting more and more limited. That was really the point of Operation Epic Fury, was degrade their ability to inflict that harm and also their ability to reconstitute it. And the Secretary of War and the Chairman of the Joint Chiefs yesterday laid out a very detailed case about how that ability to reconstitute their missiles, to restart their nuclear program, had really been destroyed. So all they really have is the strait right now. And as I said, that's a declining asset for them. So they don't have a lot of cards. And I think that's the point that the Vice President and the special envoys will be making to them.
Victoria, can a post-weekend off-ramp for the administration include leaving the Strait of Hormuz in control of the Iranians if they accept U.S. dollars and some conditions about how the funds are used?
In terms of accepting U.S. dollars
only
as payment?
As tolls, yes.
As toll. I mean, that is certainly something, although I actually would prefer them not to have dollars. I think the economic leverage is the other really strong point the vice president's going to have in his pocket. The Iranians can't restart their economy without broad sanctions relief. I mean, that's just not going to happen. I don't see China doing anything material to help them economically, and they've alienated countries like Qatar, who might have been willing to help them in the past. past. And I think it's notable that Qatar went to the United Nations yesterday and said they want to hold the Iranians economically liable for the damage that was done to their oil field during the war. Very interesting development there. So I would prefer not to give them dollars. That's a nice hard currency for them. So I wouldn't really see that as a give point for Iran.
Victoria, it was sort of interesting to me that Bob brought that up because a lot of people are talking about China maybe coming closer to Iran and the petrodollar becoming the petro yuan, this idea that they could enter into the primary relationship considering their role as the major buyer right now from the Middle East. Do you think that that is exaggerated and that, frankly, Iran has no friends and that there isn't necessarily any push toward China in that kind of material way?
Well, that's what it has been for the last 5-6 years. That China has been the primary buyer. They've bought in yuan, and then the Iranians can use that currency to buy things from the Chinese. So it sets up a nice little loop for China, and that has been the case. It hasn't made a lot of people in Washington happy, but it's not that great of a threat to us because I don't see anybody else. I don't see the Saudis or the Kuwaitis or the Emiratis or the Qataris particularly interested in taking yuan for their product. So if it's just Iran and that loop is keeping Iran out largely of the broader global economy, that doesn't make me all that unhappy.
Victoria Coates, former Deputy National Security Advisor, thank you so much for being with us. Bob, this to me is one of the key questions, right? How much do we start to see other currencies replace the dollar and sort of the end of the petrodollar regime that began in 1974 and has lost a little bit of clout?
I do think there is room for the administration to leave the strait in control of the Iranians if they accept only dollars, and there's some methodology for how the dollars are distributed. What are they used for in Iran, and do they go to Qatar to help rebuild some of the fields? I expect that to be part of the off-ramp discussion.
To do that, though, the United States would have to lift their own sanctions on Iran. Iran right now has no access to the SWIFT banking system. You can't actually transact in dollars in the country unless you have physical hard cash, which a lot of Iranians like to hold on to. So it'd have to go to some sort of escrow account for humanitarian aid. Is that what you're thinking?
Come on, AMH. We've had this administration for over a year. Everything's on the table. Everything can be recrafted. So I have confidence that the details will be worked out over time, or like everything else that we've seen with tariffs, with Greenland, with Venezuela, they won't be worked out yet, but they'll be in the rearview mirror.
I think one of the big questions that a lot of people have, and something I keep hearing, is who is doing the negotiating in Iran? It seems like there are conflicting signals coming out of different parts, and it seems like there are attacks coming out of different places. So is there enough of a cohesive regime to actually come out with any kind of deal that can actually be agreed upon?
Well, I think it was interesting when I think it was the foreign minister or Mohammad Ghalibaf actually released a statement for the Supreme National Security Council, because in Iran it is a deliberative body when they try to speak and everyone almost gets a vote. I believe the individuals that would likely end up showing up in Islamabad would be Ghalibaf and the foreign minister. But really at the end of the day, it is this deliberative body which has a lot of IRGC influence and of course the Ayatollah, who we have not seen yet.
How much do you follow all of the different iterations that come out every day, Bob? And how much is it sort of a question, just buy bonds? It seems like there's a lot of money out there, and frankly, you can't really trade off the headlines.
No, I follow it constantly. I'm interested. I think AMH makes a good point. Whoever shows up in Islamabad, that's who you're dealing with.
Yeah, that's going to be what we're watching over the weekend. Coming up, Ted Mortenson's going to be joining of Baird as a tech rally stalls out just a touch. Plus, Danny Berger comes on with your morning movers. CoreWeave shares jumping on an expanded AI deal with Meta. To Bob's point earlier, lots of deals getting done right now and lots of money that are looking to get put to work there. This is Bloomberg Surveillance. Good morning.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Versace in Davos, Switzerland, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Coming to another day with a complete shift in sentiment. Yesterday was very much risk on, almost a 3% rally in the NASDAQ. Today, fading that just a touch with questions around what a ceasefire means if people are still lobbing bombs at each other. Right now, we're seeing NASDAQ futures lower by 0.4%. Same on the S&P. Russell 2000 seeing a more significant decline, near session lows down 0.8%. A little bit of a bid into bonds, kind of a complete stagnancy here as people understand the dueling risks for the Federal Reserve. Essentially flat, 3.78% on the 2-year. 10-year yields 4.28%. And we have an auction coming up later today at 1 p.m. of 30-year bonds, and we have 4.88% rounded up on that. And really the entire story has to do with crude. Right now it is a crude market, and right now crude is inflecting higher, up more than 4% on both Brent, $98.57, and WTI, the June contract, $91.50. A real question here about what will actually turn the tide a material way. Bob Michael has been with us for the hour. And Bob, you've been saying ultimately oil above 100 is actually okay as long as it remains stable and as long as the economy can keep chugging along.
Yeah, I've been saying that. We've asked our credit analysts to model corporate profitability. We see a couple things. One, revenues tend to come down a little bit because there will be some demand destruction. Margins will come in a little bit, but corporate profitability is still there. You're not in recession. You're not in desperate times for corporate America. The U.S. can withstand $100 oil.
Ed Bastian seems to agree and is raising prices. So is Scott Kirby over at United. And frankly, we might see more of that with earnings season coming up, starting off in earnest next week. 2 hours away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa, one thing that's certainly not slowing down amid all of the macro headlines is deals for AI. CoreWeave and Meta reaching a new agreement in which Meta would spend $21 billion with CoreWeave. This adds to a $14 million already agreed between the two of them. This is around data centers. The agreement's going to be spending from next year, 2027, through to 2032. Already, Meta is building out its own AI capabilities, but it needs more. It's going to do so with CoreWeave that houses NVIDIA chips in its centers. Elsewhere, some of the more macro-related news. Intel has been on an absolute tear, gaining for the past 6 straight sessions. It was the second best performer in the S&P 500 yesterday to close at a 5-year high. Some individual things happening with Intel, but also getting caught up in the risk on sentiment yesterday. Just want to point out that that is reversing with the market, not undoing everything it did yesterday, but it's still down nearly 2%. Similar story when it comes to the airlines. They had a pretty big day yesterday, too, up at least 3%. In the case of United, it was up closer to 7%. That, again, comes in this morning as the price of oil moves higher. All of these, though, still trading below their pre-war levels. Lisa?
Thank you so much, Danny. On our radar this morning, the White House confirming direct talks with Iran are set for Sunday in Pakistan. Vice President J.D. Vance leading a high-level delegation, which includes Steve Witkoff and Jared Kushner. Meanwhile, crude heading back towards $100 as the Strait of Hormuz remains effectively closed. Tehran blocking passage through critical waterway as Israel continues strikes on Lebanon. And finally, President Donald Trump repeating his criticism of NATO during a closed-door meeting with Secretary General Mark Rutte. Rutte saying the meeting was frank and open.
He is clearly disappointed with many NATO allies. But at the same time, I was also able to point to the fact that the large majority of European nations has been helpful with basing, with logistics, with overflights, with making sure that they lived up to the commitments.
A bit of a different tone coming from the president, posting on Truth Social, quote, NATO wasn't there when we needed them, and they won't be there if we need them again. Really going to the question, AMH, of whether you're going to end up with some sort of withdrawal, wholesale repudiation of NATO. We've seen that rhetorically, but is there going to be more of a move in that direction?
Well, rhetorically, it's been on the table, and the press secretary even said that this week. Those conversations are there. I think probably it's a carrot and stick approach from this administration because they want to see NATO to step up more. We have reporting that the president in the U.S. is asking for specific commitments from NATO countries to help basically police the Strait of Hormuz. And I think one thing to take into account is we can't be naive to think that this was a free and open waterway. It's been free and open because the U.S. Navy and Fifth Fleet has been there for years, making sure that it was a free and open waterway. And I think potentially, given the volatility between Tehran and Washington, the U.S. is saying, well, if we can't make sure it's going to be safe, then European countries need to step in.
There are a lot of things to worry about right now, but NATO is the one I worry about the most. I think it's sacrosanct that NATO and the Western alliance remain intact. And yes, there could be little squabbles here and there, but it absolutely cannot come apart. So that's a priority, in my view, above all else.
Why is it such a key risk in terms of your seat and what you're looking at?
Because it creates stability across the Western world. It helps to create global stability. The last thing you want is any fragmentation of that. I think it's okay to have a little family squabble, but then come to some sort of agreement going forward. But I think this is a sacrosanct alliance.
I had forgotten that Greenland was still on the table, but evidently it was, so it sort of highlights all the issues that are percolating out there.
Big pile of ice, I think is what the president called it yesterday.
I would love to visit that big pile of ice. I can just say, Iceland was fantastic. Moving on, turning back to Wall Street, stock futures turning negative after Wednesday's global relief rally. The tech-heavy NASDAQ on track to snap a 6-day winning streak. Ted Mortensen, managing director of Baird, saying the AI trade is under the microscope, and Ted joins us now for more. Ted is someone who I am so looking forward to speaking to because you have had experience in the military, you have had experience of what it's like on the ground, while also analyzing tech companies. Before we get into the tech trade, can you just give us a sense of how much we're learning about technology and war during this period right now?
Well, thanks, Lisa. I think the whole technology background is changing, and I think we're now entering the world of AI. I mean, if you look at what Palantir is involved in, not only in the U.S. government and CENTCOM in Tampa with Admiral Cooper, but you know, the Israelis are also using it. So I think you're seeing the first cleansing of AI in a war footing, and the results speak for themselves. I mean, 30 days, you basically decapitated a country.
So when you say cleansing, what does that mean? I mean, in terms of the AI investments, and not to putting aside the geopolitical moment and putting aside the actual war itself, how is technology being deployed, and how are we seeing who the winners and losers are going to be going forward, not just in a military sense, but just in an all-in AI sense as a result?
Well, so if you look at AI, AI is not only economic, but it's also military. So talking about NATO, they got to get going on AI. They have to do, they're going to have to do these sovereign fabs to understand it. The U.S. is so far ahead, along with China, and this is how war is going to be waged in the future. So if I had to say what stage we are in a baseball game, we're not even in the first inning yet. The amount of AI that's being embedded in technology into weapon systems is in its infancy. So we are just starting. Look what Anduril, look what a lot of the defense companies are doing. They're embedding that technology into next generation weapons that we have not seen yet. So we're just at the cusp of it. But I think if you look at the performance, it works.
Shyam Sankar of Palantir did say that this is the first war where it's going to be basically AI-driven. Right. When you talk about AI and weapons, do you mean autonomous weapons?
So picture, you know, the F-35 that was developed, the new fighter that the Navy and the Air Force are using. It's like a player coach on the battlefield. I mean, it allows you to take an immense amount of data for the pilot and actually be that coordinator in the air. Now, where you're going to see in the future, you're going to see drones from Anduril on both sides of the wing. And this is a change in military tactics, where you're going to send stealth drones into the battle instead of, in my era, where you had to fly down the streets of Baghdad. It's a little bit different. You're putting the pilot at risk. Now, with advanced targeting and these advanced stealth drones, pilot will not be at risk as much as he has been, and the targeting that you're seeing in Iran will be much more prevalent.
Well, are there mistakes, though? Because the administration did go after a school accidentally.
Well, I think, you know, we can go into that. I mean, there's always a human. There's always going to be a general and an admiral and a whole bunch of staff that is going to be cleansing this data, and they are ultimately going to make the decision. It's not AI's driving the... AI is a tool, I would say, at this point.
Ted, how far away are we from a tool that shoots down drones or intercepts drones?
It's in development. A lot of the tech companies that actually I'm covering right now, we're just on the cusp of that on high energy. You're seeing the Navy deploy lasers right now. You're seeing the Israeli government, you know, on Iron Dome. Now they have lasers that you're not seeing, obviously, in the press because they don't want you to see it. That's number one. Number two, the ability of doing high energy systems, basically you're frying the components of an Iranian drone. It just basically falls out of the sky. Now, are we there yet? No, it takes time. But thank God you're American, because this is on the drawing board and it's going full bore.
So it feels almost trite or perhaps insensitive to say, well, what's the trade, given the fact that we're talking about life and death and war and all of these issues. At the same time, is there a tell with respect to which technologies and which companies are getting ahead during this period militarily, and that they will be winners down the line when it comes to commercial uses? In other words, are you seeing winners and losers in the AI space more broadly for the economy shake out right now?
It's a fantastic question, and let's just boil it down to a little bit of simplicity. If you look at the conflicts that we have been in the last year, we have used a tremendous amount of weaponry. So advance over the horizon targeting. Those weapons don't grow on trees, okay? The other thing is, when you're having a 30-day pace of a conflict like this, you're depleting your stocks, right? So when I talk to my portfolio managers, we are getting people over those defense names, because if you look at the president's budget of $1.5 trillion on the defense budget, the procurement of weapon systems is up triple digit off that. So we have 3 to 4 years of 25–30% growth for some of these companies in that defense chain, the silicon chain. The next generation, like the Kratos or the AVAVs, or when I hope Anduril comes public, because it's a fascinating company. All of those next generation systems have to be rebuilt, and it's going to take years.
So do you think that right now people are not bullish enough on a lot of these technology names, even as they turn into a safe haven?
You have to be in the weeds to pick these names up. So you have to do this full time, and you have to listen to 70+ conference calls during an earnings season, and you got to pull it together, because it's not going to hit you in the face.
Claude can't do it, evidently. Well,
not yet.
Ted Mortensen, thank you so much for being here. Ted Mortensen of Baird. And this is the reason why you see the exuberance. This is the reason why you see CoreWeave coming out with yet another issuance. This is the reason why you've got so many deals, because of the optimism of how this is going to transform what we're going to see down the pike.
Well, everything Ted's talking about, you need capital to keep developing, to roll out, to test. And it doesn't work perfectly maybe the first time, but down the road it will. Unless you're part of financing these things, you're going to be left behind as well.
And that's what a lot of people keep saying as they pour money into a lot of these offerings, into a lot of these deals. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Iranian officials say Israel's strikes on Lebanon violate the terms of the ceasefire agreement. Israel launched its largest assault on Lebanon yesterday since the start of the war. The country's health ministry saying at least 182 people were killed and hundreds were wounded. And in markets, shares of CoreWeave are rising 2.3% following the announcement it's expanding its AI infrastructure pact with Meta. A new $21 billion commitment to CoreWeave comes on top of a prior $14 billion commitment. The new spending will run between 2027 and 2032 as Meta is aiming to boost its own AI infrastructure. And Ecuador's President Daniel Noboa telling our own Anne-Marie Hordorn he would welcome U.S. troops to help confront the security crisis in his nation.
What I focus on is the willingness of this U.S. government to finally go after narco-terrorists in our region. Maybe the form is not ideal, but the true intention and the plan, I think it's a good one.
Noboa says a U.S. troop deployment could happen as early as this year. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Was it fun down there in Ecuador?
It was interesting. It used to be one of the most peaceful countries in the world, and now it's rated one of the most violent because of the transnational gangs. And he's going after them with an iron fist, and already we're seeing U.S. joint military cooperation, and he's asking for even more and would welcome U.S. troops on the ground.
Here I was thinking that you went to the Galapagos Islands to,
not quite.
Check out the turtles.
Darwin, no,
yeah, not so much. Up next, staying power in stocks.
This is a sigh of relief that we do think has some staying power. The bull market that started in October of 2022 has further to go.
Joe Carey Hall of Bank of America joins next. This is Bloomberg Surveillance.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
seeing a bit of a retracement from yesterday's optimism. Futures lower, but not necessarily taking back all of yesterday's gains. Down just about 0.25% for S&P futures. A bid into the 2-year yield down a basis point to 3.77%. The dollar losing just a touch, weakening to 98 on the DXY index, and Brent up 3% to $97.76. Under surveillance this morning, staying power in stocks.
This is a sigh of relief that we do think has some staying power. But again, as we've been saying, the devil will be in the details over the next several weeks. We continue to be believers in the U.S. in terms of its capital markets and the risk-reward opportunities. The bull market that started in October of 2022 has further to go.
Here's the latest. Stocks falling on concerns about a fragile U.S.-Iran ceasefire. However, small caps outperforming year to date despite the headlines whipsawing markets. Jill Carey Hall of Bank of America writing, if a prolonged conflict raises stagflation risks, small caps have typically held up better than large caps. I'm kind of stumbling over this because this is very hard for me to understand. Joe joins us now. Please explain, because clearly it doesn't really seem like a logical thread that stagflation means good things for small caps.
Right. I mean, it doesn't typically mean good things for equities. Historically, equities have underperformed most other asset classes during stagflationary backdrops. But if those stagflationary risks continue to percolate, we've typically seen that small caps have held up better than large caps. I mean, right now they have more exposure to industries that are, positively levered to higher oil prices, like energy and parts of industrials, than industries that are hurt by higher oil prices, like consumer. So, we've seen earnings estimates rising, since the start of the conflict, and that's been true in mid and large caps as well. So we've actually seen earnings hold up well, and, small caps have actually tended to hold up well in environments like when we looked at the 70s and the 80s. So it is stagflation isn't good for equities, but small caps have tended to hold up better. We got to watch rate cuts or potential for rate cuts, though, since small caps have obviously been very sensitive to the Fed.
Well, that's exactly where I was going to go. Ultimately, small caps have traded pretty much in tandem with Fed expectations, and now the longer stagflation risks remain on the table, the more the Fed's not going to be doing anything. So how is that going to be helpful? Can small caps continue to perform if the Fed doesn't cut rates further?
Right. I mean, I think you get some offset from the benefits that we see from, higher oil benefiting earnings, from, going into this, we started to finally see a manufacturing recovery and earnings recovery. So there have been some positives, and GDP growth is holding up well. Now, if we are on the brink of Fed hikes, then I think that becomes much more problematic for small caps. Right now we had seen rate cuts start to get priced out. They got a little more priced in after the last day or two, but I think the hikes still seem a long way off, according to our economists at B of A. So that's something that we're watching closely. The Russell has been very tethered to rate expectations, a little bit less so in recent months, especially as that earnings and manufacturing recovery has taken hold. So we would definitely stick with less levered small caps, stocks that don't have that refinancing risk. So I do think you need to be selective within the size segment given those risks.
Well, not optimal. Does your work tell you that corporate America can survive at $100 oil for several quarters, or does that just create too much pressure on their profitability?
Right. Well, our base case is that, we see this resolve within the next several weeks, 2 to 4 weeks. And, oil prices, it depends how long they're above $100 a barrel, because then if that conflict extends into, the full second quarter, then that becomes more risky to growth. And usually the rise in oil prices tends to hurt consumption with like a 3 to 4 quarter lag. So there is risk the longer this plays out, then that has a lagged impact on hurting consumption later in the year. Corporates have been pretty resilient, and energy costs are a relatively small proportion of companies' operating costs. So overall, corporates have seen upward estimate revisions during this conflict, but certainly keeping in mind the impacts to the consumer if this plays out longer and oil does stay above that $100 a barrel level.
If the Fed doesn't cut rates this year, but the corporate bond market remains open for financing, is that enough of an offset for you?
I think, like I said, we are still looking for 2 Fed cuts this year. Our economists are expecting they're now occurring a bit later in the year, so starting in September rather than over the summer. So I think there's a little room, but even if rate cuts get priced out, as long as we're not seeing hikes and the economy is holding up, we're seeing manufacturing continue to recover, we're seeing profits continue to surprise to the upside. That does provide somewhat of an offset. But I think, every 25 basis points that the Fed cuts rates is a few percentage points on small cap earnings, given those refinancing risks. So again, I think one needs to be more selective within small caps. Our analysts at BofA cover about 1,000 small and mid cap companies. There's a lot of options out there rather than just owning the Russell 2000 to be able to identify, okay, who has more exposure to manufacturing recovery, to CapEx in the US. Small caps tend to be CapEx beneficiaries, and who doesn't have that leverage and refinancing risk.
Jill Carey Hall, thank you so much for being with us this morning. Jill Carey Hall of Bank of America. We are looking at what the ceasefire actually looks like, whether it can stay. Some commentary coming from Iran, AMH, saying that they will not abandon the Lebanese.
Right, so I think when it comes to Lebanon, this could be a stumbling block for Saturday. So you have 2 statements coming from the president, Masoud Pezeshkian, saying that Israel's renewed incursion to Lebanon is a blatant violation of what they believe was the original ceasefire agreement. And then the Speaker of the Parliament, who potentially is this individual that might be one of the individuals that goes to Islamabad, Ghalibaf, he is saying Lebanon, the entire resistant access as Iran's allies, form an inseparable part of the ceasefire. So they are making Lebanon a condition to the ceasefire, which is why I think it's going to be a long road until those talks on Saturday morning.
And pretty much every commodity strategist and geopolitical analyst says the same thing. Bob, I would love your thoughts on what your compass is on days like this, which seems to be like every day, and there's a lot of headline risk. What's your compass to figure out exactly what is prudent investing?
We think about valuations across markets. And for fixed income, with the backup in yields, that's the first sign that we should be looking to add. We didn't think about our credit risk and what corporate profitability looks like. And for us, it seems to be holding up well, as long as we don't see a significant escalation from here. It feels like with an administration looking for an off-ramp, we have to watch the weekend talks. We'll see what comes out of that. But we've seen this movie before over the last year, actually several times. So we shouldn't dismiss that an off-ramp is impossible given what everyone's asking for today. We've seen that things can be negotiated and the administration can move on to other things. So right now, we like the bond market in here.
Bob Michael, thank you so much for being with us for the entire hour. Bob Michael of JP Morgan Asset Management. Coming up in the next hour, Jim Bianco of Bianco Research, Tom Fitzgerald of TD Cowen, Neela Richardson of ADP, and Michelle Weaver of Morgan Stanley as we get key economic data coming out, jobless claims, and core PCE. This is Bloomberg Surveillance.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'd still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're just sort of back to the narrative, really, of the last 12 months.
There's so much complacency in the market.
This can really overshoot to the upside.
It doesn't reduce market volatility, it actually increases it.
Volatility is higher. We have to learn to live with it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Feeling more and more like a group therapy session live from New York. Welcome back to the third hour of Bloomberg Surveillance. Traders curbing their enthusiasm about the ceasefire agreement in the Middle East. Futures dipping, oil rising, ships still struggling to get through the Strait of Hormuz. 30 minutes until key economic data points that have been coming out. Jobless claims, personal income, personal spending, core PCE. How much can we actually glean, AMH, about what the economic ramifications are from this conflict?
Well, potentially we'll get some of that in the data, but does it really matter when all eyes are on Saturday and whether or not these ceasefire talks become really credible? And do we get clarity following them, given the fact that just moments ago we've had two leaders in Iran, the president and the head of the parliament, basically saying the situation in Lebanon is not toned down and curtailed, then these ceasefire talks are meaningless. So I think that's a key risk right now. And I feel like the market reacted so heavily on this idea of an off-ramp and a ceasefire. It is going to be a very long road there.
Which is something that Halima Croft raised in her note from RBC.
How messy it's going to be.
Yeah, and how difficult it is to really get any kind of new normal back on the ground, especially given that Iran does not want to give up control over the Strait of Hormuz. A question here about what's happening on the ground with oil majors as well, because right now we're seeing that, yes, on one hand, they should benefit from all of the increases in oil prices. On the other hand, actual facilities have been damaged in the region with a real question of what it's going to cost to rebuild.
So we saw this with Exxon, and now we're seeing with Chevron. Chevron is saying that production fell as much as 6% in the first quarter, due in part to what's going on in Iran, and they pinpointed decline and reduced output to the Persian Gulf region and Israel, and downtime in operations in Kazakhstan. So to your point, it's a double-edged sword for these major oil companies. Yes, a higher oil price is great for them, but it's not going to be a windfall. They have a lot of money they now need to reinvest to damaged facilities.
Yeah, and Bob's point, Bob Michael of JP Morgan, was that even with oil prices at $100 a barrel, Jill Carey Hall making the same point, a lot of U.S. consumers can keep spending. The U.S. economy can keep chugging along. It's relatively resilient, which is a reason why people have been looking at how much economic surprises have been inflecting to the upside and why we're seeing so much resilience come through in the likes of Delta earnings and others. Now we're on to next week, what we get from the banks kicking off into earnings season where we have to get some guidance from companies that are navigating all this.
And it's a really hard time to guide. A lot of things we've heard today has been no one really understands the duration, potentially, of when Iran would start to loosen their hold on the Strait of Hormuz. The White House said yesterday there's been an uptick. There hasn't been, 1 to 4, depending on how you are tracking it. Vessels went through the Strait of Hormuz. That is not an uptick. Goldman Sachs today saying Brent crude is set to average, if Brent crude is set to average $100 a barrel through 2026, if the strait remains closed for another month. How, as a company, do you start to bake that in? Very challenging.
Right now, markets are relatively sanguine. Yesterday was a huge risk-on day. We saw a 2.8% gain in the NASDAQ in particular. Today, just a little bit lower, down 0.25% for S&P futures. NASDAQ down just about 0.1%. Russell 2000 getting beaten up a little bit more, down 0.6%. The bond yield, the bond space yesterday was relatively confusing, considering that initially a bid into bonds, then a pretty tepid 10-year auction. Today, a bit of a bid back into bonds, particularly at the front of the yield curve, 3.77%. 10-year yields 4.28%. Later today at 1 p.m., we do get auction of 30-year notes, 4.88%, down just a touch ahead of that. And really, the entire space is dictated by what's happening in crude. The June contracts for WTI and Brent, both below $100 a barrel. That's the good news. The bad news is that both of those are up more than 3% on the increasing tensions and questions around the ceasefire. 97.89 on Brent. Coming up this hour, Jim Bianco of Bianco Research with the relief rally stalling out. Tom Fitzgerald of TD Cowen on the health of the airline sector after Delta reported earnings yesterday. And Neela Richardson of ADP breaking down the latest round of economic data. We begin this hour with stocks edging lower after a fragile ceasefire between the U.S. and Iran. Jim Bianco of Bianco Research saying there is permanent risk premium in markets, even if the ceasefire holds. Jim joins us now for more. Jim, thank you so much for being with us. Let's start there. Is this market accepting a risk premium, and is it already baked in based on the fact that we've seen a lot more volatility and that this isn't going to be a conflict that is easily solved?
No, I don't think it is. And I've been listening to your show for the last half hour, and the overwhelming consensus is, does this end in a couple of days? Does this end in a couple of weeks? Does this end in a couple of months? Nowhere in this conversation is what happened with the Suez Canal in 1967. It closed for 8 years, and the ships that were stuck were permanently stuck, never to get out again. That scenario is not on anybody's radar right now. I'm not saying that that's the scenario now. I'm just saying that a protracted move is not on everybody's scenario. And secondly, even if it is a short-term move, the precedent has been set. You can't go back to the low risk premiums that we've had before this war started, because this could always flare up again, either from Iran or another country. So I think we're going to have to deal with higher risk premiums. But what happens with Wall Street is we say that we got to deal with higher risk premiums, but then we invest like we're not investing or believing that there's going to be higher risk premiums.
Part of that is because we're conditioned by experience that there is an escalation in rhetoric, then a de-escalation in rhetoric, and then all of a sudden the U.S. economy keeps chugging along, and oh yeah, you've been left behind by this flood of cash going into risk assets. I mean, how much do you view the asymmetric upside of risk assets over the past couple of years as kind of dimming any kind of risk-off sentiment or even ability, frankly, to have a dip?
Oh, absolutely. I mean, you know, we've been fooled too many times, according to Wall Street, right? We were supposed to panic after COVID. It was a buying opportunity. We were supposed to panic after 9% inflation. It was a buying opportunity. We were supposed to panic after the fail of Silicon Valley Bank. It was a buying opportunity. And we were supposed to panic after Liberation Day, and it was a buying opportunity. So Wall Street's figured it out. I don't care what the news is, it's a buying opportunity. And that seems to be the way that they're operating with this right now.
I'm glad you brought up the 1957 Suez Canal crisis, because actually, Jim, a source mentioned to me this to me last night, talking about how much what's happening in the Strait of Hormuz could be akin to that. If it were, where should oil prices be trading today?
Well, if it is, what the problem is that the world consumes about 103 million barrels of oil a day. Now, based on the estimates, we're getting about 90 million barrels a day or so, thereabouts right now. So there's a shortage of oil. So to put it very simply, somebody's got to stop consuming 13 million barrels of oil. Somebody's got to stop going to the gas station and filling up their car. Now, how do we do that? We raise the price. And we raise the price until we get 13 million barrels a day, I'm talking globally now, of less consumption. So the price is going to have to go up, and it's going to have to stay up, because if the price goes down, we're going to go right back to demanding 103 million barrels a day when we can't deliver that. Now, maybe over time we could build some pipelines and stuff to work around this problem, but that's a process that's going to take years, not it's going to take weeks.
What kind of price are you talking about? Bob Michael was just on. He was saying how the U.S. can live, and the U.S. consumer could basically live with $100 oil.
I think he's right that we can. We've seen that throughout the month of March, that $100 oil, maybe even slightly above that, is not going to really impair the U.S. economy. Now, Asian economies, Australia and Philippines to be more specific, they're going to be under enormous pressure because they get more oil from the Middle East than we do. But I think we're probably going to have to see much higher prices in order to pull back if this is going to be protracted. And we should find out in the next week or two if this is going to be a lot more protracted than Wall Street is basically assuming.
At this point, is the increase in oil prices that you are preparing for stagflationary, inflationary, or deflationary?
I think it's more inflationary than anything else. I think the key when people talk about interest rates is nominal GDP, real growth plus inflation. If inflation goes up by more than real growth is falling, and right now there's very little signs real growth is falling at all, then nominal GDP goes up, interest rates should go up, and the Fed should be leaning towards hiking rates. And that's what we've seen on and off over the last couple of weeks. If real growth falls more than inflation goes up and nominal growth falls, then you can talk about lower rates. But right now, I think what we're really looking at is more inflation than we're going to see a decline in the real economy. We're going to get that tomorrow, with the estimates being 0.9 on March CPI. That's a huge number. It's going to push year over year well over 3%. And we're not going to really be seeing any kind of commensurate pullback in the real economy. So that means higher nominal growth, and that means all things equal, probably drifting higher interest rates.
So at what point do you see, Jim, 10-year yields reflecting that? I mean, this is something that people have been watching, and so far the increase that we've seen in yields since the beginning of the conflict has really come from real yields. It has not come from inflation expectations. How much could you see that change over the next couple of weeks?
Oh, I think it could change substantially over the next couple of weeks if there's a belief that this is going to be much longer lasted. You're right that even though we were under 4% yields when the conflict started, and we're still at around 4.28, 4.30 right now, so rates have gone up, it's not been because of an expectation of more inflation. Because we got back to this, everybody thinks this is going to last between days and weeks and a month at the top, and it's going to go away because they've been burned every other time they thought that something was a little bit more permanent. But if this one turns out to be a little bit more permanent, I'm not talking about the war being permanent. I'm talking about the risk premium and the threat that the Gulf faces, the threat to shipping, the threat to oil production. That lasts even if the shooting starts, and we're going to have higher premiums in all of these markets. Then I do think you're going to see inflation expectations kick in interest rates, and they're going to move higher.
Jim, what's your best case? Do you think that rate hikes are going to be back on the table in the next couple of Fed meetings?
There's a reasonable chance they will, and I don't think we should be afraid of rate hikes. That just means that nominal growth is strong. And there's nothing wrong with nominal growth being strong, even if it is a little bit more skewed for inflation. We've done a very good job of changing the narrative that, up is bad and down is good with interest rates, no matter what, under any circumstance. And that's not always true. If you have a strong economy, higher rates are not necessarily a bad thing. And I think we got to stop with this phobia about that if interest rates go up, everything falls apart. They may be going up because things are getting better.
Jim Bianco, Bianco Research, thank you so much for being with us. I love that. We have to stop with the phobia of higher rates because ultimately it might be a good thing.
Do you think that he was talking to one person in particular with that comment?
It could be a lot of people. It could be a lot of people. All right, now let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. Iranian leadership casting doubts on the status of the ceasefire. The country's president posting on X that Israeli strikes in Lebanon are a flagrant violation of the terms of the deal and will render negotiations meaningless. The comments coming ahead of planned peace talks in Pakistan this weekend. FBI Director Kash Patel saying a former employee of the U.S. military has been arrested for leaking classified information to the media. The arrest coming just 2 days after President Trump threatened criminal charges for journalists who published details of a military operation to rescue 2 U.S. airmen in Iran. And Amazon CEO Andy Jassy issuing his annual shareholder letter this morning. Jassy highlighting the yearly revenue run rates for its chips business now exceeding $20 billion. The Amazon CEO saying, quote, having our own hotly demanded AI chip opens up many possibilities, but perhaps none larger than the ability to lower costs for customers. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, the morning calls, plus Tom Fitzgerald of TD Cowen on the health of the airline sector. That's coming up next. This is Bloomberg Surveillance.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
There's still a lot of skepticism that we'll see any of this oil flow anytime in the near future. It's all about the differential between locations rather than just the flat outright price. Regardless of whether the ceasefire takes place, we're in a new normal right now where the fundamentals are constantly shifting underneath our feet.
That was Stephen Schork of the Schork Group, and the fundamentals keep shifting this morning as we get competing headlines in markets. The way that a lot of traders are dealing with this is just taking off a little bit of that bullish sentiment that we saw rip-roaring back into the market yesterday, down about 0.25% for the S&P. The key point here really is Brent, the idea that it's higher again, and that really does dictate whether it's risk on, if it's lower, or risk off, if it's higher. Today, up 3.4% for the Brent June contract, $97.96. A real question here. We've heard from the Iranians so far this morning. They are putting Lebanon squarely in the ceasefire deal. At the same time that Israel overnight targeted a number of different sites in that country.
Yeah, and I think it's going to be a real stumbling block as we head towards these talks on Saturday. And potentially, does it become such a problem for the Iranians that maybe the talks don't happen? We're not there yet, but that obviously could be a risk as we go into this weekend. You have the president and the Speaker of the Parliament both coming out around the same time saying we are not going to abandon the Lebanese. And if this doesn't stop, then it renders the ceasefire meaningless.
Yeah, meanwhile, we are about 13 minutes now away from the core PCE data as well as jobless claims. A real question here about how much we start to see the increase in inflation and a real adjustment by individuals heading into this when it comes to spending. This is really going to determine a lot of what the Fed's response is, and frankly, the administration. Kevin Hassett, the chief economic advisor, speaking just moments ago in the U.S. media, talking about how they still expect pretty strong growth in the United States and an end to this conflict.
Yeah, really high growth. What, 4 or 5%? Very different from what we're hearing from a lot of individuals. Also interesting, he's talking about the fact that pretty confident he thinks Kevin Warsh is going to start by May 15th. Maybe he knows something we don't know in terms of Senator Tom Tillis and where he continuously stands on that debate.
Yeah, the discussion, the rhetoric saying that the deal is still happening, is still on. As we do see whipsaw in oil prices, we're seeing whipsaw in the shares of airlines. Delta's strong first quarter, along with hopes of a U.S.-Iran ceasefire, fueling optimism for the airline industry. Tom Fitzgerald of TD Cowen raising his price target to $84, writing, Delta is moving quickly to reduce second quarter capacity and offset higher fuel via pricing. We view Delta as the most defensive of the big six U.S. airlines. Tom joins us now for more. Tom, thank you so much for being here. What did you make of yesterday's Delta earnings?
I thought they were pretty encouraging. You know, so far they talked about capacity being dependent on fuel and its impact on the economy and air travel demand. I think that's going to be true for the equities. And as long as they're able to demonstrate revenue recapture and that demand is powering through this, I think the stock can work.
How much is this really an issue of how much some of the big three, or particularly Delta and United, have focused on the premium customer, the price-sensitive customer that will keep spending, that will keep flying?
That's a great question. Yeah, and we think the jury's still out on how the rest of the industry will do, and the loyalty, the higher income consumer, corporate demand, geographic diversity. That's all part of the story here.
There's also a question of how they arrange their flight patterns, given the fact that we have seen disruption in the Middle East. How much do you expect any ongoing changes? Delta, I believe, had a route to the Middle East, a direct route that they were expecting to roll out later this year. Have we heard any intel about what the conflict is doing to shake up some of those plans?
Yeah, I think that's up in the air right now, and they pushed that off. But then conversely, you've had a lot of passengers that usually, from Southeast Asia or Australia who would usually connect to Europe via the Gulf, and some of those are now connecting via the United States. So that's a benefit for Delta and United as well.
Lisa's been talking about this for weeks, if not months, and the Wall Street Journal leading with it today. Delta's ace in the hole is, of course, its own refinery. Tom, how much is that helping this company right now?
It is. It's a unique benefit. It's about $300 million in the second quarter, and it will be driven by refining margins from there. But yeah, I mean, it was helpful in 2022, and it's proven to be a part of the durability story here.
So do you think when it comes to having their own refinery, as it compared to other airlines, are they going to have to pay less for jet fuel?
It's an offset. It was about a 6-cent offset in the first quarter, and that the second quarter benefit translates out to about maybe 25 cents. So it's meaningful. It doesn't bail them out. It's not a game changer, but it is meaningful.
Meanwhile, when you take a step back, what have we learned so far, not just from Delta, which reported earnings, but we've heard a number of commentaries from other airlines as well. A couple weeks earlier at a JP Morgan conference in Washington, D.C., demand still very strong heading into this period, despite the issues with TSA, despite higher prices. What do you make of where that's coming from? Is it disproportionately the premium? Is it disproportionately coming from business travelers?
I think it's all of it. I think all of those folks, whether they're traveling for work or traveling in their personal life, I think it's consumers that are still flush with cash. I think, sentiment might be weak, and there's a lot of horrible headlines on the news every day, but travel demand is proven to be so resilient this whole decade, and I think that's a huge part of it.
There also has been a sense that the biggest are the best suited to manage through crisis after crisis. We saw that during the pandemic. Then we have questions around mergers, considering the fact that some of the merger attempts that have happened in the past have not gone through antitrust. How much do you expect those to be revisited, given that the biggest survive and thrive and the smaller players are really struggling?
It's certainly on the table. I mean, there's been so many rumors that Delta hinted at it yesterday or talked about just the context, because everyone can see the writing on the wall and everyone can see the setup. It's anyone's guess when it actually happens. But just given all the economics 101 and what's happening in the industry, you would think that the weaker players would start to consolidate.
Is that also because there's a different regulatory environment in Washington now?
Oh, absolutely. I think there's push-pull factors.
So who could be ripe for potential consolidation right now?
Well, ironically, we were out on the road with JetBlue when the Semaphore article came out, and we wrote about that the other week. So, I mean, unsubstantiated, but they've been kind of top of mind of the larger airlines, one who could be in play.
Tom Fitzgerald of TD Cowen, thank you so much for being with us this morning. Looking ahead to the kickoff of earnings next week, although we should say the kickoff of earnings is actually this week, considering the fact that Delta really does sort of sound the clarion alarm or potentially the optimistic tone for the rest of earnings season.
Yeah, absolutely optimistic. And you talked about this for months, how Delta has their own refinery. So when everyone's freaking out about jet fuel, and they should be, jet fuel prices are sky high right now, but they have their own refinery. Wall Street Journal this morning saying that this is Delta's ace in the hole for these surging fuel costs.
Yeah, giving them about hundreds of millions of dollars in offset to potentially these increasing costs. Those increase of costs going directly into how much prices have increased. The latest PCE data and jobless claims set to cross in just a few moments. Bloomberg's Michael McKee joins us now with what to watch. Mike, a key question, how much of the data is going to reflect the post-war period of higher oil prices?
Unfortunately, not very much, Lisa. Really, only the jobless claims numbers are going to be relevant from a time period point of view. We get a third look at the fourth quarter GDP, which isn't going to change very much and not tell us anything about where we are now. And then the PCE numbers, important to the Fed, but this is February data, and the war started on March 1st. So we're really looking ahead to tomorrow, to the CPI report, which should reflect a lot of the war, as gasoline prices are going to help push this up to the highest since 2022.
There is a feeling, though, Mike, and Bob Michael of JP Morgan was reflecting this, that so far, heading into the war, it seems like economic momentum was actually better than most people expected. And it sort of points to the idea that people can absorb price increases and, frankly, absorb some sort of cannibalization of their spending power. Is that your sense as well?
It is essentially the case that the Fed and others are following at this point, the idea that we were a little bit stronger. But remember, fourth quarter GDP was revised down to just 0.7, and that's not expected to change. And then right now, the Atlanta Fed's GDP now number for the first quarter is 1.3%. So we're looking at an economy that has done okay but slowed. It's the one part that is working well, the consumer, that everybody's got their eye on. If consumers start to cut back because of higher gas prices, then you've got much more of a problem.
Michael McKee, thank you so much, as always, for that insight. We are just minutes away from core PCE as well as personal spending and income. What we're expecting is for the core PCE index to come in at 3% year over year. Remember, this is the key target that the Fed looks at. They're expecting a 2%, or they want to get down to 2% coming into this period, already far above that, which is part of the issue that people have about, to Bob Michael's point, is 2% just a myth?
Well, it has been, right? Because they've been cutting rates for the past few years when inflation has been well above 2%. Everyone's been talking about 3%, the new 2%. But Michael said actually he thinks it's more like 2.5%. Maybe for a dynamic economy where the United States is now, maybe 2.5% actually is more acceptable.
The strength in the economy, part of the reason you've seen strength in the equity markets, resilience today, just a touch of risk off, but otherwise people hanging in there looking for some sort of sense of when the ceasefire can actually be called that. Coming up, a fresh round of inflation and jobs data set to cross. Joining us next, Neela Richardson of ADP.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Just seconds until the key economic data, the beginning of the 1-2 punch with core PCE coming and jobless claims before we get CPI tomorrow. The way that it's stacking up in markets, a bit of a risk-off tone with real questions about the durability of the ceasefire, down about 0.25% for the S&P, down 0.6% for the Russell. Bonds pretty quiet this morning. We are going to get an auction of 30-year notes later today. A bit of a bid, a little bit of a softening in some of the concerns around inflation. Right now, we are on the precipice of getting that data with questions around oil prices still rising on the expectation that there is some concern over the ceasefire. The latest data crossing just now. Michael McKee, what do you got?
Well, it's important data for the Fed, but it is backward-looking February data in terms of spending, incomes, and prices. The PCE price index for February comes in up 0.4, which is as expected, but that's a rise from the prior month. 0.3 doesn't change the year-over-year number, 2.8%. Core PCE up 0.4 as forecast, same as last month. So we actually see the core PCE year-over-year number fall to 3% from 3.1% as base effects affect that. The jobless claims numbers that everybody's keeping an eye on, 219,000, a big jump up from 203,000 the week before, but not one that would tell you that the economy is really slowing down and companies are starting to let people go. Continuing claims, 1,794,000 fall from 1,832,000. As far as personal income, it fell 0.1%. We're going to have to check the data on that and see which categories fell. Personal spending, though, a little bit stronger than last month, less than expected, comes in up 0.5% on the month. It was 0.4 last month. The economists had thought we might get a 0.6 gain. And then finally, GDP actually significantly weaker than it was in the first and second readings. This is for the fourth quarter, just 0.5% as personal consumption falls to 1.9% from 2%. We were talking before the break, guys, about the consumer hanging in there and the economy strong going into the war. It may not be the really accurate story. Let me dive into some of this, and I'll be back with you in a minute.
Thank you so much, Mike. Yeah, a lot of question marks hanging over this, in particular, personal income dropping 0.1% versus the expected 0.3%. And that question about GDP growth, a real key question mark as well, especially given the retail sales data that also portrayed a less optimistic backdrop. What you're seeing in markets is a pretty muted response and not really that significant. S&P futures inflecting just a touch lower on the heels of this. You are seeing a little bit of a bid into bonds, but really this is not exactly a market-moving event. And really the takeaway to me is, what can we glean from data that truly is ancient history? AMH, that feels like, to me, the takeaway increasingly.
Because everyone's focused on the geopolitics right now. And what does this mean for potentially higher oil prices for longer, which is why this backward data doesn't really matter right now. The one thing I think that is interesting is initial jobless claims ticking higher, because that is this real-time data right now. When you talk about and look at the Fed minutes, that you see individuals talk about this dual risk, maybe when you see PCE in line at the moment, you start to get a little bit more concerned about what's going on in the job market.
219,000 might not get it done, but still, I get your point. How much you're going to get a real-time indicator from these initial jobless claims. Joining us now, I'm so pleased to say, Neela Richardson of ADP. Neela, great to see you. Thank you for being here.
Great to be here. Thank you.
So when you take a look at numbers like this, just before we get into what you're seeing out there, how instructive are they, given how dated some of this information really is?
It's hard to pull a current signal from the data that we've seen, but I think it's meaningful that fourth quarter GDP growth was lower than we thought. And this is before the ramp up in oil prices. So I'm curious to see what the consumer spending numbers look like, how much of a drag spending was. Maybe it wasn't a drag. We'll see. Mike will come back with the news on that. But if consumers were already vulnerable and fragile in the fourth quarter, then that makes the recent spike in oil prices even more relevant in terms of whether the consumer is going to hang in there through the duration.
What are you seeing on the ground when it comes to the hiring backdrop? And we were seeing a slight tick up in initial jobless claims, mixed messaging about it might not be a huge firing moment, but it's very difficult to get a job. Are you seeing improvement or deterioration?
We're actually seeing the fourth week of strength. So when we came out during the jobs week, looking at that reference week that includes the 12th of the month, we put the private sector job gains at 62,000. Since that week, we've actually seen a ramp up in hiring. We're looking at an average of about 26,000 jobs per week in addition. So the labor market hiring seems to be strengthening, which is good news, at least for now, going into what could be a very uncertain period in the geopolitics.
Is there a disconnect, though, to how people feel? Because I know you recently just did a corporate survey asking people, how safe do you feel in your job? And only 1 in 4 said they were safe.
That's right. That's globally. We asked people, is your job safe from elimination? And most people said, no, it's not. And that was the global number. In the U.S., it was 28%. And what's interesting about this report is younger workers and older workers were the most likely to say that their jobs are not safe.
Why?
Because the vulnerability. You have the new college grads entering into a labor market that is very different than what they were prepared for. And there's a mismatch in expectations. And then you have the older workers who are looking at, everything that's going on, whether it's AI adoption or that kind of uncertainty in geopolitics. And they're saying, what's my future in the last 10 years of my career? So there's uncertainty in the middle. That's where there's more confidence. But there's a barbell of confidence by demographics.
There's also a barbell between sentiment surveys where people are expressing anxiety and then people on Wall Street who express bullishness and the optimism, not just on markets, but that person is going to keep spending money. I mean, how do you identify this disconnect? Does it matter if people feel insecure in their job, given the fact that the jobs market isn't terrible, it's not great, but it's not so bad?
Ground truth matters. The workers are at the heart of what's going on in their occupations, in their own firms. So they have a sense of perspective. They know when there's a hiring pause. They know when there's an acceleration. They know what their colleagues and their network are seeing in terms of jobs. So that ground truth, that is incorporated into their sentiment, along with these other macro features that everybody else is watching. So I take it seriously, but I hold it against that hard data showing improvement in hiring. And I think how you mesh these two worlds is that the hiring is so fragmented. It's so concentrated in healthcare. So if you're in a different industry, you are not seeing what the national numbers are seeing because this is a very fragmented hiring schematic we're in.
The national numbers just came out. Personal income declined by 0.1%. Personal spending increased by 0.5%. Core PCE bang in line with that 3% year-over-year increase. Initial jobless claims came in just a touch higher. Michael McKee, you've been parsing through the data to answer some questions. What have you learned?
Well, let's look at personal income first. It's not a pretty picture, even though it's not a terrible one. Wages and salaries increased only by 0.2% during the month of February. In January, they were up by 0.5%. That can be a volatile thing. And of course, January is when a lot of people get raises. But it does suggest people had a little bit less disposable income to spend, as disposable income falls 0.1%. The savings rate also falls to 4% from 4.5%. So what consumer spending we did get, a lot of it probably came out of the savings accounts of people. And then when we look at the GDP numbers, I know that we're interested in why this happened. Of course, consumer spending was down on the month by down from the third quarter. It was rose only 1.9%. Business spending is the big reason that we saw lower GDP numbers, though. Fixed investment up just 1.5%. Non-residential fixed just 2.4%. And that's the category that represents what businesses are doing. So overall, not a pretty picture here in terms of where the economy was, at least where we thought it was, and where these numbers are telling us it actually was when we went into the war on March 1st.
Mike, thanks so much. That's really helpful, and it gives us some insight into what exactly we're looking at. That's Michael McKee, our Bloomberg economics correspondent. A key question here, Neela, with respect to business investment during times of uncertainty. Given the fact that it was tariffs, now there's the uncertainty over the price of oil, over the geopolitical conflict. How much do you expect companies to pull back on hiring plans that otherwise would have been implemented based on the ongoing uncertainty?
I think you're going to see a stop and start in terms of hiring. I think that is reflected in the volatility we've even seen in the first 3 months of the year. When there is a clear path, when there is a certain future, I think you'll see especially small firms move ahead. And in fact, that's where we're seeing a lot of the juice in the ADP report. It's from small firms. And those small firms may not be able to wait for the right moment to hire. Their revenue is based on how many people they have actually working. Large firms have more discretion. So again, I think you'll see this bifurcation by establishment size, by industry. Some industries like healthcare are not all that vulnerable to what's going on because the demographics are pushing the hiring, not the market, infrastructure that's pushing the hiring in some other industries.
Well, what if the conflict is more protracted, though? You just wait? How long can you wait for?
You can't wait for forever. That's right. Businesses need to go on. They need to serve their clients. They don't want to lose clients as they're waiting in indecision, and they don't want to lose the momentum in whatever investments they're making. And we know that companies have been making a lot of investments in AI. You don't want to sit on those. You have to move forward with those. And so there is this wait-and-see approach. There's probably going to be more sporadic hiring. In my mind, the bottom line is more volatility in the hiring that we're seeing, that every month is a live month that's going to be harder to predict.
I know we have this fresh data dissecting, even though it's backward looking. Is the most important data basically just tanker trackers and seeing how many ships are moving every single day through the strait, or lack thereof?
I think that will give us some certainty in terms of maybe oil prices or the movements of goods and services. But I would suggest that the hiring market is very different. It is concentrated, and I've said this before, in services and in healthcare, and not immune to the macro picture, but driven by different triggers in terms of where the jobs are coming online. And so what's going on in the Middle East is not necessarily affecting the demand for home healthcare aides in Iowa. And that's where we're seeing actually the surge in growth, not necessarily in Iowa, but in this older demographics wanting to age in place, and that is really reshaping the labor market in real time right now.
Yeah, unfortunately, people are getting older and sicker, and so someone's got to take care of them. Neela Richardson of ADP is going to be sticking with us through the rest of the hour. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anna and Yahaira.
Hi, Lisa. Recapping that data we just got, the Fed's preferred inflation gauge, core PCE, coming in line with estimates for February, notably before the impacts of the war hit the economy. Personal income falling below expectations at just 0.1%, with personal spending also missing. And in the labor market, initial jobless claims ticking up last week to 219,000. And speaking of job cuts, Disney is planning to eliminate as many as 1,000 positions in the coming weeks. The Wall Street Journal reporting many of the cuts will be in the company's recently consolidated marketing department. Disney has laid off more than 8,000 people since 2022 as part of a major restructuring. And in sports, the Masters is underway at Augusta National in Georgia, with the first round teeing off in just the last hour, quite early. It's the first time since 1994 that both Tiger Woods and Phil Mickelson will miss the tournament. Rory McIlroy is vying for his second straight green jacket, and world #1 Scottie Scheffler will be hoping to take home his third. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. And if you're wondering why John is not here this week, maybe put two and two together.
As Yahira was speaking, I was like, oh, this makes perfect sense. This is why Pharaoh's out this week.
Clearly. Anyway, I hope you're enjoying the tee-off. Up next, Michelle Weaver of Morgan Stanley saying the market continues to look very healthy. Plus, Danny Berger with your morning movers. Meta and CoreWeave rising after striking a new AI deal. The deals keep getting done despite concerns about geopolitics. This is Bloomberg Surveillance.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We can live with oil $100 a barrel for a while. I think what the administration has done a good job of doing to us over the last year plus is to train us. And we look for signs of when is the rhetoric at a high, but they're starting to look for an exit. And we're starting to see that now. And I think that's why the markets are so optimistic.
That was Bob Michael of JP Morgan Asset Management with a tone of optimism despite some of the negativity that you're seeing in the price action. Futures lower after yesterday having a pretty significant rally, the biggest of the month, on the heels of a ceasefire agreement. Real questions today about how long the ceasefire can remain in place, down 0.3% For S&P futures, a bit of a bid into bonds, although ultimately going nowhere, 3.78%, after getting core PCE that was bang in line with where we had expected it to be. The dollar softening just a touch, and Brent crude higher by 4%, $98.68. Less than an hour away from the cash open, here are your morning movers with Danny Berger. Danny.
Hey, Lisa, some big tech movers this morning over a deal. CoreWeave and Meta. Meta investing $21 billion into CoreWeave on top of an already $14 billion. It's about AI data center capability, expanding that out. This deal will run from 2027 through to 2032. Meta's already investing in its own, but it needs more capacity than just what itself can do, hence this partnership with CoreWeave. Also, a little bit of sell-side action to go through this morning. Bernstein upgrading SanDisk to a street high of $1,250. In fact, they say that the blue sky scenario could be $3,000. You can see it's trading at 810 right now, but it is up 3 3/4%. They're just pointing to the high cost of memory and a market that keeps underestimating just how robust their earnings cycle is going to be. We also had another upgrade to a tech company, Marvell, another chip company. This upgrade comes from Barclays, from neutral to overweight. They say that this should be treated as an optical company, and there's a huge amount of growth, 90%, that they could see from here, even as some of the market share gets given to Broadcom. Those shares up 4.3% in the pre-market, Lisa.
Thank you so much, Danny. Counting down to the opening bell. Here's a trading diary for the rest of the week and into the next. Friday, we get tomorrow, CPI and University of Michigan Sentiment Survey. Ultimately, we all feel like this week has been a year, and this year has been a decade. Almost there. Of course. On Saturday, we get the U.S. and Iran holding peace talks in Pakistan. Monday, bank earnings kicking off with Goldman Sachs. Tuesday, results from J.P. Morgan, Wells Fargo, and Citi, plus PPI. All of that giving a read on exactly how the economy is maneuvering through this. And turning back to our top story, stocks falling with optimism over the ceasefire fading. Michelle Weaver of Morgan Stanley writing, putting aside recent geopolitically driven price action, the market continues to look very healthy on a fundamental basis. Michelle joins us now for more. Michelle, you are not alone, and good morning.
Good morning.
A lot of people are saying as long as this remedies itself on some level or creates some new stability, it's time to go all in a real way. Is that your sense as well?
I think the fundamentals absolutely have to remain your North Star. And while we've been whipped around at the price action, whether it was from AI disruption or the war in Iran, the fundamentals have still remained very healthy. We're at 12% year-over-year growth going into the first quarter. We've seen earnings revisions move higher throughout the year, despite those concerns I just mentioned. So on a fundamental basis, we are still in a very good place.
How much is the year-over-year increase in earnings per share kind of on the tailwinds of a dollar that has been kind of weakening earlier this year and giving a really good comp for a lot of these companies, and perhaps, I don't want to say artificially inflated, but something that isn't sustainable for the remainder of the year?
That's one benefit, but I think you have to look at where we are in the cycle. So if we zoom out, we were in an earnings recession up until the middle of last year. The average company in the Russell 3000 was seeing negative year-over-year earnings growth. That changed in the middle of last year. We are now in an environment where earnings is positive and accelerating higher. So even, with some of those moves that you just cited, I don't think that that's the underlying story. It's a broad recovery in earnings.
The way you talk, it sounds like the market, and you think it should basically just look through what's happening in terms of the geopolitical sphere. But at some point, does it become more systemic and you have to rethink some of these corporate earnings?
I wouldn't say we're just looking through it. We've seen a lot of damage already happening. So partially what I'm saying is we've already de-risked. We're in a good fundamental place, but we've also de-risked. The multiple on the S&P is down around 18% from the highs last fall. If we look at what's been going on in the Russell 3000, more than half of members are down more than 20% from their 52-week highs. So we've seen a lot of that de-risking already happening, combined with a good earnings picture.
Have you seen the same with the consumer?
So the consumer's in a pretty precarious place right now. We're seeing, things on the positive side, things on the negative side. Of course, gasoline is weighing heavily on consumer household budgets. We did see higher than typical tax refunds this year. We're seeing spending still hold up, but people are absolutely nervous and they're very sensitive to anything impacting their budgets.
Neela, you've been talking with a lot of companies, large companies, about what their confidence level is, what their conviction, what their hiring plans look like. Do you see the same optimism from them that Michelle is talking about that we're seeing in earnings expectations and earnings more broadly?
I see a little frustration, actually. These are companies that want to grow, And they're a little flummoxed right now for two reasons. One, it's the macro uncertainty that's putting not necessarily their own operations, but their customer operations on hold. But also, it's the change in sentiment when it comes to the workers. So, clear example, I talked to a manufacturer who couldn't find workers, early career, to do 12-hour shifts. It's a difference in what the worker expectations around jobs, being in the office, being out of the office, what kind of salary growth. We've been spoiled by the post-pandemic competition for workers, and they're not getting the same terms for these new jobs. So I think there's it's a mixed bag. They see growth, they see opportunity, but they're flummoxed by the macro headwinds and the change in the worker sentiment.
Michelle, how much do you see that in terms of which areas in the equity markets are set to outperform, sort of really coming from the industrial sectors, the materials, some of the commodity-linked spaces?
It's a very good way to get high-quality exposure to the AI trade at a good value right now.
You do have an interesting point in your note, though, about data center construction, similar to what Dan Greenhouse was saying, the political pushback on this.
Yes.
How challenging is that going to be for the hyperscalers?
It is a big challenge right now. We're seeing that be one of the primary constraints for data center construction. And I think part of this is going back to the conversation on the consumer. People are very price sensitive, and there's this perception that data center construction is pushing power bills higher. It's a nuanced issue, and it really depends on if you're living in a state with regulated or unregulated utilities, but this is still a big issue for voters. It's becoming a big issue for politicians, and it's something I would watch into the midterms as a big risk.
Michelle Weaver of Morgan Stanley, thank you so much for being with us as we await new headlines to direct the day ahead. Neela Richardson of ADP, what are you looking for tomorrow heading into CPI? That might give us a better real-time look of exactly how higher prices are trickling into consumer bills.
Well, obviously, I'm looking at oil prices and energy prices, and I want to know whether that's going to feed through goods. I want to look at food prices, both in-home food prices and food away prices, because that's going to hit. When you think about this K-shaped economy, you can't avoid food and energy and the impact on the consumer budget. Now, usually economists look through those things. We dismiss them. We look at core. But I think all of the action is in the headline, because that's where you're going to see the spikes in energy and whether that's going to flow through to the other parts of the index.
Yeah, in the meantime, we're also looking to all of the headlines and whether we do get some sort of resolution, the latest raising real questions about what the ceasefire actually looks like.
I think a lot of people are questioning the credibility, clarity of the ceasefire, but also Iran really doubling down today that Lebanon needs to be included in the ceasefire. And I think that's a huge stumbling block ahead of these Islamabad talks on Saturday.
Yeah, a lot of pieces coming together. Neela Richardson of ADP, thank you so much for being with us this morning and for the second part of our show. Coming up tomorrow, we've got Michael Purvis of Tallbeck and Capital, Krishna Guha of Evercore ISI, Bob McNally of Rapidan Energy, and Abby Yoder of JP Morgan Private Bank, with the risk on yesterday turning just a little sour this morning as people question the validity of this ceasefire. Equity futures just off a touch, with energy prices surging by more than 3%. This was Bloomberg Surveillance. Good morning.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
We have two crises. Two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. When I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
30 minutes until the start of trading. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a fragile truce. President Trump vows to keep U.S. troops in the Gulf ahead of talks with Iran.
Meanwhile, crude climbs. Goldman warns that Brent will average more than $100 a barrel through 2026 if the strait remains closed for another month.
Plus, CoreWeave and Meta strike another mega deal, doubling down on the race to build advanced AI models.
Those are the stocks I'm watching this morning because amid all of the macro stuff, geopolitics going on, this is the corporate news of the day. CoreWeave and Meta, they're both up at least 1.5% in the pre-market. CoreWeave expanding its deal to supply AI computing power to Meta to $21 billion. That was already on top of a previous arrangement of $14 billion. Matt, I had people messaging me saying, like, geopolitical angst, what? Deals are still getting done. AI is still happening. We're not worried about a bubble. Capital markets are wide open.
Yeah, there's a ton. Plus, CoreWeave is selling a convertible bond.
Yep.
Plus, Meta's releasing a new model called Muse Spark.
Plus, PIMCO is doing a big data center deal, too.
Yeah, AI is still alive and well. Check on what's going on in markets. You don't see that support in futures. We did have a big gain in the cash trade yesterday, up 2.5%. So we're only down 0.25% now, and it looks like investors may be a little bit concerned about the fragile ceasefire in the Middle East. As a result, you have crude bouncing back with NYMEX. This is still for May delivery, back up at $100 a barrel. Brent for June delivery up to 98.58. But that is after the biggest drops for oil that we've seen since the COVID pandemic, since April of 2020. So let's focus in on that ceasefire in the Middle East with U.S.-Iran talks set for Saturday in Islamabad. President Trump says U.S. troops will stay in the Gulf ahead of negotiations, obviously. The White House, though, confirmed that Vice President J.D. Vance will lead the talks. He spoke yesterday.
I think the Iranians thought that the ceasefire included Lebanon, and it just didn't. We never made that promise. We never indicated that was going to be the case. What we said is that the ceasefire would be focused on Iran, and the ceasefire would be focused on America's allies, both Israel and the Gulf Arab states. If they break their end of the bargain, then they're going to see some serious consequences.
Joining us now is Gulnar Motivali. She leads Bloomberg's coverage on Iran from London. Gulnar, on the first day of a ceasefire, we got an attack on a crucial Saudi pipeline. We had Israel launching one of its biggest campaigns militarily in Lebanon, and at the same time, Iran reclosing the strait. Can we call this a ceasefire right now?
Well, it's certainly looking extremely fragile. And those talks in Islamabad are also looking very tentative. But for now, I don't think any of the sides have said officially that they consider that the ceasefire is done. We've heard that the Iranians have said that they believe it's been violated quite aggressively by Israel. They also said that one of their oil refineries was attacked, and one of their islands in the Persian Gulf was also attacked after the ceasefire came into effect, and then that's why they were then sending missiles to Kuwait, although there's also a dispute over the timings of these things. But certainly it's a very fragile and delicate situation right now, and we have big question marks hanging over whether the Iranian delegation will even be in Islamabad tomorrow, although we've had no confirmation to say that they won't be. But we've also had pushback from various state media, news agencies, that Mohammad Bagher Ghalibaf, the leader of Iran's parliament, who's very important and has gained a lot of power since the war in the leadership structure in Iran, whether he will be there or not.
The former president of the CFR, Richard Haas, wrote on his Substack that this issue, or the issues, can be distilled down into two, right? One, the closure or opening of the Strait of Hormuz, and the other, whether or not Iran is going to be able to continue to hold and enrich uranium for its nuclear program. The first seems like it could be answered depending on the mechanism. The second seems like the two sides are too far apart to figure out a conclusion on the nuclear issue.
Yeah, I think one of the concerning things from the outset is that the points that both sides have, the conditions that they have for a permanent end to the hostilities, much like as we saw in the previous rounds of negotiations that involved Trump's top envoy Steve Witkoff and the Iranian foreign minister, they're very far apart. They don't seem to overlap very much anywhere, and that's obviously a concern, and that raises this risk that we'll slip back into this cycle of negotiations that are just destined to not really reach any feasible conclusion, but this time with the added possibility of real military engagement, at least at a low level, just continuing in these cycles. I mean, the other thing is that Ghalibaf, if he does indeed end up leading these talks, that's going to change the dynamics quite significantly, particularly if he's going to be sitting across from someone like J.D. Vance, who's the vice president. That kind of sort of elevates the level of these talks in terms of the officials who are representing the countries. But looking at something like uranium enrichment, from the Iranian point of view, that's quite a technical matter for them, both legally and in terms of their broader nuclear program. But J.D. Vance was sort of using an analogy of his wife being able to skydive, and I'm not sure that's the kind of thing that is going to give many people confidence going into these talks at the outset. They might be talking past each other, which is the kind of impression we were given in the talks that involved Witkoff and Jared Kushner and the Iranian foreign minister in the weeks leading up to the war.
Well, I mean, it seems the Iranians want to have the option to develop a nuclear bomb, and the president wants to take that option completely off the table. That's an impasse, whereas with the Strait of Hormuz, it seems like the president would be willing to make an economic deal. Gulnar, we really appreciate your reporting. Gulnar Modavelli there out of London. Let's get to the oil picture right now, because we see prices coming back after the biggest one-day drop since 2020. Goldman Sachs says Brent crude is set to average more than $100 a barrel through 2026 if the strait remains closed for another month. Joining us now is Bloomberg oil markets reporter Mia Gindis. And Mia, we're still seeing crude for physical delivery hold at $125 a barrel, right? Even as we saw futures drop to almost 90 for both Brent and WTI. How does that relationship look now compared to normal times?
Yeah, thanks so much for having me. I mean, in simplest terms, the physical market is trading off of reality, what we're seeing on the ground, whereas the futures market is trading off of what the hopes are for the situation in the Strait of Hormuz a month from now, 2 months from now, right? So The reality is that there is still a virtual standstill in the Strait of Hormuz. There's really fierce competition for oil in the North Sea, and we're seeing pretty extreme product drawdowns in the U.S. And people have been really kind of looking and banking on the U.S. to offset a lot of those supply disruptions that we're seeing to Middle East flows, right? In the futures market, however, like you had said earlier, there's an interest among both camps to restart flows through the Strait of Hormuz, right? So I think there's a hope among investors that in a month's time from now, even if we don't see flows return to what they look like normally, there will be greater movement than there is at the moment. I think we're seeing these days maybe 7 to 10 ships pass through. In regular times, it's around 135 ships passing through the Strait of Hormuz.
Each day.
Yeah.
So in terms of where we go from here, because of course, especially for this American economy, it's not just energy prices, it's also gasoline prices, which are now about $4 a barrel. Well, Matt was mentioning some of Goldman's expectations. What are the expectations of how prices behave from here?
So as far as oil prices, it really depends on where we move forward with negotiations. So a lot of the outlooks that I'm looking at from banks, as opposed to kind of being, uniform with maybe one price and 1 or 2 deviations, depending on sort of what unfolds among markets, it feels like they're very scenario-based, right? So at this point, we could rather have the ceasefire extend from, just the 2-week period to sort of endure past that. We could see a reopening of flows in the Strait of Hormuz. In that case, prices wouldn't go back to pre-war levels because at this point, we have a potential toll booth situation with Iran. We have a premium, an insurance premium. At this point, we have damage to Gulf infrastructure. So in that case scenario, people tell me that prices will likely stay, in the 90 to maybe 110 range. But there's also scenarios where the price can go a lot higher from here. So in the case that, maybe talks break down Saturday, there is no sort of consensus in terms of reopening the Strait of Hormuz and restarting flows. If we see a worst case scenario, which some banks have outlined, where we not only see depressed flows in the Strait of Hormuz, but also depressed flows in the Red Sea if the Houthis start up hostilities, we could see prices going much higher from here.
Mia, thank you very much for joining us. That's Bloomberg's Mia Gindis. And joining us now for the next half hour, it's David Kelly, Chief Global Strategist at JP Morgan Asset Management. David, great to see you.
Glad to be here.
When you reflect on the past 24 hours, it certainly felt like a market that priced in a peace dividend. Do you think that was logical trading, just considering, listening to Mia, how many unknowns there are at this point?
I think there is a certain logic to it, because I think ultimately these two issues of Iran's nuclear capabilities and the Strait of Hormuz will get divided, because Iran has got tremendous bargaining power when it comes to the Strait of Hormuz. Every day it stays effectively closed, the price of gasoline goes up, the president becomes more unpopular, he's got a problem maintaining that military force in the region. So the Iranians can just play for time on that issue, and eventually the U.S. will have to settle. And the issue on nuclear negotiations is a very complicated one, and we've argued over this for decades. So I think they'll split up those two issues, and the U.S. will maintain its threat to attack Iran in various ways, including any attempt to rebuild its nuclear facilities, if we don't have an agreement there. But at the same time, there will be, I think, some sort of interim agreement to get the oil to flow out of the Strait of Hormuz. And the way this is going to work is basically Iran will say, well, perhaps you get to levy a toll. I think they're kind of enthusiastic about that. And also, you ship your oil, we ship our oil. And so you end up with that sort of a new status quo where we're arguing forever in Geneva or wherever, or in Pakistan, about the nuclear issue. Meanwhile, though, the world gets back to some sort of normality, some sort of post-war equilibrium with regard to the flow of oil. And that, I think, is what the futures market is pricing in. And I think that's where we're going to end up. And I think so it's reasonable when you look at those long-dated futures going out to December of this year to see lower prices, because it's kind of inevitable that's where we're going to end up. We've got no choice. We have an asymmetric warfare problem here. And the real question, of course, with war is not how do you wage war, but how do you wage peace? And the problem is that a peaceful solution here has got to be one in which Iran essentially lets the world export goods and particularly oil from the Persian Gulf.
So we'll put the nuclear issue aside for a moment. You're the perfect guest to have on because you're the chief global market strategist at JP Morgan, but you're also an economist. You've served some time, obviously a long time at JP Morgan, at Putnam, at Lehman Brothers, and you even got a PhD at the dreaded University of Michigan. How does this oil price play through into not only gas prices at the pump, but corporate earnings? Because so far what the market sees is, hey, we're still expecting double-digit earnings growth throughout the rest of the year.
Well, first of all, it was Michigan State, and that does matter in the state of Michigan.
I see, okay, that's good. Go Sparties, go Sparties.
I think there'll be some hit to corporate profits for basic retailers, anybody involved in transportation. I think there's going to be further problems for agriculture. But if you look at what's been causing this surge in corporate profits, it really has been the AI push and all the capital spending involved. I don't think that's disrupted too much. I think what we will see, we saw a slightly hot PCE number this morning, but we are going to see a very swift ramp up in inflation over the next 2 months. But because I think consumers are in reasonably good shape right now, I think a lot of these costs will actually be passed on to consumers, and so corporate margins will be maintained. So I don't expect to see, outside of tech, I don't expect to see a collapse in corporate profits at all. In fact, I think the profits of energy companies will probably do very nicely. So I don't expect that overall. I think for right now, the U.S. economy should be able to withstand these impacts.
Delta certainly deciding they can pass along costs. David, you're going to stay with us. David Kelly of JP Morgan. Coming up, more on the U.S.-Iran ceasefire. It's under pressure. Jana Stroll, a former top Pentagon official, is going to be joining the show next. Stay with us for that. This is Bloomberg Open Interest.
Are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Jana report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
President Trump vows to keep troops in the Gulf ahead of talks with Iran as a ceasefire is questioned as to whether that's what we're experiencing. Joining us now is Dana Stroll, a former senior Pentagon official who focused on the Middle East in the Biden and Obama administration. She's now at the Washington Institute for Near East Policy. And still with us is David Kelly, Chief Global Strategist at JP Morgan Asset Management. Dana, how do you view this current state of a ceasefire as attacks in Lebanon continue from Israel and Iran keeps the Strait of Hormuz more or less closed?
Good morning. Well, for the last 6 weeks, we've essentially been in a fog of war, trying to understand exactly what was being targeted in Iran and exactly how much devastation and damage was caused by Iran's retaliatory attacks in the Middle East. And the last 24 hours are just it's a fog of diplomacy and a fog of words, where you have the Iranians essentially dominating the information space and maximizing their opening position going into these ceasefire talks on Friday. And this is a typical Iranian play where they will seek to shake up and change all expectations or influence them around the talks. If they even got half of what's on their initial list of demands, it would be a good day for Tehran.
Dana, how do you see this playing out? Because it seems that the administration has achieved its objectives of decapitating the regime. Obviously, it's still the same regime in place, but they killed the Ayatollah. They've hit and degraded Iran's military capabilities severely, much worse than decimated. And as David points out, they're likely to eventually reopen the strait. It's only a question of what mechanism is used there. Do they charge a toll? Do we split the toll? Whatever. The nuclear issue, I think, is the biggest concern. Like, how do you stop them from further enriching uranium and building even one bomb, or buying enriched uranium from somebody else and building a bomb, considering it's the same theocratic regime in place?
Well, first of all, I think, Trump has said we have regime change in Iran. The problem is we're in an even worse situation. We have a more hardline regime and essentially facilitated an IRGC military takeover of the regime in Iran, who now has experienced the full force of U.S. and Israeli military strikes. And what they've learned in that is that this asymmetric response actually works. It can have severe damage on the global economy, shake up the region. And I think what they interpreted from Trump's tweets and threats leading up to the ceasefire is an element of desperation for him. So in terms of the nuclear program, if you think about the ways in which Iran, its combination of power projection across the region, the nuclear program, the missiles and drones, and then its support for terrorism across the region, no question, all of those have been seriously degraded and set back, but they're not eliminated. And because the regime is in place and still a hardline regime, there's no indication they're going to change that strategic approach to the Middle East. And furthermore, they just added a fourth arrow in their quiver here, which is that they control the Strait of Hormuz. And so far, whether we're talking about transit tolls, whether we're talking about coordination with Iranian authorities for ships to transit, that implicitly acknowledges that Iran is left controlling an international waterway, which I think is unacceptable and puts them in a very advantageous situation going into these talks tomorrow.
Dana, as these talks get underway here, is the situation complicated by a lack of coordination between the United States and Israel? I mean, is it possible the United States will be sort of maintaining a ceasefire here, and in the middle of the talks, Israel decides there's just one more target in Iran or in Lebanon that it wants to hit, and that essentially scuttles the talks altogether?
Yeah, I think that's a huge risk, and we actually have seen that play out in the past 24 hours. So as soon as the ceasefire went into effect, at least for the United States, yesterday, I don't think anybody in the Gulf would say this was a ceasefire. The Iranians were still shooting missiles and drones across the Gulf. There were still missiles shot at Israel, and one of Israel's most significant military operations in Lebanon was yesterday after the ceasefire was announced. I think Lebanese are looking to Iran, actually hoping that Iran can impose a ceasefire on Israel in Lebanon. And this question of whether or not Lebanon is included could actually affect whether or not we get to these talks tomorrow, and that's Iranian demand. So again, Israel's behavior in Lebanon could be this hinge for the talks tomorrow.
Dana, I mean, not even just the coordination between the U.S. and Israel. What about within Iran itself? We have just a minute here, but given the decentralized nature of power there, How does this move forward when maybe you have different levels of leadership viewing a ceasefire, viewing negotiations, viewing how to control the situation on the ground very differently?
I think the lesson of the past 24 hours is that there's still command and control and centralized leadership decision-making in Iran, because they agreed to this ceasefire, and within 24 hours, they now appear to be adhering to it. So clearly somebody in authority is making decisions and can deliver a negotiating team to Islamabad should they decide to do that tomorrow.
Dana, thanks so very much for joining us. Really appreciate your intel. Dana Stroll there of the Washington Institute. David Kelly of JP Morgan Asset Management is sticking with us. Coming up, we're going to speak with the CEO of Oceana Gold, Gerard Bond, following his company's debut on the New York Stock Exchange. And that company has seen some real appreciation in its price, obviously, amidst the rise in the price of the underlying commodity. This is Bloomberg Open Interest.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Quick check on futures ahead of the opening bell. We're seeing red arrows, but they're small, right? S&P futures are down 0.25%. NASDAQ futures down 0.1%, but this is after 2.5% gains in the cash trade yesterday. Likewise, we're seeing gains in crude, but we're still hovering under $100 a barrel. And yesterday, we saw the biggest drops in crude oil that we've seen since April of 2020. So absolutely massive drops, considering the fact that that was a reaction to the COVID, a global pandemic that stopped the economy around the world. So I think really fairly light moves in assets today compared to the massive moves we had yesterday. We'll be right back with the opening bell on the NASDAQ market site in the New York Stock Exchange. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller, and we continue to see, the S&P futures are still down a little bit. NASDAQ futures coming back up to unchanged after we had some really solid gains in the cash trade yesterday. Huge drops in the price of oil, and crude is back up today. We'll talk about that a lot throughout the next couple of hours. Oliver Wyman, a Marsh business, ringing the opening bell at the New York Stock Exchange. The ticker is MRSH, and the stock is up about 50%, including reinvested dividends over the past 5 years. And there are a whole bunch of Filipinos wearing awesome shirts ringing the opening bell at the NASDAQ market site. It's like Filipinos who work for Microsoft. We're not 100% sure why. I have a Filipino executive producer, and she was like, there's no major holiday in the Philippines right now, but it's cool.
Yeah, it is cool. And someone holding just a whole lot of flags in the back, waving them, for some reason not passing them around.
What do they call those shirts? Because I really want to get one. I don't know.
Producer Ann will help us out with that before we sound horrible. Anyway, stocks to watch this morning. By the way, both of these were up a lot yesterday, and we're just adding to that. CoreWeave expanding its deal to supply AI computing to Meta to $21 billion. They already had an agreement of $14 billion. There's so much appetite here, and Meta's already building out a lot of its own. Both those shares up at least 2 1/3% this morning, Matt.
Yeah, there's a ton of news around those two companies, a lot of news around AI, corporate news that we welcome after basking in the macro for so long. A check on that, though, right now, the broader markets and oil. Obviously, you can't look away. S&P is starting the cash trade down just a little bit. NASDAQ, too, but not much. NYMEX crude up 5% at $99.31 a barrel. Brent at $98.10. So you still have WTI, the front month contract, higher than the front month for Brent, but that's because they're different months. As we continue to tell you, NYMEX front month contract right now is May, and Brent is June. So we're waiting for that change to happen. But the important part is that oil for physical delivery, Danny, I was looking it up on using Ask B this morning on the Bloomberg terminal. It's still over $124 a barrel.
That's a lot, and it's this disconnect between paper and physical markets. And even further out the curve, David was talking about this, you get this real steep drop-off in pricing.
Yeah, David Kelly is still with us. Fortunately, JP Morgan Asset Management Chief Global Strategist. And what do you make of these markets, David? Because we're still we're down year to date, but only like 0.9% on the S&P. So even throughout the AI disruption fears, the private credit withdrawal requests, and a war in the Middle East that caused the doubling of oil prices, stocks remain near record highs.
Yeah, I think it is really important to understand sort of changes in the structure of markets in recent decades, which is only being amplified right now, which is really helping the market be very resilient. So last year we had $1 trillion of stock buybacks, only $600 billion paid out in dividends. All those stock buybacks, that's money on the table buying stocks. We've got about $11 trillion worth of defined contribution 401k plans. That's money waving into stocks every day. We've got increased inequality. Richer households, they don't buy goods and services, they buy financial assets. That's money going in. So we've got this huge wall of cash going to the market week after week after week. So you really need something really bad and scary in terms of the economic or geopolitical situation to actually cause this market to correct. And so I think the market, if consumer sentiment is way underestimating the economy, I think the market is way overestimating the economy. It's really not reflecting the economy we have, but I think it's reflecting just a lot of cash looking for home and stocks.
Yeah, I mean, Danny, we're going to have Anurag Rana on later to talk about CoreWeave, and they've just done, well, now collectively, $35 billion of deals with Meta alone.
Huge.
They're selling convertible bonds, right, to set up these data centers, and I think I saw the coupon at 2%.
Right.
It's nothing.
It is.
Investors will just throw money at anything now. No wonder private credit isn't that bad off.
Even in a 100-year bond from Amazon, Robert Schiffman had a great note a couple weeks ago from Bloomberg Intelligence basically saying that we think that there's too many bonds. Actually, there's not enough of them. There's so much demand for this. I wonder if that's also compounded by the fact, David, there's a note from Nomura's Charlie McElliott saying that we're also just really well hedged right now and that we're over hedged to chaos, and that's also keeping a floor in markets.
You can't hedge to chaos because you can only hedge against a known risk. And what we've learned from this century, I hope, is that you really don't know where the next hit's going to come from. With 9/11, Lehman Brothers taking down the whole global financial system, the pandemic.
You remember Lehman Brothers?
Well, yes, but there's a broad issue here, which is in every dimension, technology is getting more powerful. Whether it be military technology, biotechnology, the financial technology, and these technologies, unregulated, will blow up and cause fat-tailed events which bring markets down. And how do you hedge against the next problem when you really don't know what direction it's going to come from? To me, the only way to hedge risk is to diversify.
I mean, that's true. If you wanted to hedge after a President Trump's tweet saying something like the end of civilization, I don't even know how you would treat that, David. I mean, it's...
Well, first of all, you have to make an assumption about, how much are you really going to how much you're going to bet on that.
Yeah.
But also, broadly speaking, you have a very diversified set of assets, and you also look carefully at valuations. The two things that can get you are, one, not being overweight one side or the other, and two, just being overweight something that's way too expensive. So I think people need to look at valuations, and they need to look at the spread of their assets. But so long as you're spread around in things that are reasonably valued, you should be able to ride out most shocks that could occur.
By the way, I just pulled up your bio to see. You were already gone from Lehman Brothers.
It was not my fault.
Yes, exactly.
I was out of there a decade before they bought all those.
We won't hold you responsible.
Thank you.
Listen, I'm hearing conflicting things about market positioning. So Danny and I were wondering a couple weeks ago why software and services was doing so well. And I guess traders were telling her, like, CTAs were trying to get flat because they had been so short, so that was like short covering. But yesterday I saw a note from trading desks, a number of trading desks, saying that you're going to see more of that, and so it should power a rally higher now.
By the way, software was down 1% yesterday when everything else was up.
Right, but Charlie McElliott says, everybody's hedging to chaos. I talked to Max Kettner at HSBC, and he said market positioning is so clean right now. Like, how is this market set up?
Well, trading is of course a nightmare. But from an investment perspective, we've seen a huge sell-off in software because of the capabilities of AI. But I think we have to take a step back. I mean, people are not going to design their own payroll systems in their garage. I mean, there's just the whole issue with technology today is how do you integrate technology into your business? The business of integrating all these incredible technological capabilities is very important. And in many ways, what software companies do is they come up, okay, this is the very best way to deal with the problem that you're facing. and they think a lot about, what's the color of the dashboard? How do we position things? How do we make this as suitable as possible? So I think there still will be plenty of market for that, even if AI does technically have the capabilities to do a lot of this in a rough way.
I was actually talking, I talk about this a lot with my wife because she works in a software as a service company, and so a lot of people in our social circle do. And someone else, not my wife, pointed out that a lot of these big corporations, maybe they could design systems that would do things like payroll or CRM, but they always want to have a scapegoat. If something goes wrong, you always want to be able to blame a third party or a vendor rather than having.
Well, that's right, and you also have to concentrate. You have to constantly focus on your core competency, your core edge, and your core edge may not be designing back office software systems.
Right. Otherwise, Meta wouldn't pay CoreWeave $35 billion to set up their data centers.
Technology will adapt. So it's really important just to look at good companies, but don't assume that everybody's going to be doing it themselves, because I don't think they will.
David, this has been great. We have to do this again sometime. Thanks for spending the past half hour with us. David Kelly of JP Morgan. And let's get a check on your equity markets right now, more than 8 minutes into your trading day. And we are just barely lower after a huge day yesterday for these markets. A big rebound that's left us just within 3% of all-time highs, despite everything. And we are looking at big tech having a good day. Meta is higher. Matt was talking about that deal with CoreWeave, Broadcom, Amazon, Micron. A good day for the chip stocks. SanDisk getting an upgrade from Bernstein, saying that a blue sky scenario could see that stock go to $3,000. It's currently at $818. Some of the energy companies doing well too. Microsoft, Alphabet, those are not having a good day. Same with Palantir. Those shares getting crushed, down 4%. Eli Lilly, MasterCard, Oracle also having a down day. Looking at the sectors, utilities are doing really well, but that's the energy, clean energy, alternative energy companies within them, like Vistra is one of the top of the pile in utilities. Energy does well as the price of oil rebounds this morning, followed by materials. On the downside, financials, Goldman Sachs is going to be kicking off earnings on Monday, followed by all the other big banks, so that will be interesting to see. Again, Matt, overall markets slightly lower this morning.
Yesterday felt like such a hard rally, didn't it?
It did feel like a hard rally. But, I mean, we always kind of, it's normal to give things back.
We haven't been up that much since last Tuesday.
I know, that is the crazy thing. The last time the rally was so big was March 31st.
Coming up, CoreWeave and Meta strike another massive deal to the point where we're just getting numb to these numbers. But I think it's encouraging to see that they're still looking to a third party to do stuff. That tells you a lot, as David Kelly was just saying, about software as a service as well. This is Bloomberg Open Interest.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Going a whole lot of nowhere yesterday after the biggest, today after the biggest rally yesterday, the biggest in about a week. S&P and NASDAQ, little change this morning. NASDAQ slightly higher with Brent crude inching back towards $100 a barrel yet again. Time now for our top calls. The analyst action where we are watching. First up, Morgan Stanley. They've upgraded Alcoa, saying higher aluminum prices from tight Middle East supply will boost earnings and drive strong cash flow. Next up, Raymond James. They've upgraded Instacart. They say that grocery is an under-penetrated e-commerce category and is set to benefit as shopping becomes more automated. And finally, Stifel upgrades Texas Instruments to a buy. They say demand for its everyday use chips is starting to rebound and should drive growth. Shares up nearly 2%, Matt.
All right, CoreWeave expanding its deal to supply AI computing power to Meta. $21 billion is the new deal, building on a previous agreement of about $14 billion. Joining us now is Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence. And Anurag, the first question I have is very basic. I'm not sure if I understand. Does that mean it's a total of $35 billion in deal, or are they expanding the $14 billion deal now to $21 billion?
I think it's expanding the deal from 14 to 21, but still, it's a lot of money. It doesn't matter if, either way, it's a big commitment by Meta to say that, we are going to invest more in either training the models and being competitive in that area. And they're going out to neo clouds such as CoreWeave for it. We've already seen how Nebius has done well in the last, few months. And, it's the same extension of that concept that if you can't build it in-house, you're going to go out to these, neo clouds to get the GPU as a service work that you need.
Well, and they're still trying to build it in-house. Anurag, just how constrained are these hyperscalers still? How much more do they need? As Matt was pointing out, it's like every other week we get a headline of some crazy multiple tens of billions of dollars deals being done for these data centers.
See, everybody is constrained. It's not just the hyperscalers. Even Nebius and CoreWeave, they are also constrained in it. But you have to remember one thing, and we just learned again from the AWS, the Amazon letter today, they are seeing a level of demand that they have not seen before. And this is something we go back on our work that if you look at the backlog of deals, we have seen, you could say cloud commitments north of 1 trillion. I think it's north of 1.5 trillion at this point from everybody. Microsoft, it's over 600 billion they have on their balance sheet that needs to drop into, sales. So everybody is getting those backlog orders either from just the model companies, or they're also coming from enterprises that are infusing more AI into their daily work.
Why doesn't, Anurag, Meta build these data centers itself? Because clearly they have the money. I'm sure they could figure out the capability, looking at what Mark Zuckerberg is doing to build new AI models. And if we're worried about big American corporations like building CRM software in-house, why wouldn't they build data centers in-house? Why outsource this to a third party, to a neo-cloud company?
So when you look at all the hyperscalers, they're doing both. It's not that they're not building it in-house. They are doing that. But at the same time, there may be some workloads that they only need for a temporary basis. So for example, if you want to train a large model right now, and you're looking at a commitment for the next 3 years, you will go outside because after that, you don't need that capacity. But let's say you're doing inference work and you're looking at all the stuff that's coming from your own applications, you want to host it because that's a very long lead of that AI workload. As far as CoreWeave and Nebius are concerned, they will be looking at and saying, you know, right now we're going to be working with these clients to build capacity, but we also know down the road more inference work is going to come from those people who can't build it in-house. So it works for both of them.
We also heard from Andy Jassy in his shareholder letter basically saying he has a strong conviction for Amazon that that we're not overhyped the technology, that we're not in a bubble, and that margins and return on invested capital will be appealing. So Anurag, I mean, I guess Amazon is still going full in. Have we moved beyond that bubble conversation? Because it feels like we're on the other side of it, worrying about software, that the technology is so great that it's going to disrupt everything.
Yeah, I think he's basically giving a signal that his capex is going to go up more. You know, we had published a note yesterday saying that, you know, looking into the next earnings and even beyond that, we think Amazon Web Services sales growth is going to improve. When you look at Anthropic going from $9 billion in revenue by the end of the year to 30-odd billion within I don't know how many months, Amazon Web Services is their primary cloud provider. So you're going to see some kind of acceleration in that particular growth rate. The big question is how capacity constrained is everybody? You know, how many chips do they have in their hand? And Amazon has a slight advantage because they have their own chips Trainium that they are really getting ready to, you know, I would say that at this point, I won't anyway close to at par with NVIDIA, absolutely not. But, you know, they're coming close to doing a lot of the work for some of these cloud providers. And I think that you're going to see some of that benefit coming in.
Anurag, always great to spend some time with you. It's not often enough. We need to get you more often on, right?
Totally. Anurag's one of the best. We have to have him on more.
He's the best. Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence, unfortunately in Chicago. We need to move him. We need to move him back to New York.
I don't know how Anurag would feel about that.
Better city, too. Coming up, Wall Street Journal reports that Disney's new CEO, Josh D'Amaro, is making one of his first significant moves by firing 1,000 people. That's next. This is Bloomberg Open Interest.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what's going on in stocks today after fairly face-ripping rally yesterday. We see stocks down just about 0.2% in the cash trade on the S&P and the NASDAQ. So not huge drops. We do see crude, both New York crude and Brent crude up strongly, and now we have WTI up over $100 a barrel. We're going to talk about oil in this hour, and some analysts have told me already this morning that that's because there's so much demand for U.S. oil as the Strait of Hormuz remains blocked. CoreWeave right now down 1% after it made a deal with Meta to expand its AI data center supply to Meta to a $21 billion contract. Now, there's also a story about convertible bonds that it's issuing today, and that may be weighing on the share price. Meta up 2.5% as it releases also its new Avocado, like the public version of Avocado, which will be called Muse Spark. That's the large language model that it's making. Constellation Brands up 4%. Because who doesn't need a shot of whiskey right now? And Disney down 1.5%. We're going to talk about that, Danny, right now, because it seems like the new CEO comes on board and his very first move is to fire 1,000 people.
And maybe more whiskey purchases ensue after that. Yeah, it's the Wall Street Journal reporting just weeks after the CEO, Josh DeMario, took the helm. Joining us now to discuss it is Bloomberg Tech co-host Caroline Hyde. Caroline, Matt's been saying this quite punchy for one of the first big moves of a new CEO to come in and fire 1,000 people.
Likely underway before he actually even took over the reins. And this is as they really start to reimagine, and in fact it's called Project Imagine, which is a little painful if perhaps you're the one who's on the chopping block. But it's all about marketing, reducing silos. It was actually at the beginning of the year in January that we saw Asad Ayaz get the first ever sort of chief marketing officer of the whole of Disney. Before he'd been all in on the studio side, but now he's doing theme parks, he's doing the whole shebang. What does that mean? Well, he's consolidating his entire marketing executives. He's making sure that they see it as an across business look. Well, that likely means you can do more with less, more efficiency. We think about how AI is disrupting marketing in particular as well, but it means as though maybe 1,000 people are going. Remember, 8,000 people have gone since we saw Bob Iger take the helm back in 2022, so they have been trying to restructure an awful lot. This is a business that isn't as profitable as it used to be in the streaming side of things, so they've got to try to make cuts where they can and plow divisions, more money into the theme parks and the areas of expansion.
So hard to believe that they're not doing that well, since I spend so much money at Walt Disney World. I spend so much money on the Disney cruises.
There are quite
I
a lot of
spend
people
as much money as I can on the streaming service.
Costs. Think of the labor costs on those.
I just bought a new Anna costume.
If only there were
yesterday.
more Matt Millers in the world.
Well, I get that. How many people are in the marketing division? They have enough people in marketing to fire 1,000 people from marketing?
I mean, this is a company that has 280,000 employees, but actually most of them were there busy putting makeup on your child to look like Princess Anna when you're on the Disney cruise. Most of them are serving you when you're getting on the latest roller coaster. But there are a lot of people in the corporate center, and that's where they have been trying to take a lot of people out of the business. So, yeah, clearly there's a consolidation that can happen under Asad Ayaz, and he's trying to reimagine the way in which he can do business and brand opportunities and just speak from one side of the equation to the other. Just make more bang for the buck when it comes to marketing. Clearly there are a lot of people in it.
Is it something about just this time, too, where there are less Matt Millers in the world because the consumer is under pressure and people aren't spending as much and margins are getting hurt? Or is this just a continuation of the Iger project of slimming things down?
I think it's a continuation, is what many people would say. The reporting from the Wall Street Journal is that this was underway, already being enacted before Josh DeMario took the reins. But it is a painful legacy that he has to keep on bringing on board. How is he going to rethink the entire business? Where are his areas of focus? Of course, he comes from parks. And he's a man who's going to want to keep on expanding out those rather new boats that lavishly the odd person is be able to spend a little bit of money and go on. Which one were you on, by the way?
The Disney cruise?
Yeah.
It was like a four-night cruise from Fort Lauderdale down past the Bahamas.
You did some dolphins.
To like Bob Iger Island. And
we did it last year. It was amazing.
I loved it. I'd say it was fantastic.
I was a cynic. I was like, I'm going to hate this. And then you do it and you're like, oh, I get it.
Samesies. I thought, no, I'm not a cruise guy. But now I'm a cruise guy. Caroline Hyde, catch her on Bloomberg Tech at 11 a.m. New York time. This is Bloomberg.
what some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. A funeral in Beirut for one of the more than 200 people Lebanese officials say were killed in Israeli strikes yesterday. They have the Iran ceasefire teetering on the brink of possible collapse. Correspondent Elizabeth Palmer reports from Tel Aviv.
Those attacks might yet kill the ceasefire. Iran's deputy foreign minister told British television that Iran is only going to send its team to Pakistan for those talks with the U.S. this weekend to end the war if Israel stops the attacks on Hezbollah. But Israel's prime minister has posted on social media this morning they are going to continue.
Pakistan's prime minister has just slammed what he calls Israel's aggression. Iran has closed the Strait of Hormuz in response. A U.S. soldier has spoken exclusively to CBS News' Jonah Kaplan about surviving an attack in Kuwait that killed 6 other American military members on the first day of the war. We've disguised his voice to protect his identity.
What fortifications existed there?
I mean, I would put it in the none category from a drone defense capability.
None. There were no fortifications.
None.
The Artemis II astronauts are scheduled to return to Earth tomorrow night after their history-making loop around the far side of the moon. Pilot Victor Glover.
We have to get back. There's so much data that you've seen already, but all the good stuff is coming back with us. There's so many more pictures, so many more stories. And I haven't even begun to process what we've been through.
Preparations are underway for splashdown off the coast of San Diego. The emperor penguin has been declared an endangered species.
Climate change gets the blame. Dr. Norman Ratcliffe with the British Antarctic Survey says the sea ice the penguins live, hunt, and breed on is disappearing.
It doesn't last as long, it's not as extensive, and that can impact on their breeding success and survival.
Dr. Philip Trathan with the International Union for Conservation of Nature says emperor penguins huddle to survive.
I think that's really a good metaphor for how humans need to be. We need to work together to change greenhouse gas emissions.
Michael Wallace, CBS News.
Average salaries for a Major League Baseball player hit a new record, and a couple of New Yorkers lead the way.
The
average average salary rose 3.4% on opening day to a record $5.3 million. The highest paid player, Mets outfielder Juan Soto, getting almost $62 million for the second year in a row. Yankees outfielder Corey Bellinger's number 2 at $42.5 million. This is CBS News. Masters teed off in Georgia this morning.
91 golfers are at Augusta National Golf Course. CBS Sports golf analyst Shane Bacon has his eye on golfers named DeChambeau, McIlroy, and Scheffler.
Bryson potentially going to win his first Masters. Rory trying to win back-to-back. Would be just the fourth player ever to do so. And Scotty Scheffler trying to win a third green jacket.
But a lot of fans are rooting for 45-year-old Justin Rose.
There's areas of my game that I can improve on significantly and easily without sort of age being a factor.
Michael Toscano, CBS News.
A tip of the hat to a famous White Sox fan. Last summer, Pope Leo ribbed a Cubs fan in St. Peter's Square, yelling, "They lost." Now the White Sox honor the pontiff with a hat giveaway, August 11th. The topper will be fashioned after his ceremonial pointy white mitre. This one will be black and green with the team's logo in the middle and 2 hanging streamers in the back. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're also streaming live now on Bloomberg.com/videos. Red on the screen here, not a whole lot after yesterday's big move higher. The stocks are pretty mixed here today. Coming up, we're going to check in with Nick Wadhams, Bloomberg News National Security Team Leader, get the latest coming out of the Middle East. Anurag Rana, Bloomberg Technology Analyst, another deal in the tech space in AI. CoreWeave expands Meta deal for AI computing to $21 billion. The numbers are just ridiculously large when you talk things AI. Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. She's going to come talk to us about Fed policy coming up here. We got a lot of economic data this week, and she's going to be in studio, which is a good thing. So we got a lot going on. Got Isabel Lee sitting in for Scarlett Fu today. We appreciate that. Scarlett's out on assignment. I'm Paul Sweeney. We're live here. So let's get right to it on this Bloomberg Intelligence program with Alexa Stockers.
Thanks a lot, Paul. And stocks are lower as doubts about the ceasefire between the U.S. and Iran boost oil prices. Investors are shrugging off data this morning that showed inflation was elevated in February as consumer spending barely budged just ahead of the Iran war. S&P 500 now down just about 5 points. The Dow Jones Industrial Average down 60. NASDAQ Composite giving back 46 points. Brent crude at $98.60 the barrel. That's that's up 4%, and WTI crude racing ahead now nearly 7%, just above $100 the barrel. The shares of CoreWeave reversing an early rally, now down 2.5%. CoreWeave has inked an expanded $21 billion deal with Meta to provide AI computing. But we have got shares of Intel rallying more than 3% after Alphabet's Google said it has committed to using future generations of Intel's Xeon processors and other chips. And we are watching Wall Street's biggest banks this morning as they get ready to kick off earnings season next week. Banks including Goldman Sachs and JP Morgan Chase are expected to report a record haul from stock trading as the Iran war fueled more activity from investors. And round one of the Masters is underway at Augusta National. At last check, Jose Maria Othabal sits atop the leaderboard at 2 under par. And that's your Bloomberg Business Flash. Paul.
All right, Alexis Christophers, we appreciate that. As always, Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and Bloomberg.com. As Alexis was just reporting, a little bit of a sell-off after yesterday's 2.5% to 3% move higher in the markets. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
Well, we have a lot of tech deals to discuss.
Yep.
So we can go ahead and get started with Meta Platforms, which that's ticker META, gaining about 2% nearly. That's after CoreWeave and Meta struck another $21 billion deal for AI computing. CoreWeave will provide AI cloud capacity to Meta for multiple data centers throughout the point until 2032. Also important to note that yesterday Meta introduced Muse Spark, its first large language model. Bank of America out with a note saying that Muse Spark could strengthen products and ad performance at Meta as well.
Paul was just saying that those numbers are really eye-popping. Yeah. What else are you looking at?
Also looking at Intel, that's ticker INTC, rising about 2.3% to hit the highest intraday level since 2021. That's after the semiconductor maker said Google agreed to use future generations of its Xeon processors and other chips in its data centers. While the financial details remain undisclosed, so I can't say that it's another $21 billion deal, but the deal is another big push for Intel to better capitalize on the build-out on AI infrastructure.
All right, stock's up 3% today. It's up 65% year-to-date, hitting a 52-week high. Trailing 12 months up 182%. So it's safe to say that after maybe a little bit of a slow start, Intel has definitely got the AI wind at its sails here. Do you have one non-tech name, maybe?
I sure do. Okay. Star Surgical, that's ticker STAA, jumping about 21% for its most intraday since August. That's after the healthcare supplies company said it expects net sales for the first quarter to exceed $90 million. Those preliminary results surpassed Wall Street's expectations across the board, and Jefferies is calling the results a positive step in the right direction, especially after all the noise from its failed deal to be acquired by Alcon earlier this year.
So this is a Star Surgical, so it's like a medical equipment company, I guess?
Yes, yes.
All right, very good for them. There's another deal there. We appreciate that. So we've got a lot of stocks on the move today. We'll stay on top of that for you. For more, Avalon Purnell, thank you so much for that report. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. What are you looking at today, Isabel?
Honestly, it's just a ceasefire. I think no one can just stop talking about it and thinking about it. It's quite fragile. It's holding on barely for a second straight day. It's really worrisome for the global economy. And honestly, little has changed when it comes to the Strait of Hormuz. There were reports overnight that said only 4 ships passed, so that's even lower.
Yep, and a lot of ships are lined up there now waiting for, I guess, some clarity there. But I think what's interesting to me, just from the market perspective, had the huge move higher yesterday across the various indexes, 2.5% to 3% moves. You don't see that very often. Even bigger moves in Europe, 4 to 5% move higher yesterday. Yet today here in the U.S., kind of not really selling off too much. A little bit of relief sell-off maybe, selling into the strength a little bit, but I'm surprised maybe it's probably a good sign that we're not seeing more selling at this point.
Yeah, that's true. And I mean, is this a rally that we can believe with conviction? I mean, who knows?
Yeah, exactly. And it goes to kind of what you're talking about, this 2-week treaty here, or peace truce here, and we'll see how long it holds and if it leads to something more. Nick Wadhams joins us, U.S. National Security Team Leader for Bloomberg News. He's based down there in Washington, D.C. Nick, what do you make of this ceasefire here? It seems shaky at best, but I guess you could also argue it's holding.
Well, it's really hard to tell because, obviously, while it seems that the U.S. and Iran have, for the time being, stopped fighting, you have the Israeli attacks on Lebanon, and Iran says that those attacks violate what it sees as the terms of the ceasefire. So we are in this situation we have been in before with President Trump, where he sort of establishes the terms of some sort of broad agreement. I'm thinking of the Gaza conflict, where they essentially introduced this ceasefire and then said, okay, we're going to work out all the details later, and hoped that that the sort of establishing that at the beginning would then pave the way for something more permanent. At this point, it looks extremely fragile. There's no indication that the two sides are going to are anywhere near agreeing to some of the broader conditions to bring a more permanent halt. But yes, at least for the time being, the violence between the U.S. and Iran directly has stopped. So I guess in that way, you could say it's a qualified success.
And how much of this conflict is contained versus at the risk of pulling other players in the region? And I just wonder, what would escalation look like from a geopolitical standpoint?
Right. I mean, so that's really the big question now, and it hinges on the Strait of Hormuz. So if the strait remains closed, then you're going to have a situation where other countries, specifically the UAE and other Gulf nations, are going to feel compelled to come in, and you're going to see the U.S. really start to ramp up pressure, potentially to include renewed military action. President Trump has been very explicit that he is not going to pull U.S. forces out of the region, so he does have that option. But what you're seeing right now behind the scenes is a real effort to sort of establish a maritime force that would then allow for the free passage of ships through the strait. The question is, what happens if Iran stands in the way, and whether we would see an escalation in violence there.
Yeah, Nick, I guess that's one of the big sticking items here is the Strait of Hormuz. I mean, if nothing else, I guess Iran really has a good understanding of how important safe passage is and what an important role they play there. Is there a way for the U.S. to get some type of agreement where there can be free flowing trade through that strait?
Right. I mean, that's the sort of big question, because in a lot of ways what they're trying to do here is essentially put toothpaste sort of back in the tube. I mean, because you had that free passage through the strait before the war, and now what you've really seen is, despite the degree to which Iran's military has been decimated, you don't really need to do that much to block up traffic in the strait, because you're essentially telling shippers, it's a risk calculation for them. You don't even necessarily need to hit them, but they may not be willing to take that risk. So what you have now seen is Iran coming to an understanding, I think, that they have even more leverage than perhaps they once believed they did, and a real willingness now to use it. So how do you then get them to give that up? There has been some conversation about the U.S. and Iran. I mean, this just sort of would have been totally implausible weeks ago, potentially teaming up to establish some sort of toll system. That would seem, there's been a debate about whether that might violate international law. Big question there, obviously. And then would shippers be willing to pay that? So, the strait really is the sort of fundamental question that sits at the heart of whether this thing is going to continue to work, because for the time being, it does appear to remain blocked, or at least ships are not willing to go through. And you could see President Trump's patience running out very quickly on that.
Nick, you're the U.S. national security team leader. There's a huge apparatus as it relates to national security in the U.S., the Pentagon, the State Department. They don't seem to be that involved in this process, going to war, now negotiating the war. What do we know about the team that's going to be negotiating here, and how much leeway does this team in Pakistan have to negotiate?
That is a great question, because you can tell a lot about what President Trump's thinking about who the power players are in his administration based on the delegation he's sending. So you have the two standbys, Jared Kushner and Steve Witkoff, who have been involved in all sorts of issues for the president, from Israel to Iran to Ukraine, and a very uncertain degree, actually no real success in achieving sort of the diplomatic outcome around Iran or Ukraine that the president would have hoped. But you also have the additional element here of J.D. Vance, the vice president, and he had sort of been on the sidelines on some of these issues in the past, and he's now being inserted directly into the middle of it. So, we do have some indications that he had played a pretty significant role in trying to get this ceasefire established in the last several days. Interesting in itself, but also interesting because it suggests a power play on his part within the administration. Obviously, Secretary of State Marco Rubio's star had very much been on the rise. He'd been involved in a lot of Venezuela and a lot of Ukraine issues, but now it looks like J.D. Vance is coming to the fore.
All right, very well. Hopefully they can have a successful negotiation starting presumably maybe tomorrow or Saturday, so hope for the best there. Nick Wadhams, U.S. National Security Team Leader for Bloomberg News. He is based in Washington, D.C. And again, a little bit of red on the screen here. I wouldn't oversell it given the big move higher we had in the markets yesterday with some pretty decent volume as well. So we'll note that. But again, kind of all trading off of crude oil. And we've got crude oil higher here, noticeably. We've got WTI crude up 7%. We're now at a $101 per barrel. So that is a significant move higher. Brent is up about 4.25% to just under $99 per barrel, reflecting the tensions continue in the Middle East. Listen.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers Studio. The global stock market relief rally has stalled as the U.S. and Iran gear up for talks to firm up their fragile ceasefire. The S&P 500 down 14 points. The Dow Jones Industrial Average down about 117 or 0.2%. NASDAQ Composite down 83 points, a loss there of nearly 0.4%. Brent crude now at $98.90 a barrel, up more than 4%. And West Texas Intermediate crude up more than 7%, now at $101.37 the barrel. The Bloomberg Dollar Spot Index a bit weaker at 1201.02. The 2-year yield 3.78%, 10-year at 4.30%. The Wall Street Journal is reporting that Disney is planning to cut as many as 1,000 jobs in the coming weeks. It's the first major move under new CEO Josh D'Amaro. Shares of Disney down about 1%. Amazon says its annual revenue run rate for its chips is now over $20 billion. We've got shares of Amazon up about 2%. And American Airlines is the latest carrier to raise those baggage fees to offset soaring jet fuel costs. Shares of American down 2%. And round one of the Masters underway in Augusta National. At last check, Jose Maria Othabal sitting atop the leaderboard at 2 under par. And that's your Bloomberg Business Flash. Paul and Isabel.
All right, very good. Alexis Christophers, appreciate that. Always good to get a Masters update. We got Isabel Lee. She is sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. You know, it seems like a lot of these big tech companies are almost tripping over themselves to get press releases out saying how big their AI revenue is, how fast it's growing, and Amazon's no different. Amazon CEO Andy Jassy, in a shareholder letter, said AWS's AI revenue run rate is over $20 billion, as Alexis was just reporting. That's up from $15 billion just in the first quarter, so that's pretty good. Stocks trading higher. Anurag Rana joins us here, technology analyst for Bloomberg Intelligence. He's out there in Chicago. Anurag, Amazon, $20 billion, it seems big to me. How about you?
Yeah, no, it's a very big deal. In fact, this is the first time they are actually putting a number around it, because if you remember a couple of years ago, Microsoft was throwing its number out and everybody else was asking Amazon, where is your number? Where are you? But, you know, one of the things we talked about at that point, Amazon's riding on the ChatGPT wave, where Amazon's more enterprise focused. And now those enterprise workloads are coming in. And that's where we see the AI revenue for Amazon.
How does this change the calculus for the outlook of the company? Like, are you more bullish than you already are?
That's a very good question. In fact, we published a note yesterday saying that we anticipate AWS growth to pick up this year. In fact, even in the first quarter, because one of the things we saw just announced 2 days ago was Anthropic's revenue went from, I think, 9 billion to 30 billion within no time. And AWS is one of their preferred partners. And if you remember, 2 years ago, it was all OpenAI, Microsoft. Now we are seeing Anthropic doing really well, and that helps Amazon Web Services. So this year, we think Amazon Web Services is going to do better than what most people anticipate.
Anurag, update us on kind of the competitive landscape now. Where does Amazon fit in these days?
Yeah, so when you go back and look at it prior to the AI era, Amazon Web Services was the largest. It's still the largest, but it was largest by a massive amount compared to Microsoft and Google. Since then, after ChatGPT, Microsoft really closed the gap with them and became a much bigger cloud vendor, compared to Google, but not as big as Amazon. But all three of them are doing phenomenally well, because remember, this is a business where you need to put in a lot of CapEx and data centers in order to gain this revenue. This is not something you and I can build in-house using, either Claude or anything, because you need physical infrastructure, data center, chips. Amazon talked about their chip business, for example. So Amazon still is in the driver's seat with the largest market share, but both the others, I would say Microsoft and Google, are catching up fairly fast at this point.
So speaking of this slew of deals, we also have CoreWeave expanding their Meta deal for AI computing to $21 billion. At a headline level, what does this deal tell you? The size and duration, what does that signal? And does it tell you Meta's AI demand is stronger than expected?
I think Meta is spending so much because they need to be relevant also in the large language model space. It seems to me that this particular deal is tied more so for the training of the model rather than inferencing. Because one of the things what we are seeing is when it comes to even hyperscale cloud providers, whether that's Microsoft or Google, they're doing some of the work in-house with their own data centers. But as they can't expand that rapidly, they're going out to these neo clouds, whether it's Nebius or CoreWeave, and renting out their capacity so that they can parse out some of that work to them as well. So this is just a continuation of that. The bottom line is AI infrastructure demand is very strong, and it actually helps out everybody, not just the hyperscale cloud providers, but also the neo clouds.
Anurag, you cover all the software providers. They've had a tough go of it over the last several months, 4 or 5 months, as investors try to sense which one of these software companies and sectors and verticals could be at risk from AI. Where are we now? What's the market saying these days?
So you can see them. I mean, the index is down quite a bit. Even today, every software company is down. And yesterday, we heard that, there's going to be some new model by Claude. So every time there is a brand new model from Anthropic or anybody else, there is pressure on these names. And I don't think that's going to change anytime soon. What these companies have to do is show that they are not going to get cannibalized by these large language models, but actually embed them in their core product and can continue with that profitable growth that they have. But that's not an argument that gets settled, in the next 12 months. It's going to take a few years to build that out. What we want to see from companies like Salesforce is to go out and buy back a lot of the shares, which they did, $25 billion buyback that they have announced. If these guys are able to embed some of these models in their own products and protect what they have, I think this is going to be a change around in sentiment. But again, that's not going to happen anytime soon. It's going to be a few years before that shows up.
Wow, that's going to be a tough ride. I'm just looking at Salesforce because just from my own sense, it feels like a name that could be a risk potentially, or it's a name that gets called out. Down another 3% today, 35% decline year to date, 52-week low. So as Anurag mentioned, kind of a tough go here, at least in the short term for these a lot of these software names. Anurag Rana, technology analyst for Bloomberg Intelligence, joining us via Zoom from Chicago. Lots of economic data here today. We had some inflation stuff. We had some jobs. Some GDP, so a lot of economic data. We want to see what it means for the world. Danielle DiMartino Booth, she can help us do that. She's the CEO and Chief Strategist at QI Research. She's in our studio, which is a good thing. Danielle, what's important to you on the economic data today? What jumped out at you, if anything?
Well, I mean, even though we had to dust off the final read on on GDP, what it told me when you added it together with the spending data that we got out this morning for February was that the 1.9% growth in personal consumption for the fourth quarter has now turned down to 0.6% in January and February. When you combine them, that's not good. Chair Powell follows the super core super closely. Okay. And that's kind of services inflation ex housing and energy. That rose at 0.2%. That's the lowest number that we've seen in 5 months. He's going to be paying attention to how much of a drag services disinflation was prior to, again, this is February data, prior to even the onset of much higher pumps at gasoline prices.
Red headline crossing the Bloomberg terminal, thankfully not regarding the war. This one, but very important. DOJ opens probe into the NFL on anti-competitive concerns. That's according to the Wall Street Journal. We'll have more reporting on that coming up.
What about CPI tomorrow? I think that economists are penciling in a 1% increase. That's the sharpest 1 month advance since 2022. And I think this is where the gas prices that the Americans felt will be in full display.
Right. And that's exactly why I brought up Supercore, because anything that we see that's taking away at the gas pump, given the very slow real growth we're seeing in incomes, which was reinforced with February's data this morning, anything that takes away from the ability to spend on your rent, on your grocery bill, because you're spending more on gasoline, that's going to act as a growth shock to offset this supply shock. And again, these are the things, this is why so many Fed officials are saying that they anticipate that this gasoline price hike is going to be temporary. And by the way, risks taking away from growth going forward. Atlanta Fed GDP, which usually runs pretty hot, is at 1.3% right now.
Recession. Where are you on thinking about a recession or a slowdown in this economy?
Paul, I'm given the revisions that we're seeing to payrolls. We just got the third quarter for 2025, and that's the hardest data that they have, the quarterly census of employment and wages. It looks like we had net job losses in 2025. It's just going to take the National Bureau of Economic Research a little bit of time to go back. But when you look at government personal spending, less government transfers, that's a pure NBER input. That also turned negative. So I think we're going to be hearing from the National Bureau of Economic Research pretty soon here, given these revisions suggest that the economy was in recession last year.
What is your outlook for the Fed? It seems like it's deja vu all over again. Oil prices in 2022, for example, soared when Russia invaded Ukraine. That led to a surge in inflation. But back then, goods inflation rate was already rising, I guess, due to some supply chain stuff. How is today different or the same for you?
Well, I do think that we were already seeing goods inflation begin to cause services disinflation. So that was pre-existing prior to what was happening in Iran. And again, the Fed right now is in a political furor. So officials are looking for any reason to stay on pause at the April meeting, and that is indeed what I'm anticipating.
So how do you factor in this seemingly higher for longer energy situation out there? We had a big pullback in energy yesterday, but now we're bouncing back up.
We've got WTI north of 100 again.
Exactly. So, I mean, that's got to impact inflation expectations, if nothing else, and maybe just downright growth out there. How do you factor that into the numbers?
Look, it's a real tug of war, and I think that this is going to be something that in a regular, non-political environment, Fed officials would be struggling with. But if you do look at past precedent, you will end up with a growth shock outweighing that of the energy shock.
And all eyes, again, will also turn to the talks in Islamabad on Saturday. From a market's perspective, or someone who's like in tune and doing this for decades, not to age anyone here, but I admire the wisdom in this room.
Paul, I think that was directed to the two of us. I cover up my gray, so.
Anything you're looking out for? I mean, how are you even going to assess that? How do you weigh on these things?
So I'm old enough to not be comforted by massive rallies like we saw yesterday, because when you see that kind of volatility way up, it's bothersome that you think to yourself, gee, I remember this happening in 2001. You worry about the volatility in the market actually causing upper income confidence to begin falling, and that's exactly what the University of Michigan has begun to reveal. If that top of the K, so to speak, in the K-shaped economy begins to get nervous and spend less, and they follow the stock market, that's more problematic.
What's the next data point you're looking at? Or what's a data point you're looking at maybe the rest of us aren't?
We're definitely looking at April non-farm payrolls. Okay. That is what we're looking at very closely. March was the hottest March in the history of the United States, and yet the BLS somehow put 79,000 extra jobs with seasonal adjustments into the data, in addition to 100,000 that they added for the birth-death adjustment, which adds up to 1,000 more than jobs that were created. We're looking for a big snapback and another negative print in April non-farm payrolls.
All right, keep on top of that. I mean, that's a key issue. We're in a no hire, no fire environment. I don't know. Danielle DiMartino Booth, we appreciate getting some of her time. She's the CEO and Chief Strategist at QI Research, joining us live here in our Bloomberg Interactive Brokers studio. Markets slightly trading off here. We got the S&P and the Dow and the NASDAQ all down about 0.3 to 0.4%. But after that 2.5 to 3% gain yesterday, not to be surprising. The VIX, I'm calling out for Tom from the Upper East Side. It is rock solid, sitting at 21. Yields pretty steady here too. 10-year 4.31%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are lower as optimism over the U.S.-Iran truce fades, with both sides accusing each other of violating the deal. The S&P 500 down just about 12 points at 67.69. The Dow Jones Industrial Average down 125 at 47,786. We've got the NASDAQ Composite down by about 74 points now at 22,560. Oil is jumping amid signs the Strait of Hormuz remains effectively closed. Brent crude at $99 the barrel. WTI crude now above $102 a barrel, a gain there of 8%. The 2-year yield 3.79%, 10-year 4.31%. As for stocks making headlines, the Wall Street Journal reports that Carlyle's flagship private credit fund was hit with redemption requests equal to nearly 16% of its shares. We've got shares of Carlyle down about 2.5% on that news. And Constellation Brands climbing more than 5%. This is despite news that the maker of Modelo and Corona beer offered a softer than expected outlook. And the Wall Street Journal reporting moments ago that the Justice Department is investigating the NFL over its broadcasting deals. The agency is looking at whether the league engaged in anti-competitive tactics that harm consumers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Paul and Isabel.
I mean, I think that, thank you, Alexis. I think the strategy of the NFL has always been, as it relates to its media partners, do deals with as many players as you can, as many networks as you can, to get them bidding against each other, to create more competition. That's what they've always done, going back to the days when there was only 3 broadcast networks.
But it seems like we, the consumer, we're paying up for the privilege of watching these games.
Yep, and now as more and more of these go to the streaming issues, it'll be interesting to see how that plays out. So you don't mess with the NFL. That's kind of what I've always learned, but we'll see what happens here. Let's get back to geopolitics. Let's get back to U.S. politics. We can do that with Henrietta Trey's Managing Partner and Director of Economic Policy at Veda Partners. Henrietta, this important couple of days, weekend coming up for this administration. Vice President J.D. Vance leading a contingent of negotiators to Pakistan to negotiate with the Iranians. What do you think the political calculus of this war is for President Trump right now?
The political calculus couldn't be more extreme. The pressure campaign that Republicans and members of his own party have been putting on the president, and by extension on Vice President Vance, even Marco Rubio and others down the line, including Pete Hegseth, I would say, is expanding and really hit a fever point last weekend. What's going to happen next is the president needs to get things calmed down before lawmakers return to D.C. on Monday and Tuesday of next week. This is, as I've been describing, the last free week of political reign the president has while lawmakers are physically not in town, which really gives him a lot of latitude that he won't have when they get back. So already Minority Leader Jeffries is calling the Democrats back to start, really ratcheting up efforts to pass a war powers resolution. We understand that Senator Schumer will file the same thing. There are 5 war powers resolutions, to my knowledge, that will get voted on between the House and the Senate over the next week. He really needs to spend the next 4 days putting a lid on this and calming things down. Getting some flow through the Strait of Hormuz would be ideal. There's none of that yet. They need to button it up right now.
How is this playing out with President Trump's voters? I mean, he ran his campaign on the back of a promise that he will stay away from wars.
Yeah, and it's one of the core points of his entire campaign promise, and the hemorrhaging you're seeing from what we call soft partisans, mainly think of like the independent voters who can sometimes flip parties. They usually have a partisan lean and they vote very consistently, but at this point, the president's impact on inflation, prices, the economy generally has been bad with those voters since Liberation Day, and now it's compounding and getting exponentially worse because of the war, because of things like the rise in prices of gas, in food, in diesel, in fertilizer, but then also the physical reality of being at war. And that's how you're seeing Democrats win elections by 25-point overperformance versus when Trump got elected last time. And that's across Georgia and Wisconsin just earlier this week.
President Trump has posted to social media that 50% tariffs will be imposed on any country providing, quote, military weapons to Iran. What's the feeling in D.C. about that, given what we heard from the Supreme Court recently?
Well, I think there is the beginning of a discussion about where we stand on negotiations with China. To me, if you look at who provides any military aid to Iran, it's three countries: North Korea, Russia, whom we do, $3 billion worth of trade with. So there's nothing to tariff, and specifically China. So if you go through the authorities that the president has, now that he doesn't have IEPA authority from the Supreme Court, there are three avenues that he can travel. Two don't really fit the bill. You need an investigation. You're in violation of a 30-day window. That's on Section 338 and Section 232. But with Section 301, which is an investigation that USTR Lighthizer launched in Trump's first term and which Ambassador Tai re-upped at the end of Biden's administration, you have full authority to tariff all $330 billion worth of trade that we do with China. And if you're going to put those tariffs on of 50%, the only country that's really exposed is China. So to me, it raises questions of how is the dialogue going? Are we going to have that May meeting between Trump and Xi? Where are we on soybean purchases? What's going on with robotics trade, critical minerals? I think it puts a lot at risk. So my base case is that these tariffs never go into effect. Or if they go on a couple of Russian trade components, then so be it. But if we escalate China tariffs, which again is the main exposure here and the main vehicle for his authority, we got a bigger problem, which is an escalation of the U.S.-China trade war again, and not the détente that we have right now.
There's definitely so much happening. And I want to go back quickly to the Iran war. And through the lens of oil and gas prices, do you think that if we see more of those price spikes and volatility picking up, that's going to be a key signal, whether this war escalates or fades, or do you think those aren't metrics we should look to more deeply?
I think that's the main metric. I think that's really, especially what the market needs. When I talk to investors who are really smart on the energy side, this is all that matters. The political charade is nothing. We need the Strait reopened. And the Strait is not open. I was actually just speaking with the insurers this morning, and they're concerned about every single layer of this. There's 230 ships that are waiting to just go through the Strait right now of the broader 800, and nobody wants to make the first move. So that's your first structural problem. But then when you have to layer on the toll that Iran is asking these shippers to pay, the second that any Western nation pays that toll, you're in violation of U.S. law. And it is a serious crime. And there's no agreement on how to get that payment through, and no willingness to make the payment and then be in violation of U.S. law. So China has done it so far, and that's all fine and well, but no Western countries are able to do it. And they don't know how to proceed here. And that's going to be something that Vance has to negotiate. And that is real tricky because you're effectively codifying the tax, the toll. That's going to be difficult.
Henrietta, you mentioned Congress comes back from recess next Monday and Tuesday. What changes when they're back in D.C. Realistically? Because they haven't really been that effective so far.
Yeah, no, it's a totally valid question. I would say as a former staffer, what happens is you get in front of the cameras, you make media hay out of every single thing that they're not able to do while they're not in town. It's not like you can make news in Des Moines, Iowa, the way you can when you're literally on the steps of the Capitol and you have a litany of media reporters following you through the halls of the Capitol, which is what occurs. So the war powers votes are privileged, meaning they can go to the House or Senate floor and force Republicans to take votes and get on the record. That's one of the most powerful tools. These guys now have to go back to their constituents saying whether they supported or opposed the war. These are really heady issues for a politician, which is why they don't like to vote on stuff. It's why they like to go on recess. So those dynamics, calling of hearings, I think that we should be monitoring the efforts of the Senate and the House budget committees to write a reconciliation bill to provide more aid to the Pentagon. There are a lot of ways that we can get signals as investors from what they do. Even though it looks like not a lot, you can tell everything by how they're acting.
All right, Henrietta, once again, thank you so much for your time. We really appreciate it. We always learn a lot about how things work down in D.C., how the sausage is made. Henrietta Tres, managing partner and director of economic policy for Veda Partners. She's down there in New Orleans. She zooms up to us, and we appreciate that. Looking at the markets here, again, I'm looking at the S&P, the Dow, the NASDAQ. They're off about 0.2%. Pretty reasonable pullback after that big move yesterday, one could argue. The VIX is actually down slightly, just below 21. Again, suggesting a little bit of calm, at least in today's trading session. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube. We're streaming live on Bloomberg.com as well. Really interesting headline came across the tape just a couple minutes ago. This is according to the Wall Street Journal. The Department of Justice opens probe into the NFL on anti-competitive concerns. I mean, who wants to mess with the NFL? I guess the federal government can. But let's break it down a little bit if we can. Randall Williams, Bloomberg Business of Sports reporter. Randall, what's the story here?
So basically, Senator Mike Lee, he's from Utah, he sent a letter about a month ago, maybe a little bit longer than that, and he encouraged the Federal Trade Commission, the FCC, and the Department of Justice to review this Sports Broadcasting Act because of the fact that it costs over $1,000 to watch NFL games. Now, rising costs over broadcasting deals is pretty normal. I mean, we've seen every single time a league goes to the negotiating table, normally the costs are passed down to the consumer, but also the games grow. And so I think that it'll be interesting to see how they approach this, if anything changes. But the NFL still has 4 years left on its broadcasting rights agreement. There have been reports that they want to opt out of that and negotiate early. Those talks are very, very early. So we'll see.
Could there be possible political motivations behind this?
I think with everything happening in the country right now, you never know who is setting their sights on the NFL. And I mean, you see what's happening with the Rooney Rule. There's a Florida attorney general who has turned his sights towards the NFL and saying that the Rooney Rule goes against federal law. We'll see how that plays out. And I mean, there are no reports right now that those two things are connected, but we've seen different areas of this administration set their sights on sporting leagues and other organizations out there. So it wouldn't surprise me, but it hasn't been reported yet.
So, Randall, this is focusing primarily on the media rights deals for the NFL. Now, most of those, even going back 30 years, 40 years, there's been some paid component to it, because even if I want to watch my CBS game, I'm probably getting it through my cable package, as opposed to having my rabbit ears. So it's always been the consumers directly paying for sports. Is it different now that it's streaming?
There are more partners now. Okay. So Amazon has a Thursday night football game. You can stream on Peacock occasionally. YouTube has streamed a game before. The NFL has been selling rights to these streamers and these broadcasting companies for many, many years. And as the game has grown, as the business has grown, the costs have grown as well. And I think in reference to what it costs to watch all NFL games, yes, it would be expensive, because you would then be paying for NFL Sunday Ticket. You could be paying for Red Zone. You could be paying for each individual subscription of some of these games. With that in mind, of course the costs have gone up, because they've added partners, they've added games, all of those things. But again, like we're talking about ABC, NBC, CBS, I'm ESPN. All of these things you could walk into a bar or just subscribe to your local cable, and they would be right there. Now, you wouldn't be able to choose a game. And here in New York, you would probably be subject to the Jets and Giants. In other places, it would be the local markets there. So it really depends on if the customer wants to pay for all of these games that the NFL broadcast.
In the letter here by Senator Mike Lee, he said, to watch every NFL game during the past season, football fans spent almost $1,000 on cable and streaming subscriptions. Yeah, I guess if you're a fan, it's worth it.
I mean,
it just depends.
I would just say this, that the last Super Bowl was 12-0, and it had 125 million viewers, and it was 12-0 at one point, heading into the fourth, or fairly well into the game, and it was the second most watched Super Bowl of all time. And with that in mind, if you're the NFL, of course you would like to go back to the negotiating table to try to get more money. Now, if let's just say that this investigation kicks things down the road, if your Super Bowl is 12-0 and it's the second most watched game ever, 4 years down the line might not be a bad thing. You just want that money right now. So evidently, I do think that the NFL will get their money. It's just about when.
To get even more money, there's obviously very advanced talks to add an 18th game, and that would be it, and that would.
We'll see. I mean, there's that is.
How does that happen? Do you have to open up the whole agreement with the Players Association?
Of course, yeah. And the Players Association has been in flux for over a year. They've had 3 executive directors in under a year. And when you have 3 executive directors, the NFL then has to go to the Players Association, rip up the collective bargaining agreements, and then they have to come to terms on a deal. Those negotiations have not started at all. So an 18th game, a 16 international game package that the NFL could sell, those negotiations haven't started at all. So I think that Roger, I've heard Jerry Jones, I've heard Robert Kraft, those are the Patriots and the Cowboys owners, all talk about adding these things. And I do think that they want to, but it's so early, which is why, going back to this investigation, in a worst case scenario for the NFL, if they had to wait 4 years, it might work out in their favor because of the fact that they haven't negotiated a CBA. So, I think that we'll see how this plays out, but right now, I think that if I'm the NFL watching this, it's like, okay, we'll see.
Yeah. Okay. What could possibly be the end game here?
I'm not exactly sure. I think that it could be to congregate some of these costs to make sure that the CBS and the ABC, that there are less streamers involved, that it is not passed down to the customer as much. But again, like you got to think, this was one of the most watched NFL seasons of all time. So really, are the streamers hurting? And are the customers hurting if they're continuing to tune in? That is what I think the NFL's defense to this would be, is that people are watching regardless, and they're paying.
This sounds like a solution looking for a problem kind of situation. Randall Williams, thank you so much. Always appreciate it. Randall Williams, he's a Bloomberg Business of Sports reporter. Big value to us as we try to get a better understanding of the business of sports, and it is big business. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. The S&P down 6 points. The Dow down 116 points. That's 0.25%. And the NASDAQ down 22 points. That's 0.1%. Oil higher. This is Bloomberg Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, coming up in this hour, Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, is going to join us. We'll talk about oil, again, rising here again today on greater concerns today on this Strait of Hormuz. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Look at his thoughts on some of the economic data we received today, what we're going to get tomorrow in terms of the CPI, and what that means for the Federal Reserve. Anna Rathbun, CEO and founder at Grenadier Advisory, will get us her market call. Red Brown, Bloomberg consumer reporter, Modelo owner Constellation gives softer than expected outlook there. I've been seeing Modelo much more than I have, I guess, in the last couple of years than I have ever before. So I don't know what's going on there. We'll get the latest reporting there. But right now, let's go to Amy Morris down in Washington, D.C. for a Bloomberg.
All right, thank you, Paul. Stocks are wavering. Doubts about a ceasefire in Iran boosting oil prices. We check those markets for you all day long here at Bloomberg. S&P 500 about 0.1% lower. NASDAQ about 0.1% lower. The Dow about 0.25% lower. The 10-year Treasury yield at 4.31% and the 2-year yield at 3.79%. WTI is about 8% higher, now topping $102 a barrel. And Brent crude right at $99 a barrel. It's about 4.8% higher. Bitcoin 0.4% lower, around $71,000. Elevated oil prices from the war in Iran are raising fears of stagflation in the market. But White House economic advisor Kevin Hassett says he still sees the economy growing by 4 to 5% this year, thanks to deregulation and tax cuts.
Probably be in the 4 to 5 range for economic growth because of all this. And I'll stick by those numbers. I think this is a temporary a distraction that will very, very quickly go away.
White House economic advisor Kevin Hassett making those comments on Fox Business. American Airlines increasing its checked bag fees, making it the latest U.S. carrier to bump up prices to help absorb surging jet fuel costs caused by the war in Iran. American following Delta, United, and JetBlue in raising those fees. Shares of American Airlines now more than 2% lower. CVC Capital Partners seeking co-investors to help bankroll its proposed 10.9 billion euro takeover of Italian drug maker Recordati. Sources say deliberations are ongoing and there's no guarantee the discussions could lead to a deal. CVC shares more than 2.5% lower. Round 1 of the Masters is underway at Augusta National. At last check, Patrick Reed sits atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Intelligence with Isabel Lee and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that as always. We got Isabel Lee sitting in for Scarlett Fu today. Scarlett's on assignment. I think she'll be back Monday. That's the plan. Her people are relaying to me. We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube and at Bloomberg.com. Slight decline in stocks today after that sharp move higher. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Carmen Reinke. Carmen, what do you got for us today?
Yeah, so the first one that I'm looking at this morning is CoreWeave. So this is ticker CRWV. It's back in the green, so it's been a little bit volatile. We see that a lot in shares of CoreWeave, but the stock was up as much as 4.2% today. This is on track to close at the highest since February after striking another larger $21 billion deal to supply computing power to Meta through 2032. So this is important because Meta is one of their biggest customers, and I think the total contracts that they now have with the company is about $35 billion. So really significant there for CoreWeave, which again is sort of like a cloud provider.
Yeah, Paul and I were just talking earlier today how these deals just keep on getting bigger and bigger, and honestly, the numbers are quite unimaginable. What about SanDisk?
Yeah, so we're also looking at shares of SanDisk. This is ticker SNDK. This is up about 5.5% today and on track for yet another record high. We've seen these memory stock names just totally take off this year. And SanDisk is up today after analysts at Bernstein boosted their price target to a street high of $1,250 from $1,000. And they're citing strength in prices for memory chips, which is the thing we've really seen lift the entire industry, that they've been able to boost these prices. So the analyst at Bernstein is saying the market is significantly undervaluing earnings power and sustainability of this cycle. And in a blue sky scenario, said that SanDisk shares could hit $3,000. They're currently trading at about $825.
Wow.
Stock up 5% today, up 245% year to date, all-time high. Trailing 12 months, 2,150%.
Oh.
I can't even, I've never seen that before.
Yeah.
Particularly for a company with, $126 billion of market cap. This isn't like a penny stock. Real equity value is being created here. It's just extraordinary.
It's had an absolutely incredible run.
Good for them. All right. One more.
Yeah, let's look at Constellation Brands. So this is ticker STD. Shares are up about 6.4% right now. This is the most intraday since January 8th. So this actually reversed from last night. The company had earnings. Investors initially, I think, found their guidance kind of disappointing, but now analysts are saying that they think that this is going to be a conservative guidance. It's going to prove to be conservative, and that ultimately fiscal 2026 ended on a positive note, and there should be momentum continuing into March. I know you were mentioning Modelo earlier. I agree. I see it all over the place.
I know. It's good actually, particularly when you're sitting on a beach on a hot day. That's how I like to use the Modelo. So good stuff. Carmen Reinecke, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Commodities on the move again today. The most notable one is WTI crude oil up over 8% today. We're now at over $102 for WTI crude oil. So completely at the mercy of the news flow here. Mike McGlone, he's been following the oil business forever and all the other commodities. He's a senior commodity strategist for Bloomberg Intelligence. Mike, just the traders are just kind of whipping these things around here today. What do you make of what we've been seeing in crude over the past few days?
Well, hey, Paul, looks like we found a good kind of apex of the bell curve for this year, around $100 a barrel. That's both WTI and Brent. And for it to get above that high 120, that's a pretty severe global energy crisis. We're already in that. For it to go back down, I think that's where it's going to go. Just look at that December contract. It's right around 75. But the key theme is we're definitely seeing what's a known severe demand destruction. But we're not seeing it all yet is wealth reversion. And that is my biggest fear, because we've never had surging volatility like this in crude oil and gold and copper and silver without it trickling up the stock market. Right now, that S&P 500 is unchanged on the year. So the key theme, I think, now is, do you sell here or you wait and hope you get lucky? And I look at things like what gold did last year, and by Bitcoin collapsing, I think most prudent investors are probably thinking it's probably best to just get out a little bit and go into Ira Jersey space and hang on to treasuries.
How do we know whether this will be the new normal, whether it'll be a structural permanent shift? We have Goldman saying that oil can stay above 100 a barrel for the rest of the year if the strait remains closed in the next month.
So think of what that means. That means as we get to the midterms, the Republicans will get toasted. Probably the next presidential election will shift over. That means global recession. President Trump's legacy probably ruined. Now, that's why I look at that December crude oil future going to where the puck's going. That will be front month, right before midterms. So right now, it's right in the middle. It's between 100 and 50. Now, what if we go back to 50? 50 is normal reversion. It's kind of what I expect. And it means some things are somewhat resolved in the Gulf. It also means that the world's tilting towards that little bit of a recession. Also, it helps Mr. Trump get what he wants in lower energy prices. The problem is he might also get lower stock market. So when you make calls like that, I say that's severe repercussions for the person who made this decision to invade Iran. So I look at it as it's unlikely, it could happen, but that forward curve, where the puck's going, it's already saying it's at 75. I think it's more likely to be 50 by midterm, so I'm happy to sell to Goldman Sachs on that one.
That's perfect. Mike, I know as a commodity strategist, you have an innate understanding of supply and demand and how that moves commodities. Is there a fundamental call to be made that, hey, no matter what happens to supply and demand, there's going to be some higher risk premium in the price of crude? Maybe it's just Brent, because it's got to go through this strait, which it is not as safe today as it was 6 months ago, and that's probably not going to change.
Well, it's important to go there, Paul, because think of what 2022 did when Russia invaded Ukraine. Accelerated that trend of technology replacing fossil fuels. It's going to do it much more now. What country in the world is thinking, oh, yeah, maybe I should secure my energy in a better way? The Gulf's going to be a completely different world in 5 years. There'll be ways to get around it. And one thing that's really significant is that excess of supply versus demand in the U.S. running around 8 million barrels a day, if you include Canada, will increase, which means energy dominance, superabundance in the U.S., and not just energy, and corn and soybeans and biofuels will increase. So advantage U.S. in this one, exporting U.S. But think of Landman. What's Landman doing in this? Thinking, oh, I'm selling forward and bringing on that supply.
All right, let's switch gears just real quick before we let you go. It's April. What's the average corn farmer, soybean farmer? What are they doing? Are they planting now? What are they doing?
Yeah. They're just starting to sow in the south. And soybeans and corn, when you start looking at it, ground's a little bit dry, but it's getting better. The key theme is we had a bounce in corn to near $5 a bushel, and inventories now are almost 40% above they were last year. We've had a bounce in soybeans to near $12 a bushel. Now, those are the contracts that'll be front month, around the November elections, and farmers are all saying, okay, let's sell forward because we have massive supply coming out of Brazil. The key thing you need for these prices to go higher is, number one, a drought in the U.S. and crude oil to stay above 100. And we're seeing hedge funds getting way long for that. And that's why I put out the other day, I'm like, yeah, it's probably a spot you're supposed to sell. And if they're lucky, prices just stay high. But typically, these prices drop below average cost of production, which means below $4 in corn and probably around $10 in soybeans.
Good stuff, Mike. We'll do pork bellies next time. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence, down there in that commodity capital of Miami Beach, of course. Lots of economic data today. We got some CPI tomorrow, a lot for the market to chew on, a lot for the Federal Reserve to chew on as well. And we want to talk to Fed, we want to talk rates, we want to talk to Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, safely ensconced down there in Princeton, New Jersey. I understand some London folks have invaded Princeton today. That didn't go well for them last time, so see how it goes this time. Ira, thanks for joining us here. What did you make of some of the eco data we got today and maybe the CPI tomorrow?
Yeah, so the only real major surprise was that personal income was actually down a little bit in the month of February, which we were expecting a modest increase, kind of on trend. So that's something worrying. Now it is only 1 month's numbers, so you kind of have to take that a little bit with a grain of salt, and we want to see if there's a bounce back in that. But that is something to kind of look out for, and one of the things that we have to we definitely have to consider for the future if you wind up with much slower personal income growth, because remember, incomes are the other piece of the job picture, right? So when you have a significant amount of job growth, that's fine, but if incomes aren't rising along with that, it's a problem. And even though we had 178,000 new jobs created last month, hours worked were down. The wages did not grow nearly as quickly as we thought. So it actually was not a great income picture, and so this is certainly a concern. Everything else was more or less in line. Did you ask me about tomorrow, Paul? Because tomorrow's CPI, and that's going to generate some headlines for sure.
And you brought it, the segue is perfect because your note is mind the gap, the increasingly diverging path of PCE and CPI. So what is driving that, and which one does markets really care more about?
Well, the market cares about CPI in large part because there's actually instruments like the TIPS market that that use CPI as the base of its inflation. So if you get a high CPI print, that means that your tips will get a little bit more principal added to them. So CPI is kind of what matters for the nominal treasury market. The PCE deflator is, of course, what the Federal Reserve targets, and they use because they think that the basket is a little bit better, and the way it's calculated might be a little bit more accurate to the way the real economy works. And the difference is sectoral. So the reason why you have these different, the gap between CPI and the PCE deflator is the fact that you have different baskets. So most of the data is the same. So between CPI and PPI, you have nearly all of the information you need to calculate what the PCE deflator should be. It's one reason why usually most economists are within a tenth of it. But that gap has changed largely because you have different baskets, and the prices are changing in different sectors in those baskets, and that's the reason that you have this gap. It used to be that the PCE deflator was below CPI. That hasn't been the case for the last couple of months.
Ira, what's the bond market? What's your treasury bond market telling you about inflation expectations here? Because just to the average consumer, we're feeling it at the pump here.
Yeah, well, inflation expectations longer term, keep in mind there's a level versus a change issue that I think a lot of people have psychologically when they think about inflation. So if gas prices go up to $5 a gallon, for example, which hopefully it doesn't happen, but if it were to happen and then stayed there for the next 2 years, then that means, hey, we have massive inflation this year, and then in 2027 and 2028, inflation's zero, right? That's because the price hasn't changed, even though it's still at $5 a barrel. So what the market is telling you is we are going to have higher inflation this year, over 3% inflation year on year over the next 12 months, but then it's going to moderate again back to around where it was last year. Now, keep in mind, the TIPS market and the bond market has actually not been a particularly good predictor of where inflation is going to be in 2 years, 3 years, 4 years. The perfect example of that is look what the market was pricing in 2021, and then the inflation, the 9% year-on-year inflation we got in 2022 and part of 23. So the market has not done a very good job predicting forward inflation. So if you think that inflation is going to be much higher, then maybe TIPS break-evens are far too low. But be careful with TIPS, because if you just buy a TIP and you think, oh, I'm going to buy a TIP and I'm going to make inflation compensation, on a mark-to-market basis, that can be very tricky, because if interest rates go up while inflation's higher, you could actually lose money on interest rates going up, even though you're getting paid for the inflation compensation. So be a little cautious. We've written a lot on that on the Bloomberg Terminal.
And you can check that out, all of Ira's work at BI Go, and that's where you'll find it. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence down there in Princeton. Boy, I see even the NASDAQ's actually turned positive here. Go figure, up 24 points, and the S&P has erased all of its losses for the day. Absolutely flat on the day. The Dow's off 105 points. Coming up, we're going to check in with Anna Rothman, CEO and founder of Grenadilla Advisors, get her thoughts on these markets. And Red Brown, Bloomberg Consumer Reporter, is going to give us the latest on Constellation Brands, which had some weak earnings there, citing their beer business. So we'll get the latest there. We got the markets again, we got S&P flat, the Dow minus 110, the NASDAQ up 20. So again, correcting off of those lows earlier this morning. The yield space 10-year Treasury yielding 4.30, pretty steady right there. Despite the fact that we've got oil higher. We've got the WTI crude oil up $7. That's about 7%. $101 for a barrel of WTI crude. Brent, a little bit lower, $98.80. It's still up about $3.80 here today. Gold, it is up about $60, $4,000, just under $4,800 per ounce for gold. Bitcoin, pretty steady here at 71,000. More coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Amy Morris. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Indexes clawing back some of this morning's losses and oil giving back some gains. We check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the upside. NASDAQ is about 1/10% higher. The Dow about 1/10% lower. The 10-year Treasury yield at 4.3% and the 2-year yield at 3.77%. WTI is about 7% higher, now at $101 a barrel. Brent crude about 3.7% higher, around $98 a barrel. And Bitcoin 0.3% higher at $71,000. Intel says Alphabet's Google has committed to using future generations of its Xeon processors and other chips. As part of the agreement, Google will customize Intel's IPUs, which handle networking, security, and storage. Intel shares more than 3% higher, and Google is about 0.5% lower. And round one of the Masters is underway at Augusta National. At last check, Tommy Fleetwood sits atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Now back to Bloomberg Intelligence with Paul Sweeney and Isabel Lee.
All right, Amy Morris, thank you so much. We appreciate that. We have Isabel Lee sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and at Bloomberg.com. Let's get right back to it here. Adam Rothbun joins us, Chief Executive Officer at Grenadilla Advisory from Cleveland, Ohio. Anna, thanks so much for joining us here. What are the conversations you've been having with your clients over the last 7 weeks as this black swan, for a lot of investors, came out of nowhere? That's why we call them black swans, I guess.
Yes. People haven't really been asking me too many questions because they do get my weekly updates. And honestly, what I've been talking about in those updates is volatility comes, as you say, sometimes out of nowhere. Sometimes it's all about how you construct a portfolio based on who you are and what your goals are. And those portfolios are supposed to actually withstand a lot of these unexpected events. So part of that is the portfolio construction. The other part of it is to not read the news too much because I can't control how they feel when they read the headlines, and to just focus on, what is actually happening around them. So part of this is psychological management, and part of it is just providing them with the facts.
Psychological management is very interesting because for Paul and me, we have to read every headline, every second it comes. And you also mentioned a lot of the war shock was already priced in. So if tensions do flare up again, do you think markets will just shrug those off?
Yeah, I think it will shrug. I think the month of March was really the shock of the magnitude of the destruction. Every day there was more and more. And, we would hear from Department of War, we would hear from President Trump, and we would hear from Iran. And a lot of the times they were contradictory. So I don't think the markets really knew how to price things in. I think that is behind them, in the back mirror. And also, I think we're going into earnings season. And so sometimes the markets actually shift its attention when things are priced in.
So given that backdrop, Anna, where do you see value out there? Where do you see opportunity? What are some of the conversations you're having with clients these days?
Yeah, so in terms of portfolio management, we saw that rotation earlier in the year, and maybe you can even say at the end of last year, from growth styles and tech names into some of the value style names. And we saw that into this year and coming into the war, and then everything just kind of broke apart. I do think that there's room to add to the tech names. If you look at some of those names, they're about 30% down from their recent peak. And so they're starting to look more attractive, while some of the more defensive sectors that have really done well since the beginning of the year, like consumer consumer staples as well as utilities, they're starting to look a little bit more expensive, right? So I do think there's going to be a rotation. I think the markets will definitely look into that, especially with earnings coming. We do expect the tech names to actually give us really great earnings.
What about oil? I mean, even if this ceasefire holds, oil is near $90 or even $100 per barrel. Are we looking at a structurally higher energy price environment from here on out?
I think so. You know, there were two problems with oil. One was the choke point at the Strait of. The other one was the potential destruction of actual production facilities. You know, in the middle of the war, we started to see the destruction of production. And Exxon, we know, came out on Monday and said that 6% of their production capacity had been, you know, damaged. And it's going to take a long time for that to come back. So when you have damage to production, and that means you're going to have less supply, I do think that oil prices, while not at their peak during the war, it'll come down, and it has. I don't think it'll go back down to the pre-war levels, and that has implications for a lot of things, including what you pay at the pump and inflation, as well as what Federal Reserve might be looking at.
Private credit concerns out there in the marketplace. How do you view it, Anna? Is that a systemic risk for fixed income markets?
You know, my view is that it's not. And if we keep panicking about it, it might become systemic. Sometimes there's a self-fulfilling prophecy aspect to this. Private credit is by nature idiosyncratic because you're literally going out there looking at things deal by deal and actually writing contracts deal by deal and writing covenants deal by deal. In a way, it's sort of opposite of systemic. So I don't view it as a systemic risk by itself. I think that for a lot of wealth advisors and investors, what really matters is what you choose. So if you choose managers that are sticking to the high quality loans, they're sticking to their the mandate of writing really strict covenants, then you're going to be okay. There has been a lot of loans out there that have maybe not been as strict, and their underwriting process has gone down, maybe, and they're finding that. And in fact, you know, Blackstone, Davidson Kempner, these are, you know, opportunistic credit managers. Another way of saying it is distressed credit. There's distressed credit out there, and there are going to be managers that come in, right? So a lot of this has more to do with selection and what you put into client portfolios than worrying about something that might be systemic.
Anna, thank you so much, as always, for chatting with us. Always appreciate getting a few minutes of your time. Anna Rathbun, Chief Executive Officer of Grenadilla Advisory, based in Cleveland, Ohio. Always love talking to folks from the great Midwest, get a good perspective on things here. Earnings, they're out there. Constellation Brands was last night after the close. Stocks trading higher here. I thought some of the guidance was a little soft, but I guess the street says, hey, it's better than we thought it was going to be. But let's break it down with Red Brown, Bloomberg Consumer Reporter. Red, what do we hear from Constellation about their business?
Yeah, you're right. The guidance was a little soft last night, but I think this morning on the call, the company kind of made the case that March sales were quite strong. They feel like that momentum in this early part of the year is going to kind of carry on through the summer. And with that, they're planning to kind of support the early momentum with, I think the word they used was an aggressive marketing campaign. So if you think about the big events we have in the summer, makes a lot of sense. We have the World Cup. The company expects that to be kind of a growth driver, especially for their bigger brands, Modelo, Corona. You know, we all associate those with the summer as well. So makes a lot of sense. So I think that's kind of explaining a little bit of the share move that we're seeing. The question now, I guess, becomes whether or not that this is just a blip or they're still kind of subject to the sort of secular decline we're seeing in the other parts of the alcohol industry.
How much of this softer outlook is macro-driven? We know that it's not really a good economy. Consumers are feeling pinch as opposed to with the products themselves.
Yeah, no, the company is making the case with when they kind of justified their guidance that it is the lack of economic visibility. They also withdrew their 2028 guidance as well for the same reason. They say we just can't see that far out in advance at the moment. But again, it kind of comes back to this question about whether or not it is an economic situation that they're kind of dealing with right now, or it is just they're subject to the kind of consistent decline we see in the beer market. Analysts are kind of split on what the real situation is.
You mentioned some of their brands, Modelo and Corona, brands that identify with the Hispanic audience in this country. The company in the past has called out the change in immigration policy is having an impact. What have they updated their thoughts there?
Yeah, so during the call, they said they actually saw a sequential improvement in those zip codes that have a higher Hispanic population. So, I guess it doesn't tell us a ton. If it's just a sequential improvement from sort of a lower start, right? They didn't give any sort of specific details on just how much of an improvement it was. So I guess it's something that we still need to kind of keep an eye on.
What about, the company in general has benefited from premiumization. Are we seeing customers trade down, and what trends are they pointing to?
Yeah, the company said that trend is continuing, so they're still seeing some strength within their premium brands. I think what may be going on is that people are drinking less, but when they do drink, maybe I'll reach for the nicer options. So we've seen that in other parts of the alcohol industry as well. So spirits has been pushing premiumization as well. So that trend might, maybe we don't think of beer as necessarily always like a premium option, but there are sort of ways to trade within the category.
All right, you're of that demo, a younger demo.
Thank you.
Are you guys drinking beer? Are you drinking the White Claws and all that iced tea stuff and all that?
Yeah, no, stuff? It's, I guess when you go, obviously New York's a specific, beer, alcohol culture, bar culture. But I guess when you do go out there, you do see more people kind of holding cans. A lot of the times it's less a White Claw, it's less seltzers these days. It's more these ready to drink. So think of like a Surfside, which is like a spiked lemonade, a spiked iced tea. Those are really popular right now. And it all kind of comes back to this idea that people are just changing the way they drink. Yeah. They're being more conscientious with how they drink. They still want to be social, be out, talking to people, they let their inhibitions go, but they want to not deal with all of the health consequences when it comes to drinking. They want something that's lower calorie. They want something that's lighter, easier to drink. So I guess it's a debate that's been going on for a long time of are younger people actually drinking less? It's really kind of hard to tease out in the data, or they're just changing, like we're saying. They're just picking different things.
Constellation, are they happy with their portfolio of brands, or are they always buying and selling stuff? What do they say?
I think right now they should be happy. They have some of the most popular brands, like Modelo, obviously unseated Bud Light a few years ago as the most popular beer brand in the country. Corona, I think, is 5th. They also have Pacifico is one of the highest growing brands as well. So I think that they should be pretty happy with that stable. But, we've seen deals happening in, obviously, the sort of rumors around Brown-Forman potentially merging in a couple of weeks ago. So they're, in this sort of shrinking market to gain growth, there's going to be probably more of these sort of swaps, in portfolios.
All right, Red, thanks so much for joining us. Really appreciate it. Red Brown, he's a reporter for Bloomberg News, breaking down some of the earnings from Constellation Brands. STZ is the symbol. I don't know how they got to that from Constellation Brands, but that's the symbol. Stocks trading up about 6-7% today on the news. So looking at the Bloomberg reporting, the guidance was a little soft, but people are saying, hey, this is a conservative management team. They probably put out some soft numbers, and they're going to go out and beat them. That's kind of what they do sometimes. We've got green on the screen, folks. So those 1% declines from earlier today, it's a thing of the past. We've turned around. We got the S&P up 15 points. The Dow up 45 points, and the NASDAQ up 62 points. So about 2 to 3/10 gains here. Again, we were down about a 1% before, but we still have WTI crude oil. It's high, not as high as it was during the day. So right now, it's right at 100 for WTI. Now it prints a 99 number. Had been as high as about $102.70. So coming off of the highs of the day, and that's having a positive move on these markets. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
11:40 on Wall Street. I'm Amy Morris, and this just crossing the Bloomberg terminal. Israel says it has agreed to direct talks with Lebanon to focus on disarming Hezbollah. We've got green across the screen with indexes modestly higher. Checking the markets now. We do it for you all day long here at Bloomberg. The S&P 500, 0.25% higher. NASDAQ, 0.3% higher. The Dow is up about 0.2%. The 10-year Treasury yield at 4.28%. 2-year yield at 3.76%. NYMEX crude oil is 5.8% higher. That's around $99 a barrel. And Brent crude is right at $97 a barrel, about 2.25% higher. A bit of a jump in weekly jobless claims. Bloomberg's Michael McKee with those numbers.
219,000, a big jump up from 203,000 the week before, but not one that would tell you that the economy is really slowing down and companies are starting to let people go. Continuing claims, 1,794,000 fall from 1,832,000.
Bloomberg's Mike McKee. Consumer spending barely rose in February amid persistent inflation because of the war in Iran. Inflation-adjusted consumer spending increased 0.1% after stagnating in January, with core PCE increasing 0.4% from January. The latest spending figures are consistent with a consumer who has grown more cautious over the past 6 months amid cost of living concerns and a sluggish job market. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return to Bloomberg Intelligence with Isabel Lee and Paul Sweeney.
Amy Morris, thank you so much. We appreciate that. We got Isabel Lee sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Well, the war in Iran, President Trump, Secretary of Defense Peter Hegseth, extolling the military successes, and clearly the U.S. military is performing extraordinarily well. There's been a lot of success, and a lot of those military goals have been achieved, but there have been a lot of maybe unintended consequences, one of which is the Strait of Hormuz, which was an open seaway forever, seemingly, is not anymore, and that's wreaking havoc on global trade. We will get a sense of what's going on maybe within the Trump White House as we begin potentially here this weekend some truce negotiations. For that, return to Tim O'Brien. He runs our Bloomberg Opinion group over here at Bloomberg News. He knows President Donald Trump for decades, well before President Trump entered politics, and has a good insight into the thinking of President Donald Trump. So, Tim, let's start with some of these unintended consequences. It seems like they should have been, I guess, forecast or gamed out by the administration and by the Pentagon and by the State Department, but the Strait of Hormuz being closed is a big issue.
Right, because it's not just any body of water. It's a body of water through which about a fifth of the world's oil supply transits, and other parts of the world, particularly Southeast Asia, is much more dependent on that oil supply than the United States is. So choking off that transit point has economic consequences. It causes geopolitical disruptions. And I think the Iranians have been aware of that for quite some time, that it's ultimately, maybe even more than its nuclear program or the terrorism that the theocracy in Iran backs, is that choking off the Strait of Hormuz may be one of its most actionable weapons. And they've certainly learned this through this conflict. And I think people who are experienced in the region also understood that would be a possibility. So the question is raised is, if the White House knew this was a problem and didn't adequately prepare for it, then that's a problem. If it didn't know this was a problem, then that's also a mark against the White House. And that's not a political or an ideologically based observation. It's just about, I think, the practicalities of what we expect out of sound management within the White House.
So talk to us about that. I mean, we've been receiving a drip feed of headlines. It's been relentless, nonstop, 24/7, quite literally. With the president that you know behind the scenes, can you contextualize his decisions? Are you surprised by some of them, or has it been, because you talk about his character in your opinion column?
I am not surprised that he acts viscerally and instinctively. That's who he's always been. But I don't think any of us are ceased to be surprised about the situations in which it occurs. And the stakes keep getting higher around the situations in which it occurs. We will probably spend about $100 billion on this war. Lives are being lost.
economic damage is being visited upon us. Inflation is being spurred. The New York Times had a very strong accounting of the chronology that led Trump to make this decision. He was clearly heavily lobbied by the Israelis, almost to the point, I think that's because of his proximity to Bibi Netanyahu. He trusts Netanyahu. He shares some of Israel's goals. And Netanyahu, I think, presented a strike on Iran as a surgical operation, and it's become a morass. And then the people around Trump, when he was presented with this opportunity, I don't think pushed back hard enough. In some cases, I think because they're ill-informed themselves. In other cases, I think they're intimidated by him. But again, this gets to this issue, Isabella, the nature of leadership. I think a confident leader welcomes input from others and welcomes others whose expertise may be even deeper than the leaders. And that, I don't think, is the case here.
Tim, this war in Iran also has political ramifications. It is polling unpopular. It is unpopular in this country significantly. Again, there are some unintended consequences that are probably not breaking the way of the administration. How do you think the president's thinking about the political ramifications? It is a midterm year. I'm sure he's getting pressure from Republicans as well as Democrats.
I mean, I think the tricky thing with the president is he doesn't want to lose at anything, and he's very aware of his public image, and I think those two things incent him to bob and weave around different things. And we saw that in I think a less seismic way with the tariffs back and forth that occurred after last April and over the last year. And I don't think he thought through what the economic consequences would be to gutting free trade in an onerous tariff regime. And I don't think he thought through what the consequences for energy markets would be by an invading Iraq. And clearly the Democrats in the New Jersey gubernatorial race, the Virginia gubernatorial race, the Wisconsin referendum yesterday, a Georgia race that was closer than anyone expected, affordability and the cost of living are huge factors in that. And the Republicans are staring at a tough midterms in November because of affordability, and Trump's well aware of that.
So given that, what do you think the president's directives to Vice President Vance and the negotiating team that's heading to Pakistan as we speak to negotiate?
One would hope that his directives are, let's treat this like a face-saving moment. Let's use this as an off-ramp, and let's try to clean up this epic mess we've created. The problem is both Trump and the leadership in Iran often are thinking beyond the practicalities of the moment. And there may not be enough negotiating room between them to actually get a resolution. And it's become a deeper conflict, and the economic consequences are going to be devastating.
So your column, it's very strongly written, and I read word per word, and you make some really valid points and strong points. One of those, you said the reality is Trump was never an adept deal maker. But I thought that coming into the presidency, that's what a lot of people were thinking, that he's a businessman first before maybe a politician. Talk to us how you arrived at that conclusion.
Well, it's just based upon the facts. You know, he presided over 6 corporate bankruptcies. He almost went personally bankrupt. He was a creature of debt for the most part. He's a very adept self-promoter, and he's a smart marketer, but he's never been a good business operator. He lacks the patience and strategic acumen to be a good business leader. And I don't think people dug deeply enough into his background to assess that. And he bears all the hallmark as a bad deal making in the current administration. I don't think the tariff plan was marked by excellent deal making. And I think he's made a series of threats toward Iran over the last week that I don't think he was actually prepared to follow through on, one would hope, because he's talking about wiping out the entire civilization. And if you can't deliver on extreme threats and your opponents know it, they can call your bluff. And that's what's happened in Iran.
Tim, thanks so much for joining us.
Thank you,
Tim
Paul.
O'Brien, Senior Executive Editor for Bloomberg Opinion, joining us live here in our Bloomberg Interactive Broker Studio. You can find Tim's opinion piece as well as all of Bloomberg News. You can just go to onto the Bloomberg terminal and go top go. That's where I find it. Or you can find it on Bloomberg.com/opinion. It's all there. Some great stuff. Markets, they've turned around, folks. Go figure. The S&P's up 23 points. The Dow's up about 100 points, and the Nasdaq's up 100 points. That's about 0.4%. Oil still higher, but off of the highs of the day. we'll keep on top of that. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee, sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. This is the Bloomberg Intelligence program. One of the news that we covered earlier today, I want to cover it from a different angle, is the NFL. The DOJ is investigating the NFL on anti-competitive tariffs, and it relates to the media rights deals that they have. So, the media rights deals are so important to these leagues. It is a primary driver of value for the franchises across pretty much all sports. And it's equally valuable to the broadcast networks and to the cable networks and to the streamers that put this stuff out there because, boy, advertisers love live programming. Geetha Ranganathan, she's the expert here. She's the U.S. media analyst here. So, Geetha, just talk to us a little bit about this DOJ investigation into the NFL. What are the big media companies who are so vested into this? What are they saying?
This is actually good news, Paul, for the media companies. So remember, we are right smack in the middle of what is expected to become a very, very contentious media rights renegotiation process with the NFL. So the NFL is seeking something like about a 60% increase in its rights fees, basically from companies like Fox, Paramount Skydance, from Comcast, NBC, from Walt Disney. Those are the companies that are the most exposed. And with the DOJ going after the NFL on anti-competitive practices, it looks like what they're saying is that the NFL is trying to harm consumers by basically making it more and more difficult to access their programming. So we know that the NFL in the past has tried to sell these smaller packages to streamers, whether it's Christmas Day games to Netflix or the Thursday Night Football package to Amazon. They tried to to carve out these smaller deals basically in a move to kind of maximize monetization. But obviously that's not sitting well with the DOJ. But this is good news for the broadcasters because I think, we think it gives them definitely better negotiating leverage when they go back to renegotiate deals this year with the NFL.
What about, let's now head to Disney. They're ready to cut 1,000 jobs, largely in marketing. You've talked a lot about efficiency. So where exactly are these job cuts happening? And how do you make sure that, or as an analyst, how do you make sure that these don't hit the creative engines of Disney and really affect the future of the company?
Yeah, so it looks like, Isabel, these job cuts are really happening in the marketing departments. So let's just look at, if you kind of take a step back and look at the whole Disney engine. I mean, they have over 230,000 employees. So, cutting about 1,000 jobs, it's less than 1%. It's really just a drop in the bucket. But, the layoffs are really part of this whole cost cutting. And as you just said, the efficiencies, ever since Bob Iger returned to Disney as the CEO in November of 2022, he embarked on this whole efficiency cost-cutting program. He eliminated about 8,000 jobs, which resulted in about $7.5 billion of cost cuts. And really, this latest wave of another 1,000 layoffs is just part of that. So it is not in any of the creative parts of the company. This is really more in the marketing department. So we already know that, Disney has many multiple operations. So they have like a whole team supporting Disney Plus. They have a very similar team supporting Hulu, which is basically, a product that is very soon going to be integrated. So Disney Plus and Hulu are going to become one consolidated integrated product, which means there's really no need to have two separate teams. And so this is just really a process of streamlining and removing redundancies and increasing the efficiency in the business.
Geetha, what's the latest on Paramount, Skydance, and Warner Brothers Discovery? When is that deal going to close, and what's some of the feedback you're getting from investors about this deal?
The deal, Paul, is expected to get regulatory approval and to close by September 30th of this year. So we have a few more months. It looks like some of the biggest investors are recommending that, Warner Brothers shareholders obviously vote in favor of the deal. That vote is set for April 23rd. So it definitely looks like they're not going to head into any big regulatory problems, something that we were kind of anticipating with Netflix. This path seems a lot more cleaner, a lot more smoother. In good news for Paramount, what they've done is they've kind of secured the Middle Eastern funding. So they've got about $24 billion from, some sovereign wealth management funds. This was kind of a little bit of an investor concern, just kind of given all of the geopolitical tensions and the regional conflicts there. But with that kind of locked and loaded, I think investors are definitely kind of heaving a sigh of relief here. And it looks like everything will go, as per plan. The question really, Paul, is whether they're going to be able to deliver after the deal closes. That's really what investors are going to be looking for, especially with the $6 billion of synergies that they've outlined.
And a lot of debt on the balance sheet. Talk to us just real quickly how the market's thinking about their leverage profile, because they're going to be one of the most levered media companies out there.
Absolutely right, Paul. 7 times leverage, about $8 billion in debt when the deal closes. So that is really what the market is worried about, as you pointed out. And again, we have so many different parts here, but I think the biggest worry is really the exposure to the linear TV ecosystem. It's about 55% of revenue still is going to come from the linear TV bundle. And really, it's about how well they can manage that. So this is going to be a wait and watch story. We've not seen very good results in the past. So fingers crossed.
And just to put it in context, when I lent money to these guys way back in the day, senior covenant, guess what it was? 4 times net debt to cash flow. Now they're going, and then net debt to EBITDA. That was my covenant. Geetha, thanks so much. Appreciate it. Geetha Ranganathan, U.S. media analyst for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Isabel Lee, thank you so much for sitting in for Scarlet Fu. That was fun. And
very fun.
We'll do that, I'm sure, again
eventful.
At some point in the future. Hey, we got green on the screen there, folks. This is Bloomberg. Good morning.
is CBS News on the Hour, your home for original reporting.
I'm Cammie McCormick. The ceasefire between the U.S. and Iran is holding, but it's run into some problems with Israel's continuing strikes on Hezbollah in Lebanon. Iran wants them to stop. The White House says that's not part of the deal. CBS's Elizabeth Palmer is in Tel Aviv.
The Iranian-backed militia Hezbollah fired rockets into northern Israel this morning. That in retaliation for Israel's ferocious attack on Hezbollah yesterday. Last night, Iran warned that the strikes might also kill the ceasefire. But it didn't pull out right away. It said to give the U.S. a chance to intervene and calm things down.
And Israel's prime minister has just authorized direct negotiations with Lebanon as soon as possible. On Capitol Hill, Caitlin Huey-Burns reports Democrats are demanding the House return to vote on a resolution to permanently end the war.
The Democrats are saying, look, this resolution that they've reached this 2-week ceasefire is very fragile. And also, just a few days ago, the president was talking about wiping out an entire civilization. So in the Democrats' view, how can they not introduce something to limit the president's power here?
President Trump met yesterday with the NATO Secretary General, but apparently wasn't swayed. He's been angry at NATO allies for not helping to reopen the Strait of Hormuz. CBS's Natalie Brand at the White House.
The White House press secretary said that President Trump was disappointed, continues to be disappointed with NATO, and, quote, they were tested and failed.
Florida prosecutors want to see Tiger Woods' prescription drug records a week after his DUI arrest. Correspondent Michael Wallace reports.
State attorneys plan to issue a subpoena to the golfer's pharmacy, seeking copies of all his prescriptions. They want to see his dosages and whether any of the drugs come with warnings about driving while taking them.
How much have you had to drink today?
None.
None? Do you take any medication?
I take a few, yes. Woods passed a breathalyzer test after his crash in Jupiter, but refused a urine test. Police say they found 2 hydrocodone pills in his pocket. Woods pleaded not guilty to driving under the influence. Michael Wallace, CBS News.
Space consultant Bill Harwood is monitoring the Artemis II mission, preparing for a return to Earth tomorrow.
Just the excitement of reentry. You know, outside of launch, this is the most dynamic phase of flight. When they hit that atmosphere, they're moving at 25,000 miles an hour. That's fast enough to fly from Los Angeles to New York in about 6 minutes. So that's going to be an exciting time indeed. But hopefully it'll all go well and they'll splash down a little after 8 p.m. Eastern time Friday evening.
On Wall Street at this hour, stocks are higher now. The Dow up 234 points. This is CBS News. More young people are souring on artificial intelligence, Deborah Rodriguez reports.
Sure, lots of Gen Zers say they're using AI, but a growing number aren't proud of it. A new Gallup survey finds more than half of 14 to 29-year-olds are using generative artificial intelligence regularly, while the percentage who say they feel hopeful about the technology has declined sharply from 27 to 18%. While many acknowledge AI can make them more efficient at school or work, nearly a third say it makes them feel angry. Close to half of Gen Zers surveyed say the risks of AI outweigh the potential benefits at work. Deborah Rodriguez, CBS News.
Another survey shows AI will dramatically change the nature of work, not necessarily with layoffs, but what people will be doing. Some analysts are urging business leaders to focus on how AI can augment capabilities rather than laying off workers. I'm Cammie McCormick, CBS News.
from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's day 2 of the ceasefire between the U.S. and Iran, but the focus is on Israel and Lebanon. Welcome to Balance of Power. I'm Kaylee Lines, tracking developments out of the Middle East as Israel says it has agreed to direct talks with Lebanon over disarming Hezbollah after conducting strikes in and around Beirut that Iran said violated the truce agreement, even as the U.S. pushes back on that notion. We'll get the latest from the White House with Bloomberg's Tyler Kendall and analysis from Jennifer Welch of Bloomberg Economics. Plus, we have to talk about today's economic data as well, especially ahead of CPI tomorrow. We will do that in a short time, but we begin, as always, with a check on financial markets. And for that, we turn to Amy Morris here in Washington. Hey, Amy.
Hey, Kaylee, and you're absolutely right. Now that Israel has agreed to those talks with Lebanon, that has sparked a rebound on Wall Street. We check those markets for you all day long here at Bloomberg. The S&P 500 now up 0.6%. NASDAQ up 0.75%. The Dow up 0.5%. The 10-year Treasury yield at 4.26%. The 2-year yield at 3.74%. NYMEX crude oil, WTI, is up 4.2%, around $98 a barrel. And Brent crude up just 1% now, around $96 per barrel. Remember, earlier today and yesterday, there was around $100 a barrel. Elevated oil prices from the war are raising fears of stagflation in the market. White House economic advisor Kevin Hassett says he still sees the economy growing by 4 to 5% this year, thanks to deregulation and tax cuts.
You saw that when you saw the markets celebrate yesterday when they thought that this would be over. I think our excellent negotiating team will finish the job, and then we'll be back on track to one of the best years ever.
White House economic advisor making those comments on Fox Business. American Airlines increasing its checked bag fees, making it the latest U.S. carrier to bump up prices to help absorb surging jet fuel costs caused by the war in Iran. American follows Delta, United, and JetBlue in raising those bag fees. Shares of American Airlines about 0.5% lower. CVC Capital Partners is seeking co-investors to help bankroll its proposed 10.9 billion euro takeover of Italian drug maker Recordati. Sources say deliberations are ongoing. There's no guarantee the discussions can lead to a deal. CVC shares more than 1.5% lower. Round 1 of the Masters is underway at Augusta National. And at last check, Kurt Kitayama sits atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Risk appetite hanging in there for a second day, it seems, amid optimism around a cessation of hostilities between the U.S. and Iran. Of course, this is day 2 of the ceasefire, fragile as it may be. And we heard from President Trump himself last night that the U.S. military position, at least, is going to stay at the ready in the Middle East until there is a finalized deal between the two parties for a permanent end to this war. Of course, progress toward that will, in theory, be attempted to be made at the very least in Islamabad on Saturday morning as Vice President J.D. Vance leads a delegation for the U.S. in direct talks with Iran. But of course, Iran says this ceasefire agreement has already been violated, mostly due to Israel conducting strikes in Lebanon. But both Israel and the United States maintain that Lebanon was never supposed to be part of this agreement, as we heard from Vice President himself yesterday as he was leaving Hungary.
I think the Iranians thought that the ceasefire included Lebanon, and it just didn't. We never made that promise. We never indicated that was going to be the case. What we said is that the ceasefire would be focused on Iran, and the ceasefire would be focused on America's allies, both Israel and the Gulf Arab states. If they break their end of the bargain, then they're going to see some serious consequences.
Of course, Vance also said he had heard suggestion that Israel was willing to check itself in Lebanon, and perhaps that's what we are seeing with the developments from Israeli Prime Minister Benjamin Netanyahu today, who says Israel has agreed to direct talks with Lebanon, focused in part on disarming Hezbollah. So for more, we turn to Bloomberg Washington correspondent Tyler Kendall, who is live on the north lawn of the White House. Tyler, for the sake of a ceasefire with Iran, I would assume that this is a development that President Trump is happy about.
I mean, at this point, Kaylee, a sign that it was posing a potential roadblock is this new reporting from NBC News within the hour that President Trump had called Israeli Prime Minister Benjamin Netanyahu directly last night to ask him to scale back the attacks when it does come to Lebanon. And Israel confirms that it had one of its largest days of attacks in Lebanon yesterday. So this would appear to be helping to move forward what is still considered to be a tenuous truce, but with diplomatic efforts still going ahead, as the White House says that the U.S. will be involved in these talks on Saturday, as you mentioned, being led by Vice President J.D. Vance. But we also have to keep our eyes on the fact that the Strait of Hormuz, another big contingency for the U.S. when it comes to the ceasefire, doesn't appear to be fully reopened. In fact, Iranian state media reported earlier today that any ships that are looking to transit through the Strait of Hormuz need to liaise with the Iranian military. And we're starting to hear from some prominent corporations and business leaders in the region saying that a passage that is conditioned doesn't mean that there is ultimately safe passage. So that's really what we have to look forward to when it comes to these talks. But the sense from the White House, and we heard this from the NEC director Kevin Hassett in an interview earlier today, is that this weekend is going to be very monumental when it comes to the talks, and that this weekend is really going to set the tone going forward.
All right, we have a lot to look forward to as we get closer to those talks in Islamabad. Bloomberg's Tyler Kendall live at the White House. Thank you so much. And as we consider what the success of those talks may be predicated on, we turn to Jennifer Welch, who is Bloomberg Economics Chief Geoeconomics Analyst. Jenny, we always have to consider the incentives of both sides here to make an agreement, right? Do you see the incentives as there for Iran now to make an agreement that the U.S. is going to find favorable enough to agree to?
I think the fact that we are seeing Iran agree to this 2-week pause and that they are likely to show up this weekend in Islamabad for negotiations with the U.S. suggests that, yes, they see something in it for them. Their demands that they've made publicly, which the White House has said are not what they're currently negotiating over, are rather maximalist. And so from Tehran's perspective, if it can get some of those, then yes, it can score something big out of negotiating now. It should also be noted that even though Tehran's been really defiant throughout the course of this war, it's suffered heavy damage, not just to its military and to its government leaders, many of which who have been killed, but also to civilians and the civilian economy. So it is definitely suffering some pain right now, but I think that being said, it still has a lot of negotiating leverage at the table, especially when it comes to Hormuz.
Well, and obviously these are talks between the U.S. and Iran that we are expecting. Israel will not have a seat at that negotiating table, in part because Israel is not recognized by Pakistan, so no Israelis would even be able to physically get there for the conversation. But we do know, according to Axios, which is now reporting that Israel, at least an Israeli official, says there will be direct negotiations between Israel and Lebanon beginning next week. Barak Ravid reporting that meeting will take place, at least the first one, at the State Department here in D.C. Has this shifted, Jenny, from being about Iran specifically to now whether or not their proxies, specifically Hezbollah, are going to be able to be controlled or brought to heel enough that Israel is satisfied enough to end its part in this war?
That is absolutely a crux of the issue, in part because Iran says it is a clear, necessary condition of the ongoing ceasefire. Obviously, the U.S. and Israel dispute that Lebanon is part of that, but from Iran's perspective, it is. But even if it isn't part of the 2-week pause, it's something that Tehran is going to be asking for. And again, it feels it has leverage to ask for that. I think what this suggests is maybe there is more room for a deal on this particular point. But when you look at the broader sweep of Iran's conditions, those are things maybe Washington can find a middle ground on. Maybe Washington can compromise on. I think for Israel, it's going to be much harder sell, even on things like sanctions relief or limited enrichment on Iranian soil. Those have been things Israel has very staunchly opposed. And so I think one of the key questions here is not just how much is Washington willing to compromise, but how much is it willing to compromise over Israel's stated objectives. And that would be a major change in how this administration has approached Israel to date.
Yeah, well, I spoke with the Israeli ambassador to the UN, Danny Danon, last night, and he said, look, we trust the U.S. to represent our interests at these talks, and suggested that there is still alignment between the U.S. and Israel. But he also underscored the threat of Iran's nuclear program specifically being a concern. So how should we anticipate what is likely to happen? What will satisfy at least the U.S. and Israeli parties that Iran is not going to be able to have a nuclear weapon? Is it going to require anything short of seizing any enriched uranium that is still in Iranian territory?
So I think there is a spectrum of options, and Washington's taken a different position on the issue of enrichment over even just the last few years, privately and publicly, different postures. There is the potential for a landing space on allowing some limited enrichment for very specific purposes like medical applications. That's something that's been discussed in the past. Trump administration has said publicly they won't even go for that, but maybe they'd be more willing if it's key to reopening Hormuz. But I think the larger question is, regardless of what they agree to, is Iran still going to potentially try and continue an underground program? This conflict has demonstrated, I think, to Tehran that unless it does have a nuclear weapon, it will face the perennial threat of strikes from the United States and Israel, even given its leverage over Hormuz, whereas certain other U.S. adversaries and rivals like North Korea that have nuclear weapons don't have to worry about that. So I think, to a certain extent, this conflict has really shaped Iran's calculus on nuclear weapons, but probably not for the better from Washington's perspective. And regardless of what they agreed to in the negotiating table, we should expect that Tehran would invest, if it could, in an underground program.
Well, it strikes me as kind of a catch-22, Jenny, not to trivialize it, but if Iran now thinks that it must have a nuclear weapon to avoid future attacks, isn't Iran trying to develop a nuclear weapon, the exact thing that would inspire future attacks from the U.S. and Israel? How do you get out of that circle?
That's what we call the security dilemma. And I think that's what we're likely to see, regardless of what happens in the next few weeks or months. Even if a deal is reached, there are just larger strategic frictions that are going to continue to be at play here that no negotiation, however successful and far-reaching it might be, are going to resolve.
Well, and speaking of things that are not yet resolved, you mentioned earlier the Strait of Hormuz. The administration maintains that there's been more progress on that it is opening up beyond what public statements would suggest. But we have the data at Bloomberg. There are not a lot of vessels getting through the strait right now. Is it fair to say that it still remains effectively, if not closed, completely controlled by Iran?
Definitely the latter, completely controlled by Iran. And regional leaders have made the point, too, that if it's completely controlled by Iran, well, then it's not free and open, right? And I think that's going to be one of the key elements of these negotiations, too, and where the U.S. position is in some ways harder to predict than it would be under a different administration. With President Trump's suggestion, he might be open to Iran charging a toll if it's a joint U.S.-Iran toll, which would be unprecedented for a number of reasons. I think also very much unwelcome by a number of U.S. partners and Gulf oil producers. So I think one of the key elements is here are what are the terms of reopening Hormuz? Does Iran charge a toll? Does every ship have to kind of get blessing from Tehran in order to pass through? If so, I think it suggests that we're unlikely to see a return to normal anytime soon, and possibly a much, much smaller number of vessels transiting through the strait in the future.
Yeah, it could be a completely new paradigm, a structural shift in the way energy is able to flow out of the Middle East. Jennifer Welch of Bloomberg Economics, great stuff as always. And of course, you can catch her analysis along with the rest of our geoeconomics team on the Bloomberg terminal. It is can't miss stuff, especially as we track the moving headlines here. Again, the one we're dealing with at this hour, Israel agreeing to direct talks with Lebanon. It is moving the markets, and we'll have more on the markets and the economy coming up next here on Balance of Power on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.6%. NASDAQ up 0.75%. The Dow up 0.5%. 10-year Treasury yield at 4.26%. The 2-year yield at 3.74%. WTI is up about 3%, around $97 a barrel. Brent crude up 0.6%, around $95 a barrel. And Bitcoin is up 1.2%, around $72,000. Chevron says its production fell as much as 6% in the first quarter because of the Iran war, in part. The company attributed the decline to reduced output in the Persian Gulf region and Israel, as well as downtime at operations in Kazakhstan. Chevron expects a negative impact of as much as $3.7 billion. Now, ExxonMobil earlier this week said it, too, had seen a production drop because of the war. Chevron shares are less than 1% lower. Intel says Alphabet's Google has committed to using future generations of its Xeon processors and other chips. As part of the agreement, Google will customize Intel's IPUs, which handle networking, security, and storage. Intel shares are more than 2% higher, and Google shares are about 0.5% higher. Round one of the Masters continues at Augusta National. At last check, Patrick Reed sits atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's get back to Balance of Power with Kaylee Lines.
All right, Amy Morris tracking the markets for us. Thank you so much. Meantime, here in Balance of Power, we, of course, are tracking developments for you on what's coming out of the Middle East, as it is day 2 of a ceasefire between the U.S. and Iran, tenuous as it may be, and much it seems as to whether or not it will be able to continue throughout this 2-week period is going to depend on what happens in Lebanon, where Israel is continuing strikes against targets, specifically Hezbollah targets. And Israel, of course, today shared that they have agreed to direct talks with Lebanon around disarming Hezbollah, something that could help ease the path forward for negotiations between the U.S. and Iran that are set to take place in Islamabad this weekend toward ending the war. That said, this war, of course, has lasted for weeks now, and it has had an impact on the global economy. Specifically, as Strait of Hormuz traffic, energy flows coming out of the Middle East has been halted, controlled by Iran. That remains the case now, raising, of course, energy prices and having a trickle-down effect as you consider everything that diesel goes to and the way things move around the global economy. And even before all of that kicked in, we already were seeing a slowdown in the U.S. consumer consumption engine. At least that's what data this morning bears out, as U.S. consumer spending rose just 0.1% in February. And of course, PCE, which we always talk about as the Fed's preferred inflation gauge, even ex-food and energy increased by 0.4% month on month. So we want to get into more of this now as we turn to Reed Pickard, who is joining me here in our Washington, D.C. studio. She, of course, is our team leader for the U.S. economy. Reed, when we consider the data we got today, what picture does it paint, knowing that it is dated and a lot has changed specifically because of the war in the Middle East since then?
It's not a great one. It shows that consumers were already under pressure before the latest hit to their wallets that they've had from rising gasoline prices and the ripple effects that we expect from that, whether that be higher airline prices, higher food prices in the months to come. And what we really saw was that consumers, they continued to spend in the month, but most of that was just seeing increased prices. So as you said, once you took out the effect of inflation, there barely rose in February. If you look at the picture kind of leading up to that, it's been months of a cautious consumer. So this is extending a period of weakness that we've seen among consumers as they're facing all kinds of affordability challenges, as well as a sluggish labor market that we know barely added any jobs last year. So that was kind of the state of play in terms of lingering inflation, consumers already feeling some headwinds. Of course, we've had these enlarged tax refunds that haven't been quite as big as folks were expecting, but that has helped at least underpin some of this demand. But tomorrow is when we'll get kind of a better snapshot of how the war is really starting to ripple through.
Well, yeah, so that CPI data usually we know is the one the Fed, not that they don't consider it, but they're more concerned with PCE and the components that factor into that. Is this time different, Reed? How much more will that data tomorrow matter?
So there's always this trade-off between PCE and CPI, because CPI is typically comes out faster, and then PCE comes later on in the month. Usually they're not this close together, but this is still a lingering impact of the government shutdown that has kind of messed up the calendars. But in terms of CPI tomorrow, That will be the focus for investors certainly this week, but also kind of closely watched by Fed officials as well. You often hear them talk about they look at a whole wide array of data, even if PCE is their favored metric. And in terms of thinking about CPI, we're looking at nearly a percentage point of an increase month over month, which is the largest that we will have seen since mid-2022 when we were talking about Russia invading Ukraine, when we were talking about inflation being at its peak overall. And that largely will be driven by the surge that we've seen in gasoline prices and the rise in diesel prices that has been even more.
Well, and that's obviously why the market was at least considering the notion that the Fed may have to hike rather than continuing to ease as the next move that they're considering. Obviously, we've seen a repricing of that now that there is the ceasefire in place, but it speaks to this wider conversation as to whether or not that there is a greater inflationary concern or growth concern stemming from this crisis, and which one they're more prone to react to. What are you hearing right now about how those scales are balancing?
Absolutely. So from an economist perspective, I would say that you don't hear much talk of hikes. You hear a bit more of the higher for longer type of conversation. But really what kind of stems for the Fed is we need to think about this underlying inflation perspective. So while we're talking about CPI jumping tomorrow based on gasoline prices, when Federal Reserve officials are thinking about the future of where inflation may be heading, they really consider two things. They consider gauges of underlying inflation, which strip out energy and food, even though that's very much the experience of consumers. Right. And they think about what we call inflation expectations, so where folks think inflation will be going in the future. And while we've seen an increase in folks' expectations for inflation in the near term, those longer term views, they've remained relatively stable. And so right now the Fed has this reality where they can wait and see. They can wait to see what happens with inflation, if this strength that we've seen at the beginning of the year continues on and lingers, is wider than just the energy and food impacts. And they can wait to see if the kind of rocky stabilization that we've seen in the labor market that no one's happy with, but it is relatively stable, if that becomes more of a concern.
Well, yeah, I guess that part of the mandate is the one that we're thinking about here, is that there has been rocky stabilization is a good way to put it. There's just been a lot of fluctuation, frankly, in the jobs data. Reid, what is our expectation around that as we're talking about a slowdown in consumption due to higher prices that people are facing, wages perhaps not keeping up? How should we be thinking about the wage dynamics here?
Yeah, so in the report today, even in February, you saw wages and salaries were pretty tepid in terms of the increase that they saw, and you saw that overall incomes actually declined in the month. So as we look ahead, when there's not a lot of hiring going on, there tends to not be a lot of wage growth, and we've seen this deceleration since the hot jobs market of the post-pandemic era. We've seen this continued deceleration, and we're likely to see more of that if we continue with what we have, except there will be pockets where you might see labor shortages, where the wage dynamics may be different. But I think one of the most stunning things that economists and investors are trying to get their hands on is, with all of the immigration changes that we've seen as well, the types of job numbers that we used to be needed to see to keep the unemployment rate steady, to consider the labor market healthy, that has totally changed. So I think that really hit me hard when San Francisco Fed President Mary Daly said last week that you could see months of little to even negative job growth, and that doesn't necessarily mean that the labor market's weak, which is kind of hard to wrap your head around a little bit.
Yeah, and that immigration point is a really important one. We're going to have to dig further into that next time Reid joins us. Reid Pickard, of course, helps to lead our U.S. economy team here in Washington. Reid, thank you so much. And of course, as we consider the economic picture, that is what investors are trying to grapple with as well as they're trying to make decisions here. And what we're seeing, at least decided today, is to continue the risk rally that started yesterday on news of the ceasefire between the U.S. and Iran. So let's get more on that now as we turn to Eric Weiner, who is our Bloomberg News senior editor for America's Equities. Eric, great to have you. Obviously in the green for a second day. Wasn't the story necessarily throughout the morning, but it does seem that risk appetite has firmly taken hold once again. How much further can this run, knowing it wasn't really equities that felt too much of a negative impact from the war in the first place?
It's a weird dynamic. We're really, really reactive to headlines. As you noted, when we came in this morning, things were down, and it looked like yesterday was sort of a one-day blip. But once we got the news that Israel was, amenable to negotiating with Lebanon, suddenly things picked up. There's a lot of hope that this will, get taken care of one way or another, and that stocks will resume their climb. You also have to look back and realize that, basically for the last 9 months or so, the S&P hasn't gone anywhere. So there is definitely room to grow. The question is really, well, it was really laid out nicely by the Fed in those minutes today, where they talked about the two-sided risks. You have spending slowing down and you have inflation not looking great. So it's like, where are prices, where's growth? And that's anybody's guess. We really need to know where the conflict stands to make that call.
Well, and on the growth idea, what about the growth names, the tech names that obviously, due to kind of the various AI Armageddons we were seeing hitting various sectors, were already kind of beaten up going into this? Is that where we should be looking potentially for leadership, Eric?
You would think so. I mean, so what's interesting is that the Magnificent Seven, those big AI tech stocks really did underperform last year. So you would think that they have, a lot more room to run if this growth is going to pick back up. Their questions are separate than the war, because even before the war was going on, people were questioning whether the amount of money that they were spending, would that pay off? Where AI was going to go, the disruption of it, what that means for software companies. So there's just a lot of uncertainty surrounding that particular trade. If the market moves higher, though, they will invariably be the leaders of it.
Well, and as you talk about this kind of being separate from the war, on the subject of the war and specifically what it has done to oil prices, to what extent are we seeing, frankly, across asset classes, still the cues being taken by what is happening in the oil market?
The oil market moves have been bizarrely disconnected with the stock market. We saw stocks rising even when, oil was well over 100. Where it will show up will be earnings start next week. Banks will be first, but then you're going to get a lot of industrial companies, a lot of retail companies, and their costs of just transporting goods are going to be much higher because of the price of oil. And their outlooks, which are really what you're looking at when you're talking about earnings, their outlooks are going to be much more dicey because we don't know where oil is going to go. So it's much more of a future input on their earnings and just sort of drawing down how much cash they have, because you're going to have to spend a lot more. And even if the war ends, we don't know where they're going to be.
Very good point. Eric Weiner, helping lead our equities coverage here at Bloomberg. Thank you so much for joining us on Balance of Power. Our political panel will join us next right here on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Stocks keep climbing on hopes the ceasefire with Iran will hold now that Israel has agreed to talks with Lebanon. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.5%. NASDAQ up 0.6%. The Dow up about 0.5%. The 10-year Treasury yield at 4.26%. 2-year yield at 3.75%. WTI now 3.25% higher, around $97.50 per barrel. And Brent crude about 0.9% higher. It's sticking around $95 per barrel. A bit of a jump in weekly jobless claims. Bloomberg's Michael McKee with those numbers.
219,000, a big jump up from 203,000 the week before, but not one that would tell you that the economy is really slowing down and companies are starting to let people go. Continuing claims, 1,794,000 fall from 1,832,000.
Bloomberg's Mike McKee. Consumer spending barely rose in February amid persistent inflation because of the war with Iran. Inflation-adjusted consumer spending increased 0.1% after stagnating in January, with core PCE increasing 0.4% from January. The latest spending figures are consistent with a consumer who's grown more cautious over the past 6 months amid cost of living concerns and a sluggish job market. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. I am Kaylee Lines. Thanks for being with us on the Thursday edition of Balance of Power. It is day 2 of the ceasefire between the U.S. and Iran, a ceasefire that has proven already to be very fragile, as Iran has claimed it has already been violated, although arguably Iran has committed violations of its own. But Iran is specifically focused on Lebanon, where Israel conducted strikes yesterday in and around Beirut, killing hundreds of people, focused, of course, on Hezbollah, an Iranian proxy that it says continues to pose a threat to it from its northern border. And this is where a lot seems to be coming down to ahead of talks between the U.S. and Iran in Islamabad on Saturday. There's been reporting from NBC that the President Trump, has asked Israeli Prime Minister Benjamin Netanyahu to hold back a bit when it comes to Lebanon in order to smooth the path forward for those talks. And of course, Netanyahu today said Israel has agreed to direct talks with Lebanon over disarming Hezbollah, which would maybe be a step toward that. But we just had some headlines crossing the terminal from AFP, Agence France Presse, saying that Lebanon wants to see a ceasefire before those talks with Israel can begin. So again, ceasefire seems to be central here. And we want to get into this now and more about how it's affecting domestic politics here in the U.S. as we turn to our political panel. Rick Davis with me, Bloomberg Politics contributor, Stonecourt Capital partner, Republican strategist alongside Democratic strategist Doug Farrer, principal at Maywood Strategies, and former senior advisor to FTC Commissioner Lena Khan. Welcome to you both. Rick, it does seem that while the talks that are going to happen this weekend are between the U.S. and Iran, a lot is going to come down to Israel here. How difficult is it going to be for the Israelis and the U.S. to stay in alignment?
Yeah, I would say it's very early in any of these negotiations, and most of the parties are not adhering to them, probably other than us. So we have a long way to go before we actually see the fruit of a real ceasefire or any kind of negotiation. But I do think it complicates things significantly when you have a tripartite negotiation, where at the same time you're trying to solve for a very significant and very, very complex negotiation between the U.S. and Iran. Now you have Israel as a party of that negotiation because Iran is not going to want Israel to be free to attack them, and Israel's conduct as it relates to, at least today, Lebanon, but maybe in the future, Yemen with the Houthis and other Iranian-backed terrorist groups in the region. So you can only imagine, as more of this onion you peel away, how much more complex these discussions can become.
Well, especially considering the talks happening this weekend in Pakistan, therefore Israeli officials can't even attend them. They haven't been invited. Pakistan doesn't recognize the state of Israel. So, Doug, if you could speak to this as well, the idea that negotiations already were probably going to be hard, being bilateral, given what we have seen take place over the course of the last several weeks, but knowing that there is a third party that is still going to be present in terms of subject matter, but not physically present, how much more difficult does it make the entire notion?
I think any kind of international negotiation is going to be complicated, especially amidst a war that's caused such global economic mayhem, especially in Asia, but coming to the United States and Europe soon. You know, look, the president is in this war in large part because Israel and Bibi Netanyahu really wanted the United States to get engaged and to take a leading role in attacking Iran. One hopes that that means he's developed some credibility he can cash in on to try to hold the Israelis back while they negotiate an exit to this war. I think for the White House, their chief objective now is to get out with something they can spin as a victory, but that's going to be very difficult because the Iranians now basically control the Strait of Hormuz. They're going to be tolling it. And, you know, it's a real mess. But I think there are incentives for pretty much everyone except the Israelis to try to end this now, and hopefully peace can prevail.
Well, and obviously, as we consider the path forward on this conflict, we've spent a lot of time on this program talking about the political implications specifically for President Trump and for his party, the Republican Party, heading into the midterms. But Doug, I also want to talk about how this is difficult perhaps for Democrats, this issue of Israel specifically. The DNC spring meeting is taking place beginning today in New Orleans, and Politico actually got their hands on a list of resolutions that their resolutions committee is going to be considering, including resolutions to recognize Palestinian statehood, a resolution to condemn AIPAC spending on Democratic candidates. We know that Israel, and specifically the war in Gaza, was a massive issue for Democrats in 2024. It is something that dogged first Biden and then Kamala Harris, who was effectively the incumbent running in that election. Has the party figured out how to grapple with this as we move forward into 2026 and beyond?
I think they haven't yet, and they really need to. I would give you two data points. Number one, 4 years ago, the views of the United States, especially Democrats, about Israel were about plus 13, and now they're negative 23. That is an incredible hole to dig out of. And really, this has been an ongoing thing for Israel since Bibi Netanyahu has been the leader of that country. They took what is the most powerful thing in Washington, bipartisan support, and turned it into barely hanging on to something with the Republicans and underwater with the Democrats. That's a real problem for Israel, given the nature of their relationship to this country and how important we are for their security. I think for the Democrats, you've got a bunch of older, top brass leadership types who'd like to continue to encourage, people who are really concerned about Israel's security to support the party. But the party has left that position, and I don't know if it's ever coming back. And we haven't even seen an autopsy. Ken Martin at the DNC has not released it. And in large part, I think some of that is because they don't want to show voters what everyone can see through the polls, which is that Democrats have had it with Israel. So I think this is a real problem. They need to figure it out. And ultimately, the polls don't lie. Voters are where they are, and Democrats need to meet them where they are.
Well, and so, Rick, obviously Democrats have also said the polls don't lie about this war being unpopular with the American electorate. They've sought to capitalize on that. But does this speak to the idea that there may still be two-way risks here for Democrats when it comes to the politics around this conflict?
Well, I have absolutely no doubt that this is a very risky set of decisions Democrats have to make as it relates to how they approach Jewish voters and pro-Israeli voters in the upcoming midterm elections. As Doug said, they've been having all kinds of internal discussions about how to come to grips with the pinch they're in. And I would say the list of resolutions that you described are not a solution to that problem, I can assure you. Talking about AIPAC and how much money they're spending against Democratic candidates is not an issue a single voter is going to change their mind about. And so they need to actually focus on some core issues that they could get their hands around. I mean, they completely missed the boat when universities all around the country were under siege by Palestinian protesters last summer. And instead of talking about the fact that we should have zero tolerance for anti-Semitism of any kind, they got all wrapped up in the politics of the Middle East. And they got to think local if they want to get out of this process. Otherwise, applying a Palestinian statehood envelope to a domestic U.S. political problem for them is going to be very complex for the Democrats.
Yeah, and all of this obviously factors into the electoral calculus. But I also want to talk about the efforts of those who are already in elected office. As there were a handful of Democratic members of Congress who showed up to the pro forma session in the House today. Obviously, they're still on recess through next week. But in the pro forma session, they tried to get recognized to offer once again a vote on a war powers resolution. Republican Congressman Chris Smith, who was overseeing the floor in this pro forma session, wouldn't recognize them, gavelled the House out until next week. But this is, of course, after, Doug, we heard yesterday from the Senate Minority Leader, Chuck Schumer, that he too would like to see a war powers vote in the Senate next week. As we are now in the middle of, tenuous as it may be, a ceasefire, what is the point of this exercise?
I think it's really important for Democrats to signal to their voters, with who, by the way, they've lost a ton of credibility with, that they can try to take actions that affect the politics, despite the fact that they don't control any lever of government. And that's going to be hard, but they have had some success, right? I mean, we saw the Epstein resolution come out of the House using one of these discharge petitions. We've obviously seen them take action against the killings by ICE, shutting down DHS and continuing to negotiate firmly on that. And so it's important for Democrats to show the American people that they will do what they can to try to stop what is an illegal war that is harming people and raising prices around the country. And so I'm glad to see them try to work the system to the degree they're able to.
Well, we're also seeing Democrats suggest that in order to kind of change what is happening, you may need to consider the president himself. Obviously, there was a lot of uproar, and we discussed it on this program about the president's language yesterday, threatening that a whole civilization will die. Or I guess this was Tuesday, what was supposed to be deadline day, that a whole civilization was going to die tonight. That raised a lot of alarm among Democrats, dozens of whom said that there needs to be an invocation of the 25th Amendment or potentially another impeachment effort against President Trump, knowing, of course, Rick Davis, that Democrats are not in control right now, to the point that Doug was just making. Is this an effort that is going anywhere? I thought there was a conversation happening about how Democrats recognize that things like impeachment may be a fruitless endeavor.
Yeah, I mean, Doug's right that there have been some extraordinary examples of bipartisan efforts in the House of Representatives, specifically to have discharge petitions that have actually made a difference. But I think both these initiatives are pretty performative in nature. I don't think they've got support with any Republicans. Certainly the 25th Amendment doesn't. And even that, it's really the job of the cabinet and the vice president to initiate a 25th Amendment review, not Congress. I mean, if that were the case, we'd have them every year, regardless of who was president. So I don't think that's a habit we want to get into. And the reality is, the focus, I would think, and I think politically, isn't in Congress right now. It should be in the campaigns that are being run in every single district in America, where members are talking about unacceptable language, unacceptable decision making. If that's what they want to run on, they're wasting their time in Congress in failed attempts to try and pass resolutions. They should be back home talking to their constituents, because that's where the action is going to be for the next 6 months.
Well, and just quickly on that notion, Doug, we saw the last time we had a midterm election cycle when President Trump was president, that there was a campaign like, look, if you elect us, we are going to try to get Trump out. Impeachment was part of the pitch. Is it wise for Democrats to consider that being potentially part of the pitch this time around?
I mean, I think Rick's right. I wouldn't lead with it, but I do think it's possible to start talking about, whether or not the president is still fit for office. I mean, saying he's going to end a civilization is a pretty unhinged thing to say. But look, you can't be begging people seeking Trump's blessing in 2028 to use the 25th Amendment against him now. I think it's wise to start talking about, whether or not the president's going to make it all 4 years with the way he's behaving. But at the same time, you got to focus on affordability. Look, people have lost health care. Gas prices are very high. Rent is very high. There's a ton of problems that need to be dealt with. And that's what Democratic voters want to see, is their elected officials have a plan for those that is going to make a difference.
All right, Doug Farrer, Rick Davis, our political panel today. Thank you both so much. Of course, both Rick and Doug will be back for more in the second hour of Balance of Power as we consider not just the domestic political implications of what's going on in the Middle East, but what the latest actually is in the Middle East. A tenuous ceasefire in its second day with much focus on Israel and Lebanon and as whether or not we are going to see a stop to those strikes amid the prospect of direct talks between the two. We'll get more into that in the next hour. Natasha Hall will be joining me. So that's just ahead, a couple minutes from now, right here on Balance of Power on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The ceasefire between the U.S. and Iran might hinge on Israel and Lebanon. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lines, joining you on what is day 2 of a tenuous truce that the parties cannot agree as to whether it includes Lebanon. As Israel continued striking Beirut in the last 24 hours, it now says it has agreed to direct talks with Lebanon over disarming Hezbollah. and that could help grease the skids for direct talks between the U.S. and Iran that are set to take place in Islamabad this weekend. It's a lot to keep track of, and we'll have the latest this hour with Bloomberg's Tyler Kendall with analysis from Natasha Hall of Chatham House. And our political panel will be here, too, as we consider the domestic implications at home. And, of course, there's major implications for financial markets, too, that we have to consider. And for a check on how they're trading right now, we turn to Amy Morris, who is here in Washington. Hey, Amy.
Hey, Kaylee. News about talks between Israel and Lebanon sent crude oil prices back down toward their lows of the day. We check markets all day long for you here at Bloomberg. The S&P 500 is up 0.6%, NASDAQ up 0.7%, and the Dow up 0.7%. 10-year Treasury yield at 4.26%, and the 2-year yield at 3.75%. WTI is up about 3.2%, around $97 a barrel. Brent crude is up less than 1%, now around $95 per barrel. A bit of a jump in weekly jobless claims, up to 219,000. Continuing claims, still the lowest level in almost 2 years. Today's figures point to a labor market still in a low hire, low fire environment, with claims near historically low levels. Economists say uncertainty tied to the Iran war and higher energy costs may weigh on business sentiment. Amazon says its web services artificial intelligence revenue run rate was over $15 billion in the first quarter and ascending rapidly. CEO Andy Jassy said in a letter to shareholders that AWS has the potential to grow even faster. Amazon is also committing to more than $4 billion to help expand its rural delivery network. Amazon shares more than 4% higher. Intel says Alphabet's Google has committed to using future generations of its Xeon processors and other chips. As part of the agreement, Google will customize Intel's IPUs, which handle functions like networking, security, and storage. Intel shares about 2.5% higher. Google shares about 0.5% higher. Round one of Masters underway at Augusta National. At last check, Patrick Reed sits atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. Clearly, markets feeling optimistic for a second day around the ceasefire between the U.S. and Iran, as it is day 2 of that fragile agreement. But as to whether or not it can hold, that may come down to what happens in Lebanon and Israel's continued strikes against Hezbollah targets that it says still pose a threat to it from the north. Israel, of course, today saying it has agreed to direct talks with Lebanon over disarming Hezbollah, although the AFP reports that Lebanon would like to see a ceasefire first before those talks can happen. And of course, there's a big question as to whether or not this was supposed to be included in the wider ceasefire in the first place, as the Pakistani prime minister who announced this agreement between the U.S. and Iran originally earlier this week said in part in his statement that the U.S., along with their allies, have agreed to an immediate ceasefire everywhere, including Lebanon. And Iran says that should have been the case. It believes Lebanon was included. That is something that the Israelis say is not the case, and we heard the same from the Vice President of the United States, J.D. Vance, as he left Hungary yesterday.
I think the Iranians thought that the ceasefire included Lebanon, and it just didn't. We never made that promise. We never indicated that was going to be the case. What we said is that the ceasefire would be focused on Iran, and the ceasefire would be focused on America's allies, both Israel and the Gulf Arab states. If they break their end of the bargain, then they're going to see some serious consequences.
And just to underscore the confusion around this, once again, a fresh headline crossing the Bloomberg terminal from Iran's foreign minister, who says that Lebanon is an integral part of the ceasefire. Clearly, this is a matter of dispute, and it all could impact the negotiations set to take place in Islamabad this weekend. So for more, we turn to Bloomberg's Tyler Kendall, who is live at the North Lawn of the White House. Tyler, obviously, there's a lot of different pieces of this puzzle here. How are they coming together or not right now?
Right, Kaylee. I mean, you really did a great job there just laying out all of the different headlines that we've been getting over the past few hours. But at the moment, at least publicly, this White House maintains that they are planning for diplomatic efforts to move forward ahead of this weekend's discussions in Pakistan on Saturday, led by Vice President J.D. Vance, who's also expected to be accompanied by the Special Envoy Steve Witkoff and the President's son-in-law, Jared Kushner. But of course, this main development here is that Israel has confirmed that it will take place in direct talks with Lebanon over potentially disarming the Iranian-backed militant group Hezbollah. This White House still maintains that any discussions about Hezbollah and Israel's separate front in Lebanon was not part of any ceasefire agreement. However, in a sign that there was this mounting pressure that it could be a roadblock, NBC News reported earlier today that President Trump had called Benjamin Netanyahu yesterday and asked him to scale back the strikes. Now, on one hand, we have reporting that these talks are actually set to happen this weekend in Washington at the State Department, but then you mentioned that AFP reporting that Lebanon needs to see a ceasefire in order to actually get to the table. So at the moment, we'll see where this goes. This White House certainly wants to see, of course, these talks move along, though, Kaylee, it is important to point out that at least one of those key parts for the ceasefire to go in place still remains unresolved, and of course that is the Strait of Hormuz.
Well, yeah, Tyler, I'd like to talk more about that because we heard the adamant insistence from the press secretary, Caroline Leavitt, when she briefed the media at the White House yesterday that the strait is going to be open, that is the expectation, that it will happen immediately, that already they said, despite what you were hearing publicly, more vessels were getting through. The data we're tracking here at Bloomberg, though, doesn't show that, right?
Well, the data we're tracking here at Bloomberg shows that as of yesterday, about 3 ships were able to exit the waterway amid what is an 800-ship backlog. And then we did get some more news from Iranian state media earlier today on a few different fronts related to the strait, but perhaps most notably that Iran says that any ships that are seeking safe passage must liaise with the Iranian military. They also had outlined that Iran is now highlighting some specific routes for safe passage in a bid to make sure that no ships hit any potential mines that may be in the primary traffic lanes. Of course, this is considered to be not the development that this White House wants to see when it comes to reopening that waterway to freedom of navigation. We can say that the German chancellor did speak with President Trump by phone earlier. He had outlined to reporters in Berlin that he told President Trump that Germany is ready to join a coalition to help secure the waterway, but that Germany wants to see an international mandate first, perhaps from the United Nations as one potential option there. We know this White House wants allies to really help keep on the pressure and ensure that there can be this movement for vessels and energy commodities. Kaylee, yesterday, as you well know, President Trump met privately behind closed doors with the NATO Secretary General Mark Rutte. He was speaking to reporters in Washington earlier today. He said that NATO allies are now doing, quote, almost everything that the U.S. asks on Iran. We'll have to see how that develops into a potential plan when it comes to the strait.
Well, yeah, on the subject of NATO, Tyler, I'm glad you brought it up. It doesn't necessarily seem that meeting went exceptionally well if you consider the True Social post that the president put out last night. NATO wasn't there when we needed them, and they won't be there if we need them again. Remember Greenland, he says, that big, poorly run piece of ice. Does that underscore that this isn't really just all about the Middle East and help with the Strait of Hormuz? He's still a little bit upset about that particular territory in Denmark.
Well, I mean, if we take the president's words at face value there, yes, of course, Kaylee. And then we should also pair that with some pretty incredible reporting from our colleagues in Europe that after this meeting yesterday at the White House, a senior NATO official telling Bloomberg News that the U.S. made clear that they want allies to put pen to paper and actually put forward tangible plans on how they are going to help the U.S. when it comes to the Strait of Hormuz and to meet the president's demands in Iran. So there has been this mounting pressure. Of course, President Trump has threatened to exit the alliance before. Easier said than done because that would take congressional action. But there has been reporting out that the president has some other tools that he could use to pressure allies, including, for example, withdrawing the U.S. ambassador to NATO or making some movements and changes when it comes to U.S. military bases abroad. So it will be something to watch for going forward here, but no doubt the president's frustration has been on full display. We can also say that our reporting has indicated that it's not just signals from the president, who has long had this dismay when it comes to the alliance and, of course, his bids to get our allies to bolster their defense to GDP spending, but actually it has been recent comments from Secretary of State Marco Rubio that the U.S. may need to reassess its position in the alliance that really sounded alarm bells throughout Europe.
Of course, Secretary Rubio, who helped lead the effort in the Senate to make sure Senate approval would be required to leave the NATO alliance prior to him being Secretary of State, of course. Bloomberg's Tyler Kendall live at the North Lawn of the White House. Thank you so much, doing an excellent job keeping track of all of the headlines around the Middle East. And we want to get some analysis of the headlines we're getting today now as we turn to Natasha Hall, Associate Fellow at Chatham House, who is here with me in our Washington, D.C. studio. Natasha, welcome back to Bloomberg TV and Radio. It's good to see you. If we could just begin, because it does seem that Lebanon is really the crux of the conversation, at least today. Israel's suggestion that they are open to direct talks with Lebanon over disarming Hezbollah. At the very same time, I spoke with the Israeli ambassador to the UN just yesterday, Danny Danon, who told me that the government has tried to do this with Israel before, and Hezbollah simply right now is effectively not able to be controlled. And I wonder if you see a realistic path forward here, or if it's your expectation that Israel is just going to try to continue its military operations in this front to the north.
Well, yeah, I mean, things have been shifting quite a bit. I mean, right before this announcement of direct talks or potential negotiations with the Lebanese government, there were evacuation orders for southern Beirut. So things are, happening at a rapid clip. But what remains to be seen is how are we going to deal with these fundamental issues that we haven't just been talking about for the past few months, but the past few years and really decades. So we're talking about Hezbollah, we're talking about the enrichment of uranium in Iran. I mean, these are common discussion points. So I don't see how we're going to work out this in in fundamentals in these negotiations. I mean, it is impossible, I think, for the Lebanese government under fire to actually be able to disarm an extremely powerful militia that has been embedded in Lebanon in the political and military fabric of the country for decades, and certainly not in this way. I mean, imagine the number of new Hezbollah or potentially another armed group recruits that you're creating by what has been done in Lebanon. Over a fifth of the population has been displaced at this point. We saw, as you noted, over 100 airstrikes in the course of 10 minutes in central Beirut. So I don't see how we're going to get there with further escalation. Trump has already seen that hasn't gotten him very far with Iran. And it's unclear how we're going to get there with Lebanon. But I do think it would require a lot more pressure from the U.S. administration to rein Israel in, because what we've been seeing is quite devastating.
Well, and to that notion, Israel and the U.S. maintain that their incentives are still aligned, that they are fully in alignment. Do you buy into that, or are we starting to see where there actually could be misalignment if we're talking about a U.S. president who wants to be able to wrap things up in Iran, and Iran that insists that that cannot be done if this is still ongoing in Lebanon, and Israel maintaining that it is in their interest, their security interests, for this to continue because of the threat from Hezbollah?
It's hard to see what the upside is for the United States more generally from all of this. I can see the upside from Benjamin Netanyahu's point of view. He was able to degrade the capabilities of enemies like Iran and Hezbollah, but that's looking at it from the prism of a forever war in the Middle East.
Which the president does not want.
Well, the president has said in campaign speeches for many, many years now that he doesn't want it. He's built a movement, the Make America Great Again movement, that has been irate about this war, at least, certain leaders like Tucker Carlson. And so, this would be devastating for Republican poll numbers, I would think, in the upcoming elections. So this doesn't seem to be in the interests of the United States, but it does seem to be in the interests of Israel. And so I think a lot of people are asking those kinds of questions. I think that Netanyahu was able to make the case, perhaps oversell the case for these wars with President Trump, as recent reporting has suggested. But I think he got a lot more than he bargained for, essentially. And so now he's trying to walk a lot of that back. So, we hope that he doesn't move forward with these promises of, destroying a civilization or, ongoing airstrikes by Israel on Lebanon.
Well, of course, a lot of that could depend on the outcome of talks in Islamabad. To your point about the notion that there is, especially on the right, a very firm no forever wars contingent. The Vice President of the United States, J.D. Vance, has historically been part of that, and he is now going to be leading the delegation. And I want to talk to you, Natasha, about kind of the odds he's going to be facing in these talks, in Iran as a negotiating partner. This is something I actually got into yesterday with the former CENTCOM commander, General Frank McKenzie, who talked about Iranians as negotiators. This is what he said.
The hard part is ahead of us. Look, the Iranians are not great fighters. They've never been great fighters. They're brilliant negotiators, and they know how to negotiate. They grew up in a culture that is based on negotiation. They will now seek to draw negotiations out, change the terms, and create a new reality. And that's our task now will be to take the substantive operational victory which we have obtained and turn it into something lasting and strategic.
How hard is this going to be?
This is going to be enormously difficult. I mean, I think the choice of J.D. Vance as the negotiator says a lot right there, because as you mentioned, he was probably opposed to this war to begin with. So maybe this is the softer side of the U.S. administration going into these negotiations. But, you know, as Mackenzie just mentioned, you know, the Iranians are very skilled negotiators. They know all of the ins and outs of the United States, of motivations. They know all the details that need to be hammered out. It's not clear to me that J.D. Vance, for all of his knowledge, has as much background going into these negotiations as that. And again, we're still talking about the same fundamental points. Right. We're still talking about uranium enrichment. And so we might end up just getting right back to the JCPOA, the original agreement in 2015 that it took 2.5 years to hammer out with the Iranian regime. And that's hard to believe given the number of lives lost.
Yeah, well, and President Trump maintains that the JCPOA was a bad deal, so bad that he took us out of it.
Right.
Is it possible in your mind for him to be able to get a better deal than that now with the leverage that Iran has proven that it has over the Strait of Hormuz?
I mean, listen, I'm sympathetic to the problems with the JCPOA. I worked on Syria for 15 years. I saw the devastation that Iranian proxies can bring. But it's hard for me to think that we could get to a better place at this point, given everything that's happened. I mean, the JCPOA was wrangled in peacetime. At this point, I mean, you can say whatever you want about the Iranian regime, but just a pragmatic actor would have a lot of mistrust for the U.S. administration, not just for this round of fighting, but what we saw in the summer, where in the midst of negotiations, the U.S. and Israel struck Iran again. So it's unclear why the Iranians would trust the United States with regards to any kind of promises or negotiations moving forward. And I think that's going to be a really fundamental element. And back to your point of Israeli and U.S. alignment, I think the United States needs to figure out what it's okay with, and it needs to really impose upon those points on its ally, Israel, because at this point it doesn't seem like Israel is aligned with the United States with regards to that.
Yeah, of course, Israel needs to trust the U.S. to represent it in these negotiations. To your point, the U.S. may not be trusted by Iran. In our final moment, Natasha, should the U.S. trust Iran, given, as you said, we've been having this circular conversation about enrichment and its ambitions for a long time?
I don't think we should ever necessarily trust any regime, right? That's why you have these agreements. That's why you had oversight, on the Iranian nuclear program with the JCPOA. Yeah. You don't just trust blindingly. You actually enforce an agreement that's in place in order to make sure that you have peace moving forward.
All right, Natasha, appreciate you joining us with your insight as always. Natasha Hall is Associate Fellow at Chatham House. I would just note some headlines crossing from NBC, which spoke to President Trump. He says if Iran doesn't make a deal, it will be painful, though he is optimistic, he says, that a peace deal is within reach. We'll have more next right here on Balance of Power on Bloomberg TV and Radio.
It's 121 on Wall Street. I'm Amy Morris. Stocks are on the rebound. Oil modestly lower on hopes that the ceasefire with Iran will hold. We check markets for you all day long at Bloomberg. The S&P 500 up 0.7%. NASDAQ up 0.8%. The Dow up just about 0.8%. The 10-year Treasury yield at 4.25% and the 2-year yield at 3.75%. WTI now 2% higher, around $96 a barrel. Brent crude is little changed on the upside, around $94 per barrel. Chevron says its production fell as much as 6% in the first quarter, in part because of the war with Iran. The company attributed the decline to reduced output in the Persian Gulf region and Israel, as well as downtime at operations in Kazakhstan. Chevron expects a negative impact of as much as $3.7 billion, shares more than 1% lower. Now, earlier this week, ExxonMobil said it, too, had seen a production drop because of the war. And round one of the Masters is underway at Augusta National. At last check, both Sam Burns and Patrick Reed share the top spot on the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris tracking the markets for us. Thank you so much. We're tracking the headlines crossing the Bloomberg terminal now here on Balance of Power as President Trump spoke with NBC, suggesting that he's optimistic that a ceasefire, a peace with Iran, is going to be within reach, though he notes, or perhaps threatens, that if Iran doesn't make a deal, it will be painful. The president also telling NBC that Iran is more agreeable than it shows in public. This is a narrative we consistently have been hearing from the White House in the last few days, the idea that what is going on privately in conversations is very different from the public message we are receiving from the Iranians, be it the actual points that they are trying to agree to, whether they're as maximalist in reality as they are at least saying publicly, or when it comes to the Strait of Hormuz, which of course data from Bloomberg suggests is still effectively closed to transit. A trickle of ships are getting through, all of them right now, having some ties back to Iran. Now, President Trump also addressing Israel and Lebanon in particular, as the U.S. and Israel maintained that Lebanon was not supposed to be party to the ceasefire agreement. Nonetheless, President Trump says that Israel is, quote, scaling back its Lebanon operations, and that the Israeli Prime Minister Benjamin Netanyahu told him he'd, quote, low-key it. So we want to get more into this now, and as well as what we're hearing from President Trump when it comes to the NATO alliance as we turn to our political panel today. Rick Davis is with me, Bloomberg Politics contributor, Stone Court Capital partner, and Republican strategist, alongside Democratic strategist Doug Farrer, principal at Maywood Strategies, and former senior advisor to FTC Commissioner Lena Khan. Welcome to you both. Obviously, the president publicly is projecting much optimism here, Rick, about the idea that a deal may indeed be reached. This notion that public portrayal versus private conversations may be very different. How are we to trust? How is the market to trust, as it does seem like it is trading on each and every headline, the headlines we are receiving, if there is such a vast difference between what they are and what's really happening?
Yeah, it's hard to imagine the markets don't have a longer view backwards. You know, the rearview mirror is very short, it seems, with Wall Street. This is a typical Iranian ploy. We can work something out, we can make a deal, and then they push it off and push it off and push it off and extort and exploit along the way, until at which point in time the deal you've gotten is completely in their advantage. The fundamental problem is that the original concept that Donald Trump had going into this war for regime change actually is what is really needed at this point in time. There's been such a mass decapitation of leadership in Iran that we can't do business with hardliners. We can't do business with people who see the U.S. and Israel as their greatest enemy in the world. Why would we cut a deal with those folks? We need an administration that's going to bring Iran to the 21st century, create freedom for its people, and being a productive economic factor in the world that doesn't extort and exploit. So I think we're a long way from seeing progress in this, and even an outcome that's based on Iranian platforms is not going to suit the needs of the United States or Israel.
Well, and it's interesting, Rick, to hear you describe as the need here, Iran being brought back into the 21st century when the president, up until the ceasefire was in place, was threatening to bomb it back to the, quote, Stone Ages, to destroy the civilization after having previously called for the Iranian people themselves to rise up to take the country back. Has the U.S., Rick, just quickly, not done itself any favors in trying to achieve that domestic outcome and to trying to create the conditions for something to change in Iran?
Yeah, I think we've completely lost sight of the original fundamental aspect of this, which is the people of Iran want a representative government. They don't have one now. We tried to give them some leverage in doing that, but now we've kind of forgotten that. And so we're going to go cut a deal with the mullahs again. I mean, what in the world do we think a positive outcome over the next 10 years is going to be? It's going to be Iran right back to where they started from. We're going to believe them that they're not going to develop a bomb. We're going to believe them that they're not building drones and missiles. I'm sorry. They've lost the trust of the world community, and now we have to be able to put them on a path where whatever future government they have is one that we can actually deal with in an open and honest fashion.
Well, and to Rick's point, Doug, to jump in here, the idea that we could actually just end up in the same place we were before this conflict started, was this just a lot of blood and treasure spent to achieve not much in terms of that aim?
I think we've gone backwards. I mean, we replaced a rickety dictator with a young and more zealous dictator. We entrenched the Iranian Republican Guard, their like top military group, basically, as the power center of the country. We've handed the Strait of Hormuz, an incredibly vital choke point for the economy, not just for oil, but for many other products, including fertilizer, to the Iranians. So I think what we've done is gone backwards. We've also established some weakness, both in our alliances and, frankly, in our ability to really get at the Iranian nuclear program. And so, unfortunately, I think when you go in sort of without thinking through what might happen in a war with a country that has spent the better part of 50 years preparing to respond to this sort of existential threat, when you do this unprepared, you end up in a bad place, and that's where we are. And I'm really concerned how we extract ourselves from this situation without further empowering the Iranians, both in terms of raising the price of energy and getting them to relinquish control of the strait.
Well, I'm glad, Doug, that you raised the idea of U.S. alliances, because we have to talk about NATO today as well, following the meeting of NATO Secretary General Mark Rutte with President Trump at the White House yesterday, which took place, of course, after the White House press secretary Caroline Leavitt herself indicated that the president may be raising the idea of leaving the NATO alliance in that meeting with Rutte. Rutte was then, post-meeting, asked point blank about that in an interview on CNN. He didn't directly answer or say that the president didn't say that. He said this instead.
He is clearly disappointed with many NATO allies. But at the same time, I was also able to point to the fact that the large majority of European nations has been helpful with basing, with logistics, with overflights, with making sure that they lived up to the commitments.
And of course, President Trump himself on True Social just last night in all capital letters says NATO wasn't there when we needed them, and they won't be there if we need them again. Obviously, Rick Davis, the president has expressed his displeasure with NATO previously. It's been true during his first presidency, frankly, and it has been true in his second term thus far. But does this moment strike you as different? Is the alliance going to be able to come back from this, at least in terms of how aligned the U.S. was with it previously?
Yeah, I think that, first of all, thank goodness for Mark Rutte. I mean, we couldn't have a Secretary General that fits the bill for the current relationship between Donald Trump and the NATO allies than this individual. I mean, he's clearly got a rapport with Trump that can help manage and create a productive outcome in a difficult situation. So I think people matter, and I think this is a classic example of having Mark Rutte at the helm is really an important positive aspect. Two, I think we have to remember that U.S. Congress has a say here, and they have overwhelmingly supported our involvement in NATO, including in 2026 in the National Defense Authorization Act, requiring certain troop levels to be stationed in Europe as a part of our NATO commitment. And they did this because they don't want anybody fooling around with the structures that we've had in place that have created so much prosperity and peace in Europe. All that benefits the United States of America. So there's a interesting player who hasn't stuck their head up since that minute in passing that bill that is going to have a say in this, and that's Congress. Two, I don't blame the president for being angry. Europe has skated on their commitment to NATO for a long period of time. And when he requested some assistance, regardless of whether it was, after he'd already taken action and gotten into a jam, it shouldn't matter. There should have been an immediate response like we had with Ukraine when the president challenged his involvement in Ukraine. And NATO members immediately got on a plane, flew to Washington, came to the Oval Office and worked out some of the problems. It does not help to have this kind of tension within the alliance.
Well, and when we think about things that aren't helpful, Doug, and Rick's point is well taken that, yes, it would require an act of Congress if we are going to formally see the U.S. pull out of NATO. I think we all recognize how unlikely that is to happen. But it was raised to me on Balance of Power yesterday, the notion of kind of quiet quitting the alliance, even the suggestion that we may not be there for them because they are perceived to not be there for us. Does a formal withdrawal matter if you have that kind of rhetoric out there, rhetoric that is well understood by the adversaries NATO is supposed to stand against?
It's such an excellent question. And I think, just to go back to Rick's point for a second, it's true that the NATO allies had skated on their commitments to put money into their defense programs. And it was good for President Trump to push them to do that. NATO is a giant, complicated organization, but at the end of the day, it's a promise. The Article 5, right? We will come to the defense of our allies if they're attacked. There is a war being conducted, an imperial war of aggression by the Russian state on the border of NATO right now. I wonder how much the Russian apparatus, the foreign policy leadership, and Vladimir Putin believe that if they encroached into NATO territory, President Trump would ride to the rescue, especially given the U.S. commitments now in Iran, in Venezuela, maybe in Cuba. So, yeah, it's all based on a promise and the idea that the U.S. will have European allies' backs if the worst happens. And I think that people are fairly questioning whether or not under this regime the president would do that. Now, the U.S. can try to rebuild that trust, but at some point, that promise being broken is hard to put back together. And that's a real threat, not just for Europe's security, but the security of the world.
All right, we'll leave it there. Thank you for joining us, our political panel today, Doug Farrer. Actually, Doug, I have 30 seconds. Can I ask you about the DOJ suing the NFL? You used to work for FTC Commissioner Lena Khan. In 20 seconds, your thoughts on that?
Yeah, I love the NFL. I'm a Washington Commanders fan, and I'm lucky to live in the area. But if you don't and you want to watch your team, you got to pay for Prime. You got to pay for all different types of subscriptions. And look, this DOJ has had huge problems, lots of corruption, really weird stuff happening. But going for NFL fans' favor is always good politics.
I have to say, as a Denver Broncos fan living in D.C., this one hits home for me. Doug Farrer, thank you for joining us alongside Rick Davis, our political panel today here on Balance of Power. And we'll have more coming up next right here on Bloomberg TV and radio.
It's 1:40 on Wall Street. I'm Amy Morris. An oil rally sputtered. Stocks are higher after Israel agreed to direct talks with Lebanon. We check the markets for you all day long here at Bloomberg. The S&P 500 up 0.75%. NASDAQ up 0.8%. The Dow up 0.8%. The 10-year Treasury yield at 4.26% and the 2-year yield at 3.75%. WTI is now 1% higher, around $95 a barrel. Brent crude is little changed now on the downside, around $94 per barrel. Mortgage rates declined for the first time since the start of the war in Iran, providing some relief for the U.S. housing market. The average rate for 30-year fixed loans was 6.37%. That's down from 6.46% last week after rising 5 weeks in a row. Consumer spending barely rose in February amid persistent inflation because of the war. Inflation-adjusted consumer spending increased 0.1% after stagnating in January, with core PCE increasing 0.4% from January. The latest spending figures are consistent with a consumer who has grown cautious over the past 6 months amid cost of living concerns and a sluggish job market. Sazerac is eyeing a deal with the maker of Jack Daniel's. Sazerac's interest comes as Brown-Forman has been in deal talks with another competitor, Pernod Ricard. Sazerac has 550 brands, including Buffalo Trace Bourbon, Fireball Cinnamon Whiskey, and Buzzballs cocktails. Alcohol companies are dealing with slowing sales as Americans drink less and choose alternatives like cannabis and THC beverages. Brown-Forman shares now 13% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris checking on the markets for us. Thank you so much. And we'll get back to today's market activity with Bloomberg's own Alexandra Semenova in just a moment. But first, I want to run through some headlines as we've just gotten a new statement in from Iran's supreme leader, Mojtaba Khamenei, of course, the son of the late Ayatollah Ali Khamenei, issuing a statement in which he says we did not seek war and do not seek it. But going on to say, as we consider the prospect of ceasefire and longer-term negotiations to end the war, that Iran is seeking compensation for war damages. He is reiterating that. He also says that we are moving to a new stage in managing the Strait of Hormuz. The question, of course, is that new stage going to look like what the situation is now? Currently, it is only a trickle of vessels getting through as Iran is still able to exact control to the extent that any vessel trying to transit the waterway needs to do so in coordination with Iran's armed forces. This is not necessarily the free flow of trade through that waterway that we were seeing prior to this war beginning. That is obviously underscoring how much there is still to figure out if there is to be a negotiated agreement between the U.S. and Iran. The setting of the stage of that, of course, for talks in Islamabad, in Pakistan, that are set to take place this weekend. There could be two sides that are very far apart, especially as we consider not just the Strait, but this notion of war damages and the other issues that Iran at least have said publicly that they are hoping to deal with here. All of that said, despite the work that clearly is still yet to be done, the market doesn't necessarily seem like it is waiting around. As Amy was just running us through, we are seeing a risk appetite taking hold for a second day. So let's get into that now with Alexandra Semenova, who, of course, is on our equities team here at Bloomberg and is joining me from our New York studio. So, Alex, obviously we are seeing a second day of gains for stocks. Not that stocks necessarily were the ones that we saw bearing the brunt of concern over this conflict to begin with, but how much headroom do you see for this to continue, even with all of the uncertainty that remains out there?
Hey, Kaylee. So it's really dependent on the headlines that we get. So we're seeing this rebound across Wall Street really gaining traction after at first it was somewhat of a short squeeze. Things got oversold, so investors started buying in. But now there's a little bit more momentum behind it. We started the day off lower earlier, but the S&P 500 notably turned higher when we got that headline indicating that Israel agreed to direct talks with Lebanon. The index is now on track for a 7th straight day of gains. This is the longest winning streak since October for the benchmark. And another positive thing to point out is that the advance is pretty broad-based. It looks like 9 out of 11 sectors in the S&P 500 are in the green right now. Energy is slumping, retreating today, and the VIX also pulling back below the psychological 20 handle. So investors kind of getting a little bit more optimistic that we are moving in the right direction here. We also had data from Goldman Goldman Sachs come out today and say that long-only investors yesterday were big buyers of stocks, and particularly mega cap stocks. All that said, Kaylee, this is a fragile truce at this point. The Strait of Hormuz remains closed, as you mentioned, and the longer that we go with higher oil prices, the more of a tipping point that becomes for equity returns to turn a negative later into the year. So we're going to have to see everything moving in a positive direction.
Well, especially because when we think about those higher energy costs and the input costs just in general, that potentially, if it continues for an extended period of time, has the power to eat into margins. It could start affecting earnings, or at the very least, earnings outlooks. We're about to get headlong into that season, Alex. What should we be watching for as that gets going?
Yeah, so next week will really be a big test for this equity rally, whether it has staying power or not. Now, of course, first quarter earnings results, the numbers that companies report for this previous quarter, are unlikely to be scathed at this point by the higher oil prices. So corporate guidance going ahead from here is going to be incredibly important. What executives say during their earnings calls about the impact of higher gas prices, higher oil prices on their businesses, and whether or not they see inflation as a risk. And the bar is high, given that analysts were actually marking up their earnings forecasts throughout this period, something that is highly unusual to see during periods of stock market volatility. So for now, S&P 500 companies are still expected to grow full-year earnings by double digits. That is probably part of the reason that we haven't seen equities fall lower. Call it about 12% because the estimates vary. And for the first quarter, consensus expects year-over-year EPS growth of 16%. Deutsche Bank places it as high as 19%, which would be the biggest profit increase since COVID. So very high bar. And of course, we have the big banks kicking things off. They're going to be the curtain raiser for the season. We're going to listen closely to what Jamie Dimon has to say when JP Morgan reports on Tuesday. We also have results from Pepsi and Netflix and Johnson & Johnson. So a lot of companies kind of being bellwethers for the consumer and where we go from here.
All right, the fundamentals may start to matter for what Alexandra Semenova just described as a very headline-driven market right now. She's, of course, equities reporter for us here at Bloomberg. Thank you so much. And if this market is headline-driven, obviously, given the action we are seeing, it has been liking the headlines that it is receiving. But we did just, as I mentioned, get fresh headlines on the Bloomberg terminal, a new statement from Iran's supreme leader, who says, in part, not only reiterating that Iran is seeking compensation for war damages, but that we're moving to a new stage in managing the Strait of Hormuz. What exactly is that new stage? And is it in alignment with what the U.S. would like to see when it comes to the Strait, as outlined by the press secretary, Caroline Leavitt, yesterday?
We have seen an uptick of traffic in the Strait today, and I will reiterate the president's expectation and demand that the Strait of Hormuz is reopened immediately, quickly, and safely. That is his expectation. It has been relayed to him privately that is what's taking place, and these reports publicly are false.
So for more on the Strait of Hormuz and the implications for global energy markets, we turn to Michelle Brohard, head of policy and geopolitical risk at Kepler, who is joining us now on Balance of Power. Michelle, thanks for the time. Even as the White House contends that there is activity resuming in the Strait, the data we're looking at here at Bloomberg would suggest otherwise. It is just a handful of vessels, and all of them pretty much have ties to Iran. And Iran, of course, is maintaining that you need to have clearance and coordination with the armed services to transit this waterway. So has anything materially changed since this ceasefire began?
We haven't seen anything materially changed. What we are hearing is the same as what you're hearing. But there was a note that came out today that Iran would allow 15 vessels to pass through the Strait. That's in comparison to over 40 vessels prior to the war. So even when the Strait opens during this ceasefire, this 2-week ceasefire period, 15 vessels is not very many, and it certainly doesn't clear the backlog of the vessels that are sitting currently in the Middle East Gulf.
Well, so then are energy markets right now mispricing what the reality actually is? We're below $100 a barrel on oil once again, at least in the futures market. Obviously, we've seen something very different in the physical market, Michelle. But I wonder if you kind of share the optimism we've seen reflected over the last few days.
I actually don't share the optimism. In the front of the market, sure, there's going to be, it's certainly possible that part of what we've already seen has been priced into the front of the market. I think that when you look even even like 2 months back, because this curve is in such steep backwardation, that the back of the market is certainly undervalued relative to the risks that still exist inside of the marketplace. In addition to, like, even if we can assume that the Strait goes back to some sort of working capacity, and maybe it's 50 or 60%, that's still a significantly slower rate in a time when every single country in the world is going to be focused on energy security and restocking their reserves. So I think that the back of the market is certainly mispriced. And when I say the back, I mean like Deck 26 through Deck 27. I mean, those months are certainly underpriced unless you're expecting some sort of recessionary action that's going to happen in the global market.
Well, and it's one thing to consider just the idea of flows resuming through the Strait. It's another to consider the actual production capacity of these Gulf states in the first place, as we've obviously seen some infrastructure damage in places like Qatar and LNG facilities, but we also have seen production shut-ins. That's just not a light switch that can turn on and off, right? Michelle, how long is it actually going to take for production that we were seeing to get back up and running?
I think we'll see some countries be able to come back fairly quickly. Like the Saudis will be able to come back fairly quickly. I think that the UAE, there may be some infrastructure damage that needs to be repaired, but if they just shut down their wells, I think they can come back quickly. Iraq is going to take a long time. So it could take a while for us to see Iraqi production come back online. And Kaylee, one thing I want to mention is that everybody's looking at the ships leaving the Strait, but I think one thing we really need to focus on are ships going back into the Strait. So once you evacuate from the Strait and you're floating around the global world, do you want to go back into a war zone that has significant risks of the ceasefires falling apart, or ships running that risk of getting bombed again? So I think really the risks that we're going to see going forward are ships re-entering the Strait, because I think once you evacuate, you probably don't want to go back in.
Well, so then obviously what we're talking about here potentially could be, at least in the medium term, a structural change in the way in which energy is able to flow freely throughout the world. Obviously, we've seen efforts toward workarounds, be it the East-West pipeline, for example, for Saudi Arabia, efforts to kind of focus more on output through the Red Sea. Is this going to be potentially permanent, Michelle, even if we do see eventually a reopening of the Strait and an ultimate long-term deal reached between the U.S. and Iran?
Yes, because it's Israel and Iran. So I think that the risks are going to continue to remain. We're going to continue to see high risk. People are going to be, insurances are still going to remain high. I would guess that it will take at least a year of consistent normal activity for people to feel comfortable transiting the Strait. I think what we're going to see in response to that are all of the countries that have been impacted are going to build infrastructure away from the Strait. So I think that's one thing that's going to happen, is just the inflow of capital to build infrastructure to transit away from the Strait so that they don't have access to that, kind of like what the Saudis, they've been preparing for a number of years with the East-West pipeline. It is certainly paying off for them now. I think the Iranian toll is also something that's going to change not just the Strait in Iran, the Hormuz Strait, but it could potentially change other straits as well. If they start charging a toll, what makes China not charge a toll or Turkey not charge a toll? So are we going to start to see global trade change just because this will set a precedent for the rest of how other choke points are valued?
Well, as we consider, you raised the Chinese. Obviously, Russia, of course, has been a large focus of conversation, as well as it has been a net beneficiary of what's happening in the Middle East, given its own energy products and the removal of sanctions that we have seen. What happens if we see material removal of sanctions on Iran in a negotiated agreement? How does that change things for the global market?
Well, Iran exports before this happened were at all-time highs. So Iran barrels were still making it to the market. They just weren't making it into the market that was for unsanctioned barrels. So Iran exported out and it went all to China. Now their barrel will move from a sanctioned barrel to an unsanctioned barrel, similar to Venezuela. Venezuela was a sanctioned barrel, now it's essentially a non-sanctioned barrel, which means that it moves from one pool, which had one buyer, to a pool with many buyers. So it will potentially raise supply marginally across the world, assuming that China doesn't try to replace that Iranian barrel. If China continues to replace the Iranian barrel, then we will see demand for the sanctioned barrel as well as the unsanctioned barrel.
All right, interesting stuff. Appreciate you joining us, Michelle Brohard, Head of Policy and Geopolitical Risk at Kepler, here with us on the early edition of Balance of Power. I'll see you for more on the late edition at 5 p.m. Eastern, right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed. Welcome to Bloomberg Business Week Daily. I'm Carol Massar, along with Tim Stanovic here at Bloomberg headquarters in New York City. It is Thursday, April 9th, 2026. A lot coming at us once again. Having said that, we do have stocks. They are higher, and they're pretty much staying at their best levels of the session. More names in the S&P 500 are gaining on this Thursday. And crude, we just heard our team mentioning crude. It's been as up as much as WTI, at least, up almost 9% in today's session, but right now, Tim, we're just looking at about a 2% gain. So we pulled off some of those highs of the session.
Yeah, down to just about $96.30 per barrel. Brent at about $95 a barrel. This says Israel says it will hold direct talks with Lebanon. That's really where we saw oil prices come down and stock prices move higher. We're going to talk a lot about the war today.
We are.
We're going to go to the White House for an update on everything happening in the Middle East. This is President Trump says U.S. troops will remain there for the time being.
And Lebanon has been a sticking point, if you will, especially between Israel and Iran. So we've been talking about that over the last couple of days with some of our guests. So we'll talk about that as well. Hey, and on that, former U.S. State Department and Pentagon official Edward Fishman on Iran using America's playbook against the United States. He wrote the book Choke Points, which is all about economic warfare, which is, I think, very, very relevant to today's environment.
The Strait of Hormuz a choke point?
Yeah.
I think so.
Yeah, all in on that one. Hey, we're also going to get the latest read on the U.S. economy. And then Sarah Hunt over at Alpine Saxon Wood, she's chief market strategist there. She's going to connect all of the dots to us and how it all relates to the financial markets today, but also looking forward. And how far can she look out in this environment?
All right, and we're also going to talk health, specifically the gaps in healthcare between men and women. Dr. Susan Blumenthal, retired Rear Admiral, former U.S. Assistant Surgeon General, is going to join us a little later in the hour.
Let's get to that trade. Let's get an update on where we are. Joining us on that is Amy Moore. She's in for Charlie Pellet.
Hi, Carol. A bounce in stocks as an oil rally waned after Israel agreed to those direct talks with Lebanon. We check the markets for you all day long here at Bloomberg. S&P 500 up 0.6%. NASDAQ up 0.75%. And the Dow up 0.8%. 10-year Treasury yield at 4.27% and the 2-year yield at 3.76%. WTI is up 2.3%, around $96 a barrel. Brent crude up about 0.5%, around $95 a barrel. A bit of a jump in weekly jobless claims up to 219,000, but continuing claims fell to the lowest level in almost 2 years. Amazon says its web services artificial intelligence revenue run rate was more than $15 billion in the first quarter and ascending rapidly. CEO Andy Jassy said in a letter to shareholders that AWS has the potential to grow even faster. Amazon also committing more than $4 billion to expand its rural delivery network. Shares of Amazon more than 4.5% higher. And round one of the Masters continues at Augusta National. At last check, Sam Burns atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Massar and Tim Stanovic.
All right. Thank you so much. Amy Morris in there for Charlie Pellet. So lots to cover. So let's get right to it. First up, the White House and the latest from President Trump and his team when it comes to ending that war with Iran. As we've been talking, we do have Israel saying it will hold direct talks with Lebanon. This has been very, very important in terms of making some progress. We'll see where we go from here. But President Trump also saying that U.S. military, or reiterating that U.S. military will remain in place around Iran until ceasefire is firm. So, yeah, we've got some important meetings ahead of the weekend, but I'm curious about kind of adding it all up.
Yeah, and look, meantime, just before the top of the hour, we did hear an update from Iran's supreme leader, Mojtaba Khamenei, who said that we did not seek war and that they're moving to a new stage in managing the Hormuz Strait. We don't know what that actually looks like and what the management looks like, but that's the latest out of Iran.
Yeah, and we've talked about the Strait as being such an important leverage point for Iranian officials. All right, let's go to the White House North Lawn, and to Bloomberg News Washington and White House correspondent Jeff Mason. He joins us on this Thursday. Jeff, I am curious, does the White House feel like they're making progress? Are they frustrated? We are looking forward to these weekend meetings. So kind of what are you hearing about kind of where we are from the U.S. perspective?
Well, I think the most important development today really is the one that you just referenced between Israel and Lebanon. Certainly the fact that Iran, after seeing the Israeli attacks on Lebanon shortly after the president announced the ceasefire and after Iran said it had agreed to the ceasefire, then calling all of that into question because of the skirmishes or the attacks between Israel and Lebanon has been a blow to the peace process. So Prime Minister Netanyahu being open to or calling now for direct talks is a pretty big development. And also interesting that President Trump said to NBC that he was asking Netanyahu to scale back his attacks and Israel's attacks. That's a little bit of a shift from yesterday when the president emphasized that Lebanon was not part of the peace deal. So I think that's where the focus is today, heading into those really, really crucial talks over the weekend.
Well, we're just hearing, Jeff, and forgive us because you might not have seen this yet. It's just crossing the Bloomberg terminal in the last couple of minutes.
Sure.
Benjamin Netanyahu saying we are continuing to strike Hezbollah with force. He says that we will not stop until northern Israel is secure, and there is no ceasefire in Lebanon. He says he intends to reach more peace accords with Arab nations. So is there a disparity or a mismatch between the rhetoric from Benjamin Netanyahu and from the United States?
Well, there have certainly been mixed signals, and that has been a characteristic of this war and the rhetoric about this war coming from the White House and now from Israel since inception more than 5 weeks ago. So this would seem to follow along with that same pattern. And that, of course, raises more questions and raises the stakes for the talks this weekend that Vice President Vance is going to lead on behalf of the United States for a more permanent ceasefire.
Yeah, we do have another one. Benjamin Netanyahu intending to reach more peace accords with Arab nations. So again, just kind of building on this. And, Jeff, it makes me wonder, how many fronts are there? I mean, I feel like, of course, there's U.S. versus Iran. There's Israel versus Iran. There's Israel and Lebanon. I just wonder, is everybody getting closer to being on the same page with this?
Well, it's hard to say that they are if those attacks are continuing, but some of the rhetoric indicates that that's their aim. And certainly the fact that the president is sending the vice president for talks with Iran this weekend suggests that the United States is very eager to have a longer-term solution. But you're not wrong to bring that up if the rest of the region, or at least some of the countries in the region, including the one country that went to war with the United States against Iran, is not fully on board or is not supporting that because of their separate strikes in Lebanon, that's going to be a sticking point.
Jeff, one quick question, 30 seconds. Where's Marco Rubio in all of this? Is he not involved in these talks?
He's not going to be physically present for the talks, but certainly that entire national security inner circle is playing a role. But the people who they've said, who the president has said is going to lead the talks this weekend are Vice President Vance and envoys Steve Witkoff and son-in-law Jared Kushner.
All right. Sounds like a busy weekend. A lot of them have been busy. Jeff, great stuff, as always. Jeff Mason, he's Bloomberg News Washington and White House correspondent. All right, that's the latest on the war, at least from the U.S. perspective. Let's get to the latest on the U.S. economic backdrop.
Yeah, let's talk a little bit about data on personal income and spending, inflation, weekly jobless claims, and more. With what you need to know, what matters, Bloomberg TV and radio, international economics and policy correspondent Michael McKee. He joins us from Augusta, Georgia. Mike, a slew of data. Any surprises that you found in there?
Probably the biggest surprise was the one that maybe matters the least in the sense that it's the oldest news. Fourth quarter GDP falls to just 0.5% from the initially reported 1.7, which was then revised down to 0.7. Now we're at 0.5 as consumer spending trailed off in December and did not pick up in January. We see the February personal spending numbers now come in just up 0.5%, a little bit slower than anticipated, and the 3-month moving average has moved down. So what we're seeing basically in all these numbers is that consumers are starting to weaken. The inflation-adjusted spending was up just 0.1%. They've been keeping the economy going. So going into the war, we were maybe in a little bit worse position as an economy than we thought we were.
All right, so we got those Fed minutes, right? We talked about that with you yesterday. You were in D.C., Mike. You've been a busy guy moving around. But having said that, so the Fed is on this. I mean, this is old data, but it also shows you where the economy was before the war. And consumers weakening is certainly something to be concerned about.
Yeah, the interesting thing is that we did have such a strong jobs report for the month of March. And while we saw a little bit of an increase in jobless claims last week, it's not all that much, and it's still within the range it's been in. So the labor market doesn't seem to be weakening all that quickly. We did see in personal income that wages only rose 0.2% after rising 0.5% the last time. But it was really a drop in dividend payments that pushed down personal income to a negative 0.1 this past month in February. So right now, it looks like the economy is hanging in there, but some of the things that have been driving it are beginning to look a little worrisome. Maybe like you've driven your car and the gas gauge is getting down towards E and you're not exactly sure how much farther you have to go.
It's a good metaphor right now, given gas prices. Hey, just before we let you go, CPI tomorrow, University of Michigan sentiment. Just set us up for what to expect there, very briefly.
Oh, basically, welcome to the war. We're going to see the CPI headline rise quite a bit. The economists think by about a full percentage point and go from 2.4% to about 3.4%. It's going to be basically petroleum and some of the byproducts of that. Still early for it to feed into the rest of CPI, but it will get people's attention. And one has to assume that the University of Michigan sentiment numbers are going to go down. We saw a jump in inflation expectations from Michigan last time, and we could see another one as people internalize the idea of having to pay a lot more for gasoline.
$90 to fill my tank. All right, got it. Totally. Mike, thank you.
What do you drive?
It's that old Hummer, you know those old Hummers that they had in the early 2000s?
It's not a Hummer. Anyway, moving on. All right, Michael McKee, thank you so much. Safe travels, you. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. All right, war update, check. U.S. economic data, check. Let's get to the markets. Joining us is Sarah Hunt. She's Chief Market Strategist, Portfolio Manager at the asset management firm Alpine Saxon Woods. They've got about $825 million in assets under management. She's here in studio. Welcome. So nice to have you.
I love coming in the studio. Thank you.
Thank you. We love having you in studio. Come as much as you would like. The U.S. war in Iran, has it impacted how you think about portfolio management and investing yet?
Well, we were starting off this year with some concerns about volatility anyway. It certainly exacerbated that for obvious reasons. And depending on how much of an energy shock this continues to be, it's going to have an impact, I think, on earnings, and it's going to have an impact on people's ability to spend and everything else. From a longer term perspective, any kind of conflagration is problematic for a million humanitarian reasons. Markets tend to look a little bit through it depending on how badly that makes a difference. I think that because the Strait of Hormuz is such a bottleneck for so many things, not just oil and gas, but fertilizer, helium, there's a number of other things there. All of those things come into play.
We talked about helium on our call this morning because we're going to talk about semiconductors
all of those things come into play, and I think that's part of the problem of how to figure out how to look at this because you don't know how long this lasts. You unbottleneck that and things start to get better. They should hopefully rather quickly.
How quickly, though? That's the question.
And I think that that's a question that I'm not even sure everybody who's on the ground saying how long it's going to take actually knows, because until you can get in there and look at everything and see, I'm not sure.
Well, the reason I ask is because it has been almost 48 hours since the president announced just before his 8 p.m. deadline on Tuesday that there would be some sort of fragile ceasefire reached, and we're still not seeing the free flow of traffic through the Strait.
I think the traffic through the Strait is this is going to sound crass, but more important than the political ramifications of a ceasefire. You need to get things moving. They're not moving yet. The argument now is that maybe it's because of the Lebanon issue, maybe not. I don't know. The point is, until things start to get moving, it's hard to say how long it will take for them to get moving in a regular way. Obviously, in the beginning, like a traffic jam, you're still going to be jammed up for a while. So how long is that while, and what kind of substitutions are people making now? What kind of substitutions can they make? Well, I don't think anyone's completely sure yet.
And there has to be some certainty. Like, it's not a case of, okay, let's start opening it up, and all of a sudden we start seeing some, random firings back and forth that just puts everybody on ease and nervous again.
There needs to be commercial traffic moving through in a regular way, and that needs to mean that there's insurance capabilities and everything else. A lot of those things are all tied together, and right now I don't think we have the answer to that yet.
You know what we're all waiting for on answers is earnings and valuations, and the combination. Earnings season about to get underway. We've got the big banks starting it off, kind of officially, unofficially. What are you expecting re-earnings, and are you anticipating that CEOs are going to be comfortable giving outlooks in terms of forecast delta? Was it Delta that basically confirmed it but didn't change its forecast?
Which was good news for investors.
Right,
They were
right.
happy about that.
But we're seeing some of that. So are we going to get multiple scenarios? Or do you feel like the C-suite feels confident and knows what's happening next?
I think it's going to be sector by sector, right? Because
Okay.
for some sectors, this uncertainty on energy prices is going to weigh much more heavily than on other sectors. And I think that you've obviously seen a lot of major CapEx announcements and all sorts of things going on in the tech sector, which is why those earnings kept climbing up, even in the face of some of the other things that are going on. The question is going to be, is the negative impact to an energy and other supply shock going to start being a detriment to earnings? And so far right now, I don't think people are baking it in. It makes it difficult to believe
Wait,
if this
geopolitical or just in general supply shocks?
the general supply shocks that
Yeah.
are going on in both energy and, as we said, helium and fertilizer and things that have become more expensive. Those things haven't filtered through yet. I don't think you're going to see them in the first quarter. I think you're going to see people maybe talking about them. I think if this is still ongoing in another 2-3 weeks, it's going to be hard for people to give guidance and give it specifically, especially depending on your industry, if you're dependent on that consumer spend.
I know we say it every quarter, Carol, but we always look forward to earnings season. It gives a good idea from the consumer.
Right, it's
I
a
mean, we'll
gut
get some of
check.
the banks next week, so looking forward to that. I think that also raises the question of what the Fed does and what the Fed does for the remainder of the year. If we do indeed see higher prices for a while when it comes to commodities, when it comes to what we're paying for things in the next couple of quarters, what does it mean for the Fed's rate path?
Well, I think that Chairman Powell was pretty clear the other day on saying we're looking at this as a temporary shock because you had started to see people bake in potential rate rises. And I think that that was something that, given all the other uncertainties, was not something that the markets or investors needed. It's really going to depend, again, on what happens here, because this is not a price rise because there's not enough stuff. There's not enough stuff that can get places. So you can argue that on the oil front, you could see, I mean, you saw a $20 drop in the price of oil when they thought that you were going to start seeing transiting again. That just tells you how much is being baked into that price. The problem is that the longer things take to get to some place, the higher those prices stay for a longer period of time, right? They're always immediately up and very sticky
Maybe
down,
that's
and
why
how
we
sticky down.
Still see higher prices at the 6 months out on the futures curve.
Which is what we've been looking at.
And you'll see it at the gas pump too, because if I'm a refiner, I'm buying oil today that's got to be refined to get to someplace. So I'm not going to cut those prices the minute oil drops. I've still got to get it through my system, and I paid for the input prices a lot higher. So that is very difficult, and that's not a situation that even people in the energy patch love. They don't like that kind of volatility.
Sarah, do you think we're at a bigger risk of a growth slowdown or an inflation ramp up? Or maybe
Yes.
both.
I think I think the problem is that you could be seeing a little bit of both, and that's not what anybody wants to see, because everybody was banking on the fact that this year you were going to see growth, and so if inflation hadn't come down to the point where people wanted it, it was okay. And then you throw this Iranian conflict in, and it completely changes the math in terms of that inflation trajectory.
So how do I win in this environment?
You go back to looking for companies that are throwing off cash, that have dividends, that have good balance sheets, that don't have to worry about some of the things that we're talking about here because they have the staying power. And, we tend to look a lot at cash flow and capital return. Can you pay a dividend? Can you buy your stock back? Can you do some of the things that shows that you are in a good spot regardless? And it's going to be sector by sector. There's some in every sector that can do that. There are some that aren't. But there are some places that are going to be more challenged. And the lower end consumer is going to be really challenged with higher gas prices.
Are you optimistic or not?
Sometimes. There are some days that I'm very optimistic that this is actually going to end up in a better place, and some days where I don't know where this goes and what that means for the longer term. And I think that's sort of everyone's. I mean, you can watch the market be, up and down and up and down. It has the same optimism, pessimism swings, and it's difficult because it is a psychological reflection in many cases.
I do this a lot. I do. Sarah Hunt, thank you. Come back anytime. You are so welcome. Chief Market Strategist, Portfolio Manager at Alpine Saxon Woods. When we come back, an update more on the war from Edward Fishman.
It's 2:21 on Wall Street. I'm Amy Morris. The U.S. and Iran preparing for peace talks in Pakistan later this week, and Israel has agreed to talks with Lebanon. That sparked a modest rally on Wall Street. We check those markets for you all day long here at Bloomberg. The S&P 500 is up 0.5%. NASDAQ up about 0.5%. The Dow up 0.6%. The 10-year Treasury yield at 4.27%. The 2-year yield at 3.76%. WTI about 3.25% higher, around $97 a barrel. And Brent crude is at $96 a barrel, about 1% higher. Chevron says its production fell as much as 6% in the first quarter, in part because of the war in Iran. The company attributed the decline to reduced output in the Persian Gulf region and Israel and some downtime at operations in Afghanistan. Chevron expects in Kazakhstan, Chevron expects a negative impact of as much as $3.7 billion. Shares now more than 1% lower. And earlier this week, ExxonMobil said it too had seen a production drop because of the war. Round one of the Masters continues at Augusta National. Sam Burns right now sitting atop the leaderboard. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, folks. So we've been trying to keep you up to date on our live blog, which is tracking the latest and greatest. I say that facetiously or obnoxiously about the U.S. war in Iran. But Israel has said it will hold direct talks with Lebanon. The President Trump, said U.S. military to remain in place around Iran until the ceasefire is firm. And there are no reports of strikes on Arab Gulf nations since Wednesday.
Okay.
So that's going on.
Okay.
And the Strait of Hormuz remains largely closed.
That's the thing.
Yeah, and Iran's saying any ships need Army approval. And we have talked over and over again how important the Strait has been. Iran understands that. That is their leverage here.
I think it's fair to say it's an economic weapon that's been wielded in this war.
Yep. It absolutely is. And on that, in a recent New York Times op-ed, former U.S. State Department and Pentagon official Edward Fishman argues that, quote, by closing the Strait of Hormuz for weeks, Iran has secured sanctions relief that in some respects surpasses what it achieved via the 2015 nuclear deal. And while the United States has long weaponized the financial system to advance its geopolitical aims, Iran has now learned to do the same with the world's most vital energy choke point. And it has done so by borrowing a playbook developed by the United States.
We want to talk about this. Back with us, Edward Fishman, Senior Fellow and Director at the Maurice R. Greenberg Center for Geoeconomics at the Council on Foreign Relations, also the author of the New York Times bestselling book, Choke Points, American Power in the Age of Economic Warfare. You're a lot more. I'm not going to read it all because we would have no time for an interview, but it's good to have you back with us. I want you to remind everybody, because you wrote this book, Choke Points, before this latest crisis. Just remind everybody about the premise of the book and this idea of economic warfare.
Yeah, so the premise of the book is that we are living in a new age of economic warfare in which these economic and geographic choke points. So an economic choke point would be the dollar, where 90% of all foreign exchange transactions go through the single currency, or Chinese rare earth minerals, where 90% of the global supply is refined by a single country, or a geographic choke point like the Strait of Hormuz, where 20% of global oil and gas goes through every single day before this war. Those have provided countries with unprecedented ability to disrupt the global economy. We thought, I think, or most people thought, that these were weapons that only great powers could deploy, like the United States and China. What we've seen in the last month is even a smaller country like Iran can hold the world economy hostage by weaponizing one of these choke points.
What are the impacts of something like that kind of switch?
Yeah, I mean, the impacts are quite substantial. And that, we used to think that in order to do hard-hitting economic warfare, you needed broad international coalitions, right? You think back to the 1990s when you had the sanctions on Saddam Hussein's Iraq. That was the whole international community. It was the UN. And that was a pretty high threshold for action, right? Because you can only, do hard-hitting economic warfare if you could get everybody else to agree to it. What Iran has showed is that even a relatively small country, medium-sized power like Iran, just by closing this strait, can, again, hold the global economy hostage, and they're doing it relatively inexpensively, right? Just using drones that cost about $20,000 or $30,000 a pop.
You also wrote about how the U.S., not the U.S., but Iran. You said if either side of this war has pulled off an act of jujitsu, it is Iran. For the first time since 1995, Tehran can sell oil directly to the United States and use the American financial system to collect payment. I mean, this has been a major no-no. This has been something the U.S., right, has restricted.
Yes.
That's big.
Right. And I think that in some ways there's an interesting echo of the Chinese rare earth embargo last year. You think about it, China in many ways has won the trade war with the United States by virtue of cutting off our access to a choke point. They retaliated. They showed that if you impose pain on the U.S. economy, you might get the U.S. to back down, even if they're not giving any concessions. Iran, spent years negotiating over its nuclear program. They got some sanctions relief, right? In the 2015 nuclear deal, the U.S. waived secondary sanctions, so they allowed, European banks, Asian banks to go back into Iran, but they didn't allow U.S. financial institutions to do so. Iran, by weaponizing the Strait of Hormuz for a few weeks, did get the U.S. to actually agree to allow them to use the financial system. So you just think about the lessons from both the Chinese embargo on rare earths and the Iranian cutoff of the Strait of Hormuz. Both showed that when you retaliate against the U.S., when you use choke points to try to hurt the U.S. economy, you actually might get more concessions than through diplomacy.
The Iran and the United States have long been at odds with one another, and the president likes to talk about how he's the first president to do this in 47 years, even though others have wanted to. I want you to put your State Department and Pentagon hat back on. Do you think that the reason why other presidents have not gone after Iran the way that this president has is because they knew about the economic power that Iran could have over the Strait of Hormuz?
Oh, yes. Yeah. I mean, look, what motivated...
That prevented Iran from being attacked in the past.
Yes. I mean, what motivated me to go into government, 20 years ago or whatever, was trying to come up with a way to curtail Iran's nuclear program without the use of military force. That was the goal in the Bush administration. It was the goal in the Obama administration. What we did through the nuclear deal, we got a limited deal with Iran, right? It wasn't perfect, right? Iran could still support proxies. They could still have missiles. That didn't make us feel good. But we didn't fire a single shot, right? We just used economic pressure. I think the reason that neither the Bush administration nor the Obama administration wanted to start a war with Iran was because you knew that it could go very wrong, right? And they could close the Strait of Hormuz. I think the thing that is most surprising, though, is even back then, when we thought about Iran closing the strait, we thought they would do so by virtue of laying hundreds, if not thousands, of these sea mines. And when you lay mines, I mean, they don't discriminate whether you're carrying Saudi oil or Iranian oil. So it would actually shut in Iran's own oil exports. And so we had a little bit of comfort that Iran might not take that step because it would be economically suicidal. But what Iran has done, and what I put forward in that New York Times essay, is that just by hitting a small number of commercial vessels with these cheap drones and missiles, they changed the risk calculus of the entire global shipping industry. And so they actually asymmetrically closed the strait, where no one else's oil gets through, but Iran's oil is getting through, in record numbers in the last few weeks.
So as a former, State Department, Pentagon official, was our intelligence bad? Like, where?
Look, I mean, the reporting is still coming out on this, and I'm excited to read the tell-alls whenever they are published. From what we know so far, it seems like the intelligence actually was pretty good. That Dan Kane, the chairman of the Joint Chiefs of Staff, who's clearly a professional, did put the risks on the table. My assumption, if I had to sort of, having been in the Situation Room and sort of how these things play out, my assumption is that Trump was a little overconfident. And by the way, you can understand it. If you think about his previous two military operations, Operation Midnight Hammer last June, where this 12-day war, no American casualties, and you take out large parts of Iran's nuclear program. And then even more miraculously, earlier this year, the operation in Caracas, where Nicolas Maduro and his wife are picked up and brought a couple miles from here in the Metropolitan Detention Center in Brooklyn. I mean, you start thinking maybe that military force is like an easy button. Yeah. And so my hunch is that he did get pretty good advice from the chairman of the Joint Chiefs, Dan Kane. I worked for one of his predecessors, General Marty Dempsey, and those guys are very professional. I think Trump was a little overconfident.
So given all of that and what we've seen thus far over the last 5 weeks, what we've seen out of Iran and the demands that Iran has versus the demands that the U.S. has, is there a chance in your view that the U.S. and Israel could exit this conflict and Iran would stop enrichment of nuclear weapons?
I don't think so. I think that we're at a point right now where the choices are we either cut a deal that leaves us worse off than we were before the war started, but prevents us from, potentially getting drawn into a quagmire, or we escalate militarily. I mean, just think about the math for Iran right now, right? They've established control over the Strait of Hormuz. That's something they didn't have before, right? They're now institutionalizing that, charging up to $2 million a ship. Yeah. Before this war, there was about 140 ships that went through the Strait of Hormuz every day. If you do the math, that's about $100 billion in revenue for the Iranian government. They're not going to give that up easily. And so my assessment here is that perhaps that's okay for the U.S. Maybe it's better to cut and run right now, allow Iran to make $100 billion a year by controlling the world's most important geographic choke point, because the alternative might be worse, right? The alternative is a ground invasion.
Well, is that possibly, we talk about regime changes and a new way forward for Iran within the region. Is that possibly a way for it to have a new way forward, or is that just a way to fund its nuclear ambitions, its weaponry, and, its various terrorist groups?
Yeah, I do not see the new Iranian government deciding they don't want nuclear weapons. If anything, interestingly enough, it was actually Ayatollah Khamenei, the now deceased former supreme leader, who was always a little bit lukewarm on nuclear weapons. He definitely wanted to have an option to nuclearize, and that's why they had a full-scale enrichment program. So they were trying to become a threshold nuclear state. But there was never an intelligence assessment that he actually decided to build weapons, right? I mean, they've got fissile material to build 10 bombs, and they never actually built them. I mean, with the younger generation in power now, and particularly with the IRGC clearly sort of at the driver's seat. I mean, all evidence suggests that they're the ones who put in Mojtaba Khamenei, right? They're running the show. They do want nuclear weapons, and you can understand why. I mean, you look at the countries that do have nuclear weapons, like North Korea, they don't get, bombed by the U.S. or
so they double
countries.
Down potentially from here.
I think so. Yeah, and that's why I think that I'm not resting easy yet that this war's over, because I think that the new status quo might be so bad that it actually might incentivize more attacks from the U.S. and Israel.
Well, on the reporting about what led to this, and that will come out, there was that great piece in the New York Times earlier this week, and it had to do with intelligence from Israel that was presented to the president in the Situation Room, and part of that included the Iranian people rising up and potentially taking control of the government. Protests in Iran. Why have they been largely silent during this war?
Look, this is one of the more complicated aspects of analyzing this conflict, because I think we need to be clear. The Iranian regime is awful, right? I mean, just earlier this year, they killed at least 10,000 of their own people who were protesting peacefully in the streets. So we would all be better off, and Iranians probably most of all, if you could get rid of the Islamic Republic. I think the key miscalculation, though, that the Israelis and I guess in turn the U.S. made was to think that the Islamic Republic was a rather shallow state, right? That if you just took out the top level of the government, everything would collapse. I think what they showed is that it's actually quite a bit deeper than that. And so I think that, right now the prospects for regime change look poor. And just to quickly answer your question about why you don't see more people in the streets, this is a common sort of thing that we see. When you're under bombardment, you have a rally around the flag. People don't want to go out of their homes. They just want to hunker down.
Yeah. Real quickly, 25 seconds. Next potential big checkpoint, is it China, Taiwan, semiconductors?
I think the future choke point that I'm worried about right now is actually clean energy technology. I think one of the easiest bets coming out of this war is American allies in Europe and Asia are going to double down on electric vehicles, batteries, solar panels. And guess what? You know who controls all of those choke points?
China.
China.
Come back soon.
Anytime.
This was fab. Eddie Fishman, director of the Center for Geoeconomics at the Council on Foreign Relations, the author of the book Choke Points. Check it out. We have. That's why we have him back.
It's 2:40 on Wall Street. I'm Amy Morris. Oil trading costs are surging as the Intercontinental Exchange is boosting margins traders have to post for Brent and European diesel futures contracts. We check markets for you all day long here at Bloomberg. The WTI is now about 4% higher, around $98 a barrel. Brent crude sticking around $97 a barrel. It's about 2% higher. S&P 500 is up 0.5%. NASDAQ up 0.5%. The Dow up 0.6%. The 10-year Treasury yield at 4.28%, and the 2-year yield at 3.77%. Mortgage rates declined for the first time since the start of the war in Iran, providing some relief for the U.S. housing market. The average rate for 30-year fixed loans was 6.37%. That's down from 6.46% last week after rising 5 weeks in a row. Consumer spending barely rose in February amid persistent inflation because of the war. Inflation-adjusted consumer spending increased 0.1% after stagnating in January. The latest spending figures are consistent with a consumer who may be more cautious now over the past 6 months amid cost of living concerns and a sluggish job market. Sazerac is eyeing a deal with the maker of Jack Daniel's. Sazerac's interest comes as Brown-Forman has been in deal talks with another competitor, Pernod Ricard. Sazerac has 550 brands, including Buffalo Trace Bourbon, Fireball Cinnamon Whiskey, and Buzzballs cocktails. Alcohol companies are dealing with slowing sales as Americans are drinking less and choosing alternatives like cannabis and THC beverages. Shares of Brown-Forman now 16% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. It's Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Carol Masser and Tim Stenovec.
All right, Amy, thank you so much. Carol Masser, Tim Stenovec live here in our Bloomberg Interactive Brokers studio. Hey, at the beginning of the year, Bloomberg's Jessica Nix reported more Americans are living with cancer as death rates continue to decline thanks to improved detection methods and better treatment options. 7 out of 10 people survive for 5 years after a diagnosis during 2015 to 2021 across all cancers, and that's a key goal of therapy according to the American Cancer Society's annual report. That, too, was released at the beginning of the year. That improvement, Tim, extended to more aggressive types with higher survival rates for melanoma, liver, and lung cancers compared with decades prior, according to that report.
Well, everyone knows what's coming next. And yet.
Yeah.
And yet. As we've reported out, as we've talked about, there are gaps between groups of Americans, including men and women. It's time now for the Business Week Women's Health segments, where we focus on key issues and developing technologies that impact the present and future of women's health around the world. It is great to have back with us Dr. Susan J. Blumenthal, retired Rear Admiral, former U.S. Assistant Surgeon General, the first ever Deputy Assistant Secretary for Women's Health. She's a visiting professor with the MIT Media Lab. She joins us once again from Washington, D.C. It is great to have you back. I want to just start by getting right to the crux of what we want to talk about, and that's the gap between men and women's healthcare, especially with regard to aggressive cancers. Why does that still exist in this day and age?
Well, I think it exists, again, because there was an underfunding and a lack of focus on women's health for all too long in the halls of public policy, at the research bench, and in clinical settings. And, when I was head of women's health decades ago, we shone a spotlight on these inequities, and we developed initiatives to really address them. But there are gaps, and that laser-like focus, was not necessarily maintained. And so we have a ways to go. And, I really want to talk to you today about lung cancer in women, because, again, while we did talk about this years ago, it is still a major threat for women. There's a crisis, a lung cancer crisis in America. A friend of mine, Shirabola, just developed it. She's 42 years old, healthy, a runner, eats right, does everything right, but she was a non-smoker. In fact, her father was a pulmonologist. And why? Well, the fact is that, we focused on men for lung cancer because we knew they smoked. And so all the research was done on them. And so we targeted our prevention programs to stop men from smoking. And their lung cancer rates came down.
And I think we all know people who've been through this, who have been non-smokers, like your friend who you just mentioned. Why is this cancer developing in young, otherwise healthy people who don't have those risk factors?
Well, that's the big question, because the research hasn't been done there. We focused on smoking, and again, because we didn't target women to smoke, their lung cancer rates went up. In 1987, lung cancer surpassed breast cancer as the #1 cancer killer of women. More women die of lung cancer than breast cancer, cervical cancer, and ovarian cancer combined. Wow. So we need to, target awareness to women. But your question is so important. 20% of cancer deaths are in people who never smoked. And why is that? Again, we need to focus research efforts there. And why women? Women now in 2021, women under 65 surpassed men in terms of their lung cancer deaths among non-smokers. Why? So genetics plays a role. Environmental factors, people who have been around people who've smoked, people in environmental pollution, radon exposure. But there are genetic factors. There's a stronger family history if you've had lung cancer in your family, but other genetic mutations that are just being identified. So this is where the research really needs to focus. And then, most diseases are due to inheriting a gene or a gene with environmental mutations, environmental factors that interact with normal genes and cause them to misspell. So only a small percentage of disease, you inherit that gene and it becomes that disease. It's the environmental exposures. And why are women more susceptible? And that's where we need to focus our research.
So how do we need to be better advocates for ourselves? Because I do feel like when we think of cancer, we don't think of lung cancer for women. You think about ovarian or breast, right? And we have systems in place, especially for breast cancer, to kind of, to make sure you're doing what you need to be doing. There's a system in place, an infrastructure, and awareness. But I do feel like, how do you know when you should be advocating to say, I'm a little concerned, or how do we check it out? Is there just something we should do as kind of our regular annual checkup?
Well, I think, again, your question is so important. We need the same kind of national public education campaign that we've done for breast cancer to let women know that this is the #1 cancer death for them, right? And number two, there are tests, low-dose CT scans that screen for lung cancer, that can pick it up. And they're recommended, the U.S. Preventive Services Task Force that recommends the mammography and colonoscopy and cholesterol checks, these regular preventive screens, recommends this for people who are 50 to 80, who have a 20-year pack history. So they've smoked 1 pack a day for 20 years. But that misses a lot of people, and a lot of people don't even know. So, for example, 75% of women go along with getting their mammogram every year, but only 6 to 7% of people get their lung cancer screens who are eligible for it. We're not doing a good job in educating. And then we need to think about and reassess, I think, the screening guidelines, because, for example, should people start getting a CT scan, get a baseline like they do for a colonoscopy if they're average risk, and then do it every whatever number of years that might be. Is it 10 years or 5 years, depending on their risk? Well, I think AI will help us with this. It will be able to scan medical records. It will be able to come up with risk factors for families. We now have a whole new set of tools, from genomic testing to AI to new screening techniques, that will help us to develop better guidelines. And hopefully one day we're going to have a blood test, and some are under development, to find lung cancer.
Just 30 seconds. Are policymakers right now want to do this? Are they in a place, in your view, in Washington, where they're focused on this priority?
I think we're seeing an increased awareness now, and I know several bills are underway. So I'm hopeful, but it's going to take all of us raising our voices and really coming together to raise the awareness. And I want to thank you, Bloomberg News, for doing this, for raising awareness about the crisis of lung cancer in women. As Einstein said, from crisis comes great opportunity. We have the opportunity to change this trajectory. Let's do it.
Right. And I always think about, what we don't do today, health is a trajectory. And if you don't catch something now, it has the potential to impact you longer term. Always appreciate time with you. Susan, thank you so much. Dr. Susan Blumenthal, retired Rear Admiral, former U.S. Assistant General, and the first ever Deputy Assistant Secretary for Women's Health. She is a visiting professor with the MIT Media Lab, and she joins us from Boston this Thursday.
Coming up next, stocks on the move, and of course, a check on markets on this Thursday afternoon. This is Bloomberg Business Week Daily.